So that's interesting in itself on the idea that we are going to see the ceasefire being extended. Europe is up by 0.2% on the stocks 50. FTSE's down a little bit. That's oil prices. DAX is up a little bit. But we're not seeing much movement initially in Europe, Tom.
We are starting to see the impact on the corporates as we've been discussing through this show, guys. So some of the individual stocks that we're focusing in on, the basket stocks around airlines. You've had the update from Lufthansa looking to cut 20,000 uneconomic routes over the summer period, hoping to save about 40,000 tonnes of jet fuel. On the deals front, Deutsche Telekom, interestingly, and this has been in the play for a number of years, but looking to take over T-Mobile, or considering a full combination with its American arm T-Mobile, which is the biggest revenue driver for the business. So we're watching Deutsche Telekom in the session as well. And chip stocks, once again, the semis trade continues at pace, and we saw that again in the Asian session. So we watch those sectors and individual names, Guy.
Keep an eye on the electrification trade as well this morning. That's another factor we're going to watch into this market open, which is almost upon us. Here we go. Let me show you some numbers. We are expecting maybe a little turbulence in some of the oil names. FTSE 100 is not expected to go. In fact, European markets are not expected to go anywhere in a hurry this morning. FTSE 100 is up less than 0.1%. That's a little better than anticipated. We've had CPI out of the UK as well this morning. We'll get the gilts trade in just a moment. Stock 600 is up by 0.2%. Keep an eye on what happens with ABB out of Switzerland this morning. That could be an interesting trade. That could ripple through into names like Schneider, etc. in the French market. That will be a factor to watch. The DAX clearly has no news this morning. It's open. It's up by 0.4% and is outperforming this morning. We'll watch to see what AkzoNobel does this morning on the back of its numbers as well. It's talking about price rises offsetting maybe the effect coming through from the Middle East. CAC still not open. AEX still not open. We'll see how some of the chip stocks trade this morning. But Tom, at the moment, a reasonably muted start, slightly positive, but muted start to the European trading session.
As we break down sector by sector, you're seeing basic resources currently at the top of the list. We've seen stronger silver prices and gold prices in the session today, so that's lifting that sector. Basic resources with gains of a little over 1%. Industrials are in the mix as well on the upside, up 0.8%. Tech, we talked about the semiconductor space and the fact that that trade continues. Tech up 0.4%. The electrification story as well in industrials and defence. Banks gaining 0.5% on the downside. Biggest losses coming through, not surprisingly, this is an area we've been zeroing in on this morning, is travel and leisure, with the airline adjustments around the fuel price costs, and Finnish Air, for example, coming out and warning about the impact of higher fuel costs. So travel and leisure, the biggest loser across your sectors, down 0.5%, followed by media, consumer and health, all down between 0.3% and 0.4%. Health just down 0.2%. But the biggest losses, again, travel and leisure on the downside, down 0.6%. The biggest gains coming through for basic resources, up a little over 1%, Guy.
Axo's up quite strongly on the back of it passing through price rises, up by 4.5% on the back of this. The stock has been hit since the start of the conflict, so a little bit of better news maybe coming through in the paint sector. Coating sector. Schneider Electric is also higher, so we're maybe seeing a ripple effect coming through from ABB into some of the other electrification names. It's up by 3.1% this morning. On the downside, it's an interesting little mix in terms of where we're seeing the heavyweights. It's a few XDs. I think DNB's XD this morning, so just bear that in mind. But some of the airline stocks certainly are coming off a little bit in terms of what we're seeing. So I think I just saw Lufthansa down a little bit, but we'll come back to that in just a moment. Let me see if I can get that one up. So, no, that's Deutsche Telekom, actually. Wrong Deutsche. So we're seeing that stock potentially under a little bit of pressure as well on the M&A news that we're talking about with T-Mobile.
Yeah, and we'll see if they can get that across the line. Some scrutiny, no doubt, on the US side and the European side as to whether or not that can go through. Let's bring in Patrick Brenner, who's joining us around set right now, multi-asset CIO at Schroders. Patrick, good morning. You remain and maintain an overweight on equities. At what point does the closure of the Straits of Hormuz, what kind of time frame would derail that overweight view on stocks? As we look at what seems to be this disconnect between the equity rally and the inflation story.
Yeah, I think, look, we started the year positive equity, really on the view that earnings will deliver and will continue to drive equity higher. And fact is, we haven't changed that view.
A lot has changed since the start of the year.
A lot has changed, and we come to that. But I think when it comes to earnings, and when you look at the fundamentals, things haven't changed, right? Earnings have continued to deliver very strongly. They've been not only resilient, they've been remarkably strong. And I think this is really what we say at the beginning of the year, which is this is going to drive the market higher. And so far, we're sticking to that view that as long as the earnings are strong, we see no reason why equities should slow down.
Is that a this quarter story, though? As we look out to future quarters, given the margin squeeze that could be coming through, does that narrative start to erode the longer this Strait of Hormuz closure continues? Is that the risk?
I mean, it is clearly a risk, and I think we were talking about what has changed, and I think what has changed is probably at the beginning of the year when we were looking at risk scenarios, all the risk scenarios were skewed more towards the inflationary risk. Today, we have to acknowledge that with the disruption in the Middle East, the risk between inflation and growth are more balanced. So I think clearly we have to acknowledge that. So it's a question of time. If we sit here again in 6 months' time and oil is still at 150, then probably our baseline view is going to be challenged. But for now, earnings are being delivered. We're seeing actually upgrades in earnings expectations. So we think still strong fundamentals which support the idea of a strong equity market.
Is that earnings story only limited, though, to what we're seeing in tech?
So there is no hiding from the fact that clearly the earnings story has been narrow, right? You're right, tech has been driven by tech, has been also driven by energy. But by itself, this is nothing really new, right? We've been in this environment for a long time. So we have to accept that part of the market, a narrow part of the market, is driving the market. It doesn't mean it's bad by itself. I think the second point is, if you look outside of tech and energy, the rest of the sector, yes, we haven't seen upgrades, but we haven't seen downgrade neither, which I think is quite remarkable in such an environment. So I think it shows that the underlying data, the underlying economy are quite in a good shape.
Analysts don't tend to change their outlooks until they have enough information to do so and have stability of the information they're inputting to make those changes. Is that what we're just seeing here? There's too much volatility for analysts to change their guidance?
I mean, I'm not sure. If you look at Liberation Day, for example, you saw earnings downgrades, during Liberation Day because investors or analysts were worried about tariff. If you look at soft data like CIO Confidence Index, we saw a big drop during Liberation Day. This time around, we haven't seen CIO really raising big concern. I'm not sure exactly what's the reason. We should ask them.
But they got it wrong last time. That was the problem. And it's the problem this time that they're not going to make the changes because changes were made last time and they turned out to be erroneous.
Yeah, but I mean, if you're a CIO, you need to manage expectation as well, right? Yeah. So I think I would say rather that potentially they've learned from the fact that actually, number one, the economy has the ability to adjust massively to external shocks. Yeah. Maybe CIO are more used to energy shocks than tariff shocks. That might be a reason.
Do you adjust the portfolio around the regional vulnerability to that energy shock? As in, do you lean into the US, then Europe, then Asia? How do you think about the regional spread that should be factored into a portfolio?
Yeah, so I think there's been a couple of changes we've done in the portfolio. So with the conflicts in the Middle East, when we look at the economic impacts, we actually end up finding that probably the US is more immune than the rest of the world, both in terms of inflation and growth impact. The part of the world which is the most impacted, we think, are Asia and Europe. So there's probably the two regions where we'll be a bit more careful. The other changes in terms of asset allocation mix, what we've done, the term of change that we've done recently, is that we've taken profit on our commodity positive view because we think that the energy market has become very binary. And because we want to express a more balanced view between inflation and growth risk, we've also closed our short duration view. And so we think that being long equity but neutral duration reflect better this idea of balance of risk between growth and inflation.
And you've added the UK and Canada.
So that's a good point. On the equity side, we like actually a barbell strategy. So on one hand of the barbell, we like the US market, the tech market, which is delivering in terms of earnings. But on the other side, we want complementarity. So we're looking for UK and actually Canadian equity, which are more sensitive to the energy-related stocks, but also have a more cyclical aspect. So we believe that having those two sides of the barbell brings a lot of complementarity in the portfolios.
Do you think it's reasonable that the Fed cuts rates, which is priced at the moment, and the ECB raises rates?
I mean, this is possible, but the current pricing seems quite excessive to us. So we will rather expect some kind of conversion between the ECB and the Fed. And that's why when it comes to the fixed income side, we have a preference for European duration rather than US duration. So while we're neutral overall on duration, we express a preference for European over US duration.
If the ECB does, if the ECB does hike rates, is there a danger that the ECB decides that actually it has an inflation mandate and not a growth mandate, and as a result of which it makes the European picture worse, that the growth picture in Europe is where the real risk lies right now from a market perspective, and that would be exacerbated if we do see action by the ECB?
I think that's clearly a risk, and that's why we think that the balance of risk now are more balanced between inflation and growth risk, because effectively if the ECB or other central bank hike aggressively, this will start to have an impact on growth. We're not in a situation where we think the economy can really digest massive hike from central bank, especially in Europe.
Is gold still a good hedge?
So I think we have to be careful here. We still like gold strategically in the portfolio, but we've said very clearly we don't see gold as a geopolitical hedge. We've seen clearly increasing correlation between gold and equity in March during the sell-off. So I think,
is it a dollar debasement story?
Exactly. I think the story around gold is you have to believe in the continuation of the dollar debasement, and to some extent some question mark around the sustainability of debt level across the DM market.
How much, every day, and we'll do it later on, we'd see equity markets bouncing around all over the place, but the volume numbers underneath it are not being supported. What are you seeing in terms of the internals? How much are you trading? What are you doing right now? Are institutions just sitting this one out? Is it CTAs and hedge funds that are chasing this market? What do you see happening below the surface? And how does that affect what you're doing?
So on our side, we're really trying hard to avoid trading the daily headlines. We are, in general, trying to avoid over-trading and really try to stick to the fundamentals. So, this is where we think we have a hedge, and we are trying to avoid over-trading in an environment where headlines can move not from one day to the other, but from 1 hour to the other.
You said it's hard. Is it hard to
It is hard because, we are human, we're emotional, and when the market goes against you, it's hard to stick to your guns. But I think it is important in those difficult times not to panic, to stick to what you think you're good at and stick to the fundamentals in our cases.
Great to see you, Patrick. Thanks for stopping by to see us. We really appreciate it. Patrick Brenner, multi-asset CIO, joining us from Schroders. Quick look at how the market is trading this morning. Let's give you some individual names. Start off with kind of the centre of gravity. Defence stocks are down, luxury is down, chips are definitely having a good day. ASML is up, ASMI is up. You're also seeing a big trade into ABB. Let's start with that chip trade, though. Chloe has more details on that.
Good morning, Guy. Indeed, ASM is, as expected, doing very well this morning. We're up almost 9% after second quarter guidance beat estimates. So this really underscores this continued resilient demand for chip-making equipment because of all of these big tech names investing so much in AI and pouring billions of dollars into the data center build-out. And so this is a really bright outlook for ASM, and we are up very strongly this morning. Another sector that is benefiting from this AI data center build-out is the electrification and data center equipment sector, including the likes of ABB, which this morning raises revenue expectations because of a surge in orders from data center customers. And so we are seeing that really drive the shares this morning and have that read across for the entire sector, with Siemens, Schneider Electric and Legrand also in the green this morning. Moving on to AkzoNobel, and the company, the paint maker, is also up actually quite strongly, up 5%. Its results beat expectations, and it said that it was also able to pass pass on the rising costs associated with the war in the Middle East to customers by hiking prices. And so this is seen as quite reassuring, and we are up quite strongly this morning. And finally, let's end with a downward move for Reckitt, which is down almost 6% after saying that it had weaker sales for its cold medicines in the US, and the war in the Middle East had also disrupted supplies in the region. So a less positive morning for Reckitt.
Chloe, thank you very much indeed. With the stocks on the move this morning, Chloe Melly. Coming up, German carrier Deutsche Telekom said to be weighing a full combination with its American arm T-Mobile. We'll bring you the details on what could be the largest ever public M&A deal. That's next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Welcome back to the opening trade. We are 16 minutes into today's session. Across the benchmark in Europe, you're seeing gains, modest gains of 0.2%. It's been a bit of a choppy session. US futures slightly brighter in terms of the picture they are painting. S&P E-mini is pointing to gains of 0.6 0.5%. The earnings story, there's been some optimism, there's been some positivity, particularly when it comes to companies in the tech space, and Europe is exposed and is benefiting as a result of that. One name is ASM International. Shares up almost 9% right now, hitting a record high this morning after the semi-equipment company reported first quarter revenue that beat estimates and projected sales for the second quarter that also exceeded analyst expectations. Joining us is Matt Bloxham, senior analyst at Bloomberg Intelligence. What were the key takeaways from you for ASM? It seems to position them in a pretty robust place, right, as they look to the next quarter with this demand story.
So ASM a manufacturer of the equipment that chip companies make to produce the chips, and kind of very much driven by that AI story, which continues to have really strong momentum. That's coming through both in the first quarter numbers, which a few percent ahead of expectations, but then this kind of second quarter earnings revenue guidance significantly above market expectations, maybe about a 10% beat. And I think analysts now kind of projecting that forward into a much stronger full year and upgraded profit expectations. So I think this kind of talks the story that the likes of ASM and ASML that are kind of producing the equipment that the likes of TSMC use to make the chips. It's a really strong place to be in the kind of value chain, and particularly as companies move to kind of ever more advanced chips with a lower number of nanometers, then actually these companies are really well positioned to deliver that product. So I think that we always have these questions about the AI bubble and whether it's kind of going to burst or anything, but I think right now this clearly demonstrates that there's still very strong demand for AI chips.
Stock's up 60% plus since the beginning of the year. Do I need to be concerned that Mythos is out there in the wild, that others have got it?
I think we probably do need to be a little bit concerned, I mean, obviously Mythos is this latest AI model from Anthropic, who have said themselves that it's incredibly good at cyber.
We'll find a gap,
cyber
gaps
threat.
in
Exactly, And so, obviously right now it's been very controlled in the release. Anthropic has given it to a small number of high-end software companies like Apple, so that they can test it on their systems for vulnerabilities, so that when it does get formally released to the public, that any obvious kind of patches that need to be applied have been applied. Obviously, financial institutions are very concerned about this tool too, and they want to get their hands on it before it comes out live, so that they can test it. I think that so far this kind of leak of the tool of the platform to a small group of users on an online platform is worrying. They're not using it for malicious purposes right now, but if somebody were to decide to use it for malicious purposes at this point in time, given that none of these big institutions have been able to test it properly, it could create some systemic risk, I think.
Yeah, a lot of institutions, a lot of governments still clamouring to get access to Mythos. So we'll see how they fold that out as well and give that access. But it points to the demand that's there. But I mean, particularly for Anthropic's products, and that ties into the ASM story, doesn't it? Because you can't run these models without the equipment that's going in and without the chips. And on the chip side, I mean, something Guy and I were talking about yesterday on the show was the semiconductor strength that we're seeing, particularly when it comes to memory, NAND, RAN, and HBM, high bandwidth memory, and that seems to be unabated. I mean, it's just like the upside continues. The stocks are performing very well. The valuations are looking pretty reasonable on many metrics. So I guess the quick question is do you think that we pass cyclical now for these because of the AI demand for these kind of chips? Where do you land on this debate, whether this is a super cycle or whether that cyclicality comes back?
Personally, I'd still be reluctant to give up the memory of the cyclicality of the memory stocks. And I think, there's an interesting story, kind of showing this disparity between the relative valuations of the likes of Samsung, down on 6 times earnings, and TSMC and NVIDIA are kind of up in the kind of 18 to 20 times. And I think to kind of drive a big re-rating of something like Samsung, you would need to fully believe in that kind of super cycle story. And I think that's contingent on a lot more kind of robustness in the durability of the AI demand boost that we're seeing now. And I think a lot of investors are going to be cautious to kind of really lean into that in a big way because they've been burnt so many times before.
It's horribly cyclical. That's what history tells you. But the question is it the demand slows down, or is it actually these guys just produce so much of what is out there, of what is demanded out there, that actually they just flood the market, and that's what causes the cyclicality? Which one?
And we're at that point now where memory companies are investing in additional capacity, and you potentially get into that step function again where suddenly there's a big glut of capacity, and we're back. And I said, that there's lots more competition in the memory chip space than there is, say, in the TSMC space. So the likes of TSMC are justifying a bigger multiple because they have a much stronger position in their marketplace. And obviously the likes of Samsung, also in lots of other product marketplaces like particularly smartphones and displays. And so you have to kind of take that into account in the multiple too.
It's really interesting because a lot of the upgrades at the moment in terms of the earnings expectations are coming from this space. So if you believe in the cyclicality story,
that's a problem.
You've got to look at that and maybe raise an eyebrow. Okay. Matt, great to see you. Great to see you back here. Matt Bloxham, Senior Analyst at Bloomberg Intelligence, joining us on the telecom, no, not the telecom space, the technology. I'm going to do TMT now, which takes us back a while. We're going to go from technology to telecoms. DT, Deutsche Telekom share price. Let's take a look at what is happening here. Under a little bit of pressure, down by nearly 2%. Bloomberg understands that Deutsche Telekom is considering a full combination with its American arm, T-Mobile. Should we call it a recombination? I don't know. If approved, the deal would create a multinational telecom group and rank as the largest ever public M&A deal. For more, let's bring in Bloomberg Deals reporter Manuel Bagori. Why would DT do this? What is the upside for Deutsche Telekom?
Well, clearly, consolidation in the telecom space has been ongoing for years, decades actually, and the companies have realized and advocated that they need to consolidate to be able to keep up with investments and to be able to provide services as well for customers. Now, they face a lot of regulatory hurdles, obstacles to overcome, and political backlash as well. Here we are again on another iteration of Deutsche Telekom, which already owns more than 53% in fact, of T-Mobile US, trying to come up with a new proposal to combine the two companies, as our sources reveal. The idea is just simply to create a more simple and potentially nimble structure that can leverage these two global companies and at the same time potentially create more synergies and have more leverage for further investments.
And well, you talked about potentially some of the obstacles to this deal getting across the line. What is the likelihood right now that Deutsche Telekom can pull this off?
It is a very complicated transaction, Tom. Definitely, commercially, it makes a lot of sense, and that's why they've been holding on and off and on again talks over the years to try to combine the two or come up with some sort of transaction. Now, the problem is the German government owns stake in Deutsche Telekom, and obviously we're talking about two companies that are very sizable, very incumbent players in their own market, so to speak, and that obviously have a lot of impact on consumers, and also they hold critical and very sensitive data and technology. So obviously the political hurdles will be very steep and hard to overcome, but then there will be a lot of regulatory scrutiny on things like antitrust potentially as well, even if this being a cross-border deal should be less of a hurdle perhaps.
Well, great stuff. Thank you very much indeed for the update. Manuel Bagori joining us on the DT deal potentially over in the United States. We've talked earlier about what is happening in the airline sector, the travel sector, and we get more information on that now. Remember, we've seen Lufthansa cutting its capacity for the summer overnight. We've seen Alaska cutting its guidance. We've seen United Airlines reducing its guidance. Now we have another from Europe, TUI, the travel company, suspending its 2026 revenue guidance due to the uncertainty around the Iran war. It's suspending revenue guidance until conditions stabilize.
And travel and leisure as a sector is the biggest loser across your sectors right now, and that is part of the story, down 0.9%. Expect more on this front, you would expect. Coming up, we're going to talk macro. We're going to bring Victoria Clark, UK chief economist at Santander, as of course the Middle East war sends UK inflation higher, at least on a month-by-month basis for the month of March. Her analysis is coming up. What does it mean for the BOE? That's next. This is Bloomberg.
take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back. This is the opening trade. We are 30 minutes into today's session. You're seeing some very modest optimism in the European markets today after 2 days of losses, up 0.2%, presumably on the extension of this ceasefire. But the clarity about when the Strait of Hormuz opens remains zero. No certainty on that front at all. Some earnings stories coming through as well. Some on the upside, some on the downside. The forecast being cut for the travel and leisure sector. That's a bit of a drag. Across the German benchmark, you're seeing gains of 0.3%. So a solid day over in Germany. Flat on the CAC current over in France. A little bit weaker here in the UK. The FTSE 100 down 0.1%. Guy, what are you seeing?
Okay, let's work our way through the numbers and get an idea of what's going on. Higher 333, lower 250. Reasonably balanced market this morning. But once again, I point you in the direction of what is happening with the volume numbers. This is not a market that is supported by big volume at the moment. Institutions appear to be trying to avoid trading the headlines. We heard about that earlier on in the show. And I think that is continuously evidenced by what we're seeing in terms of this data. Leaders and laggards, let's talk about the leaders first of all and get into what we are seeing. We're certainly seeing a big pickup in the chip space. Broadly, I would argue maybe the AI space. ASM International is up very strongly. Stocks up 60% plus since the beginning of the year on the back of what we're seeing in terms of chip demand. ASML is a beneficiary of that. We're seeing that feeding through, up by 1.52%. You've also got what we are seeing in terms of the coating sector. You're seeing AkzoNobel doing quite well, as you are also seeing ABB, Asia Brand Baveri, the Swiss-Swedish engineering group, up by nearly 5% this morning. It's the electrification trade around what you're seeing around some of this AI trade that we're seeing elsewhere in the market this morning. So some connections on all the boards that we're looking at here. Reckitt's down by 6%. You are being punished in terms of what you are getting in terms of the numbers if you don't meet expectations. Essilor is down. Rolls-Royce is down by 2.56% as well. There's a bit of the airline sector in there. There's a bit of what you're seeing in terms of what we're getting around defense as well. But you're seeing names like TUI under pressure. The airline sector over the last 24 hours beginning to talk about the impact that it is seeing as a result of what we are seeing as a consequence of the lack of jet fuel that we're getting out there, Tom.
Okay, here's what else you need to know this morning. Of course, what is focusing on is the Middle East and what transpires in terms of any potential conversations between Iran and the US. President Trump saying he is extending the ceasefire with Iran indefinitely. The Strait of Hormuz remains closed to shipping, as we've been discussing, with Iran saying it won't reopen the vital waterway while the US maintains its own blockade. The president also made cryptic comments about China possibly providing weapons to Iran, a move that would test a US red line on aiding Tehran during the war. EU ambassadors, meanwhile, are set to discuss the release of a previously blocked €90 billion loan to Ukraine. President Volodymyr Zelensky says repairs have been completed on the Druzhba oil pipeline, allowing the resumption of Russian oil flows to Europe. That was a sticking point with Hungary's outgoing Prime Minister, Viktor Orban. EU top diplomat Kaja Kallas says she expects a positive decision on the loan in, quote, the next 24 hours. And Lufthansa is planning to cut 20,000 short-haul flights from its European summer schedule to save on jet fuel, which has doubled in price since the start of the Iran war. The cuts will amount to 1% of available seat kilometres and save around 40,000 tonnes of jet fuel. Lufthansa has taken some of the most drastic steps among global airlines since the conflict started, as it also contends with walkouts by pilots and cabin crew. Guy.
Tom, let's talk about what we're seeing in the UK right now. Front-end gilts down a little bit in terms of the yield that we are watching. You've got OIS pricing currently, I think, kind of around 40 basis points of hikes. That is the context with which we look at today's inflation data, accelerating in March as a surge in energy costs triggered by the Iran war started to come through and hit consumers. Consumer prices rose 3.3%. That's a headline number, up from 3% in the previous month. Critically, though, what you are seeing is elsewhere in the market actually some stability. The core number certainly looks much more stable. So should we be excited by today's data? Is it telling us anything that we didn't already know and giving us clues as to where the Bank of England goes next? Victoria Clark, UK Chief Economist at Santander Corporate and Investment Bank, joins us now around the table. Exciting data?
I'm not excited by the data, no, but that I'm pleased about, actually.
Yep.
Actually, I mean, I think we would have some problems if we were starting to see more evidence of the war creeping into some things at this point. So almost all of the rise in the CPI today, it's the big jump in petrol and diesel prices, up 8.7% over the month. And then you've got a bit from airfares, that's more about Easter timing, and then a big jump in heating, all up 90%. This is all the stuff that we'd already seen, had sight of. I think on the goods inflation side, that's looking still pretty subdued. And there's still the same old services inflation, but that's not new news. That's the old news that we've been used to for a while.
So is the market overpricing rate hikes in the Bank of England?
I think it probably is. I think that at the moment, all we can see is that we've got this energy shock. And when I look at the labour market data, the release of yesterday, that tells me that the labour market is not strong. This is not a 2022 labour market. The wage dynamics are different. Employee bargaining power is much weaker on the private sector side. So you really shouldn't expect to see what is going to be an energy shock at first turn into something more permanent through wage increases. So I think at the moment the data that we have and the geopolitical situation is changing daily, but at the moment it tells me that this is more of an inflation shock that you could look through than the 2022 one. And our baseline actually is unchanged for this year in rates.
Does that suggest that 2026 is not a year of stagflation in the UK, but it is a year of weaker growth?
So I think we're going to get more inflation, for sure. I mean, obviously, that's the energy effect. I think that the labour market is struggling, and that's been struggling for a while for lots of other reasons, and this probably adds to that weakness. So if you like, there's that element. Now, the growth side, I think, is, that's been subdued. Then we had this good first quarter, which we typically do have, actually, in the UK, quirk of the UK statistics and other factors. And I think from here, I'm worried about growth going forward. It's, we've not seen the impact on the growth numbers yet. That's still to come. But, you don't get a disruption like this across Europe, across airline fuel supply, the kind of sentiment impact as well, without some impact on growth. So I'm quite worried about the second half of the year.
OK, let's put a number on that. So as things stand, and with the BOE on hold, which is your forecast for this year, where does growth end up at this point?
So I've got the first quarter's grown strongly.
Yeah.
The second quarter's a bit middling, and the third quarter down. So a contraction in the third quarter, and over the year in totality, you're going to end up probably around 0.5%. But that's a very up and down year. That 0.5% hides a whole variety of growth stories within it. And I think one of the things that's important to note is that for a while, the private sector demand story, the private sector economy has been struggling, and fiscal policy, which is a whole different story, but that's obviously been helping drive demand.
It does make you wonder whether the Bank of England should be cutting rates at this point. Would that be a more realistic expectation maybe later this year?
So obviously at the moment it would be a very risky play because there's just much that they don't know, and the energy shock could get bigger, and that might make inflation move above, far above our baseline into a world where they do end up in this world.
But later this year?
But later this year, I mean, I certainly wouldn't rule it out, because if the demand shock gets big and it gets big quickly, you've got to really look through that energy shock. The risk of second round stuff, if you've got big demand destruction, is lower. So, I mean, it's something that we've been talking to people about more and more, but I think that in that demand destruction environment, definitely don't rule that out. Back end of the year, though, rather than the data
when we have more
watching
information.
period. Exactly.
Do you think, you touched on fiscal, should markets be starting to think about more fiscal ambition from a government that's under pressure and a leader that's under pressure? Are they going to have to open the taps, even as constrained as the UK is? Should we start to think that maybe there's going to be more of a fiscal impulse?
Fiscal could go one of two ways, right? At the moment, you've got rates higher, you've got inflation higher. That's eaten well into the headroom that the Chancellor had. If she takes the really tough line, actually what she should be doing is lifting taxes or cutting spending at the next budget, and that would all, squeeze the backdrop further. But of course, the world is changing, politics may change as well, and all of that might mean that you have a different fiscal stance. And it may be that that's additional defence spending. It obviously may mean that you want more support there to manage some of the crisis shocks that are there on households. I think economists will tell you be very wary about doing that, but you can see that might be appealing to the politicians.
If you raise taxes at this point in a growth slowdown environment, though, you've already seen the effect of, particularly on the corporate side, but increasingly elsewhere, of the effect of what that has done to growth.
Yeah.
Hasn't the household and corporate tolerance for tax hikes just reached a tipping point right now? How much further can you push it?
Do you get what happens?
Yeah.
What does the curve tell us about where we are in that kind of scenario?
I think tax increases are really difficult at this point. I do, because the IMF said it last week. The UK tax increases that are there and that are planned are very significant in the context of our peers. That's important. The UK is trying to build credibility here. We're trying to get investment. I think that's challenging. The other place they can go if they want to stick to the fiscal rules that's laid out is, of course, on the spending side. And there is scope to do that, but that's much trickier for them to do, and there doesn't seem to be the will at the moment to do it. There's a lot of very difficult choices, which is what, essentially what the gilt market's been saying the last few days is, we've got this inflation problem, we've got this fiscal problem, you've got the politics thrown in. It's not very simple how you solve that in a way that gives you a determined view on fiscal sustainability in the UK.
Victoria, thank you very much indeed. Victoria Clark, UK Chief Economist at Santander Corporate and Investment Banking. Coming up, oil on the move over reports from Iran that the US is ready, or could be ready, to end its naval blockade. We're going to bring you the details and the latest. That is next. This is Bloomberg.
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 60-65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Oil is a little weaker this morning after Iran's UN envoy said they had received, quote, some sign that the US is ready to end their naval blockade. This, according to Iran's semi-official Tasnim News. The report comes after President Trump said the US was going to maintain the blockade but will extend the ceasefire indefinitely. Let's bring in Stephen Stupczynski right now, who leads our Asia energy coverage. Stephen, get us up to speed on how traders are adjusting to the mixed messaging out of the Middle East.
You know, I think that of all the situations, worst case scenarios that they were planning for today, when today was supposed to end the ceasefire, this is one of the better scenarios, right? The ceasefire is indefinitely extended. The bad news, of course, is that Hormuz, a key conduit for about 1/5 of global oil and seaborne gas trade, remains shut. And it's unclear when that will open again. Now, we are around, high 90s, close to $100, but the traders were, looking at maybe 120 plus if the U.S. were to again begin attacks on Iran, like Trump had previously mentioned when the ceasefire would end. There has been a lot of fear that the longer that this conflict continues, while we are in a ceasefire, that they raise the risk that there could be an increase or a revitalization, a restart of attacks across the region, which could hit Saudi Arabia, Qatar's LNG export plant. Any other attacks across the region, like we saw last month, would increase prices and raise the risk that oil production and shipments of fuel from a lot of these countries could be disrupted far longer than even if Hormuz were to open again.
Stephen, there's some talk that Iranian tankers are getting out. They're hugging the Iranian coast, the Pakistani coast. They're getting out into open water. What do we know about this? How much oil is getting out?
There has been some analysis from Vortexa and other groups that are indicating that over, on April 20th, when the blockade was well in effect, 2 shipments of Iranian oil, which would be about 4 million barrels, was able to get through. They were dark, so they weren't signaling their AIS. This isn't a huge amount. There has been really a trickle of shipments, even the ones that have gone dark. It's just a very limited amount of shipments that have gone through compared to 135 shipments that we saw pre-war levels of all types of ships. I think one thing that should be noted that while there has been a few ships that have gotten through the blockade, the U.S. has increased their effort to a degree to pressure Iran and Tehran and their ability to ship oil and other products. They boarded an oil tanker for the first time in the last 24 hours off the coast of Sri Lanka. That does indicate that they are taking this somewhat seriously. Whether or not this will be the policy for all shipments and whether they're going to go after these dark vessels as well remains to be seen. But at least boarding that one ship does indicate that they are trying to accelerate their effort to hold back Iranian flows from the region.
Stephen, great stuff. Thanks for the update. Appreciate it. Stephen Stepczynski, who leads our Asia energy coverage. That takes us on to our next story. Lufthansa planning to cut 20,000 short-haul flights from its European summer schedule in order to save on jet fuel, which has doubled in price, remember, since the start of the Iran war. Europe's largest airline group says the cuts will amount to 1% of available seat kilometres and save around 40,000 tonnes of jet fuel. At the same time, TUI this morning has cut its guidance. You see the same thing from Alaska overnight. United Airlines has reduced its guidance as a result of what we're seeing around the jet fuel crisis. Perfect time, therefore, to bring in Bloomberg's managing editor for aviation, Benedict Campbell, who joins us from Berlin. Benny, is this just the start of it? How much more of this are we going to now see?
Well, if you look at the news over the last couple of days, and you've read out some of them, it does look like things are getting a little bit more dramatic. We had Alaska Airlines on Monday saying they are suspending their forecast, essentially. Then overnight, we had United Airlines cutting back its full-year guidance. And then you just mentioned the Lufthansa announcement from late last night saying they're also cutting out some seats. Add to that Finnair, who said this morning that there is a real risk that fuel availability will become an issue. TUI, the travel operator, saying they are suspending their forecast. So you take all that together, the picture is becoming a little bit more dramatic, shall we say. At this point, it doesn't look as if there is a real risk of fuel shortage, but it's the price of fuel that is really creating lots of issues for the airline industry in particular. United Airlines, for instance, said $340 million in extra cost in the quarter that they had to absorb as part of that. So overall, it really is biting them. It's really eating into the earnings, and we'll probably get more of that in the next couple of days. We have Southwest reporting, we have American Airlines reporting, so that sort of drumbeat will likely continue.
So more to come, Benny. Fewer options, arguably, for flyers, and presumably higher prices all round.
Yes, exactly, and annoyingly, at a time where people are still looking into their summer vacation, thinking about booking, it's potentially good news for some of the low-cost carriers like Ryanair, who are very well hedged. People are reconsidering those long-haul flights, so people might think about staying closer to home, taking those shorter trips, both in terms of duration and distance. So that might really change people's travel plans. Again, nobody quite knows what's going to happen. The news that we're getting out of the White House are sort of mercurial, and things could get easier very quickly, but it won't happen overnight. You still have refineries that are producing a much lower capacity. You have damaged equipment. You have a system that is essentially out of sync at the moment, and that is something that will probably last into the third quarter and maybe towards the end of the year, which is why you have a lot of airlines taking a far more cautious view of the rest of the year.
Benny, does Europe have any stores of jet fuel that can be brought online? Like, how much reserves exist in this part of the world?
There seems to be enough reserves. The airlines that we've spoken to so far, nobody's really coming out and saying we are sort of on the fringes of what we have. Things are getting tight. There is the perennial sort of competition, shall we say, between the military part of flying, which has obviously increased dramatically since the beginning of the war, and the civil part. And right now, more precedent is given to sort of military operations. So there might be some shortage over time, but for the time being, again, it's less the availability of fuel and more the cost of fuel that is really wreaking havoc to the industry.
What do you think, Benny, is the longer-term story for the industry? Is this an industry that works with governments to build out additional reserves and capacity longer term? Is it an industry that spends more on alternative jet fuels? What are the longer-term implications, do you think?
Well, I do think one thing that will happen is airlines will take a very hard look at the routes that they're flying. And you've already seen it over the last couple of weeks. They are weeding out capacity. They are taking a hard look at some of the flights that were sort of on the cusp of being profitable previously and now are deeply unprofitable. That, for the consumer, means fewer choices. Lufthansa, for instance, said they are cancelling their Frankfurt to Stavanger flight in Norway. Now, you could say, well, there's not that many people who need to fly from Frankfurt to Stavanger, but for those who do, that is a problem. And you're going to see more of that going forward. These sort of secondary and tertiary routes will get dropped. You have less optionality. That's going to be one thing. There will be quite a lot of lobbying between airlines and the government side to reduce some taxes, to make tankering, which is additional supplies on planes, make that more of an option, just to sort of alleviate the overall sort of framework, the regulatory framework around this. And then ultimately, you might see some consolidation in the industry. As a result, the weaker airlines will become weaker still. We did hear from Scott Kirby, the United Airlines CEO, yesterday saying this might be an opportunity for us. Now, we did report a week ago that they have sort of casually looked at American Airlines. That might not happen, but there might be other deals that come out of this as a result.
Yeah, and it's going to be interesting to see who operates the most modern fleets, the most efficient fleets. Do they benefit as well? Do the strong get stronger? To your point, Benny. Thank you very much indeed. Bloomberg's managing editor for aviation, Benedict Camel. And our US colleagues will be speaking to Scott Kirby. He, of course, is the United Airlines CEO. That conversation starts at 2:15 p.m. UK time.
Just briefly, here's what else we are thinking about today. EU ambassadors will be meeting. We'll keep an eye on that and any potential loan extension to Ukraine. 12 p.m. UK time, the Prime Minister, Keir Starmer, is going to be speaking and taking questions at PMQs in the House of Commons. At 3 p.m. UK time, Eurozone consumer confidence. We'll break that for you. 6:30 p.m. UK time. We'll be hearing from the ECB's Christine Lagarde. Going to be speaking in London. And on the earnings front, we've got Tesla, IBM and Boeing earnings later. Let's bring in Moena Cunningham right now from Bloomberg Markets Today, our editor. Moena, we touched a little bit on what's happening in terms of CPI out of the UK. We were speaking to Santander about that with a view with the Economist, and CPI coming in slightly stickier. Just your line in terms of where this leaves the BOE. What's the view from market participants at this point?
I mean, it does it's not unexpected, and it potentially does add, some more pressure when it comes to, how much they can cut those interest rates. I think what's interesting is the way the market is responding this morning as they are actually paring some of the expectations of rate hikes, but that is probably a reflection of the broader market sentiment this morning, what's happening in Iran, which is somewhat overshadowing it. But I think, look, overall, what we're seeing is much higher fuel prices. And this is only March's data, so I think there's probably quite a bit to sort of trickle through supply chains. We are starting to hear that anecdotally. We're seeing that coming through in earnings, such as from Reckitt Benckiser this morning. So I think there's more of that to come. But what we are seeing is those petrol pump prices being higher, really adding to that aspect of the CPI basket and transport fares. I mean, we were just talking about airlines, really big increase there. Yeah. And that is going to, make it more difficult, I think, for the central bank to not sort of increase rates to try and curb these inflationary pressures.
Just very briefly, equity markets still largely ignoring a lot of this, though.
Yeah, so this morning, broadly across Europe, we're seeing stocks rise. The FTSE 100 is actually a little bit lower now, yep. But that comes down from those supply chain impacts, I think, on the consumer companies, a lot of that, and it's also missing out on a sort of resurgence in the tech optimism. And that's what tends to happen on more positive days for the wider European market, but very much a sort of overshadowed domestic data there.
Well, nice. Thank you very much indeed. Moena Cunningham, Bloomberg Markets Today editor. That's it. Got a tube strike out there. People are on their bikes, quite literally.
But it's beautiful weather, so that's one of the offsets. The Pulse is up next. This is Bloomberg.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. President Donald Trump has indefinitely extended a ceasefire with Iran while maintaining a naval blockade of the Strait of Hormuz after planned peace talks fell apart. Bloomberg learns that Anthropic's most powerful and potentially dangerous AI model has been accessed by unauthorized people. Plus, Kevin Warsh says he won't be a sock puppet if he is confirmed as the Fed chair, but dodges questions about interest rates. So there is a lot going on in the markets. First and foremost, we look at what's happening to the price of oil. Stocks are rising. Again, it's also a big earnings day, so don't forget that dynamic. European stocks, for example, posting modest gains amid mixed first quarter reports. We had Bankiser on the downside, but actually ASM International hitting a record. Now, what investors are watching out for is also Tesla. One of the main focuses we're watching out for. If you look at Texas Instruments and Lab Research, they're also set to report. And then, of course, look, it's all about the price of oil. Brent falling some 0.5% to about $98 a barrel after Tehran said it had received some sign that the U.S. was willing to end its blockade of Iranian-linked ships. And you can see in Europe, it's a little bit of a mixed bag for now. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So President Trump says he's extending the ceasefire with Iran indefinitely, even as plans for a fresh round of peace talks collapse. Now, in just a moment, we'll be joined by Mohit Kumar, chief economist and strategist at Jefferies. We'll also be joined by Bloomberg's John Stepek. But first, let's go to Jumana Barsechi in Dubai. Jumana, what do we know about the ceasefire? Good morning. What do we know about the ceasefire and the status in the Strait?
Yeah, that's right. So much to get through, developments over the last 24 hours. And of course, yesterday we spent the day anticipating another round of talks in Islamabad that did not come to be. And instead, what we got was a post from President Trump overnight on Truth Social announcing that the ceasefire had been extended. And what we understand is it's an indefinite extension. He has explicitly linked it to Iran submitting a new proposal, and discussions are concluded one way or another. But he also said that it came at the request of Pakistani mediators, who of course have been trying very, very hard to bring the two sides together again. Now, the other important element of that post is he reiterated that the U.S. naval blockade around Iranian ports will stay in place. And if you look at all of the language that has come through from Iranian officials over the last couple of days, they have suggested that the fact that this U.S. naval blockade is continuing is a deal breaker for them in terms of moving to the next round of discussions. In fact, the Iranian foreign minister overnight put up a post saying that blockading Iranian ports is a, quote, act of war and thus a violation of the ceasefire. And so we're in a situation now where both blockades are very much still in place. In fact, this morning, there was some reports of gunfire, gunshots being fired at a vessel that was approaching near an IRGC boat. And then also, it has become a really central point in terms of the sequencing of how we get to the next round of discussions, because the Iranian side maintained that they're not going to enter into talks unless the blockade is lifted. This morning, state media reporting that there have been some signals coming through from the U.S. in the last 24 hours to suggest that they may temporarily lift that naval blockade, nothing being confirmed by the U.S. So again, a state of ambiguity. It's not peace, it's not war. And there's still, really, Francine, the possibility that once again we could see another round of hostilities if the two sides are not able to bridge their differences and return back to the negotiating table once again.
Yeah, and then, Jumana, I'm not sure what to make of, what Trump was saying about China, whether they're a friend of a foe at this point, or whether they're helping Iran, which maybe that's how his comments should be interpreted, or whether they're trying to dampen some of, the war.
Yeah, well, I mean, you raise a good point there, Francine. There have been lots of questions as to what China's involvement is in this war. And yesterday, President Trump was doing an interview with CNBC, and he was talking about U.S. restocking munitions. But in the same breath, he went on to say that there was a gift or an unwelcome surprise on one of the Iranian vessels that they had seized, thus making the suggestion that perhaps China had been supplying Iran with lethal munitions. Now, this is an allegation that the Chinese Foreign Ministry spokesperson denied today. They were explicitly asked about it, and they said that China rejects any false association and speculation. But I should also say a couple of weeks ago, CNN also put out a report suggesting that China were looking to help Iran beef up their air defenses. Another allegation that China have denied. Now, what is undeniable is that from an economic standpoint, China continues to buy Iranian oil, so they have supported the Iranian economy to a certain extent. At the same time, a rampant economic instability does not suit their interests. And it was interesting that just a week ago, when the Chinese president was meeting with the Crown Prince of the UAE, they specifically talked about the law of the jungle, and that there's a warning, a threat that the world is returning back to this law of the jungle environment, something which doesn't suit them well at all. And just to add to that, Francine, I would just remind people that China enjoys a good relationship with many of these Gulf states, economically very strong ties. And President Xi did have a call with the Saudi Crown Prince MBS only yesterday, where for the first time they made overt and explicit comments about the Strait of Hormuz, calling for the free passage of vessels. So it is not in their interest for the strait to be closed, disrupted, or monitored by Iran or by any side.
Jumana, thank you. Jumana Bersetchi there with the very latest on the Middle East. Now, President Trump's pick to lead the Federal Reserve has also repeatedly promised to be independent in testimony at his confirmation hearing. Now, appearing before the Senate Banking Committee, Kevin Warsh dodged questions on where he saw rates going. He also said the president has never asked him to commit to a particular rate decision.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
Let's get more from Bloomberg's Jill Deeses, who's in Hong Kong. Jill, what are the main takeaway from Kevin Warsh's testimony?
Well, Francine, you heard from Kevin Warsh just there, really that idea of stressing independence, particularly when he was drilled about, any pressure that he may receive from Donald Trump. Obviously, that's really just characterizing the entirety of this nomination process because of how much Trump has continued to attack Jerome Powell in his current position as Fed chair. So you did see that quite a bit. You also had, some of these other ideas for potential changes within the Fed, maybe taking a look at, how frequently or how much detail they publish in certain economic outlook forecasts and in sort of rate path ideas. That's something that he may get a little bit of support from. Actually, there's maybe some suggestion there about frequency of after decision press conferences, that kind of thing. But I do think that this really does come back to this idea that he's trying to stress that he's independent from the president. Although, as we've been discussing, he also did not really give any level of clarity about where he sees rates going. And I think that that's a really key part of this entire process as well.
Jill, thank you so much. Jill Deese is there in Hong Kong now joining us with more on this. Mohit Kumar, Chief Economist and Strategist at Jefferies, and Bloomberg's John Stepek, author of the Money Distilled newsletter. So thank you both for joining us. John, it's exciting, right? You hear from Kevin Warsh. He's kind of saying, again, he just has one vote. There are more people, but he seemed to say, he has his own mind. So let's see what happens.
Yeah, absolutely. Obviously, if the guy says, are you going to be Trump's sock puppet, he's not going to turn around and say, yes,
I am.
That's what I'm here for. But I think, to be fair, like our colleague John Authors the other day wrote something that I thought was very perceptive on this. And Alan Greenspan, at one point, was a kind of disciple of Ayn Rand, kind of ultra-libertarian. And he actually turned into arguably the most interventionist Fed chair ever. And set up the kind of template that we've followed since. So I don't think you can really garner an awful lot, from these things. Obviously Trump wouldn't be nominating Warsh if he didn't hope that he was, going to be along those lines. But also the Iran war has tossed everything up anyway, because rates probably would have fallen in both this country and the US if the Iran war hadn't broken out. But of course it has, and that means that it's very hard to make any big calls on rates until, what Jumana was talking about is kind of done and dusted in some way.
Mohit, what do you make of this? Because again, it was my understanding that Kevin Warsh, I guess, had a bias towards cutting, if that's what we could call it, because he looks at it through the AI lens. So that actually changes everything in terms of inflation dynamics and jobs going forward. So again, if it's on the economics, so it's not, oh, the president wants this, I'm going to do it. It's a different dynamic and perspective.
I totally agree. And going back to what John was saying, Trump hoped that he cuts. Yeah. And there, I think this AI lens is very important. Because what does AI do? To me, it's lower employment. People will lose their jobs, one way or the other. Lower inflation, better productivity, and potentially higher growth. So if you look at it from this lens, if you are a previous, I would say, Bernanke or Powell demand-side economics, you would argue growth is better, R-star is higher, let's cut less. But if you are a supply-side economics, which I think Warsh is, you would argue my mandate is employment inflation. We have lower employment, lower inflation, let's cut more. And then I think one thing you mentioned as well is very important. He's one, he's not the committee. So how do we get consensus? But there I would argue it's still easy to get consensus to take rates to neutral. Right. What neutral is, again, we can debate, but let's say it's...
No one will tell us.
No one knows. But Fed says it's 3.25. So I would say we are maybe 2 rate cuts away from neutral. And I think he would be able to get consensus for 2 rate cuts.
So do you think it's right that actually markets have largely ignored everything that the president has said that could challenge central bank independence, right? I was in Washington last week where he said, well, if, Chair Powell doesn't resign from his post as governor, not as Fed chair, then I could fire him. The markets didn't bat an eyelid.
I don't think it's easy or even sensible to fire Powell, and that's a big blow to credibility of the Fed. And even President Trump knows that a credible Fed is very important. It's very important not just for domestic, but for international investors. So I still feel that the Fed independence will very much stay. That said, we have a chairperson who is leaning towards more cuts. So my base case is more cuts, a bit hawkish on balance sheet, but then the long end of the curve is about what the Treasury does and not what the Fed does. So on balance, I think they will be able to contain rates.
John, what's the market looking at today? So, of course, it's the Strait of Hormuz. Frankly, unclear where we are. Yeah. And that's probably the understatement of the year. But there's also a lot of earnings.
Yeah, I mean, there's earnings today. I mean, one thing I think was particularly interesting was Reckitt Benckiser coming out this morning with quite a significant, or certainly the market's treated a significant kind of miss on like-for-like sales. And I think this kind of goes back to this idea that the market is looking through the Iran war until it starts getting some proof that stuff is happening. And I think this is an issue because, like Reckitt points to, that it's disruption to the Middle East that has hit the like-for-like sales significantly. And clearly the market hadn't priced that in, otherwise the share price wouldn't be down 10% this morning. We saw something very similar. Again, I'm taking a UK focus here, but yesterday a big house builder, Chris Nicholson, issued a kind of shock profit warning, sent the share price down nearly 40%. Again, that was due to interest rate sensitivity, which has kind of exploded since the Iran war broke out. And again, is something that the market clearly hadn't considered fully. And I think this is why earnings are particularly important just now, because we're going to start seeing the trickle through of these impacts. And that's the point at which we might start getting a read across to other stocks in various sectors and saying, well, who is going to take a hit here? And where have we perhaps underestimated how much of an impact this is going to have? And then I guess in a circular way, that kind of puts more pressure on Trump to find a road out of this, which at the same time then also makes the market more inclined to look through it. Because they assume that, well, the tackle is kind of still in place. Like Trump is looking for a kind of exit ramp. I suspect that he'll do his very best to find one, and maybe the blockade will be called off. I don't know if that's the next road forward.
I have to say your newsletter yesterday was brilliant. Mohit, he called it "Markets are forward-looking but not psychic," which is fair. No, I mean at this time you kind of do have to be a psychic with like Cassandra and the crystal ball.
Yeah, well, the scenarios skew in so many different directions, and the only option then is to say, well, let's take it as it comes. But unfortunately, that means you can't really rely on the markets themselves to tell you what is going to happen because they don't know either.
But for the moment, their optimism has largely been rewarded, actually, which has surprised me at times. Do you think, how do you look at this blockade and Iran in terms of energy prices won't go back to what we had in January? Does that change all the economic dynamics?
So first, the optimism is not just about fundamentals. I would argue it's also about positioning. So if you look at market positioning, 3-4 weeks ago, market was short. Market wanted to rally. All you needed was some semi-good news, not a crystal ball, but some semi-good news, and market was ready for rally. So now S&P is above pre-war levels, which sounds surprising, but I think a lot of it is about positioning. But going back to John's point, eventually we have to factor in how earnings will be impacted because of energy. Oil is not going to go back to 65, 75, 80, anyone's guess, but that's where we see oil, which means we should see changes. We should see differentiations across regions, across sectors. US probably gets much less impacted than Europe does or Asia does. So US should outperform Europe going forward, or people should go back to the tech sector. Or if you think about emerging markets, commodity producers should benefit at the expense of commodity importers. Large companies should do better than small caps because they can do better in an energy price shock scenario. So I do think we will see all these changes.
But when? Because at the moment, again, we're day by day trying to figure out what happens next. But it seems that even in earnings call, people, because they don't have visibility, it's unclear they want to talk about what they do next.
To me, we will see that priced in over the next 3 months. So very short term, we will rally on any headlines. So let's say tomorrow we get a deal, I'm not hoping for, but let's say we do get a deal, market will rally. So that's a beta play. But over the next 3 months, I think investors will focus a lot on differentiation rather than just a long or a short.
John, what else are you focused on? Yesterday we talked a bit about the UK. I know then we had that, the Ollie Robbins testimony. I don't know, how are things looking in the UK? It seems tough.
No, it is tough. This morning we got the inflation figures, for example, it's the CPI, and obviously the kind of at the start of the year, everyone thought the UK was looking in a good position. It looked as if interest rates relative to other countries were high. There was space for the Bank of England to cut, and the Bank of England clearly was itching to cut. And before, again, the kind of Iran war, I would have said that, next week's bank decision was a dead set, quarter-point cut. Absolutely no doubt about it, really, And unfortunately, clearly, that's not going to happen now because, the inflation's not going to go down through the rest of the year. That is partly because the UK is almost, uniquely vulnerable to these kind of shocks because of poor governance over the last 15 years or so, if not before. kind of like poor energy policy, a lack of kind of accounting for resilience. And so I think that's probably going to continue. As far as the whole drama over the leadership goes, I think it's fair to say that people think of Keir Starmer as a lame duck Prime Minister. They probably have thought that for quite some time. The question is who will replace him, if anyone. And if I'm honest, I think that, again, this is another one of those things the market probably won't price in fully until it sees which way it's going to swing. Particularly if, I mean, because one of the things that I think matters more now is what happens on the Chancellor side of things. Because Rachel Reeves possibly looks less tied to Keir Starmer's fate than perhaps she did a year ago. And, you know, whoever comes in might think, well, we want to keep the markets happy. So even if it's a left-wing sort of like leader, they might say, well, let's just keep Reeves for now. You know.
Mohit, your take on the UK again? It did feel like it started the year on a high, and actually it's now worse.
If you think, just to put some numbers, so official forecast for the next 3 years for growth is still around 1.3, 1.4. I think we are looking at 0.7 to 0.8 for the next 3 years. So there is a significant difference between what we officially think and what we are likely to get. Which means going to Bank of England, yes, April is not going to happen, very unlikely. But we are all worrying about inflation. We should actually worry about growth as well. UK will suffer on the growth perspective. So I think the Bank of England will still need to cut. Yes, it's cuts delayed, but I still don't see the path where Bank of England cannot afford not to cut.
So interesting. Thank you both for joining us. Mohit Kumar there from Jefferies and Bloomberg's John Stepik. Now, Bloomberg also learns that Anthropic's new and powerful Mythos AI model has been accessed by unauthorized users. More on our scoop next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back, everyone. Now, Bloomberg has learned that a small group of unauthorized users have accessed Anthropic's new Mythos AI model. Now, to discuss all of this, we're joined by Bloomberg Intelligence Senior Analyst Matt Block. And Matt, so good to speak to you. So how did these users, first of all, gain access? And is this a big risk? It feels like a big risk.
Yeah, it is. So Mythos is this unpublished LLM AI model that Anthropic's developed, which is allegedly so powerful it creates quite a big cybersecurity threat if used maliciously, and it seems like a small group of users have gained access to it. In particular, one of those individuals apparently works for a third-party vendor that does work for Anthropic, so they were kind of had inside information, if you like, in terms of how to get access to it. But they also used a bunch of other kind of more commonly used internet sleuthing tools and access to kind of tools like GitHub, which is a kind of coding repository that lots of coders use. So a bunch of different techniques to get access to it. And as we just said, it is potentially quite serious because right now Anthropic is only limiting access to this new model to a very select group of big companies such as Apple, so that they can use it to test their own systems to identify any vulnerabilities before it gets released to the general public. So it seems like this small group of users are only kind of interested in it from a curiosity perspective, but if there was some malicious intent there, it could have very serious consequences. We've heard recently that financial institutions are very keen to get their hands on this so they can test it on their own systems too. So it could have access implications for the internet at large and maybe even big financial systems. So quite serious.
So, Matt, on the topic of AI, SpaceX has a kind of agreement to buy, a company called AI Cursor, or it's AI startup called Cursor. What does this tell us?
Yeah, so when we talk about SpaceX, people typically think of rockets, but as part of a corporate restructuring ahead of the IPO, SpaceX acquired Elon Musk's other company, xAI, which is their equivalent of Anthropic or OpenAI. Now, one thing that xAI seems to be weak on is on AI coding tools, and they've been a massive part of kind of the recent surge in popularity of the AI world. And so Cursor is one of a number of small AI startups, well, not that small because it's valued at $60 billion, that is very focused on AI coding tools, and Elon Musk has identified this as a way to plug that gap in the capability weakness that he sees in xAI. So the plan is to, once the SpaceX IPO has happened, to kind of acquire this company or make a big funding round to kind of plug that gap in xAI skills and bring it up to par with some of the big rivals out there.
Okay, Matt, thank you so much. I called it AI Cursor. I'm going to call you AI Mats. We're all going to be AI friends. There you go. Matt Bloxham with the very latest on what's happening in AI. Now, Bloomberg understands that Deutsche Telekom is considering a full combination with its American arm T-Mobile. If approved, the deal would be the largest ever public M&A deal. For more on our scoop, let's bring in our Bloomberg's deals reporter, Manuel Baigorri. Manuel, good morning. So talk us through the potential deal.
Yes, Francine, this would be one of those transformative deals for sure. It's been talked about on and off and on again for years, over a decade for sure. And obviously, it's a deal that makes perfect sense commercially. Deutsche Telekom already owns more than 50% of T-Mobile US, and they've been trying to come up with an idea, a platform that would potentially combine the two, and down the road listed again in the US and in Europe. And obviously, telecom companies have been consolidating, looking for ways to find synergies and to be able to keep up with investments as they roll out new networks. But at the same time, they've been faced with a lot of position and regulatory hurdles, and also obviously backlash from politicians. So let's see, still early stages, we understand from our sources, but it will be definitely a fascinating deal in the industry for sure.
What obstacles could the merger face, Manuel?
Yeah, well, definitely we are likely to hear loud and clear from politicians from Berlin to Washington. Obviously, telecoms has always been a very sensitive industry. They employ thousands of people across multiple regions, and obviously also hold very sensitive data and technology, so they are seen as critical companies in their own countries and jurisdictions. So definitely, politically, it will be perhaps arguably one of the biggest hurdles, then potentially also regulatory hurdles like antitrust as well.
Thank you, Manuel. Bloomberg deals reporter Manuel Baigorri. Coming up, we'll speak to the president of the European Bank for Reconstruction and Development on the Institute's plans to invest in economies affected by conflict in the Middle East. That's next, and this is Bloomberg.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. U.S. President Donald Trump has indefinitely extended a ceasefire with Iran while maintaining a naval blockade of the Strait of Hormuz after planned peace talks fell apart. Bloomberg learns that Anthropic's most powerful and potentially dangerous AI model has been accessed by unauthorized people. Plus, Kevin Warsh says he won't be a sock puppet if he's confirmed as the Fed chair, but dodges questions about interest rates. Now, Lufthansa is planning to cut 20,000 short-haul flights from its European summer schedule to save on jet fuel, which has doubled in price since the start of the Iran war. At the same time, TUI has suspended revenue guidance for 2026 due to the war and until conditions stabilize. Well, let's bring in Bloomberg's managing editor for aviation, Benedict Kamel, who's in Berlin. Benny, good morning. So what can we expect in terms of possible further cuts to summer flights?
So, as you said, we've heard from a couple of airlines that are sort of applying cuts across their network and across their cost base. You mentioned Lufthansa. We heard from TUI. We've also heard from airlines like Finnair. We heard from United. We heard from Alaska. So, expect that to continue. Essentially, what these airlines are all grappling with is the extortionate price of jet fuel, of kerosene at the moment, which has doubled in the last couple of weeks, and that is something that is really cutting through to their bottom line. United, for example, said that they had $340 million in extra fuel costs in the quarter. So that is something that they need to then absorb elsewhere, and you then see it in areas like cutting back on capacity. Lufthansa is taking out some regional flights, some short-haul flights. They've also already closed down one operation. So that is something that will continue very hard look at the cost base. And as a result, for the traveler, that will mean fewer choices going forward because some flights will simply disappear.
So how concerned should European airlines be regarding jet fuel reserves?
So for the time being, there seems to be enough jet fuel available. It's really the cost of the fuel that is the issue, not so much the availability. We did, however, hear from Finnair, for example, this morning saying that if the war persists and if the blockade of the Strait of Hormuz persists, then things could change. For the time being, we have several weeks of visibility. That's what we've heard from multiple airlines. So that is not really the concern. It's not on the availability and on the supply side. It's really the cost side that is wreaking havoc across the industry. But again, we're all sort of at sea at the moment in terms of how this conflict will play out. If things stay this way, it might become more iffy going forward. And even if they do come back, it's not like you can quickly sort of flip a switch and everything's back to normal. You have refineries that are damaged, you have supply chains that are disrupted. So really people should expect, the industry does expect, that the disruption and as a result the elevated prices will remain in place for several months likely.
Benny, what are the long-term implications then for the industry?
So the industry has to take a hard look at its cost base, and there are several ways to go about that. You can start with things like taking out the capacity, as discussed. You can look at sort of what kind of aircraft you are flying. Are you flying old, fuel-guzzling aircraft? Can those be taken out? And then a slightly more dramatic way to look at it is to say we might need to find a stronger partner. That means consolidation in the industry is once again something that is being discussed. Consolidation always happens during times of crisis, and we are definitely in a state of crisis for the industry at the moment. So we have reported that United has at least sort of casually floated the idea of combining with American Airlines. That particular deal may not happen because of its complexity and size, but that doesn't mean that others can't happen. We've heard, particularly in the US, smaller carriers being in trouble, like Spirit Airlines, which is in bankruptcy and is trying to avoid liquidation. So you should expect some movement in that field. There's not that much left over to consolidate in Europe. There are a couple of sort of fringe airlines, but over in the US, you should expect some more of that to happen, and this is the time to do it.
Benny, thank you so much. Bloomberg's managing editor for aviation, Benny Campbell. Now, our U.S. colleagues will be speaking to Scott Kirby, the United Airlines chief executive, later today. Now, the Ukrainian president, Volodymyr Zelensky, says repairs have been completed on the Duzba oil pipeline, allowing the resumption of Russian oil flows to Europe. The restoration of the pipeline marks a breakthrough in Brussels' efforts to release its 90 billion euro loan to Kyiv. Now, for more, we're joined by Greg Sullivan, Bloomberg's Russia economy and government editor. So thank you for joining us. Greg, first of all, how crucial is this loan for Ukraine?
It's very important for Ukraine. In fact, Ukrainian President Volodymyr Zelensky said that he did talk to European Commission President Ursula von der Leyen and said that the resumption of the loan should go through. It's a 90 billion euro loan that has been held up, and it is really crucial for Ukraine. EU ambassadors are set to discuss that today, which is welcome news for Kyiv, which after 4 years of war has a war-torn economy. U.S. aid has largely evaporated since Donald Trump came back to office. So they do need this money. They have money right now through June. So to keep fighting the war, this is going to be very essential. It also underlines the importance of the Hungarian election that happened for both Brussels and Kyiv, because it was Prime Minister Viktor Orban who was lead among those holding up this loan.
Greg, at the same time, Russia is ramping up its oil flows. So, you know, is this basically giving Moscow more leverage because there's just not enough oil coming out from the Middle East?
Well, of course, as an oil producer, there is a bit of leverage there. And we have seen that backed up by the fact that the U.S. has given some sanctions exemptions to try and get more barrels to the market. It's also important for Russia. There are obviously a surge in oil prices. They should be reaping a windfall. But these Ukrainian drone attacks on their oil export facilities have really curbed their ability to take advantage of that. So now that they're ramping up, that should help them ease the pressure on their widening budget deficit.
Greg, thanks so much. As always, Greg Sullivan there, Bloomberg Russia economy and government editor. Now, the European Bank for Reconstruction and Development says it plans to invest 5 billion euros in the Middle East this year. Now, the funds are in direct response to the ongoing conflict in the region and seek to provide both immediate relief and long-term stability. Well, I'm delighted to be joined now by the president of the EBRD, Odile Renaud-Bassot. Thank you so much, President, for joining us. When you look at 5 billion euros, I mean, it's quite significant for a part of the world that feels oil-rich. So what do you see as the main concern longer term?
So I think there is very, very short-term concern for some countries because, for example, the situation in Lebanon or the situation in the West Bank, and the short-term impact of this conflict in the region is very significant through the question of energy prices, oil prices, but also the impact on tourism, on remittances. Countries like Jordan, Egypt are very dependent on tourism, very dependent on remittances from the Gulf. So this has an impact on the whole region. A country like Turkey also a bit is also directly impacted. So our response is designed to be very flexible, address short-term issues, to provide support on liquidity for businesses that are struggling with access to finance, finance, provide support for trade finance, but also longer term to help increasing the strengths of these economies. And for example, a lot of them have potential to develop new energy sources, renewable energy, and this is very important to enhance their competitiveness and resilience over the medium term.
Yeah, and this is almost like, I guess, a response to support the financial institutions, with you've mentioned the corporate sector, but also sustainable infrastructure. Will they need more?
Yes, they will probably need more, and they need a different type of support. So we see in that kind of crisis, in the very short term, sometimes you need to move from investing in capex, so in infrastructure or in new capabilities, to supporting liquidity, providing short-term financing, working capital, and so forth. So this, we are ready to do it, and we have the flexibility to do it. But also investment will be needed, and in order to enhance the resilience and the medium-term growth of these countries.
Can the Gulf states help? I was surprised to read first in the Wall Street Journal and then comments from President Trump about the UAE actually asking for some kind of currency swap. Now, I know this is nothing dramatic because it happens all the time, but are you taken aback by the wider region about how this is difficult for them?
Yes, and I think the Gulf countries are very involved in this region and have provided a lot of investment. For example, you remember this big investment in Egypt from Gulf countries. And the question, however, is the Gulf countries are themselves suffering from the situation. So whether they will shift back some investment, reduce it, it's still unclear. I think there have been some signs, but it's still unclear. But I'm sure they will remain very active with their neighbors because the stability of the region is also very important for them.
Odile, when you go to the region and actually speak to the people that you're trying to support, what kind of timeline are they giving you? Because again, it's unclear what happens to the ceasefire or the blockade. At the moment, it's very
Nobody knows. I mean, the situation is so uncertain.
It's so fluid.
So what we are doing is that we are continuing, we're leaning in to continue to invest in this country. When we see a lot of private sector players withdrawing in view of the increased risk, so we are counter-cyclical in that sense that we continue to invest. We signed a project recently with Lebanon private sector business in retail, which is something very, relevant for the functioning of for people, access to food and functioning of the economy. So we will continue to act and to invest as we were doing and really lean in it to support our clients in these difficult times.
We had a great debrief by, of course, our economy editor for Russia, Greg Sullivan. What's your take on what's happening in Ukraine right now?
The good news is this. There's a possible disbursement of this 90 billion loan. Of course, the war on Iran has also, in Iran has also an impact on the cost of energy for Ukraine. Any increase of barrel has an impact on trade deficit in Ukraine. So this is not without consequences for the country. But I think this support, continued support from Europe is very important. There were a lot of discussion also on the continuation of the reform agenda, and I think that the country has shown and continues to show its resilience. The big concern is winter preparation, because we've seen the last winter very difficult.
You were in Washington for the IMF World Bank meetings last week. Do you feel like Ukraine really has gone down in the agenda, that people would just worry about it less because everything that's going on in the Middle East?
Globally, there is a bit of, you see, news are shifting and a lot of focus on Iran, but I still believe, and there were in Washington a lot of dedicated meetings on Ukraine to continue to support Ukraine, a lot of commitment from a number of players, European countries, but also the UK, Canada, Japan, so continued support. And EBRD, we will continue to be very active in Ukraine.
I also wanted to ask you, we've had two big, elections in Eastern Europe where the EBRD has always been very present, one in Bulgaria and the other one in Hungary. They're just very different outcomes. Does that change your thinking of that part of the world?
I think in Hungary, the election will increase our capacity to step up investment in the country, very likely, because, for example, they will have more access to EU funding. They will probably have a broader, more open framework to finance project in infrastructure and so forth. So I hope that it will help us to engage more in the country. And in Bulgaria, we are very active. I think the president will we've been working closely with the Bulgarian when he was a president. I will continue to invest there very actively.
I mean, a lot of your systems actually have been more in demand now than they have been in the past. Is that just down to the volatility of the world?
Yes, I think that, and it was very much discussed in Washington, when you have so much uncertainty and, also a reduction of ODA, so less direct financing for development from a number of countries. The role of multilateral development banks are even more important in order to support the countries, to leverage, to provide some support for the government, but also mostly for us in the private sector.
So interesting. Odile, thank you so much, as ever, for joining us. That was Odile Renaud-Bassot, the president of the European Bank for Reconstruction and Development. Now, to the big political story in the UK, and the Prime Minister, Keir Starmer, is preparing for further attacks from opposition parties today after a former top civil servant accused his office of taking a dismissive approach to vetting Peter Mandelson for the U.S. ambassador role. Now, joining us now is Bloomberg's James Wilcock. James, thank you for joining us. Brutal 48 hours for Keir Starmer. How damaging has that been for the Prime Minister?
It's always going to be difficult when one of the UK's most senior civil servants says there was an atmosphere of pressure around appointing the former US ambassador. But look, Francine, if you were a deeply unpopular UK Prime Minister, unprecedented in how you've fallen from popularity, if your own MPs were worried about your political judgment, and if journalists around the country were watching for a new contender to rise up. That was all last week anyway. That hasn't changed. And so what we are watching for now is, has the mood turned terminal? And what ministers, MPs, what they're saying to us is, not this week, but look ahead to May, look ahead to local elections, and that's when we start to really sort of wonder if someone would potentially move to replace Keir Starmer.
James, I mean, I guess the question is, maybe not this week, because they don't really have a process, right? So they're not as organized to get rid of leaders, maybe like the Tories are, and then it's also unclear who would replace him.
Exactly. And what message would they be? If you're going to change the person at the top, who won a historic landslide election victory on a mandate of being different than the Conservatives, what is the message about changing that person going to look like? And when you're in government, you can't really have conversations in public like that. So what we, as sort of Bloomberg and all the other journalists are watching evolve right now is, are there backroom conversations? Yesterday, Angela Rayner, former Deputy Prime Minister and one of these sort of big leadership candidates, talked about Labour needing to have bolder plans. That's a big flag to watch if you've ever seen one before. Her, Wes Streeting, the current Health Secretary, Andy Burnham, the Mayor of Manchester, they're sort of seen as the three to watch. And so if this week or in coming weeks we start hearing more from them, I think that is who people watching Westminster will be paying attention to.
How brutal will the local elections be? And again, is this, almost a referendum on Keir Starmer, or just the policies which have also been a bit, questioned?
I think the reason we're watching these things is, look, Ollie Robbins, who is the former head of the Foreign Office, he was talking about an atmosphere of pressure. He talked about questions being made about decision-making in Downing Street. That is all going to damage Keir Starmer. The thing about local elections is, to put it in a business sense, if you're the local branch manager and you have to fire all your staff because the earnings, you knew they were going to be bad, but having to write all those emails when they're sacked, that is what psychologically hurts you. That's what's going to happen to MPs in a few weeks. We're seeing London, the capital, Birmingham, the second largest city alongside Manchester, Wales, these are all Labour strongholds. Polls suggest it could be very, very, very difficult. Now, all Labour MPs know the polls. They're not idiots. But having all the councillors who you've worked with for most of your political career say to you, we're losing our seats, we're losing our funding, we're losing our sort of jobs because of decisions you made in the national government, often that psychological damage is what really pushes people. It's what did for Theresa May. It was the European and local elections back in 2019 that made the Conservatives go, we need to change plans here. And many Labour Party officials and aides privately tell us, this is the real moment of danger for Keir Starmer. And what the past 2 days have done is they haven't necessarily changed anything, but they've reminded everyone. They've reminded everyone what the problems are with his sort of prime ministership in their eyes: political judgment, issues around process, and ability to convey a message. they've always been there. But this latest sort of twist in the saga, and Prime Minister's questions later today, are likely to put this all back on the agenda right when they want to be talking about cost of living.
Yeah, that's never a good thing to be in the spotlight for the wrong reasons just before a local election. James, as always, thanks so much. James Wilcock there with the very latest on the UK PM. Now, coming up, peace talks between the US and Iran have ground to a standstill. We'll get insights from Professor Mark Weller from Cambridge University next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Well, President Trump has indefinitely extended a ceasefire with Iran after planned peace talks between the two sides fell apart. Now, Iran's semi-official Tasnim news agency said there is currently no prospect of Iran participating in negotiations. We're joined by Mark Weller, professor at Cambridge University and Global Governance and Security Center Director at Chatham House. So, Professor Weller, thank you for joining us. It's unclear, actually, what happens next. How do you game theory this?
Good morning. Well, first of all, Iran fears that this is just a ruse to cover a surprise attack after midnight, when initially it was thought Mr. Trump's ceasefire would expire. But otherwise, I think this is an invitation by the American president for the Iranian, I think he called it, to put forward an integrated proposal, a full proposal that covers all the demands the United States have made, the nuclear file, of course, the Strait of Hormuz, maybe missile production and support for some of the proxies that Iran has links with, to see whether there's any realistic prospect of coming to an agreement. Unless there isn't a resumption of attacks tonight, I think there's a wider sense that neither the US nor the Iran would profit very much from using force again. For the US, there are no real military targets left they could visit. It would have to be this threat and campaign against bridges and energy installations, which I think some have considered to be a war crime because it deliberately targets civilian installations. The bridges are not used for Iranian military purposes. This is not a land war where they would move massive land forces from one part of the country to another. Mm-hmm. And for Iran, again, they have discovered that the Strait of Hormuz is another means of widening the conflict horizontally. First, it was the attacks against the Gulf states. Now it is an attack against global trade. All states in the world are affected. And the US then adopted the counter move by having a blockade against Iran, the only vessels that would have been allowed to pass, plus those that pay a fee to Iran. Yes, go ahead.
Yeah, the question is, what does a realistic peace deal look like? Because this is not, there are two big things, right? One is nuclear, and actually what they have access to. But the second one is who controls the Strait of Hormuz. That's not going to be fleshed out in the next couple of months, or is it?
Well, the Strait of Hormuz issue, of course, is one that only arose because of the conflict. There was no suggestion 6 weeks ago that a state would claim to be able to control global trade through the Strait of Hormuz or charge fees. So that is a negative consequence that has just come about because of the conflict. And one can only hope that the US will insist that this will simply be removed. Iran now seems to see this as a long-term money earner, which would be extremely dangerous for the global regime of the freedom of navigations through straits used for international navigation. There has been the temptation that the US might even join into some sort of traffic arrangement by which they profit, and one can only hope that they entirely reject that. On the nuclear file, the irony is that we can't really end up anywhere that isn't too dissimilar from where we were before the conflict started. The JCPOA, the old nuclear deal, involved the International Atomic Energy Agency, the UN, other key players. And it is very difficult to see how you would want to gain control over Iran's nuclear program without an involvement by the International Atomic Agency and others. There are various proposals that could be easily adopted to address the highly enriched uranium that they have. So yes, it could take some time to negotiate, but it's actually not at all impossible to come to an arrangement. But it's difficult for the US because they have to admit that what they end up with is not going to be that different from what they had before.
But Mark, give me a sense of, when you look at some of what tools do they have at their disposal? Like, we understand that, especially for the Iranian regime, this is about survival. How strong is this new regime? What's their real negotiating power?
Well, they have built negotiating power due to the Hormuz issue. They have also opposed the counter-blockade. You saw that the US arrested a vessel a few days ago that was answered this morning by Iran attacking two merchant ships that were near the Strait of Hormuz. And they are pretty desperate to get rid of that blockade, which will threaten their regime in the midterm, because that's their principal or only source of income, their own oil exports and their own connections with the rest of the world. So for them, as you say, it's a matter of survival. They might not mind too much if further bombing imposes further sacrifices on the civilian population. But this blockade, I think, is an issue of some concern to them. And that's why the US has refused to lift it in exchange for Iran lifting its blockage of the Strait of Hormuz.
Professor, very quickly, what role does China play in this? Because, again, that's something that's very unclear at the moment.
Yes, I think China could play a very constructive role. They should really join up with the Pakistanis who are trying to rescue this mediation and offer a guiding hand on the issue of definitely restoring the freedom of the seas through the Straits of Hormuz, transit passage for all international shipping. I think they do have the ear also of President Trump in terms of encouraging moderation on his side. And somehow the grown-ups have to take over and bring the International Atomic Energy Agency and others back into the game.
Mark Weller, thank you for joining us. That was a professor at Cambridge University and Global Governance and Security Center Director at Chatham House. Up next, it's Bloomberg Brief, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. At a standstill, President Trump extends his ceasefire with Iran indefinitely as peace talks stall. Not a sock puppet. Kevin Warsh vows Fed independence if confirmed as senators grill the nominee. And unauthorized users are accessing Anthropic's new Mythos AI model. More on that scoop coming up. Let's take a look at these markets then. Oil has risen above $100 in terms of Brent, back below it now, but this as those peace talks just aren't going to take place, even as President Trump has extended that ceasefire. 2 container ships also attacked in the Strait of Hormuz as well. New York crude above $90 a barrel. So we're seeing a little bit of pressure there. When it comes to the 2-year yield, well, a lot of controversial things said yesterday in Kevin Warsh's testimony to the Senate Banking Committee. We're not seeing that much of a reaction, though, in the bond market. We are seeing still a 40% chance of a Fed cut priced in this year, and that 2-year yield still above the Fed funds rate. S&P futures pointing to a higher open. NASDAQ futures look like that index might roar back once again today. And the dollar index, a reverse mirror image from yesterday, down 0.2%. All right, let's get to some individual movers this morning. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. United Airlines is in the green this morning, perhaps surprisingly, given that it just cut its outlook because of higher fuel costs. But it seems that investors are actually looking beyond that and thinking instead about the ceasefire extension with Iran. So there's some sort of a cautious optimism across the travel sector this morning, with United very much at the forefront of that. It is not so positive for Capital One after the credit card lender missed estimates and also set aside more provisions for bad loans. And so the shares are down more than 2.5% this morning. And finally, Reckitt Becancer is also in the red this morning in London. That is after the performance was really dragged down by lower sales of cold medicines and also disruptions to the operations in the Middle East. So we are down more than 5% for Reckitt this morning.
Chloe, thank you so much. We'll keep an eye on those stocks. That's Chloe Melly there in London. And a great lineup for you this hour. We're going to speak with Lindsay Newman of King's College London in just a moment. And later this hour, JP Morgan's Kelsey Barrow joins us on the Fed's rate path. President Trump extending a ceasefire with Iran indefinitely after peace talks fell apart. He posted on Truth Social, quote, "I have directed our military to continue the blockade and will therefore extend the ceasefire until such time as Iran's proposal is submitted and discussions are concluded." Joining us now from Dubai is Jumana Brisecci. So, Jumana, we didn't get any kind of a response, it seems like, from Iran, except to say that there was some sign that the U.S. is ready to end the naval blockade. What do we know about the Iranian point of view right now?
Yes, well, they actually haven't said a whole lot this morning. But what I will say is that the Iranian Foreign Minister Abbas Araghchi overnight did put up a post in which he said that blockading Iranian ports is an act of war and thus a violation of the ceasefire. And once again, reiterating their starting point, which is that they're not going to enter into a second round of discussions unless the U.S. lifts their naval blockade. And what we didn't show there in that introduction is, of course, the big news is President Trump has extended the ceasefire. He's linked that to Iranians coming back with their own version of a proposal. But then he also said that the U.S. naval blockade will stay in place. And this has emerged as a key sticking point between the two sides. And it's become apparent that in order to progress, in order to have that sequencing to move from where we are right now, which is in the state of limbo, to a potential other new round of diplomatic discussions, both sides would like to see the other side move a little bit on their starting points. And clearly here, Iran are pushing the U.S. to at least temporarily lift that blockade. There's been plenty of press this morning coming from Iran suggesting that they've got some signals that the U.S. is ready to do so, but that has not been confirmed by the U.S. And the official stance from the United States is that the blockade still remains in place. And I will just remind everybody that it is still not safe to go through the strait. Just this morning, there were reports of gunfire, of gunshots being directed from an IRGC boat towards a vessel just 20 kilometers away from the coast of Oman, and really just underscores the fact that not only is it not safe, but still there are effectively two blockades in place right now around the Strait of Hormuz.
All right, Jumana, thank you so much. Jumana Brisecci there in Dubai. President Trump bringing China back into the conversation, suggesting that it could be providing weapons or other potentially lethal war supplies to Iran. China's Foreign Affairs Ministry has rejected any association. Joining us now from Hong Kong is Bloomberg's Jill Deeses. So, Jill, what's this gift that Trump was referring to when he said that the U.S. caught a Chinese gift for Iran? Do we know any more?
Look, Bonnie, he didn't really explicitly say that this was a weapon, but in this context of his quotes there, that was pretty heavily the insinuation here that we were hearing from Donald Trump. Now, I think it's worth pointing out that, first of all, the White House didn't have any additional comment after these remarks. And while, the U.S. has been suggesting that Moscow has been contributing something to the Iranian efforts in the war militarily here, the connection with China has been a lot less clear, and obviously you just quoted there. You've got, what does sound like a denial from China here. I do think that what's really important to remember in all of this is China's in a really sort of tricky position. Obviously, certainly an economic ally of Iran, and in that level is, fairly, that economic connection there is fairly strong. But the idea of, sort of shipping, any kind of military aid, weapons aid in some kind of sense would really risk economic sanctions from the United States. Trump himself has said that any nation found aiding Iran during this war would be faced with 50% tariffs. So that is a strong consideration here. All that being said, what we've heard from Xi Jinping publicly over the last couple of weeks is certainly this idea that the Middle East should sort of control sort of take matters into its own hands. Certainly trying to advocate for peace and sort of an end to this war. But I mean, yes, I think in absence of further specifics from Trump here, obviously an interesting twist in the story here.
Yeah, absolutely. Jill, thank you so much. That is Bloomberg's Jill Deeses. Joining us now for more is Lindsay Newman, visiting research fellow at King's College London. Lindsay, in terms of who might be proposing any kind of new plan from Iran, who might it be? Who is doing the planning? And is there the suggestion that perhaps there might be a little bit of a power vacuum right now?
Thanks, Bonnie. Thank you for having me on. This is a key question that you rightly point to, which is who speaks for the Iran regime at the moment? Just last week, we saw, for example, that the foreign minister Rakti said that the Strait of Hormuz was open, but then just a bit after that, a couple hours later, the IRGC representative said, no, in fact, the Strait of Hormuz is closed. So we know who the key figures are, but the question is who is actually leading the charge? Who is in a position to negotiate? And what we've seen over the last 24, 48 hours is that the Iran delegation was not prepared to meet any of America's current demands, and in fact, it was not even willing to get on the plane to Pakistan. And so here we are on Wednesday, and the ceasefire has now been extended by the U.S. administration, a U.S. administration who said just earlier this week that they were not prepared to allow for any extension. And I know this is really the benefit of any hindsight here, Bonnie. The extension of a ceasefire was really the only move that was available to the U.S. at this point. It has regained some momentum and some leverage with the blockade in the Strait of Hormuz. But despite U.S. President Trump saying that he was ready to bomb further critical infrastructure in Iran, the appetite for such further military action is still an open question within the U.S. administration and certainly for the American people.
Yeah, I mean, his approval rating is at the lowest of his term right now. This ceasefire, it's coming apparently at the request of Pakistan, not at the request of Iran. Does that make a difference to the dynamics at all, Lindsay?
I think that this idea that the request has come at the request, this extension has come at the request of Pakistan is really providing coverage for all parties involved. Is actually quite a shrewd move by Pakistan and allows the U.S. to have time to regroup. We know that the U.S., for example, is sending further aircraft carrier into the region. It also has additional troops coming. So we can expect to see the U.S. that it's using this time to ready further military posturing, or at least the appearance of forced posturing. And it also allows the U.S. to pursue other avenues, which I fully expect, including economic security tools. We know that alongside Operation Epic Fury, Scott Bessent, Secretary of Treasury Scott Bessent last week said that the U.S. is pursuing an economic fury tactic, which refers to the possibility of further sanctions, secondary sanctions, tariffs, secondary tariffs on Iran and Iran-linked parties. So this is really covered to allow for both sides to sort of take a breath and see where do they go from here. Now, we know overnight, even still, that Iran has targeted shipping assets in the Strait of Hormuz. And so this is going to mean that parties are going to need to decide where is their red line, what level of activity is going to trigger a so-called breach of the ceasefire. Do we need zero activity for it to be a ceasefire, or are we going to have to hold our noses about some of this sort of engagement that we're seeing?
Yeah, and it does seem that Iranian tankers are sailing out of the Persian Gulf and not being attacked, by the U.S. They're sailing past the U.S. blockade. We did have that one seizure, of course, the other day on the part of the U.S. But what does it benefit anybody if things kick off in the Strait, Lindsay? I mean, it's already difficult to see a path forward that saves face for both sides. That would just make things worse, no?
Yeah, absolutely. And so that's why I think that even though we're going to see these low-level engagements, both sides are going to be really hesitant to sort of escalate further in a way that calls upon them to say, look, the ceasefire is broken here. I have to expect that over at least the coming days that both sides are going to be taking a breath. We're going to see some back-channeling diplomatically where they're going to offer sort of, what's palatable to either side. We know what the issues are that both sides have misalignments are. It's the nuclear issue, the enrichment of uranium, it's the future of Iran's ballistic missile capabilities, it's regional proxies. And then now, of course, what's vaulted to the top, as you rightfully point out, is the Strait of Hormuz. The U.S. cannot accept a deal where there isn't resolution over the Strait of Hormuz in the sense that the Strait of Hormuz becomes an open passageway again. Because otherwise, what's happened here is Operation Epic Fury has had massive military impact, but has not been a strategic victory for the U.S. And in fact, it would leave the U.S., the region itself, and the world with knock-on effects to energy, food, commodity pricing, in a worse position than it was before the conflict began on February 28th.
And we're seeing that on a daily basis in the price of oil. I mean, the December contract is still above $75 a barrel. That's December. What would incentivize Iran to give up the idea of a fee? Would it need to be payment, literally, from the United States, and lots of it, unsanctioning individuals?
Yeah, absolutely. So we know there are a couple of items on the wish list for Iran that includes lifting of sanctions, that includes reparations for this conflict, but also unfreezing of prior sanctioned assets and funding. And it also includes this idea, which I think is really deeply unpalatable to the U.S. and Israel as well, that no further military action, no further targeting of Iran will be forthcoming in the future. And that just really underscores how wide the gap is between the two sides. We've seen it throughout this entire process, even before the Operation Epic Fury began in February, that these two sides, they can't agree about the points at hand. They can't even agree about what they're willing to talk about. And just we saw a sort of microcosm of this overnight where they couldn't even agree to get on the airplane and have a conversation together in Pakistan.
All right, Lindsay, we'll see what takes place for the rest of the week. Lindsay Newman of King's College London, thank you for joining. Now, to other top stories trending on the terminal this morning. Lufthansa is cutting 20,000 short-haul flights from its European summer schedule to save on fuel. The price of jet fuel has doubled since the start of the Iran war. The first 120 cancellations were implemented Tuesday. Broader flight cuts will be unveiled by late April or early May. Deutsche Telekom is weighing a full combination with its American arm T-Mobile. A deal would create a single, simplified corporate group jointly owned by the company's current investors. The move to create a multinational telecom group would be the largest ever public M&A deal. Republican Senator Tom Tillis said he would support Congress opening a probe of a Federal Reserve renovation project in lieu of the ongoing Justice Department criminal investigation. Tillis said he would consider dropping his objections to Warsh's nomination to Fed Reserve Chair if an inquiry by the Senate Banking Committee prompts the DOJ to drop its, quote, absurd investigation. Coming up, an AI security alert. A group of unauthorized users have gained access to Anthropic's Mythos. More on that next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This This is Bloomberg Brief. I'm Bonnie Quinn in New York. Anthropic's new Mythos AI back in the spotlight this morning. Bloomberg learning that a small group of unauthorized users have gained access to the model through a mix of tactics that includes using access they had as a contractor to Anthropic. Matt Bloxham of Bloomberg Intelligence joins us now. How much of a threat is this disclosure, Matt? I mean, what kind of next step might any of these unauthorized users take if they were of a mind to?
Yeah, I mean, it could be potentially significant because we've heard obviously that this new Mythos AI model is potentially very good at creating cybersecurity threats. So obviously in the wrong hands with a malicious actor, that could really disrupt the internet at large. And I think a number of financial institutions are keen to get their hands on the kind of preview version of this model so that they can test it against their own systems to shore up any vulnerabilities. So it does seem for now that these users more just curious about how this model works and what it's capable of. But if they did change tactic or share access to it with a more malicious actor, could really have quite substantial and significant consequences for perhaps the financial system or the way the internet operates.
I mean, could this have any impact on Anthropic's going public or anything like that? Will it have an impact on, funding rounds and so on?
I don't think so, but I think for sure they'll want to kind of be very clear about how access was gained and tighten up their policies with third-party vendors. Obviously, ahead of a possible IPO this year, these are the kind of issues that they'll want to kind of get tightened up and nailed down so that there are no kind of potential threats that people might worry about.
Matt, SpaceX says it has an agreement to buy the AI startup Cursor for $60 billion later this year, or pay $10 billion for the companies work together. What does Cursor do and how will SpaceX benefit?
Yeah, so Cursor is an AI coding specialist business, and so AI coding has become incredibly popular and an incredibly important part of the way AI is contributing to the development of the software industry and enterprises at large. Obviously we think of SpaceX as a rocket company, but as part of the kind of pre-IPO reorganization, Elon Musk rolled xAI into SpaceX, and xAI is his equivalent of OpenAI or Anthropic, essentially an LLM AI business. And Elon Musk has been quite public in saying that he kind of feels that xAI needs to effectively start again in how it develops its proposition, and that one area that's particularly weak on is on AI coding. So buying this business would plug that gap. So quite an important acquisition that they have planned.
It's a massive day for earnings. We start getting, the equipment makers, the memory chip makers and everything today. IBM, Texas Instruments in particular, after the market close. What will you be most watching, Matt?
Yeah, I think my focus, particularly on IBM, will see a huge amount of interest in all of these software names in terms of how much cloud is benefiting from AI demand from enterprise. Essentially for the AI momentum to continue, we need to see enterprises spending more and more on AI. So that will come through in their cloud revenues. But I think also for a software company like Microsoft, and IBM, there's also this kind of focus on the disruptive effect of AI on their kind of legacy software businesses, and so that's going to be a big focus as well. To what extent are some of the kind of legacy platforms being hurt by new tools that are coming in from the likes of Anthropic?
Amazing. Lam Research, Boston Scientific, and all of those other companies also reporting today. Matt, thank you so much. That's Matt Bloxham of Bloomberg Intelligence. Coming up, Virginia passes a redistricting law favoring Democrats. We'll take a look at that and what else is making headlines in your front page news. This is Bloomberg.
80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Bloomberg Brief. I'm Bonnie Quinn in New York. It's time now for your front page news. First up on the Financial Times, UK inflation accelerates to 3.3% in March due to surging oil prices. Inflation was at 3% the previous month. The Bank of England meets next week and will weigh how to respond to the energy crisis. Next up, the Washington Post leading with Virginia voters passing a redistricting measure that could add as many as 4 Democratic-leaning districts ahead of the midterms. Democrats poured at least $64 million into the redistricting campaign in an effort to counter President Trump's push to add Republican seats in other states. And on the front page of the New York Times, Ukrainian officials suggesting that a slice of the country's Donbass region be called, quote, Donnyland. A Ukrainian negotiator first floated the term partly as a joke, but continued using it as an attempt to convince the Trump administration to give Russia more pushback. And those are your front pages. Let's take a look at these markets as we head into the Wednesday session. So we have futures pointed higher. Nonetheless, oil did top $100 a barrel a little while ago. So we'll see if this surge in futures sticks. This, of course, as earnings season continues apace, a massive week this week. The dollar index giving back some of yesterday's gains, and the 10-year yield at 428.66. Not too much movement across the curve after the Warsh testimony, which is fascinating. As you can see there, we have crude prices elevated quite substantially again, and Bitcoin also higher, so go figure. Bitcoin above 78,000 a coin now. Coming up, we're going to catch up with JP Morgan's Kelsey Barrow on the Fed. That's next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your Opening Trade.
Only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. At a standstill, President Trump extends his ceasefire with Iran indefinitely as peace talks stall. Not a sock puppet. Kevin Warsh vows Fed independence if confirmed as senators grill the nominee. And unauthorized users accessing Anthropic's new Mythos AI model. More on that scoop coming up. Let's take a look at these markets. Brent crude topped $100 a barrel earlier after reports of attacks on tankers in the Strait of Hormuz. Back below that now. New York crude, though, still above $90 a barrel. And if we look out a few months, crude is still trading above $75 all the way out to December. Now, the two-year yield not changing too much after Kevin Warsh's testimony yesterday, 377.05. Perhaps it's too far away, the idea of a confirmation in a new Fed chair, or perhaps market is just digesting what he said so far, but still above the, obviously, Fed funds rate, and markets only pricing in about a 40% chance of a cut this year. Futures are pointed higher. We did have that day yesterday. A lot of headline whiplash, but right now it looks like we're going to have a very positive day for the S&P and the NASDAQ 100. Lots of earnings on deck today, too, of course, and the dollar index giving back some of yesterday's gains. Let's get to some individual movers now with Chloe Melly in London. Chloe.
Good morning, Bonnie. United Airlines is up. It did cut its outlook because of higher fuel costs, but it seems that the market is moving beyond that and instead focusing on the ceasefire, the extension of that ceasefire with Iran, which is injecting some optimism into this travel sector this morning. It is not so positive for Capital One. The credit card lender missed estimates and set aside also more cash for souring loans. So this really goes to show the cracks that are starting to appear in consumer confidence, and it's a little bit worrying for that company. And finally, Vertiv Holdings is up this morning in pre-market ahead of the earnings, and it's seeing some of that read across as well from its European peer ABB, raising revenue expectations because of this strong demand from data center customers. And so investors seem to be also pricing in maybe some of that boost for Vertiv this morning.
All right, Chloe, thank you so much. Chloe Melly there in London. On Capitol Hill, senators grilling Fed chair nominee Kevin Warsh.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
Warsh's path to the Fed's top position still a little unclear. JP Morgan's Kelsey Barrow weighing in after that hearing, writing, quote, Warsh's testimony highlighted his view on the need for transformation of the Fed's inflation framework, tools and communication, but the details on how he will achieve these changes and what they actually are remain less clear. I'm pleased to say Kelsey joins us now. She's fixed income portfolio manager at JP Morgan Asset Management. So much to go through here. We could be conversing for a long time before we parse out all these details. But first, what is your base case in terms of actual nomination? When might Kevin Warsh take over as Fed chair?
So the timing, I think, is a little bit clear. Or not so clear. So what I think we know from the last nomination process of Stephen Miron is that the Senate can move fast if they want to. So really the roadblock right now is the DOJ investigation. If that can come to some type of resolution that allows Senator Tillis to move forward, then we know from history that the Senate can move very fast from there.
And it does seem like Tom Tillis has opened, just a little sliver of a door to potentially, changing his mind on, blocking this confirmation. On the question of Fed independence, did Kevin Warsh say enough to put that to bed in this market's mind, or is there still some concern out there?
I think there's probably still some concern out there that he's not really going to be able to address in this testimony. It's ultimately going to be down to how he analyzes the data and what he does in the job. So he's said the right things as it relates to independence. That's what most people would have expected. But he was very light on the details, particularly in terms of his general views on the framework and where he sees interest rates going from here.
On his views, plenty of criticism of current Fed monetary policy in there, right? But let's look at particularly his views on inflation and how the Fed communicates its thoughts on inflation. What does he think will be better?
Yeah, that's interesting. So I think one thing we know for certain is that he views Fed communication as too expansive, too ample. We're hearing from people too frequently. And there are certain things that he can do himself without the committee, without broad consensus. He can make changes and tweaks to the extent to which, the frequency of his own communication, perhaps the frequency of the press conferences. He could look at changing those things, and those are things that he could do in a more unilateral way. I will say the things that he said on inflation were interesting to me. So one thing that he highlighted was, the Fed's preferred measure of inflation, which is PCE. He kind of leaned away from that metric and highlighted that perhaps there were some better ways to look at inflation. But I think what's interesting is ultimately what he said he wanted to understand about inflation dynamics is underlying inflation. And that actually is no different from any Fed member when they're trying to assess the trends in the economy and the trends in inflation. They're trying to take out the noise and look at the underlying trend. So he referred to some things like trimmed means, trimmed medians. Those are actually things that the regional reserve banks already publish. The Dallas Fed has a trimmed mean that we look at all the time. And it is true that those measures are running cooler than the core PCE metric. And in our view, when we look at inflation, we actually think that those trimmed mean measures are better representative of the trend. We do see that once you, look beyond the supply shocks from core goods and energy, that the disinflationary trends within shelter and wages are actually well entrenched. So in that way, it's not really that unconventional what he's saying in terms of how he wants to analyze inflation.
So assuming at some point in the next few months he does become Fed chair, is there going to be a push to get rid of the dot plot? Will the committee agree to do that? And what do we get instead? Qualitative communication? Is that him literally telling us from the podium that this is what we think about inflation?
Yeah, so I think that he will want to introduce this debate. I think he will want to introduce a lot of debates. You know, one of the things that he said is he wants messier meetings where there's more disagreement. So I suspect he wants to put everything on the table, but he's going to have to do it within the infrastructure and the existing processes of the Fed in terms of how they make decisions and when they make decisions. And so they do have a framework for every few years kind of addressing the long-term strategy. That's going to be a place where he can introduce some of these ideas in terms of, do we tweak the inflation target, the formal inflation target? Because one thing he talked about is the challenge that the Fed had with switching to flexible average inflation targeting right ahead of COVID. And that ended up being very poor timing. And the reality is, again, we feel like there's a lot of uncertainty right now about what he wants, but so far what we've heard is not necessarily that different from the way that the Fed is currently operating. So he pushed back on flexible average inflation targeting. Well, the reality is the Fed hasn't been managing to flexible average inflation targeting in years because of the situation with inflation during COVID. And so that wouldn't be much of a change, actually.
Real quick, Kelsey, just on EMs, because you know their central bankers were watching this as well, because it's going to have a huge impact on emerging markets. His concern that perhaps the Fed, creates volatility spikes that will have an impact on emerging markets and the carry trade in particular. Are you looking that far ahead and maybe positioning your portfolio to take advantage of some of what Kevin Warsh is saying?
So I would say more generally within the emerging market central banks is they've proven to be very nimble over the last 5 years, and even more broadly than emerging central banks, emerging market economies have proven very resilient to shocks. The global shocks that we've seen most recently, of course, in the Middle East. And so there's plenty of opportunities there to take advantage of. The IMF, of course, was last week. Our analysts came back, and the list of countries with positive fundamentals far outweighed the list of countries with negative fundamentals, particularly positive fundamentals that weren't necessarily fully priced into the market. And that's what we're focused on in terms of active management is, where is their positive trajectory, and also where is that trajectory not yet priced into the market.
An exciting time for a fixed income portfolio manager. Kelsey Barrow, thank you so much. Kelsey Barrow, of course, of JP Morgan Asset Management. Coming up, an indefinite extension. President Trump orders to hold off on strikes until Iran comes to the table. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that, you know. But that's where I'm at today.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Brent crude hovering just below $100 a barrel now as President Trump indefinitely extends a ceasefire with Iran. The Strait of Hormuz, though, still shut with peace talks in limbo. Joining us from Washington is Kate Ackley of Bloomberg Government. Hard to assess exactly where we are right now, Kate. We are hearing reports of some tankers being fired on, some tankers getting through, and the fact that, you know, Pakistan had to do the mediation on the part of Iran, meaning that really Iran didn't give a response to this idea that this extension of the ceasefire was welcome or not. We're going to get back to Kate Ackley in just a few moments, but this is really where we stand at the moment. And that situation in Iran continuing, though the ceasefire is supposed to get extended from tonight onwards. Let's move then to Anthropic and its problems, because its Mythos AI model was accessed by a group of unauthorized users. It's obviously powerful. It could enable dangerous cyber attacks in a potential scenario. Let's get to Matt Bloxham to tell us whether this is actually possible. Matt Bloxham of Bloomberg Intelligence joining us now. Matt, would it be easy for cybercrimes to happen now that we know unauthorized users have access?
Yeah, I mean, I think that's certainly a kind of a realistic possibility. You know, it would depend very much on whether these unauthorized users shared that access or kind of passed on how to access the model to perhaps more malicious actors. And I guess there's also the question about whether, since this has come to light, Anthropic's being able to kind of understand how they gained access and to put in tighter controls to kind of restrict that access from here, because actually this is a very powerful model. Lots of big technology companies have already got access to it so they can test it against their own systems. Lots of financial institutions also asking for access to it so they can test it against their systems too. So in the wrong hands, it could definitely cause quite a lot of systemic risk to the financial world and to the internet at large.
Anthropic has obviously come out and defended itself to a certain extent. What can it do to make its LLM, you know, more fireproof, literally?
Yeah, I think this is more a question about how it controls access to its systems by third-party vendors that it uses, you know, as partners. You know, so there's a kind of, I guess, a due diligence process and making sure that those companies are vetting their employees correctly and that the way their systems are set up is appropriate. I think, you know, there is inevitably always a kind of broader set of, you know, actors within the internet that's kind of looking for weak points in various systems. GitHub has been mentioned as one area where perhaps information has been shared that gives clues for people to kind of try and find vulnerabilities and ways in to access these things. So, you know, it's always a bit of a game of cat and mouse with these things, but I think they'll definitely be going back and checking to make sure they've done everything they possibly can to protect access to their systems.
100%. Now, SpaceX has an agreement to acquire an AI startup, Cursor. $60 billion is a lot of money. They could also pay $10 billion for the companies that work together. What does Cursor do? How will it benefit SpaceX?
Yeah, so Cursor's a kind of relatively new AI startup. It's focused on AI coding, which has become a massively popular part of the AI trend, you know, really helping engineers across all sorts of firms speed up programming, make it much more efficient, much more effective. And this is an area that xAI, which is Elon Musk's AI business equivalent to Anthropic or OpenAI. It's an area where they've been lacking, and Elon Musk has been public about saying that, generally speaking, XAI needs to kind of essentially be rebuilt, and this is one area where it has a bit of a gap. So the idea would be that Cursor would fill that gap for them. I think there's kind of a bit of a nuance here about the kind of timing of this deal. Obviously, SpaceX is filing for an IPO. I think if they were to do this acquisition very soon, it would force them to kind of refile. They don't want to do that. So I think this deal's being set up in a way that it would happen after the IPO's gone through, but by kind of announcing this and making this public now, essentially it's kind of helping to provide reassurance to potential investors that there is a redevelopment plan for XAI and that key capabilities that it needs to have are going to be put in place.
Interesting. Yeah, that's such good context. Matt, thank you so much. That's Matt Bloxham there of Bloomberg Intelligence in London. Let's turn to earnings. So not only do we have the software makers today, some of them, but also shares of United rising. Investors looking past the airline's outlook cut. Boeing and Southwest are on deck to report today. Joining us now is Bloomberg's Benedict Camel. So United obviously cut its earnings per share forecast, Benny, but there were certain things that were great about results, right? PRASM was up 7.4%. How is it dealing with the current crisis in fuel costs?
Yeah, so it was a little bit of a mixed bag for the earnings. As you said, they cut their forecast. At the same time, demand is still holding up. And importantly, it is holding up at the front of the cabin. So the business class and the premium seats, that's where the money is being made. And that appears to be still strong. So somewhat a resilient picture there from the consumer side. And I think that's giving investors and the broader public looking at this space some comfort that people are still booking. There is no sense that there's a broad sort of drawdown of demand and of people reconsidering their trips. Now, that might change as ticket prices get more expensive, and they have gotten more expensive as a result of kerosene and jet fuel going up in price. So if that drags on, if that extends into, should we say, the middle and beyond of the year, then maybe we will see that demand picture diminish somewhat. But for now, overall positive demand picture out there and booking picture, and that's why people are and investors are looking past the forecast cut for the year. As you said, we also have Southwest reporting today. We have Boeing reporting in a few hours. The outlook there really is, or the prediction is, what will the cash burn look like? Is Boeing able to sort of stem that bleed? They have said that over the next couple of quarters, they want things to improve on that front and for the company to actually start generating cash again. So that is one key thing that people will be looking out for.
Benny, thank you so much. That's Benedict Camel there for us. Let's get back to the ceasefire now, which is intended to continue tonight after President Trump said that's what's going to happen. Brent crude, though, hovering just below $100 a barrel. Let's get to Kate Ackley of Bloomberg Government. So, Kate, what is the current situation? Pakistan asked for the ceasefire to be extended. Is Washington in talks with Iran, even in a back-channel type of way, or has that just stopped now?
But this has become a very fluid, very uncertain situation, sort of minute by minute. And of course, there are back-channel conversations ongoing. But even with the ceasefire continuing and all that, there's still a lot of economic disruptions that we are following at Bloomberg Government because of the closure of the Strait of Hormuz. I mean, you know, every other day it's open, it's closed. It's not just oil and gas that, you know, policymakers and others are concerned about. Obviously, that's the main headline. We have a story up just this morning at Bloomberg Government looking at the concerns of the helium supply, which is used for semiconductors. And, you know, that's to power the artificial intelligence infrastructure. So there are many, many ripple effects of this situation that we're seeing well beyond the Middle East.
You know, in D.C. yesterday, obviously, Kevin Warsh was on the Hill. Bloomberg spoke with Senator Elizabeth Warren following that confirmation hearing. Take a listen.
He would not answer any question that might, in the tiniest, littlest, smallest way, disagree with Donald Trump. He proved to all who were watching that Kevin Warsh will be a great sock puppet for Donald Trump.
Warren isn't going to be the stumbling block here, though, in particular. I mean, it's more likely to be Tom Tillis, right? What is the outlook at this point, given that Tom Tillis seems to have opened the door to a potential way around his problem with the Fed and the administration's impact on the Fed right now?
Well, it's still looking uncertain because, as you mentioned, Senator Tillis has said that he's not going to vote to confirm, or to get Warsh's nomination out of the Senate Banking Committee, which is the first hurdle it needs to do before it gets on the Senate floor. He said he's not going to do that until the Justice Department drops its investigation into the current Fed chair. So a lot of kind of behind the scenes back and forth here. It's still uncertain, but Tillis has shown some opening to potentially standing down.
Yeah, looking for a way around his stance in some ways. Kate Ackley, thank you so much. Bloomberg government there. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Versace in Davos, Switzerland, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, earnings. Going to be all earnings today. We get Boeing before the bell, then IBM and Tesla, big ones after the market close. Lots of others as well. Plus, we also get Treasury Secretary Bessent testifying on Capitol Hill. That's at 10 a.m. Eastern on the budget for 2027. Let's take a look at your market outlook then as we head into the Wednesday session after a pretty negative session in many ways yesterday. Although I have to say volume has been really low at this point. It's quite interesting to see these moves when you know that maybe the conviction isn't behind them. S&P futures pointing to a higher open. We had the SOX, of course, up 0.5% yesterday. So you know that the NASDAQ is going to be rallying even more than that today, at least the picture for now anyway. We're giving back some gains that the US dollar made yesterday, and not a huge amount of movement on yields. The 10-year yield there at 428.86, and no real movement at the front end either after Kevin Warsh's testimony. That is it for today's Bloomberg Brief. Surveillance is ahead. This is Bloomberg.
Mutua Madrid Open is underway. Spanish wildcard Caitlin Quevedo took out her childhood idol Venus Williams to reach round 2. The 20-year-old fought back from 3-love down in the second set before closing out her first win of the season in just over 2 hours. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The market is getting more discerning.
You're starting to see a bit of a broadening. There's some durability behind this.
The technicals in the equity market are extraordinary.
The direction from here is really what's the next positive surprise?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, stocks bounce. President Trump extending the ceasefire after vowing not to. Tehran indicating Washington might be ready to lift its blockade, just as elevated energy prices are pushing United Airlines to cut its outlook, pushing Lufthansa to slash 20,000 flights.
This is huge, Jonathan, in terms of the crisis is now starting to become a little bit more uncertain for companies as they start to guide for the future, because right now we're in a state of basically paralysis, in limbo. The ceasefire talks right now are on hold. The president put out a statement, but interesting to that statement, he's waiting for the Iranian response, and he didn't give a deadline. When has he not given a deadline?
Investors want to make something really complex very, very simple. There is a path towards escalation, there is a path towards de-escalation, and it appears, at least for now, the president is committed to a path towards de-escalation. And the market at the moment is anchored around that idea.
Yes, the market is anchored around that idea, but at the same time, on the ground, the Strait of Hormuz is still shut. And actually what is happening right now is you see some headlines coming from Iran that not only do they go after ships, they're now starting to take hold of some of these ships. At the same time, the Treasury Secretary yesterday doubled down on Twitter and said, we are going to go after any sanctioned crude, and we are going to go after all of this oil. And that potentially means we could see more tension in these waters.
This from the Treasury Secretary in the last 24 hours. The United States Navy will continue the blockade of Iranian ports. In a matter of days, Cargill and short storage will be full, and the fragile Iranian oil wells will be shut in. The pressure continues to build.
The pressure continues to build on this regime, especially economically. They are in dire straits right now, and although about a month ago, Treasury decided to unsanction the Iranian crude at sea to help some of their partners in Asia, that is not happening anymore, and they're going after the ships like we saw happened over the weekend. Does this mean potentially it is enough to bring them to the table? Right now, it doesn't look like it.
We mentioned the airlines. We'll be talking about them all morning. Bramo is going to catch up with Scott Kirby of United Airlines later on this morning. Look out for that around 9:15 Eastern Time. We're tracking the ripple effect, the consequences, the fallout, starting in Asia, follow through into Europe. 20,000 flights cancelled at Lufthansa. And you'd have to imagine a few other airlines aren't too far behind.
This morning, also, we heard from TUI and what they have to do in terms of basically suspending revenue guidance for this year because they don't know how to guide, because they don't know how much all of this is going to cost, because we do not have a resolution on what is going on in the Gulf.
Equity futures this morning just about holding on to gains. We're positive here by 0.5%. Coming up this hour, we'll catch up with Aaron Kenner of Clear Harbor Asset Management. With the equity rally looking to get back on track, Krishna Guha of Evercore on Kevin Walsh's showdown on Capitol Hill, and Bank of America's President of Retail Banking, Holly O'Neill, as the consumer shows signs of strength. We begin this hour with our top story. President Trump extended the ceasefire with Iran indefinitely. Joining us now is Bloomberg's Jumana Basecci. Jumana, the president says leadership there is fractured. How united is it this morning?
Well, we haven't had an official response yet from Iran vis-a-vis the ceasefire announcement that President Trump made yesterday. And I think it was interesting that, these Islamabad talks, we spent all of yesterday speculating as to when they were going to happen, when J.D. Vance was going to leave the U.S., but then we got no official confirmation from the Iranian side that they were going to attend. And what we do know, if you piece together the various commentary that have come through from some of those key officials in the last 24 hours, the key sticking point from their perspective is the ongoing U.S. naval blockade. And even when Trump made that ceasefire announcement yesterday on his Truth Social post, he also said and reiterated that the naval blockade was going to stay in place. And the only comment that we can go from this morning, overnight, is a post that the Iranian Foreign Minister Abbas Araghchi put up, saying once again that blockading Iranian ports is an act of war and thus a violation of the ceasefire. So it's become very clear that in order to proceed with the sequencing, i.e. to proceed to another round of talks, the Iranian side are maintaining that they want to see that U.S. naval blockade lifted. And they're certainly trying to push that narrative forward. There was a lot of state media reporting today suggesting that some signals had come through from the U.S. indicating that they were willing to lift the U.S. blockade. So far, we have not had any confirmation that that is the case from the U.S. And if anything, this morning, as you were just talking about, there have been multiple episodes of IRGC reportedly firing at a container vessel that was passing off the coast of Oman. Just in the last few minutes, Tasnim are also claiming, this is state media, that Iran has now seized 2 ships for violations. So this really underscores the danger. At the same time, if you look at the traffic of passage going through, it's really trickled down to low single digits. And so if you put all of this together, yes, we have a ceasefire. It is an obscure ceasefire because we don't know what conditions it's linked to, but it's not a long-term resolution. We don't know if there's going to be another round of discussions. And for all intents and purposes, the strait is still effectively shut and still dangerous.
Jumana Basecci and Dubai leading our coverage. Jumana, thank you. Just to pick up on that news report from Tasnim News Agency, the semi-official news agency in Iran, we've received some sign they're ready to break it. And as soon as they break this blockade, I think the next round of negotiations will take place in Islamabad. The market clinging to that story, that report earlier this morning.
Yeah, clinging to that, but that is not what we are hearing from the President of the United States or the Treasury Secretary. Actually, what we're hearing is that they are doubling down. Now, a few Iranian ships have gotten through and they turned off their tracking devices. But I don't think this is bullish this morning when Tasnim is also saying that Iran seizes 2 ships for violations and the IRGC transferred those seized trips to their coast. If you are on top of a vessel and you are a company, are you going to let your people through? Are you going to say, yeah, we have the confidence in this? I don't think so.
Brent crude 99.60, WTI 90.61. Here's the view on Wall Street this morning. Aaron Cannon of Clear Harbor Asset Management writing, what had been a clear value-driven market has at least tactically pivoted back towards growth leadership in the wake of geopolitical stress. Aaron joins us now for more. Aaron, good morning. Good to see you. Good morning. Let's talk about that stress. You've got good versus bad and better versus worse. No doubt, without question, the situation in the Middle East is bad. It is not good. But is it getting better? And are you confident it won't get worse?
It's challenging to make that assessment. You know, if you go back to 1 year ago, we're dealing with tariffs and Liberation Day, and you could game theorize around the decision of one individual, the president. And today, this is multivariable. This is not just a decision by the President of the United States, and we don't even know who the decision makers really are in Iran. And so it's making it really challenging. With that said, the VIX is below 20. Equities are buoyant. We've seen a shift back towards sort of the growth narrative and on the equity side here in the United States. So there's a good deal of optimism built in, and earnings are kicking in and looking reasonably strong.
Let's go through those pillars. It's important. Financial conditions are easing. The outlook for earnings is improving. The data's been better than expected. Is that enough to insulate the bull case right now? Is that something you really want to fight?
Well, it's challenging. Clearly, the market has their eyes on those variables, Jonathan. And we're starting to see earnings come out. They've been relatively strong. There's a little concern among consumers, but there's been great strength across financials. The hardware side of technology has been super strong. We're going to see IBM report later today, so we'll get a little bit of a read on that. And I think investors are looking at the rise in consensus earnings, which have only been trending upward throughout this crisis. Double-digit expected annualized earnings for the S&P 500 this year. Who would have thought that just a couple months ago?
Driven by just a handful of companies. When you see that, do you see concentration as a feature or a bug?
Well, I think clearly if you take a look at the 2 companies that make up about 60% of this improvement in anticipated earnings, Micron, so read memory chips, and ExxonMobil, read higher oil prices and higher revenues. 20% of our oil, nearly 20% coming through the Strait of Hormuz. We just talked about Lufthansa. We have huge jet fuel concerns in Europe this summer. How's that going to impact consumer travel? How's that going to impact, sort of transcontinental travel, consumer consumption, investor sentiment? So lots of uncertainty right now weighing on markets, but markets remain relatively buoyant and hopeful.
Given where we are today, can you make a call on any of those judgments about jet fuel and where some of these companies are going to be?
It's really challenging, but I think the experts seem to think that if we continue to have these supply bottlenecks, in about 3 weeks' time, the European Union has been getting together and meeting on this topic. We're going to have significant rationing, not just in Asia, but specifically in Europe. You're going to see flight cancellations. You're going to see sharp spikes in ticket costs if they do fly those planes. It's going to be a big problem. This is not about price. It's about availability of product.
If that is the scenario in a few weeks' time, what does that mean for markets in the United States?
Yeah, I mean, I think something has to break clearly in the not-so-distant future here. And I think we'll have to see where this sort of fog of war, whether or not it clears or whether or not it doesn't. I will say the 3 big bullet points for the president at the outset, it seemed to be, we have to reduce their ballistic missile capabilities. We have to consider regime change, but maybe not boots on the ground. And I think the other one, of course, is what are we going to do with this enriched uranium? We need to remove it somehow from that country. 1 box has been checked, but not all 3, and it's the ballistic missile box. That's a problem. And it leads me to think that maybe markets are a bit too optimistic here going forward.
And this is a sticking point in negotiations as well when you see the reports from the Iranian side. The pushback from them ultimately is those objectives weren't achieved through military means. Why should we give them up now?
Exactly. And also for the Iranians, why should they give up the one piece of leverage they have right now, which is the Strait of Hormuz? And when you see some of the kinetic features of this conflict, it is the IRGC right now that is having those gunboats go over to those vessels. They're the ones that are in charge right now of Iran, not the political actors that are meeting with, say, J.D. Vance or Steve Witkoff.
Aaron, you've got options. You can hide in cash, just stay clear of everything, or you can make that tactical call just to hug the more growthy parts of this market with the secular tailwinds behind them. What do you want to do?
I think we're doing a lot of different things at Clear Harbor. Most of our clients, we have multi-asset class portfolios. Within equities, however, take a look at, sort of the growth orientation of, companies outside of AI in the compression of price to earnings multiples that we've seen over the last weeks and months. There's opportunity there, we believe. You look at 10, 15, 20% annualized growers outside of this sort of SaaS concern. Look at sort of robotics within the surgical community. As an example, we had Intuitive Surgical report yesterday. Very strong report from Intuitive Surgical. I mean, that is not, they're leveraging AI, but those types of growth, secular growth companies, we think are very well positioned. And it's not just within healthcare, it's across the technology landscape, it's across consumer discretionary. We're seeing it also in some areas of energy where there's opportunity. But we're allocating to alternatives, we're allocating to fixed income. We have multi-asset class portfolios at Clear Harbor.
Aaron, I appreciate your time. As always, thanks for being here. Aaron Cannon there of Clear Harbor Asset Management. If you're just joining us, welcome. Futures holding on to gains positive by 0.5% following the first back-to-back losses of the month so far on the S&P 500. With an update on stories worldwide with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. Iran seizing 2 ships for what they're calling violations. Tasnim, the country's semi-official news agency, saying the IRGC transferred the ships to Iran's coast. The ships are reportedly from Panama and Lithuania. President Donald Trump extending the ceasefire with Iran. The president making the announcement in a Truth Social post after planned peace talks fell apart. It came just hours after Trump said he was not inclined to extend the truce. And a small group of unauthorized users gaining access to Anthropic's new Mythos AI model, which the company warned could enable dangerous cyber attacks. According to documentation viewed by Bloomberg, users in a private online forum obtained access on the same day Anthropic announced a limited test release of the model. That's your Bloomberg Brief. John.
Yahara, thank you. Help me make sense of this. It is either one or the other. Either it is so dangerous that only approved users can use it and access it, so we're being really careful. Or it's not that dangerous and we shouldn't be concerned that unapproved users have got hold of this. Which one is it? Because it can't be both.
I think the U.S. government is trying to figure that out right now as we speak.
Right?
Yeah.
Kind of crazy. Up next on the program, Kevin Walsh on Capitol Hill.
The president never once asked me to commit to any particular interest rate decision, period. And nor would I ever agree to do so if he had.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Let's get rid of this investigation so I can support your confirmation.
I got a feeling that label was going to hang around. Remember Carney, the unreliable boyfriend?
Yes.
Just sort of followed him around the UK for quite a while.
Yeah, I think that one's going to hang around. On Twitter, everyone says it was too late Powell. Now it's sock puppet Walsh.
Oi. Up next on the program, Krishna Gua of Evercore, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
So we got a bounce this morning, higher by 0.5% on the S&P 500, following a two-day losing streak on the S&P. Yesterday, the losses are raising the gains later in the session as we learned that J.D. Vance, the vice president, wasn't going to make that trip for talks to Islamabad. And then after the closing bell, the president extended the ceasefire indefinitely. So they're the gains so far this morning. In crude, and I think this is interesting, WTI and Brent holding on to gains. Brent crude still around triple digits, Brent at 99.55, and WTI around 91 this morning.
I think that speaks to what's actually going on in the Strait of Hormuz. You had the UK Navy overnight talk about how a vessel was taking fire by IRGC gunboats. You now have Tasnim reporting that 2 ships were taken basically hostage by the IRGC, and what they're saying was because for endangering maritime security. So right now, it isn't safe in the Strait of Hormuz, so which means there's no oil going to be passing through the Strait of Hormuz as normal levels, even though we have the ceasefire. It's not as though there's no peace, there's no war. We're just in this limbo. That's just contributing to just slightly higher yields as well, on top of the decent data we've seen in the last 24 hours. The 10-year around 432s, around 380. Under surveillance this morning, Kevin Walsh on Capitol Hill.
We are still dealing with the legacy of the policy errors in 2021 and 2022. That means a different new inflation framework. Independence has to be earned, and it's earned by delivering on the promises. The president never once asked me to commit to any particular interest rate decision, period.
Are you going to be the president's human sock puppet?
Senator, absolutely not. I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
So here's the latest this morning. Fed Chair nominee Kevin Walsh facing an extended battle for confirmation after President Trump doubled down on the DOJ's probe into the central bank. Bloomberg's Tyler Kendall joins us now from Washington for more. Hey, Tyler.
Hey, John, good morning. Well, it was clear from yesterday that Kevin Walsh will have the votes to advance. The question is just when, because even Senator Tom Tillis says that he likes the nominee, though he is standing firm that he can't get Walsh out to the full Senate floor until that Department of Justice's investigation into Fed Chair Jerome Powell is resolved. And as you know, Tillis really can make good on these threats because Republicans only hold a 13-11 majority on the Senate Banking Committee. Now, I had the chance to ask Tillis yesterday some questions about what a viable off-ramp may look like, including whether renewed congressional oversight could be part of the solution. And he told me he thinks that could work.
I think it's a great idea. And you know, in truth, the one thing I realized in the banking committee is we never really scrutinize capital expenditures from these agencies that we regulate. We should be looking at the business. I think that's a great point that the president's kind of brought up, that we haven't really watched these things in detail in the past, and we can all benefit from that.
So if that was launched and the DOJ dropped its suit, then you would get...
Yeah, it's the right order, too, because there was no referral from this committee.
Now, to be sure, Tillis still needs that DOJ suit to be dropped, but this felt significant because back in February, Tom Tillis had brushed aside the idea that the Senate Banking Committee could launch its own investigation to supplant the DOJ's probe, and there feels like there's some momentum behind this idea, considering we heard from Senate Banking Chair Tim Scott earlier this week saying that he's looking at some sort of joint congressional action with his committee and House Financial Services. But, John, at this point, President Trump was asked about this off-ramp earlier this week, and he is holding firm and doubling down that the DOJ should continue in its suit.
Tyler, great work down in Washington, D.C. Offered an off-ramp. The president's not taking it.
The most important comment yesterday was after the hearing. Senate Majority Leader John Thune said the sooner the administration can wrap up this investigation and get ready to move forward with the new Fed chairman, the better off everyone can be. So that basically seems the Senate Republican position writ large, not just Senator Tillis.
Here's the view on Wall Street. Krishna Gua of Evercore writing, Walsh is laying the foundations for forward-looking rate cuts motivated by AI transformation. Krishna joins us now for more. Krishna, welcome to the program. A simple one to start. What did you learn yesterday?
Well, it was a tricky dance for Walsh because he had to satisfy three different audiences. The senators who he needs for confirmation, the president who's nominated him, and of course, the market was watching very carefully. I think he did what he needed to do, and there's no question he's going to be chair as soon as these investigations are wrapped up. What did we learn? We learned the following. First, Walsh really does want regime change at the Fed, though he hasn't yet been able to really specify in detail what that means. Second, he's angling towards building the foundations for these AI transformation rate cuts. Third, he's still a balance sheet hawk, though he's going to be very careful about how he implements it. And fifth, that he wants to really rein back Fed communications. So this is going to be, over time, a very different Fed. How different, how quickly, is going to depend on whether he can bend his colleagues. And the answer may be not that different that quickly.
So, Christian, let's pick out point number 3. And there's a range of good points there, but number 3 on the balance sheet. What underpins his opposition to the balance sheet? And what kind of meaningful change are you anticipating?
Well, you heard from Kevin yesterday really two different arguments. One is about the incidence of monetary policy, in effect, that rate cuts are more equitable than a larger balance sheet, which primarily affects longer-term interest rates and therefore has its first and largest effect on financial asset prices. And second, that a big Fed balance sheet is in some sense part of big government, that it encourages big government excesses. And I think there's both an inflation concept there and a political economy concept that Walsh believes in small government and small central banks.
Christian, when he talked about regime change, he was talking about the Fed missing the mark when it comes to inflation. He says there needs to be a new inflation framework. What could that look like? And I was focused on that because the Treasury Secretary in the past has talked about maybe going after a range for inflation, not a direct point.
So as you rightly point out, there are a bunch of sort of technical debates around how you might set out your inflation framework, one of which is range versus point target. There are many, many others. I think the larger point here is that what Walsh is saying is, I'm really serious that I want far-reaching changes to the Fed's framework, the way the Fed uses its tools, and the way that the Fed communicates about policy and the outlook. The problem is that really there's very, very little detail, and it's much easier to identify, as Walsh correctly has done, some of the shortcomings of the Fed's current and past approaches than it is to actually identify rigorous and systematic ways to do it better. There are some big gaps there right now, and that creates considerable uncertainty as to how the Walsh Fed would seek to operate. And I do worry that, at least in the transition phase, that could be associated with more volatility, with more risk premium from the pure uncertainty side, at least until we get a better grip as to what Walsh really will try to do differently.
In some ways, Christian, I think that Kevin Walsh has a point, and a lot of people on the street, maybe yourself included, agree with him, that we're still living in the post-GFC communication regime, and it's time to move away from it. What kind of changes do you think we could see in the not-too-distant future on communication alone?
Well, so on the communication front, what I'd say is this. I think there's a general recognition among current Fed officials and the central banking community more broadly that forward guidance is something that needs to be handled with a lot of care, that the forward guidance provided during the pandemic sort of boxed the Fed in a little bit, and some of the other central banks too, and that it's not the sort of instrument that should be used in normal times when you have the ability to move interest rates up or down as needed. But Walsh seems to be trying to suggest something more than that, a desire to really turn back the tide of ever-increasing central bank communication, talk less and about less, including the central bank's rate outlook. And I slightly worry here that's something distinct from not doing forward guidance. You know, if the central bank communicates effectively, it really is a very powerful means of shaping the market rate path, shaping and influencing financial conditions. We don't want to go back to guessing what they're up to.
Krishna, appreciate your time. As always, sir. Krishna Gua there of Evercore. It's always difficult to unpack a neat message from a hearing like yesterday, because as Krishna said, there are so many different audiences for that message. Up next on the program, we'll talk oil with Vikas Dwivedi of Macquarie.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Live from New York City, welcome to the program. Equity futures on the S&P 500 positive here by 0.5%. The first back-to-back losses on the S&P through April so far. It's been quite a run, hasn't it? On the Nasdaq this morning, we bounced by 0.75%. In the oil market at the moment, this is the state of things. Crude near triple digits on Brent, 99. WTI around 90, elevated by just 5 to 6 tenths of 1%. The tension continues to simmer.
So I think in the equity market, they're just looking for this off-ramp the president and the ceasefire is extended without a deadline as optimistic. But in the oil market, they're looking at the facts on the ground. And just this morning, Iran's IRGC seized 2 ships, and they are bringing those ships to the Iranian coast. At the same time, overnight, the UK Navy came out and said IRGC gunboats hit a number of vessels. It is not safe right now in the Strait of Hormuz, and the Treasury Secretary says they are doubling down on this blockade, so don't test them.
They are the physical realities right here, right now. 3 hours away from the open and bound, the cash open just around the corner. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Even after cutting its full-year outlook, United shares are up nearly 1.8% in the pre-market. Maybe some of that having to do with that overall market optimism over the extension of the ceasefire. But also this, United did post better than expected results with demand holding up, especially in premium travel. And Morgan Stanley also saying that the key is that it updated its guidance and it did not pull it like some of its peers. Moving on to Adobe, this is a name that has been at the center of the AI disrupting software story, and it has been punished for it, down 30% year to date. But today it is catching a bid, up nearly 3.5% in the pre-market after Adobe announced a $25 billion buyback, a clear attempt to restore confidence and put a floor under those shares. And we end on Capital One. This is America's largest credit card lender. Shares are down nearly 2.6% in the pre-market after it missed on earnings as it puts aside more money for bad loans. That provision rising 72% to more than $4 billion, a sign that some cracks are starting to show up in the consumer. And CEO Rich Fairbank drawing a direct line to the Iran war, saying that higher energy costs are starting to weigh on spending. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. On our radar this morning, President Donald Trump extended the ceasefire with Iran indefinitely while vowing to maintain the blockade of the Strait of Hormuz. The president writing in a Truth Social post, the U.S. is pushing Tehran towards financial collapse. Elsewhere, Fed Chair nominee Kevin Warsh pushing the fundamental reforms of the central bank during his confirmation hearing. Warsh vowing to be strictly independent on interest rates.
The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
Republican Senator Tom Tillis promising to block Warsh's nomination until the DOJ enters criminal probe into current Fed Chair Jay Powell. And finally, a small group of unauthorized users gaining access to Anthropic's new Mythos AI model, which the company says can enable dangerous cyber attacks. Anthropic saying it currently has no evidence that the access is impacting any of its systems.
So it's a great Bloomberg scoop, and it comes at a time, Jonathan, as we do know the U.S. government is also talking to banks and other financial lenders when it comes to Mythos, and only a certain amount of people are actually allowed access to this right now. But you made a great point earlier in the program. Is it so scary, this product, that only a few people should get access to it, but now that we have a group that shouldn't have had access to it and nothing has really happened, is it actually that scary?
So I don't know. I don't know the answer to that. So look, it's either one or the other. I'm not saying it is one or the other. I'm just saying it has to be one or the other. You can't sit here and say that it's so dangerous, only authorized users can use it, but also it's okay that unauthorized people have access to it. It's one or the other. And this is the difficult part of the whole story for me. What is real? What is the IPO pitch? That's what I've struggled with the whole way along. Undoubtedly, we're seeing real technological progress here. But at the same time, there is a marketing twist going into some major IPOs later this year, which makes it difficult to differentiate between one or the other.
Senator Kennedy of Louisiana agrees with you, and he said this yesterday at Kevin Warsh's hearing. He said, here's my worry. That's a lot of stuff about artificial intelligence making us more productive is a bunch of hype by people who want to sell stock in an IPO. I'd be careful there.
That's the latest on Anthropic this morning. This morning, Iran seizing 2 ships for, quote, violations. Tasnim, the country's semi-official news agency, saying the IRGC transferred the ships to Iran's coast. Joining us now for Insight, Colonel Wayne Sanders, Senior Defense Research Analyst at Bloomberg Intelligence. Wayne, welcome to the program. Colonel, always good to see you. Let's talk about where we are right now. And I can tell you from the market's perspective where investors think we are. They think we're on a path towards de-escalation and not a path towards escalation. Are you seeing evidence on the ground that validates that?
Yeah, absolutely. I think if you look at it right now, both sides on the IRGC for the Navy fast boats as well as the U.S. Navy from the blockade perspective, they're operating in the only military box that they can inside of the ceasefire. But one of the biggest things that I use as an indicator is the ballistic missiles and the drone attacks are virtually stopped. They're pretty close to zero at this point in time. They were averaging between 70 up to 150 strikes a day, minus the first couple days. Obviously, and now you're looking at maybe one or two, even that. But they're being reported by UAE, Saudi, Bahrain, and others, where these strikes right now have not happened since the ceasefire, which I take as a very good sign that negotiations are still possible.
Well, are negotiations possible with the U.S. blockade still in place, given the fact that the Iranians have said verbally that that would need to stop in order for them to make that trip to Islamabad?
Yeah, absolutely. I think one of the biggest pieces that's going to come is the economic pressure, as you guys were talking about, from Carg Island in the oil stores, as well as others, are going to put additional pressures on there. It's very difficult also to find out who we're actually talking to in terms of Iranian leadership. There have been some reports internally where Iran is actually struggling from that, from a command and control perspective, and maybe one of the reasons why you haven't seen that delegation move over to Pakistan. So from that, you don't know exactly who you're trying to talk to, who you're actually trying to strike that deal with. Is it somebody in Iranian's backed state media, or whether it's a foreign minister or beyond? So we're trying to make sure that we understand exactly who the Trump administration would actually be negotiating with during those peace deals as well in Pakistan.
That has been the difficulty all along. I've really enjoyed your commentary, Colonel. Thanks for joining us this morning. Colonel Wayne Sanders there of Bloomberg Intelligence. Who are they negotiating with, and who's in charge? And are they the same person? That's been the difficult part of all of this all along.
Well, Iran definitely has consensus building in terms of their Supreme National Security Council, and obviously the Ayatollah reigns supreme. The IRGC is in charge, and the IRGC is the one that is definitely in charge of Strait of Hormuz, and we're seeing that right now out in the open when it comes to these gunboats and these vessels. Who the United States is talking to are political actors, and they don't always see eye to eye.
Here's the take from Macquarie this morning. This from Vikas Trivedi. He writes the following: there are steps towards market normalization from day zero of traffic restarting through the Strait. However, we do not yet know when day zero is. Vikas joins us now for more. Vikas, good morning. Good to see you.
Good to be here.
Let's just start with physical realities. We can see these shortages starting to bite in Asia. You can see it starting to work through the airline industry. Lufthansa cancelling 20,000 flights. United Airlines cutting the outlook. What are the physical realities that you're tracking at the moment?
We're tracking exactly that. So we started with the petrochemical sector, right? So the loss of naphtha and some of the feedstocks for that sector started to hit immediately. Jet fuel followed shortly after. Jet fuel got a lot more attention because most people don't interact with naphtha daily, but so it's following in a very concentrated hit in Asia, and now it's sort of transitioning to Europe, both on the petchem and jet fuel. It will move to diesel and gas oil in a little while, meaning in a few more weeks. We're going to start seeing announcements of problems with securing diesel supply, and that's the backbone of the world's economy for for moving goods around. So, that is still coming.
There's been a lot of talk about a disconnect. People often throw that word around, a disconnect between the physical market and the paper market. And many people made the case that we'd see convergence, but we'd see the paper market move towards the physical market. The opposite kind of happened in the last week. What explains that?
Yeah, it's more of a set of shock absorbers, right, that are not working. So you think about something happens in oil, it's an impulse function, right, and you get a hit, and then all these things have to happen to absorb the shock. Futures would go up, the differentials between the futures and the paper, like in the physical, would move a little bit, but what's actually happened is the physical has just done its own thing, and the futures have not followed. And so the differential between them was never contemplated to be this wide. So in some sense, it's broken, right? And it may need to be reconfigured after this. One of the challenges is Brent is not deliverable. So if you hold Brent futures to expiry, unlike a lot of contracts, you don't get the barrels. So you have to mechanistically do it other ways, right, to force that convergence, but it's not happening. And it's been long enough now. I think this next Brent expiration, if we don't start seeing that convergence, then we may be in a position where no matter what type of news flow happens, Iran gets their hands on vessels or the U.S. blockade holds, traffic through Hormuz is still limited. Physically, on the ground, on the water, the situation keeps getting worse, and the futures may not respond. We may still be talking about $98, $100 Brent, even though the situation on the ground is getting noticeably worse and hitting the real economy. When it hits diesel, when it started hitting naphtha, and you can't make petchems, it started hitting the real economy, but there's a lag there. When it hits diesel and gas oil, and then you can't move general goods around, that's when we will all kind of know it and feel it.
The U.S. really thinks that more economic pain potentially could be the reasoning for the Iranians to show up at the negotiating table. And yesterday, Treasury Secretary said in a matter of days, Karg Island storage will be full and the fragile Iranian oil wells will be shut in. Do you think we're days away from that?
Yeah, it's getting close, but we disagree that it will significantly damage Iran's position.
Negotiating position.
Yeah, because even though oil is a big part of their economy, it ranges from 10 to 20% of their GDP. So it's a very large economy without oil. Now, it is the substantial source of funding for the IRGC. In that regard, it's absolutely correct. But will it buckle the economy and create a lot more pain for the general Iranian public? The answer, we think, is no. Or that would take a lot longer.
You also say there's a series of steps that need to happen once the strait actually does open, but we just can't decide when's going to be the first day that happens.
That's right.
But what are the first steps that would happen?
The very first step is, we'll assume Hormuz is open, right? And you can get financing, you can get insurance, and people can move through it. If you start with that, you got to move all the laden vessels, the full vessels that are just hanging out there, out. And then you've got to bring unladen or empty vessels back in. So third step is you need to start regrowing production. And they've managed it very smartly. The storage tanks in the Middle East are pretty far from being full. So there is logistical flexibility. You need some space in your tanks if you're going to restart production, right? That oil's got to go somewhere before it goes to tankers. So, those are some of the big steps.
It is going to take a long time to unpack so much of this, even after the crisis is well and truly over. Vikas, appreciate your time and your insight. Thank you, sir. Thank you very much. Vikas Trivedi there of Macquarie. Let's give you an update on news worldwide. A busy morning already with the latest. Here's Yahara Arnott. Hey, Yahara.
Hi, John. The International Maritime Organization says it's working on a plan to evacuate crews from ships that have been stuck in the Persian Gulf since the Iran-U.S. war began. The organization says it can only implement the plan after clear signs of de-escalation. Russia is set to increase oil flows after restoring crude exports from its main western ports following weeks of disruption caused by Ukrainian drone strikes. Operations resuming at all three ports with most berths back in service. And voters in Virginia approving a Democratic plan to redraw the state's congressional map in a way that could add up to 4 House seats for the party in November. Republicans will have a chance to level the playing field in Florida with a GOP-led redistricting effort set for a vote as early as next week. That's your Bloomberg Brief. John.
Thank you for the update, Yahara. Thank you very much. Up next on the program, consumer resilience.
People are overplaying the K-shaped economy.
The top 20% of earners basically determine success or failure for this economy.
Consumers do have the bandwidth to work through the inflation.
Up next, we'll catch up with Holly O'Neill, the president of Consumer Banking at Bank of America.
problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Each side's positioning for leverage. It makes tracking these talks, or absence of talks, very, very difficult. The president vowed not to extend the ceasefire, then extended the ceasefire indefinitely. We're waiting for Iran to come to the table. Not coming to the table this morning. Equity futures on the S&P, positive by 0.5%, on the Nasdaq up by 0.75%. The hope, encouraged by Iranian semi-official media, suggesting that there is a U.S. signal suggesting the blockade might end soon.
Right, that was the signal that the Iranians thought they got via Pakistan. But what we're seeing right now is the U.S. blockade is not ending. The Treasury Secretary is doubling down on it, and actually Iran just seized 2 vessels and bringing them to their shore. And the IRGC is out in the strait, and the UK Navy is talking about the fact that there was gunshots against some vessels they saw. So right now, things are not looking good in the strait. It's not war, it's not peace, but there's no oil moving.
Still on the path for de-escalation. That's a source of comfort. What are the other sources of comfort? The outlook for earnings, 1. 2, the data. The data, pretty good. Retail sales better than expected. Under surveillance this morning, consumer resilience.
People are overplaying the K-shaped economy because you're not seeing it in demand.
The top 20% of earners basically determine success or failure for this economy.
Overall, the consumer has remained intact.
Consumers do have the bandwidth to work through the inflation, but it doesn't mean that they're not kind of economizing.
So here's the latest this morning. U.S. retail sales surging by the most in a year, showing consumers are still spending even in the face of higher gas prices. Joining us now to discuss is Holly O'Neill, the President of Consumer Retail and Preferred Banking at Bank of America. Holly, welcome to the program. You can correct me if I'm wrong, but I think these are the numbers. 1 million new credit card accounts, 100,000 net new consumer checking accounts. That is real growth. Holly, where's that growth coming from? And what are the trends that you and the team are leaning into?
Yeah, great. Good morning. And so that growth is coming across the board in the consumer segment. And as you mentioned, the consumer remains very resilient. So we are still seeing solid asset quality in our business. We're seeing good organic growth. We're seeing excellent liquidity for our clients. That's their core operating accounts are still over and above what they were pre-pandemic, and they're still spending. So spending growth was up 4.3% year over year, which is the highest rate of growth we've seen since 2023. And as you mentioned, gas prices are part of that growth, but even when you peel the gas prices away, the growth is still there. So 3.6% when you take that gas price increase out.
Holly, a lot of the numbers we talk about are aggregate figures. Can you break it down across consumer groups? How broad-based is that so-called resilience?
So the core resilience, we are seeing it across all cohorts. However, we are still seeing really very strong spending growth in the higher income. That leads the economy, but we are still seeing strong spend growth in middle and lower income. So it is across the board, but the trend is that the higher income is really doing most of the work there.
Holly, how much are the larger than expected tax refunds a lot of Americans are getting cushioning their household spending right now?
Sure. So those tax refunds are higher than they were last year, and we are seeing that offset the fuel price shock. So when you look on average, those refunds can withstand and absorb that shock for about 5 months. So we expect that to continue to bolster and support the fuel price increase we're seeing for consumers.
For 4 or 5 months, though, then in 4 or 5 months, what happens then? Do you think the households will be under even more pressure?
We could see more pressure. So we could see some discretionary spending come down. In March, we saw that services, not gas, actually drove March spending. That's another really positive sign for the consumer. So they're not letting the increase in gas prices impact their spend on things like travel and leisure.
Holly, you've got great data on money coming in and out of accounts. The conversation we have with economists at the moment about the potential for inflation, the pushback we get is often the labour market isn't tight enough, wages aren't hot enough. How are you tracking wages and incomes at the moment? What's that picture evolving? What's it looking like?
Well, as you know, unemployment still remains in a normalized environment. So that is a very positive sign for the economy. We're also seeing wage growth across all higher, middle, and lower income cohorts. The higher income cohorts are seeing stronger wage growth. So that is a factor here. But we still see wage growth across all sectors.
What about the credit story? Holly, what's happening with credit? Are you seeing more and more people just make minimum payments on credit cards? Any pockets of stress that we should be tracking?
I would call it overall a very normalized credit environment. So it's operating as we would expect within different quality segments of the economy. So normalized environment. We are still seeing good payoff rates on card. And so we're still seeing borrowing and spending. Our loan balances overall, we're up 4% across all consumer segments year over year. So that's a sign that clients have access to credit, they're using it, but we're still seeing them use it in a very responsible way. So we're still seeing good payoff rates on a month-over-month basis.
Holly, you sound very optimistic. Consumer resilient, you're looking at these numbers, strong digital usage. Was there anything in this survey, in your research, that gives you a pause for concern?
I think, one thing I would point out is that we saw younger workers, so those just out of college, ages 22 to 27, they have a level of job uncertainty, slightly higher unemployment. So they could be impacted more severely by rising fuel prices, impacting their spending. But that's really one of the only signs that we're seeing here. So overall, I am very optimistic about the consumer. And the core tenets of that are good, solid, stable unemployment. We're seeing wage growth. We're seeing spending. We're seeing normalized credit quality. So all of those signs, I think, are pointing to a resilient consumer.
Holly, final question. It's a fun one. Key partner of the World Cup, the upcoming World Cup this summer. Looking forward to what that partnership looks like with you, FIFA, and the whole of the team as they bring that circus to the United States. Holly, some of the media coverage of the World Cup at the moment isn't exactly favourable. What kind of encouraging signs are you seeing about host cities and the kind of incomes we could see pick up there, the kind of business activity, economic activity we could see across this nation and elsewhere?
So, as you know, everyone is really excited about FIFA and the World Cup coming to the U.S. That will give these local communities a boost, support in spending and really some good activity in those communities. I saw it firsthand at a friendly match between France and Brazil. The crowds were incredible. It was great to see people pouring into the stadium. So I think you're going to see a lot of activity in these local markets as a result result.
Very cool. I hope we see more of the same. Holly, thank you. Appreciate your time. Holly O'Neill there of Bank of America. A real-time look at this economy. The money going in and out of accounts, the absence of stress, the degree of resilience we still see in the broader economy, and the hope, because I do hope, that the World Cup later this summer is a massive success, because the coverage of things right now, and I understand where the coverage is coming from, there's real reasons for it, the coverage of it hasn't been favorable.
Well, how could it be favorable when New Jersey Transit's talking $100, $150 train tickets to get to New Jersey? That's on top of already being able to afford to go to the match. These numbers to buy these tickets to go see some of these soccer matches are just astronomical.
I hope the World Cup bears are wrong later this summer. That's my hope.
You're a World Cup bear.
Unfortunately, I have been, yeah.
And unfortunately for your team's not in it. So there's a lot of reasons for you to be a World Cup bear.
Not just that. I just think it's been so far, and I hope I'm proven wrong, so far, a bit of a missed opportunity to improve access to the game, to get the high school kids, the middle school kids, the kids at elementary school, to get them access to these kind of games for some really cheap tickets. I haven't heard enough about that. All I've heard about is $5,000 tickets, $2,000 tickets, and $100 travel to get to the stadium.
It might be an own goal by the United States, and I'm there with you, because I played soccer growing up, and the idea to have a World Cup in America,
Super
so
cool,
exciting.
Right?
So exciting.
I know. Equity futures right now, the S&P positive by 0.5%. Up next, we'll catch up with Lindsay Rosner of Goldman Sachs, the former Defense Secretary Mark Esper, Brandon Oglensky of Barclays, and the former St. Louis Fed President Jim Bullard. The second hour of Bloomberg Surveillance just around the corner.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
consumers do have the bandwidth to work through the inflation.
There's a lot of skepticism that inflation is really coming down.
You're really balancing between inflation risk potential and where does the Fed go.
It's not an aggressive cutting cycle.
I still think we'll get one or two by the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures bouncing back by 0.5% on the S&P, following the first back-to-back losses of this month so far. On the Nasdaq 100, higher by 0.75%. In the oil market, the tension simmering, just hovering around $100 a barrel on Brent, 99 up by 0.6% on Brent, WTI up by 0.5% as the president extends the ceasefire indefinitely.
Indefinitely, no deadline, which is really not par for the course as president. Usually we have a deadline that he's working to. He wants to exert as much leverage as he can out of these individuals and try to press them to the table. Right now, we're basically in limbo when it comes to this conflict, which is why you probably see the oil market a bit more elevated, especially when you're getting headlines out of Iran that the IRGC is actually capturing vessels, and the Treasury Secretary is doubling down and saying this blockade is not ending anytime soon.
So what's anchoring this market right now? Outlook for earnings still okay. Data's been pretty decent. And on this specifically, we've talked about this a few times already this morning. There is a path towards escalation. There is a path towards de-escalation. And at least for now, the president appears committed to the latter and not the former. That's the good news. Here's the reality at the moment. This is the ripple effect, the consequences continuing to build. Airlines. United Airlines cutting its outlook. Lufthansa scrapping 20,000 flights as we work our way through the summer. Later on this morning, Bramo, Lisa's catching up with Scott Kirby of United Airlines at 9:15 Eastern Time. A lot of questions for his industry.
A lot of questions for his industry, and as we've spoken about, where we're going to see is a lot of companies, especially airlines, have to make tweaks on the margins. Interesting, though, even though United slashed its full-year profit forecast, they did say demand remains strong. What did we just hear from Bank of America? The consumer right now is resilient, and that is why it is such a difficult moment. But I found one thing very interesting from Holly. The tax refunds that a lot of people are using now to basically cushion themselves from higher energy prices, she said that has a 4 to 5 month bandwidth. It's basically a Band-Aid. So they need to really decide what they're going to do with this conflict. Can this be wrapped up before it really starts to put more financial strain on American households?
Resilience, at least for now. Equity futures positive by 0.6% on the S&P. Coming up this hour, we'll catch up with Lindsay Rosner of Goldman Sachs with equities chasing the headlines. The former U.S. Defense Secretary Mark Esper joins us as President Trump extends the Iran ceasefire, and the former St. Louis Fed President Jim Bullard on Kevin Walsh's path to confirmation. We begin this hour with stocks grinding higher following the renewed truce in the Middle East. Lindsay Rosner of Goldman Sachs writing, the tennis match of headlines is not tradable. This isn't the pre-COVID playbook. Stay invested. Lindsay joins us now for more. Lindsay, good morning. Good to see you.
Thank you.
I'm interested in that last line. It's not the pre-COVID playbook. What does that mean? Just unpack that for us.
Sure. So before COVID, we had tons of time that you would have these kind of big market events, and then you would see the movement, and you would have days, maybe even a week, to digest what was going on, pick your spots, and actually be able to put on a position. Things are moving so quick. The cycles right now are super compressed. So that idea that you can be cute and add on weakness and buy those dips, it doesn't happen any longer.
So as you look out, what kind of time horizon are you thinking about? And can you ignore this mess as it evolves from day to day? Yesterday's a great example of that, by the way. Yesterday before the close, we're talking about Vance not going to the talks. Then after the close, 10 minutes later, we're talking about an extension of the ceasefire, an indefinite extension of the ceasefire, just whipsawed from one direction to the other.
I think that's case in point. And so if you look back pre-Iran to where levels are right now, you've almost had complete retracement. So if you look at just that context of 2 months, you should have just stayed invested. The idea that you could have taken off any sort of investments because of this geopolitical conflict, be able to add at the wides, ride that back. I mean, nobody can be that kind of hero in this market. So it's important to have a strategic framework of at valuation levels, what do you think the right amount of risk is? So
let's work through that. Let's start with what we typically go to first in fixed income treasuries. So we're back to the upper end of the pre-war range, 430 on 10s. I keep hearing that people say we've created value in the yield curve. There's value out there. You should be buying that. Do you agree?
So it's all predicated back to what you were saying before, how quickly we get out of this energy shock. Rates, kind of different than spreads, actually have to care tremendously about inflation. Specifically in the US, obviously, there's the dual mandate we heard all about yesterday with Warsh. Elsewhere across the globe, it's more about price stability. So inflation is even more important, and different countries have different kinds of exposure. So in the US, we have the ability to create our own energy. That's really important. It was propped as a national security thing or motivation, and it's correct. But so have we created value in the US? On the margin, it feels like we're now going to trade in a higher range because there is permanent scarring from what's happened with oil, right? We don't just get to go back to normal. We have tankers that are stuck. Oil doesn't just come online as easily as it sounds like we can just say, the conflict's over, let's go back. It doesn't work like that.
Are you surprised at where we're trading right now, given the physicality of the realities on the ground? I mean, you open your note with continued emotional blockade required, and that's how I've been feeling the last 6 weeks.
Yeah, I think you cannot have emotion around these kind of headlines. You have to pull the camera back and see what's actually the underpinnings of various economies. And specifically in the US, we're in the middle of earnings. We've had 15% of market cap report. We've had sales up 10%, earnings up 30%. Those are really stellar numbers. That is the actual economy. Oil, important, is an input for some, a use for others. That is real, but that's not the totality. And so I think if you just get overwhelmed by the headlines and emotional about it, you're going to miss some opportunities to actually get returns in this market.
Are there opportunities outside the United States right now?
There are. We actually think it's in emerging markets. Where we don't think the opportunity is in Europe. Europe's sensitivity to energy and the fact that it isn't homegrown in the way that we're saying that the US and other places actually in emerging markets are as well. We like to lean into EM and out of Europe. And we think that the pricing that's happened, the movements, that Europe hasn't bounced back, makes sense.
This is the geographic disparity. Can you take us inside credit and talk about potential dispersion from sector to sector? How are airlines trading right now relative to, say, the obvious energy names?
Yeah, so the energy story is challenged. Name specific has to do a lot with the debt that they carry. I mean, there's been a lot of headlines this past week about can there be potential avoidance of bankruptcy. You really have to do your homework and look to every single name. So I don't want to say broad strokes what's happening with airlines. Broad strokes, I will say, tech, the mega cap, the hyperscalers, positive. Energy, if you have oil as something that you own and have access to, it's been a good time for you. So it really is very sector specific. And the other thing I'd highlight too that's come through so far in earnings is banks. Banks have done tremendously well, and that's been an overweight in our portfolios for a long time.
Let's pick out that one sector, tech, because tech is underpinning the snapback we've seen in the equity market as well. There was a moment where there was just this pocket of tension that the question was being asked. Will we starting to see pushback, which would force these hyperscalers to cut back on capex, and we'd see less issuance in the future? Where are you on that now?
Yeah, so I think we started 2026 with this idea of this is like the show me year for AI. And so as we waited to be shown what AI could do, I think there was some questions. Do these multiples make sense? Oh my God, these CapEx numbers every single year, surprise to the upside. Can that be justified? And I think we've seen probably all of us in our day-to-day lives, certainly from a portfolio management perspective in my seat, the use case for AI. Like it is absolutely part of what we do every single day. So the show me, we've been shown. And I think that it makes sense, and that bounce back that you have is warranted. I think also what we had in the beginning of the year, really in February, was this baby with the bathwater. Tech, software, SaaS apocalypse, or whatever that phrase was. There was just anything that touched it you didn't want to own. And now people are actually thinking about the fundamentals, and that's important. Back to the emotional blockade. Like out of the emotions, let's get into the numbers. That's really what's most important.
Software last week, software names. Best week, software on the S&P 500, best week in 25 years. Major squeeze in that sector.
Well, to your point, people are just actually taking a step back. You had all the ups and downs of the Iran war after the SaaScopolis, and they're looking at what some of these real earnings are going to be, and also the impact on the real economy.
Lindsay, I've struggled with one thing, though. I'm still struggling with it today. What is marketing and what is real? And I know you can't do single names, but I'll do a single name. When Anthropic comes out and says something is really dangerous, we can only give certain people approved access, makes you think there's something crazy is happening, and I imagine that the valuation of that company might get bid up into that IPO. How much of it is just marketing, and how much of it is about sucking in capital ahead of some major IPOs in the next 12 months?
So these are, there are many players in this space, and so marketing's function, I think, is to say we are the best player out there. So you can't deny that it makes sense that they would speak about kind of their importance. Whether or not it's important, it certainly feels like cybersecurity is a huge risk out there. And so if they have something that can identify the blind spots, that's important and definitely warrants more focus and more attention.
Lindsay, always appreciate your time. One of the best. Thanks for making time for us. Lindsay Rosner there of Goldman Sachs on credit, on fixed income more broadly, and AI at the end there.
Well, when we're talking about Anthropic, also Axios has this report out today about OpenAI, and they're briefing federal agencies, also the Five Eyes, when it comes to their new cyber product over the past week. Obviously, Anthropic and OpenAI are neck and neck for all of these tools, but also who is going to get to the IPO first and who's going to have a better public offering.
It's a massive race for the year ahead, that's for sure. Equity futures right now holding steady. Gains of 0.5% on the screen on the S&P 500 with an update on stories elsewhere with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump extending the ceasefire with Tehran while keeping the blockade on the Strait of Hormuz. The president announcing the decision in a Truth Social post after planned peace talks fell apart. Hours earlier, he had said he was not inclined to extend the truce. Fed Chair nominee Kevin Warsh fielding a variety of tough questions yesterday during his confirmation hearing on Capitol Hill.
Did Donald Trump lose the 2020 election?
We try to keep politics, if I'm confirmed, out of the federal.
I'm just asking a factual question. I need to know, I need to measure your independence and your courage.
Senator, I believe that this body certified that election many years ago.
During the hearing, Warsh vowed to be strictly independent on rates if confirmed and push for fundamental policy reforms at the Fed. And a small group of unauthorized users gaining access to Anthropic's new Mythos AI model, which the company itself warns could enable dangerous cyber attacks. According to documentation viewed by Bloomberg, users in a private online forum obtained access on the same day Anthropic announced a limited test release of the model. That's your Bloomberg brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, buying time with Iran.
Will you extend the ceasefire?
Maybe I won't extend it. Okay. But the blockade is going to remain. But maybe I won't extend it. So you have a blockade, and unfortunately, we'll have to start dropping bombs again.
Up next, we'll catch up with the former U.S. Defense Secretary, Mark Esper, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Equity futures on the S&P holding on to gains. We're up by 0.5%, up by 0.7 on the Nasdaq. The Russell up by 0.8. There are no talks, but we have extended the ceasefire. And there was one report from Iranian media. It's up to you how much weight you want to put on this. I can only state what's coming out of different publications. From Tasnim News Agency, the Assam official news agency, making the case that there has been a signal from the United States about ending the blockade.
Potentially, maybe in a few days we could see that. But right now, at this moment, and also that was an Iranian source, I'd love to hear that from the White House. At this moment, the blockade is there. The Treasury Secretary is talking about it, even himself, because it would be Treasury that were going after these sanctioned vessels. And the IRGC is actually capturing vessels that are trying to pass. Someone said to me, no war, no peace, but no oil.
Which is why Brent crude is still around 100, trading at 99 so far this morning. WTI back into the 90s as well. Crude on Brent and WTI up by around 1% on the session so far. Under surveillance this morning, buying time with Iran.
You don't do a ceasefire when you're literally obliterating the other side. I think we have a very successful negotiation going on right now. And I think it'll be, if it happens, it'll be announced fairly soon. And that'll give us free oil, free Hormuz Strait. Everything will be nice.
Will you extend the ceasefire?
Maybe I won't extend it. Okay. But the blockade is going to remain. But maybe I won't extend it. So you have a blockade, and unfortunately, we'll have to start dropping bombs again.
So here's the latest this morning. President Trump extending the ceasefire with Iran indefinitely, with peace talks on hold. Bloomberg's Tyler Kendall joins us for more. Hey, Tyler.
Hey, John, good morning. Well, despite President Trump previously signaling that he didn't want to extend the ceasefire, he says that this will give Iran more time to submit a new proposal for the U.S. to review. President Trump saying that part of the reason why the negotiations have collapsed is because of what he is calling, quote, seriously fractured leadership in Iran. As our own reporting indicates, that top officials for the IRGC are pushing a much tougher negotiating stance compared to, say, less ideological figures who appear more inclined to make a deal with Washington. The thing is, what has been consistent among Iranian officials is that they want to see the U.S. lift its naval blockade before there is a resumption in talks, amid new escalation just this morning. As Anne-Marie just mentioned, Iranian state TV reporting that the IRGC has seized 2 ships it accuses of, quote, secretly exiting or trying to exit the Strait of Hormuz. As a UK naval liaison reports that Iranian gunboats have been firing at vessels that are in the strait. And we can also point to some new data that Iran is now moving super tankers into the Arabian Sea in a bid to try to push back on the U.S.'s block of its shipping. The thing is, John, President Trump has repeatedly said that the blockade is not going anywhere. And we saw this potential for more escalation in this post from Treasury Secretary Scott Bessent overnight, saying that the U.S. will continue its maximum pressure campaign.
Tyler Kendall with the latest. Tyler, thank you. To extend the conversation, I'm pleased to say we're joined now by the former Defense Secretary, Mark Esper. Mr. Secretary, welcome back to the program. Appreciate getting some time with you, sir. Many people like yourself have made the case that these strikes made sense because Iran was unwilling to give up its enrichment program. A lot of people understand that perspective. Mr. Secretary, do you think they're any more serious this morning about giving up that program?
No, it does not appear to be the case right now. I mean, clearly we're at an impasse, and the key issues at this point seem to be the control of the Strait of Hormuz, which Iran is asserting sovereignty over, and then secondly, of course, the nuclear program. And when I say that, it's everything from the 1,000 pounds or so of enriched uranium that's there in the country. It's the infrastructure that supports it, to include the cascades. It includes, my view, we need to get inspectors back in. So to me, those are the 2 core issues. And Iran has always said and continues to state that they have a sovereign right and a right under international law to enrich uranium. So to me, those are the main points right now that both sides are fixed on. That was the point, of course, at least the nuclear, that disrupted talks nearly 8 weeks ago in Geneva.
This has been a long-standing problem. Mr. Secretary, clearly certain elements of the military campaign have been successful. One objective was to degrade the military capability of Iran. Without a doubt, we've seen that happen to a certain extent. What can happen now? What can the U.S. do to exert additional pressure, and through what means, to get Iran to come to the table and achieve the other objectives?
Yeah, it's a good question. First of all, while the decapitation of the regime was successful, what it did was change the leadership. And rather than put in a more pragmatic group of people, it put in a more hardline group of people. And of course, the IRGC has asserted more control. So now we have a regime that seems seemingly more willing to dig in, although the claims that there are fractures within the government right now tend to be true. But I suspect they'll kind of wrap that up pretty quick. My sense, again, is that at this point, each side is going to stick to its positions with regard to the blockade to control the strait. And we'll see who breaks first under economic pressure. We know, of course, the impact it's having on the West with countries who are net importers of oil, particularly in Asia, are suffering, are tightening their belts. We know that jet fuel is going to start becoming pretty scarce here in a matter of weeks. And there are other effects such as fertilizer and helium and whatnot. But on the other hand, Iran gets $450 or so million a day from its oil export. So how long can it hold on? So I think each side is staring the other down to see who blinks first. And Trump has said, look, he'll wait for a counterproposal, although there's some early reporting this morning that he said we'll give him 3 to 5 days, which would take this until next Monday or so.
So you don't think the regime is as fractured right now as some of the reporting suggests? In the next few days, could we see them speak with maybe more of a unified voice and show up to these talks?
I suspect so. They need to. I mean, you know, the talk now is that the speaker Galibaf is more the pragmatist here. But keep in mind, he was an IRGC commander, so his roots go back. And Mojtaba Khamenei, who we haven't seen, also has a close relationship with the IRGC. So I think there was some problem with messaging. I suspect they'll get on the same sheet of music. If not, it'll be interesting to see how that plays out. With regard to the Iranian government. But again, the IRGC has the guns, and usually the guys with the guns play the tune.
Exactly. Jonathan was mentioning how the financial markets, at least for some of them, holding on to that report that maybe the United States was willing to give up the blockade. How long do you think the U.S. could sustain this blockade?
I think we can sustain it indefinitely. The United States military definitely has the capability, the Navy, to do so, particularly with regard to how they're postured in the Gulf of Oman and beyond that, and the ability to reach internationally to do that. Look, it's hard to see President Trump backing down on the blockade unless Iran does the same. And what I mean by that is Iran has to back off this claim that somehow the new routes will go right along their coastline in between their islands, that there has to be permission from the IRGC first before you approach those lanes. And then, of course, we know they've been trying to charge or have charged $2 million or so per ship to transit. That cannot happen. We have to return in one way, shape, or form to the status quo ante to get back to something that's reasonable with regard to a future agreement going forward.
There are reports in the Financial Times as well as Bloomberg about some Iranian vessels being able to get through the blockade, turning off their tracking devices. How hard is it for the U.S. Navy to track some of these ships if they do that, turn off and go dark?
Look, we can see these ships with overhead surveillance from drones, from satellites. You know, we obviously have radar. We can track these ships. That's not an issue that they turn off the transponders. It's just a matter of making sure that we can pick them up and then do what we need to do. Of course, we saw the other day the dramatic footage of the U.S. Navy taking shots, disabling a ship, and eventually boarding it. So I have complete confidence in the United States Navy to do that. And now, of course, we see the Iranians are reciprocating by seizing 2 ships and took shots at a third one in the last 24 hours or so. So this has had possibility to really heat up with regard to the innocent players in the Gulf, the hundreds and hundreds of ships that are stuck up in the Persian Gulf trying to make that run or believing that they got the okay to do so and eventually get captured by the Iranians.
If the U.S. Navy has the ability to go after these vessels that shut off their transponders, why are they letting some of them through? Is that an economic decision for some partners in Asia?
I'm not sure I believe the Iranians that ships are getting through. I think we need that. Those are good questions to ask of the administration. Maybe some are being let go, but I doubt it. I think that may be more propaganda from the Iranians.
Mr. Secretary, in some ways, you're on the outside looking in now. And I can tell you it's difficult sitting in this seat to understand what's real, what isn't, what is just part of negotiations ahead of potential talks, about talks. From your vantage point, with the experience you have, what is guiding you and the way you're thinking about the trajectory of things?
Well, look, clearly, again, we have a more hardline regime in here, and a lot of what they're doing is messaging to the domestic audiences, messaging to others within the government, trying to get the word out. In my experience of sitting in the Situation Room dealing with the Iranians is they do they do make public statements, and then they have private statements or domestic messaging that is far more hardline. So you have to sift through those two things. But on the other hand, the administration's messaging has been all over the map as well. One day it's threatening, the next day it's conciliatory. The next day, we talk about deploying more forces, and then we're talking about backing off. So both sides there are mixed messages coming from both sides. But I think it's clear, though, that both sides don't want to go back into a hot conflict in terms of exchanging missile shots, drone shots, air attacks, but neither do both sides want to blink first. So we're really at this impasse, and we'll have to see what happens. I'm sure behind the scenes, countries, certainly the Pakistanis, the Europeans, maybe even the Chinese, are trying to get both sides into some place where we can get an agreement to lift this blockade of the Strait of Hormuz, because the folks paying right now are everybody else as well, right? Certainly the Asian economies, and to a lesser extent the European economies, but gas prices, oil prices, the price of diesel fuel, which transports so much of our goods, has gone up all around the world.
Mr. Secretary, appreciate your time. Thank you, sir. The former Defense Secretary there, Mark Esper, weighing in on the war in the Middle East. That's a source of comfort for many people in financial markets, that both sides don't want to return a resumption of hostilities. The impasse, though, comes with its own problems.
It does. We're in limbo, and the problem is we don't know for how long we're going to be in this sense of uncertainty.
Some of those problems in the airline industry. We'll catch up with Brandon Oglensky of Barclays as United cuts its full-year forecast. That conversation just around the corner, live from New York City. You're watching Bloomberg TV.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Back-to-back losses on the S&P 500, and here is your bounce. Up by 0.5% on the S&P, and the Nasdaq up by 0.7%. The Russell up by 0.8%. Yesterday, energy stocks, the only sector in positive territory on the S&P 500. I imagine that story is going to change based on these moves so far. In the commodity market, Brent and WTI shaping up as follows. Brent crude very, very close to triple digits, 99.39 and higher by 0.9%. It's fair to say that, yes, there are no talks. There are no hostilities, broad-based hostilities in quite the same way there were in March. The market's clinging to that. And the prospect of a deal. And a president committed, it seems so far, to de-escalation. That's the good news. The bad news, the impasse has its own problems. The physical realities are still brutal. And they're the kind of numbers you see on the screen, a reflection of that brutal physical reality.
Even with the impasse, it means that no oil is getting to the Strait of Hormuz, or very little amounts of oil. And actually what we've seen in the past few hours is things have gotten worse in terms of the IRGC taking 2 vessels hostage. Now, potentially, is that just where we are today and things can get better in the next few days? We don't know. But the status quo right now is basically living in purgatory when it comes to Strait of Hormuz in this conflict.
Crude high this morning by close to 1%. 2 hours away from the cash open, the open about just around the corner. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We've gotten some earnings in the last hour, and a standout is GE Vernova. Shares now up 6.8% in the pre-market after posting a beat and a raise, and it was already a high bar. This stock is up some 200% in the past year due to AI-driven power needs, and it was still able to clear those high expectations, blowing past estimates and keeping that rally going. Another stock another corporate that just had earnings is AT&T, and it has just flipped to negative, down about 0.7%, even after it beat estimates, with subscriber growth really driving the story. It beat on both wireless and internet subscribers, and doing that even as competition heats up, with the likes of Verizon and T-Mobile also offering similar bundled offerings. And even after cutting its full-year outlook, we are seeing shares of United Airlines up 1.7% in the pre-market. Some of that likely having to do with the overall optimism we're seeing in the market due to President Trump extending that ceasefire. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. On our radar this morning, President Donald Trump extending the ceasefire with Iran while maintaining the blockade in the Strait of Hormuz. The president announcing the decision on Truth Social after planned peace talks fell apart. Elsewhere, Iran's UN envoy claiming they've, quote, received some sign the U.S. will end its blockade in the Strait. The ambassador adding, once that happens, Tehran will be ready to resume negotiations. And finally, the Trump administration weighing an extension of the Jones Act waiver, which is set to expire next month. The exemption already helping to move 9 million barrels of crude, and it's considered vital to keeping energy prices stable.
So I could see the administration doing this because it's been a huge help for places like California. You would think California, given it is energy rich, for political decisions, it's actually heavily reliant on products coming from Asia. So having the waiver has actually helped places like California, also Alaska. Remember Ryan Peterson of Flexport was talking about how Alaska's become this huge hub when it comes to freight. So as long as this crisis goes on, I imagine some of these tools and measures the administration introduced, they'll just extend.
I imagine there's some people making a case to permanently extend some of these waivers.
I think there are a lot of people in the White House that think, you know, quite frankly, the Jones Act is a little bit silly and maybe we should just make this a forever thing. I think that would take congressional approval, though.
We've talked lots about the fallout and the ripple effects. You can see it in the airline business. Lufthansa cancelling 20,000 flights. United Airlines cutting its full-year forecast on rising jet fuel costs. Brandon Oglensky of Barclays maintaining its 150 price target, writing, quote, United delivered a relatively solid first-quarter result despite higher jet fuel prices, which we believe points to double-digit unit revenue gains. Brandon joins us here in the studio for more. Brandon, good morning.
Yeah, good morning, John. Thank you for having us.
Thanks for being here. I think it's important to start the conversation on demand and the demand we had before the war and how things have developed through the war. Just walk us through that, because demand before this war, some of the numbers we were seeing from the airlines, really, really strong.
Yeah, that's right, John. And actually, we closed out the fourth quarter pretty decent, and then we got a lot of guidance early in the year in January when results came out. And airline management teams were talking towards like mid-single-digit unit revenue gains, which we can effectively translate to pricing. We're now talking about like 10% pricing gains here in the second quarter. So it's gotten even better. And I know there's a chorus of institutional investors that are very concerned about what higher energy costs mean for the U.S. consumer, especially looking forward. But so far, the consumer's been voting very loudly that discretionary spending on travel is actually moving into a higher priority.
Just sit on that, because this is really hard for people to sort of get their heads around, particularly people from the outside looking into the United States. Demand was great before the war, and you're saying demand is picking up through the war.
I would argue it's even gotten stronger, and this is across the board too, because if we talk airlines the last few years, the lower main cabin, the economy ticket, that's where there was a lot of pressure on the industry. You're hearing most management teams say, look, we're seeing strength not only in premium or long-haul international, but even in domestic economy now. So I think we're definitely seeing strength of a U.S. consumer accelerate here, and quite the opposite of, I think, more bearish expectations.
So can that demand basically counteract the rise in jet fuel costs?
It's a great question. Right now, no, because jet fuel is more than doubled from where we were to start the year, and revenue's up, let's call it 15% on minimal capacity growth for the industry. So we are seeing very good pricing outcomes, but not enough to really offset the negative impact on margins. However, if we look at the forward curve for WTI and the implied, refining margins for jet fuel, we should be getting back to close to prior earnings power by probably the end of the year or early 2027.
We've seen companies in Europe, like Lufthansa, have to cut some flights. Could we see that in the United States?
Absolutely. I mean, we heard Delta 2 or 3 weeks ago say, look, capacity is going to be roughly flat in the second quarter. United just last night said they're going to cut 5 points out of future growth, and that's going to put them at expansion of maybe 0 to 2% in the back half of the year. So we're seeing, especially the big airlines, because Delta and United, Southwest American, each of them controls, roughly 20% of the domestic business here.
Domestic versus international. Let's break it up. The world has a price issue. Certain regions have a supply problem. Domestically in America, we don't have a shortage issue. We might have a price problem. In Europe, we may well have a shortage issue. And this is where the transatlantic routes get interesting, to me at least. If Lufthansa is cancelling 20,000 flights, surely some of the forces they're exposed to, Delta, United, and American, are also exposed to them. You can't refuel in one place and then refuel in the same place again. You have to refuel where you land. And if you can't get the fuel in Europe, don't you have to start cancelling some flights?
I think this could become a concern if this blockade of the Strait and the lack of ability to move oil across the world persists into the summer months. And I think some of the things that we're seeing from European carriers is also economic decisions too, just like we're seeing United and Delta say we're cutting back on capacity. So I think could be easy at this point to say, hey, look, we're envisioning that jet fuel is going to be short. But for sure, I mean, we've heard these warnings. I think that becomes, again, more of an issue as we progress through the summer.
You alluded to it slightly. I want to unpack it just a little bit. Do you think that this war, to some extent, has been used as cover to cut some unprofitable capacity in certain places?
For sure. And I mean, let's bring it back to the U.S. real quick. Like the 6 a.m. flight out of Cleveland maybe is not going to be profitable when WTI is above $100, whereas maybe at $40, you can make that incremental revenue work.
Do you think that even if it were to have the sign-off of some of these companies or interests, we could see a United America?
Well,
that's what I'm calling United and American Airlines if they tied up.
United America, I like it. You can propose it to Scott. I think he's going to be on the show later today.
He is a little bit later this morning.
I don't want to overlook the boss yesterday because he was on another news program, but effectively said we don't want to see a big merger like United and American. Like, he referenced the aerospace sector that we let that sector get too consolidated. But they did mention, like, look, Spirit, they're in their second bankruptcy. They need capital because they're burning through more cash than they suspected they would. JetBlue, their CEO is out there saying we're not considering bankruptcy this year. So I think when you're seeing these comments from these very levered airlines, that we're likely to see more consolidation on the low-cost side where there is a lot of balance sheet problems right now.
So more consolidation, but exactly who? Who's primed to make those deals?
Well, I would propose the question to Mr. Kirby when he comes on here. He said in the past that he was very frustrated that United exited JFK, last decade, and that was maybe one of the biggest strategic
Then you have to
wonders.
go to Newark now.
Right.
which people like me are not going to do.
Well, and you should tell him, that maybe JetBlue could use some help here. I'm not sure.
Well, that would be the one I would go to. JetBlue would have those gates. They would have that access. They have that footprint over at JFK. I was never fully convinced when I saw those stories that Kirby actually wanted American Airlines. I felt like this was just a page out of the president's book that you anchor it to the extreme, and then the door opens to do something else. For instance, JetBlue.
And guess who he pitched it to? According to Reuters, he made the pitch directly to the president. So the president probably recognized, oh, I like what you're doing there, Scott, but that's a little bit too far-fetched, even for me. But maybe there's more consolidation down the line.
Brandon, do you see a strong case for consolidation? Is there a strong economic case for consolidation at the top?
Look at JetBlue's statement that their CEO put out yesterday, Joanna. She said, effectively, there are benefits of scale in this business that even at our size, because JetBlue is not a small airline, but especially loyalty, the co-brand credit card deals, which are very lucrative, and they get more lucrative the bigger you are. So I think it is important to have scale in this industry, even from a consumer perspective.
Have you got a favorite? It's a difficult time, but do you have a favorite at the moment?
Again, it's difficult with the volatility in oil markets, but yes, I think long-term, United and Mr. Kirby has a culture moving in Chicago. Everyone's on the same page there. We like it when we have ambitious companies. I think, United's really on the right track.
I ask that question at the end of every conversation with airlines. Do you know the answer I never get? American.
I knew you were going to say that.
What can they do to change? What are they getting wrong?
Look, that could be a longer conversation.
American, about a minute, if that's okay.
Yeah, American has lagged relative outcomes at Delta and now United for quite some time. There's been some miscues within their own internal organization. There's been a little bit of turnover in the executive ranks. And, we like Robert Isom, but he's more operationally focused. I think when you look at American, is how do you leverage these mega trends within airlines, which is people want more premium products. They want more international access. If we go back to the pandemic, American significantly trimmed their wide-body long-haul fleet, which kind of took them out of contention for that market relative to what Delta and United have done since. So I just think structurally there's potential there, but you need to see maybe a little bit more ambition from the leadership team.
There have been some mistakes along the way, that's for sure. Brandon, appreciate your time. Thank you, sir. Brandon Oglensky there of Barclays. We mentioned it. It's happening later, 9:15 Eastern Time. Lisa catching up with Scott Kirby, the United Airlines CEO. Plenty to discuss. The takeaway for me from that conversation, there's a lot to unpack there, but ultimately, demand was good going into March. Demand is even better March and through April.
And I think you made a great point. For some companies, are they just using the war as a convenient excuse to get rid of maybe some routes that actually weren't making a lot of money and didn't really make sense for them?
United this morning higher by close to 2%. Let's get you an update on stories worldwide with your Bloomberg brief. Yahira's back with us for more. Hey, Yahira.
Hi, John. We are seeing Boeing shares up 3.25%. The plane maker posting lower than expected cash outflow as it delivered the most aircraft in the first quarter since 2019. Boeing is ramping up output of the 737 family, a major step toward turning around its finances and paying down debt. SpaceX agreeing to either acquire AI coding startup Cursor or pay for its work. SpaceX is planning an IPO this year after its merger with xAI, which CEO Elon Musk has said is behind on coding tools compared to its peers. And the White House has reportedly come up with a list of tiers of NATO allies. According to Politico, it includes a summary of member countries' contributions to the alliance as President Trump warns of consequences for not backing the U.S. in the war with Iran. That's your Bloomberg brief. John?
Yahira, thank you. More from Yahira in about 30 minutes' time in the next hour. Up next on the program, regime change at the Fed.
The Fed missed its mark, and we are still dealing with the legacy of the policy errors in 2021 and 2022. That means a regime change in the conduct of policy.
Up next, we'll catch up with the former St. Louis Fed President Jim Bullard, live from New York City. This is Bloomberg Surveillance.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Can just sense the fatigue has really set in. 2 days of marginal losses on the S&P 500. The first 2 day back-to-back losing streak on the S&P so far this month. Here's the bounce up by 0.6%. The Nasdaq 100 up by 0.7%. We've said this repeatedly. The market has moved on. And the market has moved on because they perceive from the latest communication that we have a president that is committed to de-escalation. And that in the last 24 hours, extending the ceasefire indefinitely validates that perspective.
There'll be a lot of stop and goes, especially as we live in this limbo, given the conflict and the regime we're dealing with, and the fact that IRGC seems to be very much so in control, definitely when it comes to Strait of Hormuz. But I go back to what Alex Altman said of Barclays. He was like, I understand your frustration, Aaron, looking at the physical market, but especially for equities, they just need to know, are we going, is it an uptrend or a downtrend? And based off the President of the United States, it's an uptrend because the President wants to put this conflict behind him.
I think what often happens, and I see this a lot in our business, is that journalists and the media operations more broadly, around the world, I'm not picking on anyone in particular.
Picking on me, John?
No, I think they're very focused on good versus bad. And markets operate in better versus worse.
Yes.
So without a doubt, the situation in the Middle East is bad. No one would describe it as good. From the market's perspective, do you see a path, the ingredients for things to get better or worse? And the market has decided in the last several weeks that the path from here is one where it gets less bad, if not better.
Right.
And for the market, at least, that's what you can anchor yourself to and start to price in a better future.
It might not be good, but it's better than we were, say, 53 days ago when the conflict, 54 days ago when the conflict started. Also, this market has lived through how many conflicts and issues, even the past of the course of the last few years. Think of Russia, Ukraine in the beginning, very concerning, especially given the energy space, and the market then was able to move forward.
Things can change, but that's the state of things right now. Things can change fast, that's for sure. 99 on Brent, 90 on WTI. In the bond market right now, yields coming in just a touch. We're down across the curve, down by 2 basis points on twos, 3.75. Under surveillance this morning, regime change at the Fed.
The Fed missed its mark. And we are still dealing with the legacy of the policy errors in 2021 and 2022. That means a regime change in the conduct of policy. I think that means a different new inflation framework. The president never once asked me to commit to any particular interest rate decision, period. I'll be an independent actor if confirmed as chairman of the Federal Reserve.
It's the latest this morning. Fed Chair nominee Kevin Walsh calling for fundamental policy changes at the central bank as uncertainty looms over his path to confirmation. The former St. Louis Fed President Jim Bullard joins us now for more. Jim, good to see you, buddy. As always, welcome to the program. Based on that hearing, and I know it's difficult to make hard-based and big conclusions right now, but based on that hearing, what are your takeaways and what changes are you anticipating at the Federal Reserve?
Yeah, I don't think the hearing itself was not very surprising. It's a lot of political theater that we're used to. I thought Kevin Warsh was well prepared. He had some zippy answers to difficult questions, which is what you need in this situation. So I think in a different era, this would go by voice vote, through the Senate. But we're not in that era, and so it's going to be tied up a little bit longer.
I won't draw you into the politics. Of course, we know why this might be an extended battle to get him confirmed. But ultimately, for many people, it's a matter of when and not if. Jim, when he does get in, can we talk about communication? Because you yourself, when you were on the committee, you had your own issues with the dot plot of the Federal Reserve, the forward guidance. We've been living in the post-GFC communication regime for a long, long time now. What changes do you think need to happen?
I think you could definitely improve the dot plot. The committee has had a hard time coming to grips with that. I'm not sure what Kevin wants to do with that. But I think it could be done better. The main thing you should really do here is just move to a monetary policy report that would be quarterly. That's what other central banks do. That's an international standard. You don't have to divine everything from a few dots. You can have a more fulsome report on all the things that are going on in the economy, including the war, or if there's weather or whatever else is going on in the economy. You can talk about that in a monetary policy report. So a good thing for him to do would be to come in and say, hey, we're just going to replace the dot plot with a monetary policy report the way other central banks do it.
Jim, how do you think the committee will feel about that? Will they get on board?
I would hope so. I think time has come for this. The dot plots are was put in relatively quickly, I think. I think Ben Bernanke thought that he could make modifications to it, but then it kind of devolved into a stalemate, and that's where we are today. And that's why you've got this kind of mystical dot plot that we use.
He talks about regime change, but can you translate in details what else we could see out of a Kevin Warsh Federal Reserve?
I think on the communication, he equivocated a little bit on press conferences. So we'll see. I've been an advocate of press conferences. I think that also, I think, is an international standard. Everybody does it, every meeting. So I think it would be hard to pull back from that. That would be a reduction in transparency. Markets aren't going to be too happy about that. Other types of communication, I mean, maybe you could change it a little bit, but I think the cat's out of the bag. The era of transparency has been very important to markets. I don't think you can go back to the Greenspan era. Which sometimes I get the impression that, there's a little bit of, wishing for that era. And I lived through that too, and I loved it too. But I think it'd be very tough these days.
Sometimes it's difficult to put the toothpaste back into the tube, Jim. You know that. Jim, I want to talk about balance sheet policy. It's clear that the incoming Fed chair, if he's confirmed, once he's confirmed, has an opposition to the way the balance sheet's been used, particularly after GFC. It's obvious to us why it was used in the way it was. Once you got to the zero lower bound, you started to lean on balance sheet a little bit more. His commitment to doing something about that, Jim, how are you envisioning that's going to look in the next several months and potentially several years?
Yeah, I think it would take years. I think he could put the ball in motion. I think the Fed could operate with a smaller balance sheet. You don't have to have it the way it is today. But he would have to get consensus on the committee. You'd have to work carefully with markets. I think it could be done in a way that didn't disrupt activity and allow the Fed to carry on in other aspects as they have.
Jim, one element of his argument, one dimension of it, is that using the balance sheet in the way it's used has pulled the administration, pulled the Federal Reserve into politics. I'd make a counterpoint that the short-term interest rate is only one tool and it's limited in its effectiveness. And that's why you yourself started to lean on the balance sheet to attack longer-term interest rates. Jim, if they put more emphasis on short-term rates, what does it tell you about their ability to really influence the U.S. economy more broadly?
Yeah, the story of the balance sheet is really the story of the effective lower bound or the zero lower bound. So it's only in those situations that you might want to come back to balance sheet policy. And we saw it pretty recently, right? The pandemic, we slammed the interest rate down to zero and went right into QE type policy. And I think that would happen again if you got some big shock in the years ahead. And so I think the committee should just be forthright about that and say that that's what they plan to do. But I think to be fair, I think Kevin Warsh has been a vocal and adroit critic of, once that is over, that you don't need the gigantic balance sheet anymore, and you should have a policy of getting it back to a normal size so that you have more scope in the future.
Jim,
and
can I
think
jump in the 30 seconds we
is
have
a
left?
reasonable thing to say.
Forgive me, you're suggesting it's still going to be a crisis era tool. Is he?
I don't know what he says about this, so I won't put words in his mouth, but I would say if you got a pandemic-sized shock or a financial crisis-sized shock, I would bet that that's the direction the committee is going to go, and markets would expect it. Global financial markets would expect it. So if they're not going to do that, then I think you should say, hey, we're swearing off this tool. We don't need it anymore. Here's what we're going to do in a crisis.
Interesting. Jim, thank you, sir. Appreciate it. Excuse me for jumping in. We're up against the commercial break. Thank you, sir. The former St. Louis Fed President, Jim Bullard. Up next, we'll catch up with Brian Nick of New Edge Wealth, James Picariello of BNP Paribas, Stephanie Roth of Wolf Research, Chris Walting of Longview Economics.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Welcome to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The market is getting more discerning.
You're starting to see a bit of a broadening.
There's some durability behind this.
The technicals in the equity market are extraordinary.
The direction from here is really what's the next positive surprise?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures on the S&P 500 bouncing back from back-to-back losses, higher by 0.6% on the S&P 500. On the Nasdaq, up by 0.8% as the president does something he said he wouldn't do. He's extended the ceasefire, and this time without a deadline. In the commodity market, Brent and WTI still elevated. Brent around triple digits at 99. WTI at $90 a barrel, higher by 0.6%.
So the president has given the Iranians more time to submit their proposals. He said this is based off the conversations, especially through the intermediaries in Islamabad. J.D. Vance is not on his way there. There are no talks right now. So we're in this place of status quo. There's no intense hostilities, although we did see the IRGC take hostage 2 vessels. But at the same time, there's no peace, and there's no oil in actuality really moving to the Strait of Hormuz. For the oil market, that's why they're holding on to these gains.
Leadership is fractured. We know that. That's been true for quite a while. He's waiting for a so-called united proposal to come from the Iranian side before deciding the next move. And we haven't had an official response, even now, from the Iranian side.
No, but I would say, don't look at what the Iranians say, look what they do. And what are they doing right now? Overnight, there was, you had gunshots, according to the UK Navy, on a number of vessels. They just took vessels hostage. The IRGC is in full control of the Strait of Hormuz. And right now, what you're hearing from the Iranians is they're not going to let up on that. That is their one piece of leverage, especially as the United States has this blockade.
More data, more earnings coming up in a week ahead. Later on, we'll hear from Tesla. You'll hear from IBM. Then on to tomorrow, you'll hear from American Airlines. Don't miss this later this morning. United Airlines, the CEO, Scott Kirby, sitting down with Bramo. Lisa and Scott catching up at 9:15 Eastern Time, at a time when they've cut their outlook, and Lufthansa has slashed 20,000 flights.
So Lufthansa has a bigger issue than the American Airlines, of course, because jet fuel is a serious concern for Europe. The IEA was talking about maybe there's only 5 weeks left of these airlines being able to get a hold of jet fuel. And we just heard from Barclays that the cost of that jet fuel right now has basically doubled since before the war. I want to put the American Airlines earnings together and Lisa's interview together to understand if we're going to have maybe down the horizon a United America.
A United America.
Do you like that?
That's your branding for
That's
the combined
my branding
name.
for the company, so if they want it, they can come talk to me.
Based on recent communication, I think, from American Airlines, I think it's highly unlikely it's going to happen, and communication from the president himself. But I think the door is open for some kind of combination with United plus one. Who that plus one is right now, Spirit, JetBlue, not sure.
Well, to our Barclays analyst, Brandon, I think makes a lot of sense if United potentially was going to maybe go after JetBlue, because United doesn't have that presence in JFK. So if you want to fly United and you're in New York, you have to schlep to Newark. Are you doing that? I'm not sure. I don't think so.
I get the feeling that you don't want to do that.
I don't want to do that.
Okay. We'll see if that question's asked. I imagine it will be. Later on this morning, 9:15, Lisa and Scott Kirby catching up at 9:15 Eastern Time. Equity futures near session highs, higher by 0.6% on the S&P 500. Coming up this hour, we'll catch up with Brian Nick of New Edge Wealth with stocks bouncing back. James Picariello of BNP Paribas with a bearish outlook on Tesla ahead of earnings. Plus, we'll catch up with Stephanie Roth of Wolfe Research on the path ahead for interest rates following Kevin Walsh's Senate hearing. We begin this hour with stocks recovering as President Trump extends the ceasefire with Iran. Brian Nick of New Edge Wealth writing the following: "We're impressed but no longer shocked by risk assets resilience in the face of unprecedented geopolitical uncertainty." Brian joins us now for more. Brian, good morning.
Good morning.
Market's moved on. Is it time to move on?
Our clients certainly think so. We talk to our advisors every day. Our clients were asking throughout March and the beginning of April about buying the dips. People have gotten used to not just a V-shaped recovery in markets, but these sort of checkmark shape recoveries where we haven't really seen this before. V-shape on the way down and even faster recovery on the way up. There is a an acute fear of missing out. And I think it's tied back to what's going on with policy. This is an administration that uses the stock market as a barometer for success in a way that no previous administration has done, very publicly, very openly, and we think with some reason. Stocks are a leading indicator for the economy. They don't want to see this market go down. They understand what's supporting the economy at this point, which is consumers who have become very wealthy with the stock market doing what it's done over the last 3 years, and a desire to not see that evaporate.
That line, stocks are a leading indicator of this economy. You think it's the most powerful leading indicator for this economy?
It's literally been in the Conference Board's index longer than any other indicator. The S&P 500 has been in there since the 40s. And this is, time and time again, all these other indicators, the ISM, consumer confidence, is telling you that the world's coming to an end, but the stock market has been the most accurate indicator of where the economy is going in the next 6 to 9 months.
Financial conditions have eased. The data's okay. The outlook for earnings is good. You put that all together, it's hard to fight this market. What you just said about attitudes towards this market. Savita Subramanian at Bank of America said something similar. The question we used to get, should I wait for a pullback to buy the S&P? The comment we get now, I don't want to sell the S&P because I might have to buy later at a much higher price. How deeply embedded is that investor attitude in America?
The other thing about selling is people don't want to realize the capital gains. This is one of the things we talk about almost more than any other issue, is like, think about all these embedded gains, people who have been riding up, even in an index fund, that don't want to sell and be caught wrong for 2 reasons. 1, because they realized the capital gains, and 2, because they sold at the wrong time. That's a very compelling reason not to get out of stocks. And for people who are looking for opportunities to get in, any kind of 3 or 5% pullback is, taking care of that fear of missing out that have been crippling people and making them stay on the sidelines for probably too long at this point.
But if the capital gain is one of the reasons why people don't want to sell, is that really a good barometer of where the economy is?
Well, we talk about this all the time. The alternative to paying capital gains is to wait for the market to go down, right? And then that's obviously not what people are looking to do. They don't want to pay fewer capital gains because the market has fallen. But the underlying demand and the faith in the AI story, in the broader U.S. economic ability to kind of weather this energy shock, we haven't really seen, not even panic, we haven't really even seen kind of concern.
What do you think it would take for this market to go down then? Because I feel like everything since January has been thrown at it. Or even since Trump's first term, if you consider Liberation Day.
The last 2 years, we've had these policy shocks that have given people adequate permission to run for the hills after a very good time, a very good period of market returns. The thing that we were worried about in the beginning of the year was the labor market potentially acting as sort of an exogenous variable, taking down stocks. If you start to see unemployment moving up 4.5, maybe getting closer to 5, we thought that would be enough to spook the equity market. We warned people about correlation between stocks and bonds going positive again. Probably not something you should wish for, because it means that rates are going down and stocks are going down. But that lately the data there has been better. We've seen this weekly ADP hiring number improve every week for the last month, and it's starting to look quite healthy. If that's true, then it's hard to see, again, outside of something going even wronger with the Iran war and seeing equity prices go up even further, or oil prices going up even further, it's hard to see where that moment of panic is going to come from that causes people to genuinely this time flee.
It's a really difficult exercise to go through when you're drowning in headlines, to get yourself out 12 months, look out 12 months, looking out another 12 months, and the kind of things you'll be thinking about. When you're looking out 12 months, just have a sneak peek looking behind you. When you look back 12 months, looking out 12 months, can I ask you this? I'm getting there. I'm getting to the question. Is this going to be an important moment for you? This war in Iran, this energy shock, will it be an important moment?
We think so in this respect. The momentum that markets had going into the war was this broadening trade. You were seeing things that hadn't performed well. It was actually going back to around Halloween last year. You were seeing value stocks perform better. You were seeing international stocks really dominate U.S., even through February. We think things may have shifted. The sort of the tectonic plates on our feet may have shifted. And we may be back in this lower growth, narrower set of winners environment.
So this is not just a tactical trade, this leadership that we're seeing at the moment. You think it's more than that?
Yeah, well, so a tactical trade is typically when you see small cap and value outperformance. That's where, as my colleague Cameron Dawson likes to say, we're here for a good time, not for a long time.
Yeah.
That's what we saw in the fourth quarter of last year and the beginning of this year. We're not sure that's the enduring story here, and it may have been the Iran war that caused people to kind of take that story off its axis. It looks like now where the earnings revisions are coming from is more narrow, where the market leadership has gotten narrower, and the hopes that we were going to get above trend GDP with softening inflation and lower interest rates and stronger cyclical force in the U.S. economy, that may be on hold.
So we've set the stage for a return of, let's call it U.S. exceptionalism with tech leadership?
That's what that's how we're positioning now. And I know that the markets have already kind of run a little bit in that direction, but they haven't completely made up. If you look at equal weight S&P versus market weight, equal weight is still up over the last 5 or 6 months. We'd be betting more on the kind of this narrowness continuing.
Brian, appreciate your time.
Of course.
Well articulated. Thank you. Brian Nick there of New Edge Wealth on the leadership coming from tech. I'll tell you what, right now on my screen, that's helping this equity markets go out to new session highs. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Iran seizing 2 ships in the Persian Gulf for what they're calling violations, Tasneem. The country's semi-official news agency saying the IRGC transferred the ships to Iran's coast for inspection. It comes after Iranian gunboats fired on a cargo and container ship in the Strait of Hormuz earlier today. United Airlines slashing its full-year profit forecast due to higher fuel prices caused by the war in the Middle East. The guidance coming as the airline reported better than expected first quarter results. Lisa will be sitting down with United CEO Scott Kirby at 9:15 a.m. Eastern. And Adobe announcing a $25 billion share buyback over the next 4 years. The company's CFO saying it's a direct expression of confidence in cash flows and long-term value for investors. The stock is up today, but it is down nearly 30% this year as investors worry about AI's potential to disrupt software. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next on the program, the Morning Calls Plus. We'll catch up with James Picariello of BNP Paribas, looking ahead to earnings from Tesla, and we'll touch base with Bloomberg's Ed Ludlow in just a moment. From New York City this morning, good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The physical has just done its own thing, and the futures have not followed. And so the differential between them was never contemplated to be this wide. So in some sense, it's broken, right? And it may need to be reconfigured after this. This next Brent expiration, if we don't start seeing that convergence, then we may be in a position where no matter what type of news flow happens, futures may not respond.
That was Vikas Trivedi of Macquarie weighing in on the commodity market. Your scores look like this morning. Equity futures on the S&P up by 0.8, up by close to 1% on the Nasdaq. A tech story in the mix that we'll get to with Ed Ludlow in just a moment. In the commodity market, Brent and WTI still elevated, the tension still simmering. Brent crude at 99, WTI just breaking through 90, just briefly, back to 89.97.
So we have the ceasefire. We don't have a deadline. We don't have really a time frame when the president is going to be willing to accept this Iranian proposal he is waiting for. And at the moment, nothing has really changed on the ground, as we continuously have been saying for days, except actually it's gotten a little worse in terms of the IRGC taking hostage 2 vessels.
That's the price action. Let's get you some morning calls. First up from JP Morgan, raising its price target on Halliburton, highlighting demand growth. That stock up at a pre-market by 1.1%. The second call from Stifel, lowering its target on Birkenstock, reflecting a difficult consumer backdrop due to the war with Iran. That stock just about unchanged. And your third and final call from Barclays, raising its target on TSMC, expecting AI demand momentum to continue. Let's stick with tech. Sources telling us here at Bloomberg, a small group of unauthorized users have gained access to Anthropic's new Mythos AI model, which the company wants could enable dangerous cyber attacks. Ed Ludlow has the latest. Ed, that one's a shocker, or at least could be. What are the details?
Yeah, it's a shocker in part because of how this group or community got access to the preview. In the first instance, this was a contractor with a relationship with Anthropic, right? And they used those official contractor credentials to gain that access. And Anthropic has confirmed that and said that the scope of the access was contained within that. They also basically scrubbed various code bases like GitHub, where you basically sleuthing, find out where you think the code base might be for Mythos and access it. What's confusing for the Bloomberg audience is that this is being billed by the company, John, as being highly capable in cybersecurity, being able to go through very large code bases, find vulnerabilities, and then potentially act on them. But it is a general purpose model. You cannot isolate a capability. And in the reporting from Bloomberg's Rachel Metz, there's no evidence that they did anything wrong with the model. They experimented with it, but they didn't use it for some kind of cyber security attack. It's just that it dates back to April 7th, when Anthropic started the exercise of making it a very, very limited release to big technology companies and banks, and trying to keep a very closed circuit on who could experiment with what is a highly capable model.
So, Ed, let's talk about something I've struggled with personally for the last several months.
Sure.
What is real? What is hype? What is just marketing for the IPO? Now, let's take Mythos an example. So Mythos, I'm told, I have to be really concerned about because it's potentially quite dangerous and could expose vulnerabilities. I'm taking that very seriously, and they're saying that we can only let certain people use it with authorization to work out what those vulnerabilities might be ahead of time. Got that. At the same time, I should be totally okay with the idea that unauthorized users have got hold of this. I'm struggling to square the two. It's either one or the other. Which one is it?
Anthropic and its leadership have come in for criticism over a longer period of time relating to several releases of the models and how they communicate about the risks of it. You know, they warn often about the capabilities of various models. When I was on stage a week ago with Mike Krieger, who co-leads Anthropic's labs, they are basically the product cycle team. The way that he built this was that this is not some sort of great revenue exercise. They're leaving a lot of money on the table because they are closing limited release. There's lots of evidence that all kinds of industries want access to this. So we know what its risks are. Basically, potentially a bad actor, a malicious actor, if they got access, which is hypothetical, could do something bad with it. But on the other side of the coin, and this is why the Treasury and the Fed's involved, they want them to have access, those key financial institutions, core parts of the financial system, so that they can use its benefits, its proactive side. To answer your question succinctly, you know, is it a marketing exercise? You know, the pushback the company would say is that they're not economically gaining from this right now, at the same time as they are trying to negotiate their future with this government in the White House.
Ed, I'll leave it there, because I think they are gaining. Because they're gaining because their valuation in private markets is exploding ahead of the IPO, but we can talk about this another time. The thing that's boosting equity markets right now, Ed, is NVIDIA and Google. Can I get your thoughts on this tie-up, this agreement? What kind of deal is this? Because as soon as that broke, I saw equity markets gap out to new session highs.
Yeah, so this is really interesting because to all intents and purposes, the other piece of news that came out is Google has 2 new TPUs, a training-specific one and an inference-specific one. That puts NVIDIA and Google in competition on the hardware side, on the silicon side. On the software side, it is highly normal for Alphabet or Google, through its various AI labs, and there are several, to cooperate with other technology companies. NVIDIA has its own library of open source models, specifically focused on physical AI, but increasingly Jensen has tried to talk up NVIDIA's software competence in agentic AI and its partnership with OpenClaw as an example. So this isn't a surprise if you accept that they are frenemies, right? They are both in competition with each other on the silicon side and on the software side. I would say if you're looking at the move in Alphabet, there has been a huge dump of news, which includes a number of cloud contracts, these 2 new chips, and the NVIDIA relationship. It's not exactly clear to me at this moment, John, which of those is driving the market in the pre-market.
And appreciate it.
Yeah.
It's great to have you in New York, and I'm looking forward to the program in a few hours' time. Bloomberg Technology with Ed Ludlow. To Ed's point, it's not just the NVIDIA tie-up, that combination, that deal, whatever you want to call it. It's also Salesforce and Google Cloud expanding a partnership on AI agents. Just a bunch of news dropping in the last 10, 15 minutes or so, driving that stock out to new session highs.
Exactly. This is underpinning basically the U.S. financial market. Everyone is back to the AI trade, the AI themes, because that is going to be something that is long-term and pretty much ignoring what is going on in terms of the conflict in Iran.
Later on today, we'll get some numbers from Tesla. Let's talk about that. James Picariello of BNP Paribas staying bearish on the EV maker with an underperform rating, noting a, quote, challenging setup for Tesla. James, good morning.
Good morning.
What's challenging for this name this morning?
Yeah, I mean, as I think about the first quarter, we're about 10% below consensus on gross profit and adjusted EBITDA. We know first quarter deliveries and energy deployments, right? Tesla already provided that. And as we think about the auto business, the growth volumes were up 6%. The growth was entirely driven by rest of world. So the core markets for Tesla, North America, Europe, China, that was essentially flat. There was some mid-single-digit growth in North America, offset by declines in China, and Europe trended overall flat. So no major surprise there, positive or negative. And there's a heavy lift for the remainder of the year as we think about auto volumes relative to consensus, and even my own forecast. I'm quite constructive the rest of the year on autos getting the volumes getting better. On the energy storage side, the deployments were down quite significantly, down 15% year over year, 40% quarter over quarter. I think that's going to be a focal point of one of the many focal points of tonight's conference call, just what drove that.
The pushback that I'd get from the bulls right now, I imagine would sound something like this. Talking about Tesla and cars is the same as talking about Amazon and books back in the 90s. That it's not about where we are now, it's about where we'll be and what this company will be in the future. Does that not resonate with you?
Oh, it certainly does. I mean, when I think about my price target of $280, 70% of that valuation is attributed to robotaxis and Optimus, right? Optimus hasn't started commercialized production, right, of the humanoid bots. That happens, well, the promise is that it happens by the end of this year. And for robotaxis, the active fleet for Tesla hasn't really expanded. It's not accelerating from the end of from fourth quarter to now. So there's a high bar set for the progress rate, and we've yet to see it.
In the short term, though, do you think Tesla's going to have to cut prices because deliveries are low, at least in North America?
Yeah, I think so, right? The $7,500 tax credit went away September 30th. Demand is not necessarily rich for EVs in North America.
Couldn't this be a good moment for them, though, with gasoline prices inching higher?
Yeah, but when we think about the profitability, right? Tesla is guiding this year's CapEx at $20 billion. Right? Last year they did $8 or $9 billion. Right? So the full expectation is for cash burn.
What car should I be excited about? Rivian, mid-size SUV?
I knew you were going to say that.
I like the Scout as well. Isn't that the VW partnership that's coming to the US?
That's
12, 18 months?
It's a Scout.
The Scout's not coming until 2028, 2029.
Oh, really? That far out?
But, I mean, we have an outperform rating on Rivian. I am quite bullish on the R2, which starts to really ship the second half.
What kind of numbers are you thinking about with regards to Rivian and the R2?
So for the R2 specifically, for next year, I'm thinking about 85,000 units.
Okay. And where are we now at Rivian?
For the total volume's around 40,000, but with no R2 as of last year.
So introducing the mid-size SUV, we could see a doubling in sales basically for that company.
Yes.
Wow. Okay. James, appreciate your time. Thank you, sir. James Picariello there of BNP Paribas. You seen that? The mid-size SUV?
I'm looking at it now. It does look quite cool.
Looks pretty cool.
But you have to wait till 2028.
Sure. Is it 2028 or next year?
No.
No, Rivian.
Production has started now, the Scout.
The Scout.
Oh, the Scout.
Scout's a different car.
Oh, no, sorry, I'm looking at Scout. That's what you're asking about, because
right, no.
I've never seen these before.
The Scout is very cool. Back in sort of leaning into Americana heritage.
This is very cool, but 2028, I mean, you can't wait around to buy a car for that long, can you?
No, I'm just saying there are some things coming on the horizon.
Yeah.
Anyway, let's talk about what's happening on the screen right now. A headline crossing just moments ago on Germany and the outlook for GDP. German GDP and the outlook from Germany, they've cut their 26th growth forecast to 0.5% from 1%. So they've cut their forecast in half on the war with Iran. This is the difference between the US and Europe right now, far more exposed for Europe at the moment, which is contributing to a much lower forecast for economic growth for the year ahead. If you're just joining us, that forecast is now 0.5%. It was 1%. It was already low, and now it's lower.
So this is what the economy minister had to say according to an email statement ahead of the press conference they're going to be giving, going through some of these numbers and what they're seeing. The economic recovery expected this year is once again being held back by external geopolitical shocks. The war in Iran is driving up energy and commodity prices. This is putting a strain on households and increasing costs. We're seeing what Europe dealt with when it came to Russia, Ukraine. They're dealing with once again when it comes to Iran because they import so much of their energy. We saw also today Rachel Reeves in the United Kingdom after the inflation data came out and that popped. She said it is because of external factors like what's going on in the war in Iran.
Every time I hear from officials in Europe, it sounds so bleak. The ECB President Christine Lagarde with similar words as well. Stateside equity futures on the S&P higher by 0.75%. Coming up next, we'll catch up with Stephanie Roth of Wolf Research on the path ahead for interest rates following Kevin Walsh's Senate hearing. Plus, Yahara is back with us. She's got your morning movers. Boeing shares rising after aircraft deliveries surged in the first quarter. That stock is up in the pre-market by 4%.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this field forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Equities elevated here by 0.7% on the S&P 500, on the Nasdaq up by 0.9, on the Russell up by 1 percentage point. This market taking some comfort from an extended ceasefire with no deadline. That extension coming from the president after the close just yesterday. That's the bounce. In the commodity market, Brent and WTI shaping up as follows. Still elevated and tension still simmering. Brent crude close to 199.60, and another headline about another ship in the Strait of Hormuz just crossing, this one from the Journal.
The Journal saying Iran's IRGC fired on a third ship in the Strait of Hormuz. We do know that the IRGC basically took two vessels hostage, bringing them to Iranian shore. We have this ceasefire, Jonathan, as you say, no deadline. At the same time, I don't see any indication that there's going to be a consensus from the political figures and the IRGC within Iran to come up with a proposal and a plan to give to the Pakistanis to show the President of the United States. So we might be in limbo for a lot longer than maybe this White House was hoping for.
We are deadlocked, and that impasse comes with its own problems, and you see those problems in this commodity market. As we count you down to the cash open, the open about 60 minutes away. Let's get you some morning movers. Yahara has more. Hey, Yahara.
Hi, John. It's been a busy morning for earnings, and Boeing is the latest company to report, and the results were positive. Shares are up 3.8%, with cash burn coming in much better than expected, and airline deliveries for the quarter hitting their highest level since 2019. That combination fueling a surge in revenue, helping investors to understand the turnaround story as it tries to recover. Moving on to the airlines, we are seeing United shares still up 1.4% in the pre-market, even after it cut its full-year outlook. But it is this overall optimism in the market over that ceasefire extension that is helping to lift the entire sector. Shares of Delta up 1%. Shares of American, which reports tomorrow morning, up 1.5%. And we end on GE Vernova, moving to the upside, up now 7.7% after a beat and a raise, with the company clearing a very high bar. Shares are up 200% in the past year due to booming demand for energy due to AI. John.
Yahara, thank you. That's the tech story right down the screen, which is why you're seeing the equity market gap out again and very, very close to all-time highs on the S&P 500. That's the US story. The international story, far more tense. Lufthansa cutting 20,000 flights. Germany slashing its growth forecast to just 0.5% from 1%. That's 26 to 27. Now they're looking for just 0.9% GDP growth, down from 1.3. This war will have consequences, and those consequences are being found in Asia and in Europe.
Yep, and the United Kingdom, inflation higher. So you're starting to see potentially the consequences and the scarring happening in Asia, which already are telling people to stay home, and there's some sort of requirements and how late they can stay out at night. Certain days you can go actually use cars and others you can't. And then in Europe, cutting flights, telling people, use bicycles instead. And then we're seeing it in growth projections saying this is going to hit us in terms of growth. This is not a good place for Europe to be, especially since they just went through the shocks of Russia's invasion of Ukraine.
Tracking the fallout day to day, week to week, more headlines for you. Let's turn to the Federal Reserve. Kevin Walsh's path to the chair remaining uncertain.
Kevin Walsh is uniquely ill-suited for the job as Fed chair.
I do have a disagreement, actually, Senator, with the president. I think central casting, I'd look older, grayer.
Quite adorable.
The way you can circularly go around questions and not answer them, it's a skill. Unfortunately, it's not a good skill for the chairman of the Federal Reserve Board.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No.
We're talking about Fed independence. By the way, I think you're going to be independent. You have to be. You got to convince 11 other people to vote with you. Let's get rid of this investigation so I can support your confirmation.
Can we unpack some of that? Can I just unpack that line from Senator Reid? The way you can circularly go around questions and not answer them, it's a skill. Unfortunately, it's not a good skill for the chairman of the Federal Reserve Board. It's literally what they do at the Federal Reserve. Has Senator Reid ever watched a news conference at the Federal Reserve?
That is the point of being not just Federal Reserve, being a central banker anywhere in the world. I've literally had them tell me, even sometimes for former Treasury secretaries and other individuals, say, well, sometimes we want to go out there. We don't actually want to make news. We just need to talk around things.
It's not what we'd like, but it's been a history of the Fed for a long, long time. As for the senator from Massachusetts, Kevin Warsh is uniquely ill-suited for the job as Fed chair. This is someone who called Chairman Powell a dangerous man.
Right.
Can Senator Warren tell us who she thinks should be the Fed chair?
It's interesting given the fact that Kevin Warsh, whether you like him or not, has gotten tons of warm welcomes from establishment figures, whether at the ECB or the IMF, from some Democrats and obviously all Republicans. So I'm not sure there's anyone. Maybe herself. Maybe that's who she would sign up for.
The battle continues, and you might be right. Senator Tom Tillis holding firm on blocking Warsh's nomination until the DOJ drops its criminal probe into the Federal Reserve. Bloomberg's Mike McKee was watching the whole thing, and he joins us now from Washington for more. Good morning, Mike. What are the key takeaways for you?
Well, Kevin Warsh is going to be the Fed chair, it appears, as long as the administration drops its political case against Jay Powell. He has enough support from Republicans that it doesn't really matter what Elizabeth Warren thinks at this point. Most of the people in their string of quotes there were Democrats, and Democrats kind of opposed him. But this was really a hearing that isn't that much different from the sort of nomination hearings we've had for the past few years. Given all the controversial appointments that the president has made, we've seen a lot of criticism like that, even worse in many of the confirmation hearings. But Warsh does leave there with some questions, chief among them, as you mentioned, when does he take over? And that's going to hang over him for quite some time, and Senator Tillis made that clear yesterday that he wants that investigation out of the way. Then the question becomes, what will Jay do? What will Jerome Powell, the Fed chair, now do if Kevin Warsh does take over, if and when he takes over? Will he stay on as a governor, and what would that mean for the Fed overall? I put this question that Elizabeth Warren put to Kevin Warsh in there, who won the 2020 election, because it does suggest that there is some hesitancy on Warsh's part to be as independent as he needs to be. And a lot of people may think about that should he advocate something that maybe the president is advocating. And then finally, when he walks in the door, does he have allies or frenemies there? He had a lot of bad things to say about the Fed. Talked about we need a new framework, new tools, new communications. We need regime change. The Fed has lost its way. How's that going to play, not just with the other 18 members of the Open Market Committee, but with the staff of the Fed there? He is only one vote, even if he is the chair. Moral suasion is his one major tool. And does he lose that if he goes in there with guns blazing? We aren't sure exactly how all this is going to end up.
Mike McKee, appreciate your time. Thank you. Mike McKee down in Washington, D.C. Inflation is a choice was the key line in the opening testimony that I think we all sort of raised an eyebrow at when we first read it.
Shots fired to Team Transitory, Jay Powell and co. that basically they've been cutting interest rates and inflation has not been at their target. They moved the goalpost, I think Kevin Warsh would say, when he comes out and says inflation is a choice.
This is the take from Stephanie Roth of Wolf Research, writing the following. Warsh struck a more hawkish tone than we had anticipated. The one notably dovish element, however, was his emphasis on trimmed mean inflation, suggesting his framework may be evolving. Stephanie joins us now for more. Stephanie, good morning.
Good morning.
It's difficult to draw big conclusions from a testimony that you know has various different audiences, and it's not just Wall Street. How are you untangling some of that?
Yeah, so we were looking through the details, right? Because you're right, there's a broad range of audience. There's Congress, there's the president, there's market participants. The point on trimming inflation, I think, was an interesting one because we haven't found in his history that that's something that he has focused on primarily. However, that is one evidence of the inflation basket that is running below core PC inflation. It's running about 2.3% year over year compared to core PC, which is running closer to 3. So it seemed like an element of perhaps cherry picking some of the data that aligns with the view that he ultimately will want to have in order to convince the Fed to be cutting interest rates when he actually takes the office.
Which reinforces his first line, which is inflation is a choice. You just choose what you want
to look at.
Right? Seems to be the takeaway.
That's true.
A focus on interest rates and not the balance sheets. This opposition to the balance sheet that I find interesting. Does he have some company on the FOMC, and ultimately, what's he trying to achieve?
Yeah, I mean, I think it's going to be a lot more modest in terms of what he actually gets done. The way he talked about it, it sounded like it would be a very gradual move, and you're starting to hear some more FOMC members talk about, potentially slightly lower balance sheet. So I think he will eventually be able to get something done from that perspective, and he made, convincing arguments about interest rates being a tool that impacts more people as opposed to market participants, which is more tied to the balance sheet. So that is something he will likely make some changes on. He'll likely make changes to communication. That was something he emphasized quite a bit. Otherwise, he's going to be faced with a tough situation because he's going to want to be cutting interest rates, and the focus on trimming inflation may not necessarily convince everybody.
He also talked about how he almost wants more of a, I wouldn't say transparent, but frank discussion amongst him and his colleagues at the Fed, and not all these pre-prepared remarks when they go into the meeting room. I imagine as a market participant, that's exciting.
Yeah, it's certainly exciting. It could create a lot of more volatility around FOMC meetings because the way he made it sound is they'll be truly debating in the room, and then they'll come out with a more unanimous statement. So he was looking for fewer dissents, but more debate. And you might end up with some surprises at the end of certain FOMC meetings that could then, move markets pretty substantially.
Press conference stay or go under Warsh?
I think they stay.
What would it mean if they went, and you're a market participant?
I mean, it's a problem because you don't really get to hear the real insight into what the FOMC's thinking and get to hear their really what their framework is. And of course, he certainly does want to pull away some element of the focus in terms of media, but it seems like he's still going to probably keep the press conferences there.
There's certain elements of the post-GFC communication apparatus that needs to change. There's certain elements that we've seen officials on that Fed be frustrated with for the best part of a decade, the dot plot being one. Didn't hear much of that yesterday, but there are certain changes that I anticipate they will probably make. And it's probably about time, in the minds of a lot of people watching this program, that they make those changes.
Yeah, I think that's right. And he made a good comment that, if you are committed to your dot plot, you might be stuck in your forecast for longer than would otherwise be the case. And as somebody who makes forecasts, I understand the idea, but you have to change.
You become married to the forecast.
Exactly, but you have to change as conditions evolve, and it's easier to do so if you are less, there's less focus on the S&P.
What are your thoughts about how he's handling the politics? This sock puppet thing keeps coming up continuously through this morning, and they're going to keep throwing that at him repeatedly in the months to come.
I mean, it was very clear he didn't answer the questions that he didn't want to answer, which was a lot of them. But I think we'll be in an environment where he will focus on independence. The question is, to what extent does he end up being more consistent with his own history of being hawkish on inflation compared to what the president wants him to get done? And that's something we don't really know yet.
That's who he still is. Do you believe that's who he is still?
I believe that's who he still is. And in his opening remarks, it was much more of a focus on inflation than the employment side of the mandate. He didn't focus on the AI narrative, which is something that he's been talking about more recently, which would be a solid argument for lower interest rates. So that was something we noted as well. I think he's still hawkish by nature.
Stephanie, appreciate it. Thank you. Stephanie Roth there of Wolf Research, with her views on this Federal Reserve and the incoming, I think we can call him, incoming Fed Chair, Kevin Warsh. We're still waiting for that confirmation.
It's incoming. You said it the best earlier. It's not a matter of if, it's a matter of when. For me, the most important takeaway from yesterday was Senate Majority Leader John Thune basically saying, yes, the investigation into Jay Powell needs to get, and the Fed needs to get wrapped up in order for this to move forward, which says this isn't just a Senator Tom Tillis thing. This is a Republican writ large issue for the senator.
That's why there is this small chance still that it is a matter of if and not when. Just this small chance. I can't quite get my head around why the White House is not taking the off-ramp. That's the piece of this that makes no sense to me. You've got your guy. He's got a lot of approval, not just from Republican senators, but from establishment figures in the world of economics, lining up behind Kevin Warsh, endorsing him, supporting him. You can have him at the top of the Federal Reserve. You've got a problem with Chairman Powell? I don't want to get into that right now, but the president's got a problem with him. He will go away. There's your off-ramp, and they're not taking it.
And also, this is Congress. This is the White House. They can have other means. They can have task force looking into potentially what they would consider gross misconduct of funds when it comes to the refurbishment of the Fed. But does it rise to the standard of being a criminal probe into the Fed? That is a big question. I'm not sure why they're not taking that off-ramp. I'm not sure. It keeps getting put to the president, and he doubles down that he wants to keep this.
I saw Libby Cantrell, PIMCO, talking about the fall for confirmation, the third or fourth quarter.
So you know what that means?
It's going to be a long wait.
It feels like Jay Powell forever. And maybe, if you're a conspiracy theorist, you think if this White House thinks potentially the economy maybe isn't going to hold up as well before the midterm elections. Don't you want someone to blame?
Let's give you an update on news elsewhere, including the war in the Middle East with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. We start there. An update on the Strait of Hormuz. Iran has reportedly opened fire on a third vessel in the waterway. This latest one owned by a Swiss shipping company. The Wall Street Journal reporting the ship was attacked while waiting to cross into the Gulf of Oman. It follows Iran seizing 2 other ships in the Strait earlier today that were brought back to Iran's coast for inspection. A small group of unauthorized users gaining access to Anthropic's new Mythos AI model, which the company itself warns could enable dangerous cyber attacks. According to documentation viewed by Bloomberg, the users gained access on the same day Anthropic announced a limited test release of the model. And we are seeing Alphabet shares rising 1.6% in the pre-market as a wave of headlines hit from its Google Cloud conference in Las Vegas. The tech giant announcing deeper partnerships with Salesforce and NVIDIA, which you can see there, up as well. Plus, announcing a set of tools to create AI agents and the latest generation of its in-house chip. That's your Bloomberg brief. John?
Yahara, thank you. Thanks for the update. Thanks for this morning. Up next, we'll catch up with Chris Watley of Longview Economics, with stocks rising ahead of the opening bell, and we'll take a sneak peek at the week ahead, heading into the weekend. Live from New York City, you're watching Bloomberg TV.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Almost had complete retracement. So if you look at just that context of 2 months, you should have just stayed invested. The idea that you could have taken off any sort of investments because of this geopolitical conflict be able to add at the wides, ride that back. I mean, nobody can be that kind of hero in this market. So that idea that you can be cute and add on weakness and buy those dips, it doesn't happen any longer.
I really enjoy catching up with Lindsay Rosen at Goldman Sachs. That was Lindsay from a little bit earlier on this morning. The difficulty of trading these headlines. Just think about how ridiculous the last 24 hours have been. Going into the close, you see these headlines about Vance not attending talks in Islamabad, talks that aren't even happening. Then after the close, 10 minutes after, the president extends the ceasefire indefinitely. And here we are, futures up by 0.6% on the S&P 500, on the NASDAQ up by 0.7%. And the anchor, I think, for a lot of people right now is to look through all the noise and just focus on one of two things. Either you're on the path to escalation or the path to de-escalation. And you see a president right now committed to the former, committed to the idea of de-escalation and not escalation.
He's committed to that idea. He said that he's willing to have this ceasefire, and he's waiting for the Iranian response. The Iranian response, basically, I think a lot of people are talking about, a lot of reporting, the president's talking about have a more cohesive response between the IRGC and the political actors, and then they'll be willing to maybe have another negotiation. But I find it fascinating that we have no deadline. Feels like the first time from this president we have this open-ended, basically, ceasefire.
Waiting for a unified response from the Iranians. He calls their leadership fractured. They are, and we'll see if we get that unified response sometime soon. As we count you down to the opening bell, some things to look out for. Tesla and IBM reporting after the close. Lisa catching up with Scott Kirby later on this morning at about 25 minutes from now, so look out for that too on the corporate side. On the data side of things, on Thursday, PMI data and another round of jobless claims. On Friday, new consumer sentiment data as well. For stocks right now, trading close to session highs going into the opening bell. Chris Watling of Longview Economics writing the case for a period of consolidation is growing. A retest, though, is not our central expectations. We recommend remaining overweight equities. Chris joins us now for more. Chris, good morning. Good to see you.
Good morning. Good to see you.
I remember in the spring of the pandemic talking about the retest, because the retest has to happen, right? And we were debating this for weeks and then months, and the market kept climbing up and to the right on the charts, and you missed it. Is that the feeling you've got now?
Well, that's such a great point, because I remember the debate very well. And I remember at the time doing an analysis of all major sort of plunges in the stock market, which weren't in bear markets, just, you know, sharp sell-offs, and how much pre-pandemic they always retested. And it was almost 90%. It was almost a given. You retest and then off you go. And of course, since then, I think we've had 4 plunges, of sharp plunges. So I'm not talking about the 22 bear market, but the August 24 Japanese sell-off, you remember. And of course, the banking crisis in March 23. And none of them have retested. The structure of the market, I think, has changed. And I think that's what really interests.
When you say the structure, what do you mean by that?
Well, I certainly think the retail element's changed, and there's been a lot of talk about that. But I also think the predominance of pod shops, because in the old days we used to talk about risk guys swinging the bat. You know, where's the guy to come in and swing the bat on a, you know what I mean? Now I don't think those guys exist in pod shops. They're all stop loss guys. They're quant guys. So they flush at the same time. They're all out. The risk management's all over their positioning. And I've talked to a lot of global equities managers, old school, who find the behavior of single stocks very bizarre these days. You know, it's something that should go down 5 goes down 15, a big cap. So I think the structure's changed because of the pod shops and the retail trading that's going on in the market.
If there's no retest, then what could there be? Just miniature pullbacks?
Well, I mean, in a sense, if the news flow really deteriorates properly, something could happen. I find this whole thing fascinating because we all know Trump wants out, but no one in the West really knows what the Iranians think. We have no idea.
But they drag their feet. We know that.
Well, we don't even know who they're talking to. I mean, and of course they don't think like the West thinks. We don't know whether the Iranians think like Hamas think, or whether they think sort of halfway between Hamas and the West. You know, it's a different mindset. But anyway, putting that to one side, I'm all for don't worry about it. But I think you might get a consolidation, or you might get a bit of a wobble. It's huge tolerance, but it's also a different ideology, which is a completely different mindset that the West doesn't fully grasp.
When you think dying's winning, I've said this repeatedly, when you think dying is winning, you're not a rational actor.
Yes.
And that's the kind of people that you're dealing with in Iran.
Exactly. And I think that makes the thing a little bit more complicated. And I think that's where the market's slightly struggling. But we're clearly pricing out a lot of the tail risk, and that would be my central case.
That's the US story. Is it different when you look at Europe, in European markets? Is it different when you look at Asia?
Well, look, if the US is going to go up, Europe's going to go up. And I thought what was interesting 6-9 months ago was the broadening of the global economy that started to come through. Now, that's sort of slightly put on hold. The oil price spike is really bad for Europe, so that needs to go away. But my assumption is we'll price out hikes in Europe that are into the curve for the ECB, and we'll go back to flat or maybe even cuts, and we'll resume where we were before, which is the broadening of the global recovery, at least in the West, which is good for Europe.
That's interesting, because we heard someone say on this program earlier on this morning that actually this has set the stage for narrow leadership and for people to get comfortable with tech. Why do you see it differently?
Well, look, I like tech. We're back onto tech in the last month or so. I think you want a barbell, tech and cyclicals, because I think the markets, it's almost like we've done a gut Ukraine reaction in the interest rate futures market. You know, second round effects. Inflation's a problem.
22 repeat.
Yeah, but I don't think that's the case at all. The Western consumer's pretty soggy, I think, on the whole. You know, the bottom half of the US and across Europe. So actually, there's capacity in these economies. I don't think we'll get second round effects, so we can price out these hikes and get the cyclicals going again.
Chris, it's good to see you.
Nice
Great to see you stateside as well. It's been too long. Chris Watling there of Longview Economics. Equity futures right now in the S&P 500 still elevated up by 0.6%. We are poised for more headlines, no doubt, through today, whipsawed from one to the next, but ultimately there is a ceasefire, and that ceasefire has been extended.
It's been extended indefinitely. We do not have a deadline. Remember, this time yesterday, Jonathan, we were talking about whether or not the talks would take place. We know they're not taking place, which you'd think would be bearish for this market, but an extended of a ceasefire without a deadline, that's pretty bullish for equity markets.
Bullish for equities, bullish for crude as well, by the way.
Yeah.
Brent's still close to triple digits. Coming up tomorrow, we'll catch up with Keith Lerner of Truist, the former Trump Deputy National Security Advisor, Victoria Coates, Christina Campmany of Invesco, plus Eric Cantor of Moelis. From New York City this morning, good morning. This was Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good Wednesday morning, 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, President Trump extends a ceasefire with Iran indefinitely, walking back threats to resume the fighting.
Meanwhile, earnings season kicks into high gear. Tesla expected to post strong results after the bell.
Plus, a Bloomberg scoop on how a small group of users gained unauthorized access to Anthropic's Mythos model. Is it dangerous? Will they hack with it?
I guess no one has yet. We would know, right? We might not know. Anyway, things that might cause the world to come to its end. Let's talk about the airlines, because United Airlines, they slashed its full-year profit forecast due to higher fuel prices caused by the Middle East. Shares had been higher today on the ceasefire extension, so that's why they're down, Matt, but only like 0.5%, because yay, oil prices are coming down. That's good for United, all the travel stocks, et cetera, et cetera.
All right, so we'll watch that, and we have an interview with the CEO of United in the next 10 minutes. Avis is surging.
Such a good story.
Sorry?
This one, it's such a good story.
Yes, I love it. Avis is surging today. It's up more than 450% this year. I'm talking about the car rental company that's kind of an also-ran. The thing is, short interest as a percentage of its free float is currently at 62%, according to data from S3 Partners. And what we've seen here is a massive short squeeze after everyone found out that there were so many shorts in this stock. We're going to talk about this as well in this hour, Danny.
Yeah, I can't wait. It was one hedge fund that decided to jump in and cause all of the pain. Our top story, though, this morning, Matt, President Trump is extending a ceasefire with Iran indefinitely as plans for fresh talks collapse. Democratic Senator Elizabeth Warren and Republican Senator Kevin Cramer reacted on Balance of Power.
We are at war. And the only way, evidently, that we're going to be able to stop this is to get the Republicans to grow a backbone and be willing to exercise our constitutional responsibility to pull the president back in.
Because I think what the president is doing is he's showing again just how good a negotiator he is. I have complete confidence in his judgment on this.
Iran has reportedly struck 3 ships in the Strait overnight as its own oil tankers test the U.S. blockade. Joining us now is Bloomberg Washington correspondent Tyler Kendall. And Tyler, it really feels like we're at a deadlock at the moment.
Right, Danny. I mean, well, this move by President Trump to suspend the ceasefire indefinitely at this point, extend it indefinitely, we're still now seeing, as you're mentioning, that Iran appears to be testing the U.S.'s limits when it comes to the Strait of Hormuz, which could make for some escalation down the road. The Wall Street Journal reporting within the last hour that Iranian gunboats have now tried to fire at least 3 vessels in the Strait, amid reporting from Iranian state TV earlier today that the IRGC had seized 2 separate vessels it was accusing of, quote, secretly exiting the waterway. Now, we have repeatedly heard from Iranian officials that the only way to get them back to the negotiating table is for the U.S. to lift its naval blockade, though at this point, the Trump administration maintains that it's not going anywhere. And as you referenced, new data is showing that Iran is showing just how far that they will be willing to test those limits, now moving their own super tankers into the Arabian Sea in a bid to push back on that U.S. block of its shipping to and from all Iranian ports. Now, Matt and Danny, President Trump has said that this extension is to give Iran time to come to the table with a new proposal that the U.S. can review. But we would be remiss if we didn't mention that the U.S. is still keeping, of course, escalation on the table. We got this post last night from the U.S. Treasury Secretary Scott Bessent saying that the U.S. will continue its maximum pressure campaign. And he says that they are estimating that in a matter of days, we will see Karg Island storage full and Iranian oil wells shut in.
All right, Tyler, that's the state of play right now, although I have seen some skepticism about Karg Island storage facilities filling up within days, more like 5 weeks, according to Greg Brew. But we'll keep our eyes on that. Tyler Kendall in Washington. Let's get to the United story. United Airlines cut its earnings outlook as their war with Iran shocks the travel industry. Bloomberg's Benedict Campbell runs our aviation coverage and joins us now. So, Benny, what do we know about how this has affected United, and what do we still need to know, as we're going to interview the CEO in just about 10 minutes' time?
Well, the long-term view is that things aren't looking that great. They did cut their forecast for the full year. The short-term view, however, is that demand is still pretty strong, particularly at the front of the cabin, people flying business, people flying premium. So the demand is there, and they've managed to pass through quite a few of the costs that they have because of the increased kerosene to the consumer. So fares are up, but demand is still there. So overall, people seem to be somewhat satisfied with the way that the company is balancing that. The big question to ask Kirby, however, will be, what about consolidation? Will you be an active participant? He again sort of hinted at it in his comments, saying the current state of the industry might be an opportunity. Obviously, we've reported that they have sort of entertained the idea of merging with American. We heard from the president yesterday saying that he doesn't think that's a good idea. It makes companies lazy in his view. So that's going to be the big thing to ask Kirby when he comes up.
Yeah, we're looking forward to that conversation. Benny, even though the airlines have started to warn on these rising fuel costs, the suppliers to the airlines, GE Aerospace yesterday, Boeing today, feel like demand is still pretty strong, whether that specific business or defense.
Well, in some ways, it's good news for these types of companies, because what it does, it forces airlines to look at their fleets and to look at what kind of planes are we flying. And in many cases, these are still old aircraft. So the sort of replenishment of new aircraft, getting in the rejuvenation of the fleet, that is very much what the airlines are trying to do, and they're trying to accelerate that. So if you're a Boeing, if you're an Airbus, if you're GE, you're potentially in a good position, provided that airlines have the money to pay for these things. But for the time being, that seems to be the case. So yes, we heard from Boeing today. They've managed to log the highest deliveries in the first quarter since 2019. So really quite a positive set of results from them. Normally, the Boeing earnings are sort of, there's a couple of skeletons in the closet, shall we say, but not this time around. Fairly clean set of results, both on the commercial side, also on the space side, on the defense side. So they seem to be doing pretty well. The stock is up. Again, we'll hear from the CEO a little later on a call with analysts, and there'll be more questions about sort of the robustness of the demand picture.
Benny, thank you very much for that. That's Bloomberg's Benedict Campbell. And as we've been discussing in just a few minutes, Lisa is going to be sitting down with United CEO Scott Kirby right here on Open Interest. One of our other top stories this morning, a small group of unauthorized users have accessed Anthropic's new Mythos AI model, which the company says can enable dangerous cyber attacks. Bloomberg Tech's Ed Ludlow is here with us. Ed, I know the story says that it was not used for cybersecurity purposes. I don't know if that should give us any comfort.
Right. So something that's confusing about Mythos, this was a small group of community members on a Discord channel. And one of the methods by which they gained access was someone who had a third-party contractor relationship with Anthropic had credentials to log in and get it in preview. They also scraped various platforms where Mythos' code base exists, like GitHub is one of the examples given. What's confusing, and I really sympathize with you guys, is that Mythos is a general purpose model. You can't just isolate the cybersecurity capabilities. So what the reporting tells us is that they didn't do anything malicious with it. What the model can do is go through a very large code base, find a vulnerability. That is a gap or a piece of bad code or miswritten code, and potentially it can exploit being a technical term, write new code or use a method to do something, take action of that vulnerability. There's no reporting that suggests they did that. The bit that's worrying is, what if a bad or malicious actor did get access to the Mythos model and used it for that exact purpose? And Anthropic, in response to our reporting, says, to the best of their knowledge, that has not been the case. It's just this small group, and they know the parameters by which they got it in preview.
Right, so our story says they haven't used it for cybersecurity.
Right.
To my mind, that means, cybersecurity is a good thing, right? Right. My worry is that they use it for cyber hacking.
Attack.
But you're saying, first of all, that we use the term cybersecurity as a blanket term for security and for hacking. Anthropic also says they're not worried right now because it hasn't affected their systems. And my concern is that it affects the systems of banks or the systems of military facilities. And to Danny's point earlier, which I haven't even thought about, we may not know if hackers have used this tool. Should we be scared right now? Or is this a marketing ploy by Anthropic to make us think their tools are so powerful that, you know, a group of hackers on Discord are struggling to get hold of it.
The hypothetical, the unreported or unproven scenario you're describing is where a malicious or bad actor, which could be a state-level actor, it could be in the context of espionage, it could be a group, a private group of malicious hackers, use the model to get into the source code or code base of, for example, a financial institution. This is why you have the Treasury Secretary and the Federal Reserve saying to the banks, we want you to go on the offense to proactively use Mythos's capabilities to go through your own code, find the vulnerabilities and patch them before that scenario would play out. Because the model can do it quickly and more broadly than a group of human cybersecurity experts could go through that code base. That's what we're talking about here.
It is a pretty good pitch for the IPO, because isn't that a great hedge against you personally if, like, this stuff is potentially going to destroy a bunch of companies through cybersecurity?
Let me say just one thing.
It might take your job, so why not own the stock, and at least you'll make money as it
Real
happens.
quick, and we should have sent a headline to the terminal on this. We should have written a story. I was on stage with Mike Krieger 10 days ago. He co-leads Anthropic Labs. They are the product development team. And he said very flippantly, this is not a revenue-making exercise for us. In other words, that by choosing to release Mythos into the world in this very limited manner, in a secure way through Project Glasswing, they're not making the money that they could.
Right.
You know, they're not gaining economically from it. And that was probably worth
But it's
a bit
their
more
Halo car.
Right, but it was probably worth a bit more discussion and an investigation, sure.
All right, well, I'm sure you'll do that investigation and have those discussions on your program. Ed Ludlow hosts Bloomberg Tech. That kicks off normally every day at 11, unless there's a Kevin Warsh hearing, in which case we push it back. Importantly, in terms of markets right now, we're seeing some decent gains in futures. S&P futures up 0.6%. NASDAQ futures gaining 0.75%. After the losses we saw yesterday, investors willing to look through this war or ceasefire, as the case may be right now. 10-year yields coming down just a bit, 1 basis point, but still holding in the range that they've been in. We don't even really have to show 10-year yields anymore, 4.28 until they move more. Brent crude we do have to continue to show, and will. Right now up $1.41 at 99.90, so just shy of $100. United Airlines slashed its full-year profit forecast due to higher fuel prices caused by the war in the Middle East. Let's go to Lisa Abramowitz, the CEO.
Thank you so much, Matt. I am here in Chicago with Scott Kirby, the CEO of United. Scott, great to see you after a quarter where you did beat expectations but cut guidance. We'll get into all the numbers. I want to start with the big news over the past couple of weeks. Are you going to buy American Airlines?
Well, thanks for being here in person, Lisa. First, I'm not going to comment on that, but I will tell you a little bit about, repeat some of the things that I've said in the past. And first, it was a great quarter. Even though fuel prices doubled, you know, the team at United did an incredible job. And really, you look full guidance, giving guidance for the full year, being able to be solidly profitable even in this escalating fuel price environment, I think is really the entree to where we want to go for the future, which is we've built a brand loyal airline by attracting customers, by giving them quality, by giving them value, an airline that customers love. And that, you know, gives us resilience in tough times. But it also lets us think about what's the next phase for United Airlines. And we've spent, you know, the last couple of years thinking about, proving that this strategy to win brand loyal customers works. But how do we become a truly globally competitive airline? Now, I don't have the answers yet. I'm not saying anything specific about what they are. But today, there's a big trade deficit in the United States with foreign flagged airlines. And they fly 65% of the long haul seats into the U.S., even though only 40% of the customers are foreigners. And that trade deficit is bad for United Airlines. It is bad for U.S. aviation. It's bad for U.S. workers because we actually create some of the really best jobs with the best benefits in the country, not just jobs, but careers. And it's bad for the United States of America. And so I would like to solve that and create a truly global, great airline that all U.S. citizens can be proud of.
So it's important, in other words, for the United States to fortify its airline industry with the competitor in mind, not necessarily of the big three in in the U.S. of American, United, and Delta, but internationally with some of the long-haul carriers that you see as really the main competition for the United States. Is that correct?
You know, I feel like what we've at United have done here in the United States by building a brand loyal airline, you know, we really have attracted all, you know, the brand loyal, certainly in our hubs, we've attracted the brand loyal customers, and we've won huge market share kind of everywhere that we fly by being better, by being high quality, and that's what's caused us to win. And I think the next phase for us is, can we take that around the globe? Can we do that everywhere that we fly? And look, there's some really good airlines in the Middle East. There's some really good airlines in Asia. They do some things better than us. But can we create a U.S. airline? And I don't have the answer, not 100% sure we can do it, and not proposing any specifics today.
Of course not.
But it's an aspirational vision that I think United is in a unique position to go after because of the success we've had, because our people are great, because of the investments we've made in product and technology to get there, that we're in and because we have the willingness to try to do big things, that we are in a unique position to try to achieve that and do something big for United, but also for the country.
You've been really vocal about how it's an opportunity when there is a crisis or when there's serious pressures in the industry. Right now, it's high oil prices, to potentially pick up other assets that could be distressed, others that are weaker, that are falling out of favor. Are there characteristics of airlines that you would consider taking over, assets that you would potentially acquire in this type of period?
Yeah, you know, we would, one, the best way to prepare for a crisis is to be prepared before it starts. We knew something would happen. I didn't know when. We knew something would happen. So we're carrying triple the cash we had pre-COVID. We've moved to the top of the industry in profit margins. We have the best credit rating that we've had in over 30 years, and we're committed to getting to an investment grade balance sheet. That gives us the ability to look through the problems, the spike in oil prices to the other side, and not have to make short-term, you know, bad strategic decisions. And as I look at assets, like maybe they will, maybe they won't come available. We've actually even had some discussions with one airline about buying some. But the kinds of things we're most focused on are, again, back to this, how do we create a great airline a decommoditized great airline for customers that can really be stronger internationally? So things that support growing an international network are more interesting to us because that's where our focus, and I think that's where our big future growth potential is.
President Trump gave a nod to you in a conversation yesterday talking about how he likes what you're doing. He said that he didn't really want to see a tie-up between American and United. I know you're not saying anybody. Do you think that this is a more amenable period for tie-ups than it has been in the past? This is sort of a window that airlines can capitalize on to execute mergers that have been hard-fought in the past.
Yeah. Well, I'm not sure, but that's certainly the market consensus. That's what people think. And what I think it is, more than anything, is an opportunity to maybe, instead of looking at everything through the traditional lens, which is mostly a domestic lens, to maybe think about, what does quality mean? What do customers want? What do customers really want? And I think we have proven at United, customers want great technology. Like, people love our app. It's so much better than any other airline in the world. They like the information that we can give them. People want great service. People want high reliability. Customers want a great product. You know, customers want value, and value is much bigger than just the price. And customers want quality, they want value, and I think, you know, whether it's this administration or not, I think thinking about what do customers really want. And look, we have proof points. Like here in 3 of our hubs where we had big competitors, 3 different hubs, we've won about 20 points of market share with the local community over the last year. Those are massive moves at an airline against 3 different competitors that were big in those markets. And it's all because we built a quality airline that takes care of customers and puts customers first.
You've talked about how you are going to raise prices. All the airlines are raising prices, and we've seen this. Are you surprised by how little customers have stopped flying, how much demand destruction there actually has been?
So, you know, airfares have gone, as oil goes up, we need about 15 to 20% increase in airfares to recover ultimately to recover 100% of that fuel price. And so fares have gone up. But in real terms, you know, airfares in 2025 were 27% below where they were 2019 pre-COVID. So we're just like starting to catch up to, we haven't even caught up to inflation, even with the increase in fuel prices. I did expect a bigger price elasticity effect from customers. We've seen actually remarkably strong demand continuing even in the face of what are necessarily higher prices. What we are anticipating somewhere down the road that elasticity is real, Econ 101, we all took it, and that's going to happen, and that there will be less demand. That's partly why we're going to trim some flying out of the third. Nothing not getting rid of airplanes or changing anything strategically, but we're just going to trim some of the marginal, the Tuesday, Wednesday, Saturdays, the red-eye flying out of the second half of the year, because I think both oil has a possibility of being higher for longer, but also in the face of higher fuel prices, there will be less demand, and so we need to supply less to the market.
Is there any scenario where you could see cutting capacity more than that? I mean, there's been discussion around flights to Europe getting canceled as a result of just simply a lack of physical jet fuel available to fly back.
Yeah. Well, first on the physical jet fuel, we have not seen problems yet. Prices are higher, but we haven't actually seen shortages. But we're closely watching everywhere on the globe, but in particular Asia and Europe are the two sort of hot spots that we're most focused on, and it's not impossible that something like that would happen. I think we'll manage through with, it'll be higher priced, but that we'll manage through without getting to shortages. I hope so, even though it could happen. But even if there starts to be shortage, I think what you'll see, you've already seen it in Asia, you've seen a little bit already starting to happen in Europe, is it's more likely to take short-haul services out of the system than the long-haul global flights. You know, there's options for short-haul. You can drive, you can take a train, and the global long-haul to keep the world connected, I think will probably be the last in the tail of where flying would have to stop. So probably going to be able to manage through it.
In the meantime, we've seen other airlines really struggling internationally. Lufthansa, for example, cutting flights. We've seen the Asian carriers really struggle as a result of just a physical lack of jet fuel. Does this give you an opening in some ways on the international scale, given the fact that they're facing some real constraints?
You know, we talked earlier about there may be opportunity in this. I doubt that it's anything because of what's happening on the international carriers. That'll be a temporary phenomenon. They're not going to give up slots. You know, I'd like to get more slots in other places, but people aren't going to give up slots, I don't think, over something like this. So I think the opportunity is more, how do we really create a great U.S. airline that's focused on U.S. citizens primarily and getting them around the globe? How do we eliminate that, you know, 65-40 trade deficit?
Do you think it's appropriate for the government to get a stake in Spirit Airlines as we struggle to fortify the U.S. airlines?
You know, on that point, like, first, I think you can see this even in this fuel spike, that well-run airlines like United Airlines can remain solidly profitable. And I don't think that this is anywhere close to the U.S. airline industry needing a bailout, the kinds of things that have happened in the past. And the problems at Spirit predate the run-up in fuel. It was a fundamentally flawed business model, and I feel bad that, you know, like, as much as we're competitive with them, like, I don't want to see people lose their jobs. By the way, a lot of them are coming to United. I talked to all of our new hire pilot class, and every time there's a whole bunch of hands that came from Spirit. So, but I don't want to see anyone lose their jobs. But this was a fundamentally flawed business model that I've been on there, going back into the last administration, saying it's going to fail because the business model doesn't work. And so I think the spiking fuel prices just moves it forward by a couple of months.
I just want to finish up. You are the economist who has the most front row view to the American economy, more so than anyone else. Do you think right now the economy is better or worse than people think it is?
You know, certainly if I read the headlines, it's better than what the people in the headlines said. Although the stock market, you know, is acting like it's pretty good. So people that vote with their money, that aren't just experts on TV, seem to be voting that the economy is pretty good, and that's what we see. I think the risks are higher in the economy right now. You know, like what's happening with oil. It's such an inelastic demand for oil, and if you get to the point where we have to have demand destruction to overcome oil shortages, I think that could impact the economy, but we just don't see it yet.
Scott Kirby, always wonderful to speak with you.
Thanks, Lisa.
Thank you so much. That was Scott Kirby, the CEO of United Airlines. Matt, Danny, I'll send it back to you.
All right, Lisa, thanks very much. Lisa Abramowitz there sitting with the man of the hour, the CEO of United, Scott Kirby. We'll be playing that for you throughout the day, and you can see it as well on Bloomberg.com. Quick check on what's going on with futures ahead of the opening bell. We are rallying this morning. S&P futures now up 2/3 of 1%. NASDAQ futures getting about 0.8 of 1%. So we could head back towards all-time highs in this session. The 10-year yield doing a whole lot of nothing as usual at 4.28 right now. And crude, which is what we're watching most closely, just holding at $100 a barrel in terms of the global benchmark, Brent.
Yeah, we haven't closed above $100 a barrel in 2 weeks, so will today change that? Coming up, global strategist Seema Shah says that the path forward for U.S. equities looks challenging. She joins us at the opening bell. That's up next. This is Bloomberg Open Interest.
is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment. 3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Check on futures ahead of the opening bell. We're looking at a gain of 0.2% right now on S&P futures. NASDAQ futures up a little bit more, 0.9%. And Brent crude holding at $100 a barrel. 4 minutes until the opening bell, and we begin the trading day with Seema Shah of Principal Asset Management.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Take a look at what's going on with futures today. We're up more than we were down yesterday at the close. So back towards all-time highs. I think the all-time high is in the cash trade, 71.26, obviously different than the futures trade, but we're there pretty much. NASDAQ futures up almost 1%. So we'll watch the rally today that could bring us back to new records. GE Vernova ringing the opening bell at the New York Stock Exchange, and those folks are understandably happy. That stock has been on an absolute tear. It's up in the last 5 years about 655%. I'll show you later the comp chart on the Bloomberg terminal.
You might have it right now.
It's there it is, towering over. This is GE Vernova, and this, believe it or not, this flat line is the S&P 500. So massive outperformance for GE Vernova. At the NASDAQ, you may have seen Yes Way ringing the opening bell. Yes Way, which I love, but the stock hasn't traded much lately. Just starting.
Okay, understood. So an IPO coming for them. I'm looking at United Airlines at the open. It's doing much more poorly than it was in the pre-market trade. It's down roughly 2.5%. We're just moving around here at the open. It slashed its full-year profit forecast due to higher fuel prices caused by the war in the Middle East. We were just hearing from the CEO, Scott Kirby, speaking with Lisa, saying that the airline will trim some flight options in the second half of the year. It's something that all these airlines are grappling with. How do you combat higher fuel prices and in Europe, a potential fuel shortage?
Yeah, great interview there with Lisa Abramowitz and Scott Kirby. We'll be playing more of that throughout the day. Investors poring over everything that he has to say. Avis is surging. This is the car rental company. It's up today 11% in the cash trade. This year, it's up 450%, giving GE Vernova a run for its money. And the thing here is that there's a ton of short interest. Actually, 62% of the free float is shorted, according to data from our friends at S3 Partners. And what happened? So one hedge fund realized this and has decided to put the squeeze on?
Yeah, exactly. A hedge fund sees the huge amount of short interest. It's like, all you need to do is buy up a bunch of shares and you'll get a short squeeze. So that's what happened. And usually what happens is all the short sellers capitulate. Instead, what's happened, they've all doubled down. So if you look at the short interest, it's still really high because everyone's seen this run up and they've thought, actually, shorts make a lot of sense right now.
All right, well, that'll be an interesting story to dive into. Could be kind of a reverse Gabe Plotkin, like Wall Street.
Yeah, because it's an institutional investor that's come in and driven up the shorts.
It will be interesting. I'm not sure if the shorts are obviously retail, but let's get to Principal Chief Global Strategist Seema Shah right now. She says the path forward for U.S. equities may be challenging, but she doesn't see a severe downturn ahead. She points to the economy's underlying resilience and strong corporate margins as key buffers. And Seema, I'm coming around to this. Typically, I'm a worrywart, and when the Strait of Hormuz got closed and gas prices or oil prices, I should say, initially surged, it was worrying from an economic perspective, but they really haven't gone that high. And prices at the pump aren't that bad here in the U.S. either. I mean, $4 basically is the national average. So as long as corporate earnings continue to be double-digit percentage gains, we should be in the clear, right?
Hi, Matt. Well, looking at just the headlines and seeing oil prices near $100 a barrel, equity markets around record highs, it's a little bit confusing, I think, at first look. But exactly as you said, because of the strength of the underlying economy, not just from corporate margins, but also household balance sheets, helped also by the tax refunds from the One Big Beautiful Bill hitting at exactly the right moment, that probably does mean that you're not going to see too much of a weakness coming through from the macro side feeding through to earnings. But it's still, it's still a vulnerable moment for markets. You need to have a continuation of good news. You need to make sure that, of course, oil prices are not staying at current levels for a really long period. And then, of course, that's just the price side. Then we have to think about shortages. So there's a lot of challenges along the way. But at least the macro foundations suggest to us that this isn't going to be a very, if there is going to be a further drawdown, it's not going to be very deep.
And to that point, Seema, a lot of people would agree with you, and we've heard a lot of strategists argue buy the dip. The problem is I don't know, we're not really getting a lot of dips. Even this dip we got in this war was much less extreme than what we got in Liberation Day, for example. So if you see, the worrying headlines and you think everything's going to be okay, are there even things that you can buy right now, or have we already run up enough that everything feels quite fairly priced?
Yeah, I mean, I think that was one of the interesting things, and it was one of the factors that I think drove tech a few weeks ago, was that was one of the areas of the market which, of course, is very much loved, but had also enjoyed a valuation pullback in February. So things had set up for to make it a really attractive prospect for investors, and you saw them plow back in, and that helped that sector to move forward. Now, as you said, the opportunities are really quite low, but what we're trying to do is, look across that long-term perspective. What are the secular themes? And certainly the conflict hasn't changed those themes. If anything, it's kind of reinforced some of them. If you're thinking about defense, infrastructure spending, energy security, those are still very much in play. And if you continue to have concerns about inflation, not just right now, but inflation being a bit of a long-term problem with maybe repeated geopolitical conflicts, then there's certainly areas when you're looking at private markets, real assets, that continue to be a key part of our story.
Yeah, it looks like, we've seen a repricing of oil, but not really of equities. Like you say, valuations fell a little bit, but they're climbing back up. I'm interested in your take on private markets, because there is another place where maybe we've seen, in terms of private credit, a repricing. Are you interested in those assets?
Yeah, we continue to be. I mean, look, there have been certainly issues in private credit, as we all know. But to us, a lot of that is very much idiosyncratic in very specific parts of the market. And so we can't tarnish the whole thing with the same brush. The areas that we continue to like are, the lower middle market lending. It's got slightly lower exposure to software, which I think it continues to be very key, and then low leverage. So we have to be looking at the specifics of the market. And within private credit, just as you have for public credit, there's going to be different segments. So for investors to really know, of course, where you're investing in, because there continue to be opportunities there.
There has been this argument for private credit that what we saw, and when we saw some credit weakness maybe in years past, and private credit didn't have the same amount of weakness, I mean, very limited, it's just that these things aren't marked to market. And that maybe now you're finally getting that showing up. We've heard stories of some loans being marked to zero just months after they were marked at 100 cents. Seema, has the reckoning occurred? Do private market assets, do they yet reflect reality, or should that be a concern as you're wading through what looks attractive to buy?
Well, I think one of the things that we're seeing, and it kind of goes back to the macro, is those strong foundations to us mean that we're not expecting to see a very significant move in default. So there are certainly some within the market which will be subject to that opaqueness, and there's going to be continued concerns. But as we're looking through, some of those liquidity concerns probably is what's going to help you move through something like right now, where there's a lot of noise, there's a lot of volatility, some concerns on the investor side, and pushing through to really focus on some of those stronger foundations that continue to be in play. So I think it depends on which way you're looking at it. For us, certainly this continues to be attractive. And if anything, just as like you're seeing for public credit markets, there have been opportunities to enter into this market because of the volatility that we've been experiencing in the last couple of months.
All right, Seema, thank you so much for joining us this morning. We really appreciate your time. Principal Chief Global Strategist Seema Shah. It's about 8 minutes into your trading day. Matt, you're going to be super excited about the top stock today. You're going to be really excited about it. Let's go over to the screen, because if you just go down a little bit, I believe the biggest, the biggest contributor
it is
to this equity market gain today is GE Vernova. Matt just pointed out the incredible ride that it's been on over the past 5 years. It adds to it this morning, a 12% gain, following some very strong earnings from them. Elsewhere, it's the big tech stocks, Broadcom, Alphabet, Micron. I just want to point out, our MLive team has been doing really good research that the bulk of earnings revisions, we've talked a lot about how earnings revisions have gone up, that basically, if you remove Micron from that, they haven't really gone up that much. Micron has been contributing an insane amount, despite not being as big as an NVIDIA, for example. On the downside, General Electric is down, AT&T, T-Mobile. AT&T reporting earnings, T-Mobile, some deal news that perhaps Deutsche Telekom will be buying the rest of that company that it does not already own. Let's look at what the sectors are doing this morning. Again, I wouldn't be surprised. I mean, energy, actually, everything is on the green. I can't remember the last time that the markets have opened and every single index is pushing positive. The best performer is energy as the price of Brent crude goes up, and usually that means other things take a hit. That's not the case this time. Industrials, utilities, materials follow closely behind. We are 0.67% higher, Matt. I think we need to be something like just under 0.9% to end at another all-time high today.
It's also fascinating that you have GE Aerospace. So General Electric does business as GE Aerospace, one of the biggest losers on the index, and GE Vernova, one of the biggest gainers on the index. Of course, the two spun out of General Electric and also GE Healthcare, but interesting to see that split. Coming up, we're going to talk about, speaking of spin-offs, Deutsche Telekom. I was there when Deutsche Telekom bought VoiceStream in Seattle in 2001. That became T-Mobile. Over time, Deutsche Telekom IPO'd it and sold off pieces. Now they want it back. And we'll talk to Michelle Davis about that story next. This is Bloomberg Open Interest.
The problem we've got as an industry is when the governments overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
New car for the first time.
Let's get you some top calls that the sell side is saying this morning. First up, Wells Fargo. Sorry, say it again?
You counted me down, so I just ran into that break.
Let's just pretend that nobody noticed anything.
Probably
talk about
probably
what
fair.
I think no one noticed anything. You're just going to confuse them. So let me talk about Wells Fargo and Airbnb, Matt, because this is what's important. Wells Fargo, they're upgrading Airbnb. They say that the business is hitting a major inflection point. They say hotel expansion, a loyalty program, AI search improvements. They're all expected to push estimates above consensus, and a nice little rally we have on our hands off the back of that. Jefferies, they've cut Prudential. They cite growing uncertainty in its Japanese business. The company pulled its growth outlook, and it's also kept its pause on new life insurance sales. Shares down 2 1/3%. Finally, Barclays is restating coverage of Qualcomm with a sell rating. They say that the company cannot overcome a tough handset market. The firm also added that its AI data center opportunity that is still unproven. Qualcomm unchanged this morning.
All right, Deutsche Telekom is considering a full combination with T-Mobile US, which of course used to be Deutsche Telekom. The move would create the world's biggest phone company and set a record for public M&A. Joining us now is Bloomberg senior deals reporter Michelle Davis, and this is, for me, so cool, Michelle, because when I started here at Bloomberg, I covered the Vodafone takeover of Mannesmann, which at the time was the biggest piece of M&A ever. And B, when Deutsche Telekom bought VoiceStream to make T-Mobile, I flew over here to Seattle with Ron Sommer from Bonn, Germany, to watch him throw out the first pitch at a Mariners game and to see the deal signed.
Wow.
So,
full circle.
Used to be this was my
here
beat.
for all of it.
As a young reporter, my beat. Yeah.
It's fitting that you're here now for the talks that are currently happening.
So glad to still be here.
It's still part of history.
But what's interesting about it is, as you said, if it happens, it'll be the biggest public deal of all time. This is a sector where we've seen a lot of mega M&A, and the reason Deutsche Telekom is thinking about this is basically they already control T-Mobile. They have a 53% stake, but doing this would kind of crystallize their ownership of T-Mobile. There's a big valuation discount right now where most of Deutsche Telekom's value comes from T-Mobile, most of its profits, but it's not trading as well as T-Mobile is. And so the thought is if they combine, it will help eliminate, that dual structure, make it easier for investors to value them, basically.
I thought in a world, just like on a very macro scale, in a world where there's volatility and there's uncertainty, that spinoffs were the thing. But it feels like we've been hearing about a lot of combinations. You've been reporting on a lot too. It feels contrarian to what the moment is supposed to be, or maybe that's too simplistic.
In some ways, it almost fits with the moment because we are at this time where kind of anything's possible. If people are talking about a deal that would be the biggest deal of all time, it just speaks to how the art of the possible, basically. And it's going to be a stock deal. We've seen a lot of talk of stock deals, which are actually easier counterintuitively in volatile markets because if companies' stocks are moving in the same direction, they can kind of come to some sort of exchange ratio and then agree to a deal without having to worry about someone, putting a cash premium on someone else's shares.
I mean, bankers got to eat. Danny,
they are eating.
At some point, there's an investment banker is going to call up GE Vernova and say, "Listen, I got a pitch for you. Let's combine GE Vernova with GE Aerospace and GE Healthcare."
No, they do that pitch to GE Aerospace because Vernova would be like, "We're cool on our own, bro. We're doing really well." By the way, are regulators okay with this? There's been a lot of cross-border. They happy to let something like this go through?
So that's one of the big questions. Is it's not a done deal, of course. It's something that they're talking about, and they've been thinking about it for a while. But the big hurdle will be Germany in particular. The German government, through the government and then a state-owned lender, own 28%.
Anstalt für Wiederaufbau.
Thank you.
Yes.
They own 28% of Deutsche Telekom. And if this were to happen, they would have a smaller stake in a much bigger company. And so there's a question about whether they want to let go of that influence. I know some U.S. officials have also said today, we will definitely want to take a look at this. But it really is about, Deutsche Telekom kind of controls both of these pieces already. And so it's unclear how much of a real antitrust overlap there would be because it's, ex-U.S. and U.S. coming together.
But basically DT, I mean, with 53% of T-Mobile US, they have a pretty strong say in what that company does eventually. So they're going to create a holding company and then convince the board of T-Mobile US to vote to join that holding company. They just need to convince KfW to get on board.
Exactly. And maybe they could do it without KfW, but yeah, we shall see. So far, it seems like analysts see a lot of merit to it, in part because we are in this moment where there's big M&A being contemplated. There's a view that T-Mobile should do something really big, but if T-Mobile were to buy something big in the U.S., Deutsche Telekom would be diluted. So if you combine them, that means the combined company could do something really big without Deutsche Telekom losing its, ownership.
So this could just snowball more deals. Michelle, thank you so much for bringing this, and looking forward to seeing you again at noon, because if you did not know, Bloomberg Day deals every Wednesday at noon p.m. New York time. Michelle will be there. We're going to discuss this further, so do not miss today's episode. Coming up, shares of Avis extending gains, a remarkable short squeeze. It's now on its longest winning streak since 2019, up 162% over the past 8 days. We're going to talk about that next, right here on Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
This is Open Interest. I'm Matt Miller. A quick check on the stock market. 20 minutes into the session, we're looking at decent gains here. 0.6% on the S&P 500. I'm pretty sure the closing high was 71.26. I'm a little bit dyslexic, so often I reverse some numbers. But anyway, we're near as damn it to that. And NASDAQ 100 up 0.75% at 26,680. Take a look at, crude right now, the global benchmark up 2% at just over $100. And I think Danny said it hasn't closed over $100 in a couple of weeks?
2 weeks.
That feels like a long, long time. But that's the length of the ceasefire, so that would make sense. NVIDIA doing nothing. Tesla with earnings after the bell up 1%. GE Vernova up another 14%, and it's been an absolute tear. They rang the bell at the New York Stock Exchange today. General Electric, which is GE Aerospace, actually, down 3.4%. So those two moving in opposite directions. Boeing, a gainer today on earnings, and Avis, it's a gainer on, well, we're going to talk about what's going on. Because if you look at a long-term chart of Avis, it's like Al Gore's hockey stick in that climate documentary he made. It's just up at the end.
But you know what's also a hockey stick is the short interest in Avis, and that's perhaps the reason behind this move, or it is the reason behind this move. So the stock, as Matt pointed out, is up more than 450%, or more than 500% in a massive short squeeze. Bloomberg's Jordan Fitzgerald has been following this story for us. God, it's such a good story, Jordan. Just tell us, like, the players, how this came to be.
I mean, that's the big question. Obviously, Avis shares, like you said, up about 450% in April so far. It really seems like this rally took off starting at the end of March following an investment disclosure from Pentwater Capital Management. But really, it's been anything but fundamental over here. Avis shares have really just been short squeezed higher. But you'd think, like, with all of this short squeezing,
the short sellers would think, oh, maybe I'm at a loss here. The stock is up 450%. I'm losing my money here, but really short interest has continued to rise. Short interest was at 54% March 30th, according to data from S3 Partners. But now we're at 63%. Short interest is at the highest in at least 10 years. And that really goes to show that the market is saying, like, yeah, you might be up in this vertical, mind-boggling way right now, but we don't believe it's going to last.
So, wait, what is this chart?
So this one is the S&P short interest. So it's different than what Jordan was mentioning as to the S3. The S3, I think, is more up to date. This one is, I can't see exactly what it is, but I think this is S&P data.
Yeah, I can't see what it is either, which makes it a fairly useless chart.
But in general, it's like the direction of short interest on Avis, I think, is the way to look at this.
I get that. Yeah, I get that. So why?
A lot of defying gravity going on here.
But why? I mean, I get that Avis is kind of an also-ran. If you're going to go rent a car, you're probably going to look first at Hertz. But why short? Why is the short interest this big? And do you see short interest like that at other car rental companies, at used car sellers, at other car, related, like Turo's not publicly traded, but...
Yeah, so Avis and Hertz, they are the only publicly traded car rental companies. But with Avis, it really is, a matter of this short squeeze. Hertz is also, has been rallying. Short interest is up. Hertz is up about 60% this month. And that really goes to show that, these companies generally do kind of pull at each other. If one is up, the other tends to be up. But because the disparity indicates that, this isn't really about the fundamentals. The car rental space is doing well. And I think all of this kind of belies that. But Hertz is up because Avis is being short squeezed.
I wonder if it's hurt by Turo, because I now use Turo automatically.
I only use Turo.
Me
I don't
too.
use any of the others.
I won't use anything else because you can get really cool cars.
I can't say that I've rented a car before.
You've never rented a car?
I think I've only recently become the age where you're allowed to rent a car.
Wow. Good for you.
Rub it
Live
in,
it up.
Jordan.
Live it up, Jordan. Enjoy it while it lasts. Jordan Fitzgerald there covers car rentals for us and just turned 25. Coming up in the next hour, Ethan Devitt on earnings and her Boston Marathon experience. She just ran, it's got to be her 23rd or something like that, marathon. We're going to talk about that as well as private equity with Mark Sotir of Equity Group Investments. And I have a trip in my near future, down to Grand Central Terminal to see the new BMW 7 Series. This is Bloomberg.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
After President Trump announced that the ceasefire with Iran would be extended indefinitely, Iran has fired on at least 3 ships in the Strait of Hormuz. ABC's Marcus Moore is in Islamabad, Pakistan, where ceasefire talks were supposed to have been held this week.
The U.S. has said that its blockade will continue in the Strait of Hormuz, and Iran has said that blockade is a violation of the current ceasefire. There were a couple of ships that were seized that the Iranians say tried to sneak out of the Strait of Hormuz to exit, and then there was also a ship that was fired upon. There were no injuries, but we understand that ship suffered serious damage.
With ceasefire discussions now on hold, meeting further questions about the global energy market. Oil again trading at the global market at about $100 a barrel. Virginia voters saying yes to redistricting that could give the Democrats a big boost in the November midterms. Joanne Lucy was a no voter, however.
The boundaries were set a long time ago, I guess, I'm assuming, and I just didn't like the idea of changing.
Since Texas shifted its maps last summer, several states have voted to redraw their maps as well. A Florida Democrat becomes the 3rd member of Congress to resign.
Sheila Sherfless McCormick resigned just minutes before the House Ethics Committee was set to meet and decide her punishment after it found her guilty of violating 25 different House ethics rules. She's also been indicted on federal charges, accused of embezzling $5 million of pandemic-era FEMA funds. She's pleaded not guilty to those charges. She denies any wrongdoing. And in a statement announcing her resignation, she accused the House Ethics Committee of playing political games.
ABC's Jay O'Brien on Capitol Hill. Health Secretary Robert Kennedy returning to Capitol Hill for more budget hearings today. He has sparred with Democrats all week about vaccines, the causes of autism, and how he's running the department. You're listening to ABC News. Remember the push for smart boards and Chromebooks in the classroom? Well, now the nation's 2nd largest school district, Los Angeles Unified, is implementing a new plan that would limit screen time seriously for young students.
Devices will be banned for kindergarten and 1st grade students and limited for older students, with a policy that would also ban YouTube and gaming platforms and make it easier for parents to opt their kids out of using technology in the school.
ABC's Sam Champion, LA Unified's plan would take effect during the next school year. Roblox is settled with another state, making it 3 now. West Virginia, Alabama, and Nevada, who have reached agreements with the wildly popular gaming platform over the protection of children on the site involving explicit or violent content. Just when you thought it was safe and mildly inexpensive to eat hamburger again, along comes the new world screwworm. ABC's Jim Ryan with more on attempts to prevent it from getting into U.S. cattle herds using sterile flies.
Combating the New World screwworm means sterilizing male screwworm flies and then turning them loose to mate with females, which then can't reproduce. At a massive warehouse on the Texas-Mexico border.
This facility will initially produce an additional 100 million sterile flies per week,
says Agriculture Secretary Brooke Rollins.
When we get to stage 2, which will be the end of 2028, we'll be at 300 million sterile flies,
which are then dropped onto ranch land in Texas, Mexico, and Panama. Jim Ryan, ABC News.
I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio, streaming live on YouTube as well, streaming live on Bloomberg.com as well. Futures, the stock market is higher here today, up about 0.7 to 0.8%. Scarlett Fu and Paul Sweeney live with you here at the Bloomberg Intelligence program. Coming up, we're going to check in with Ed Ludlow, B-Tech co-host. He's in our New York studio. We're just going to say, hey, what's going on in tech? Because there's a lot of noise and news as well. Anthropic's Mythos model is being accessed by unauthorized users. This is one of the fears out there, and maybe that's happening. Erica Edelberg joins us here, Bloomberg Intelligence Chief Mortgage-Backed Securities Strategist. MBA mortgage applications rose 7.9% last week, so how about that? Sarah Hunt, founding partner and chief market strategist at Alpine Sachs & Woods, is going to join us as well. And then in studio, Ed Price, senior non-resident fellow at New York University. He's going to give us his thoughts on the Iran war. We got a lot of news flow about Iran here today coming from the White House and other sources as well. So we'll track all that down over the next couple of hours. Again, stocks trading higher. Let's kick this whole thing off with John Tucker and a Bloomberg Business Flash.
All right, guys. This Bloomberg Business Flash brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit IBKR.com/2025. Right now, all 11 major industry groups in the S&P 500 pushing higher, and you have energy in the lead as Brent and oil in general pushes higher. Brent's over $100 right now, 148, so that's a 2% pop. West Texas, that's over 2% right now, 91.55 a barrel with the latest in the Mideast. Wall Street expects Tesla to post a 30% jump in first quarter adjusted profits and a 15% increase in revenue. They're going to release results after the close of regular trading. The stock is now trading primarily on Tesla's ambitions for AI and robotics stuff. That
it's
actually
all melded together.
Yeah, I still think they're futures and batteries, but what do I know? Speaking of electricity stuff, GE Vernova, one of the leaders in the S&P 500 this morning. In fact, it's the best performer. It is up over 12%. Revenue for the first quarter beating the average analyst estimate. And Alphabet's Google Cloud division unveiling the latest generation of its tensor processing unit. We have to specially bring in Ed Ludlow to explain what the heck that means. It's actually like a homegrown chip, so you make AI computing a little faster and stuff. Boeing reported lower than expected cash burn as it delivered most aircraft in the first quarter since 2019. And Boeing shares, let me get you a quote here, up 2.25%. By the way, the Philadelphia Semiconductor Index, the SOX, eyeing its longest winning streak ever.
Really? Wow.
Yeah, so far we've had 15 days of gains. We might make it 16 today. The SOX up 0.75%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. You have to confirm that because you don't believe me.
No, I did look it up, and you're right. The longest losing streak ever since 1994, which is how far back our data goes.
Okay, just checking.
We do that to each other. We check each other.
Scarlett, Paul, back to you.
Thank you, guys.
I'm ignoring Scarlett.
Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by EisnerAmper. Most advisors tell you what happened. EisnerAmper tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com. All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Alexandra Semenova. Alex, what are you looking at today?
Hey, Scarlett and Paul. So we've been waiting for this earnings season to see the toll of higher oil prices on corporate America. And one segment that is really feeling it is the airline carriers. I'm looking at United Airline Holdings. The stock is down about 4% right now. It slashed its full-year outlook, citing higher fuel prices caused by the war in the Middle East. So it's really feeling it over there. The airline now expects full-year adjusted earnings of about $7 to $11 a share. That is below the $12 to $14 range that it previously expected. So pretty notable markdown there.
A huge range, $7 to $11. I mean,
this puts it in line with some of its peers that are grappling with the same pressures. So we had Delta Airlines also deciding not to update its full-year outlook just yet, kind of weighing how long this lasts and the toll that it will take. And then also Alaska Air pulling its guidance for 2026 altogether. And United's guidance comes actually as demand still remains strong, so pretty interesting there.
Yeah, you wonder how long before they actually start hedging oil prices and rising jet fuel prices, because right now, like you said, that range is just so massive. Okay, what's next for you?
Yeah, big M&A scoop here from our colleagues at Bloomberg. Deutsche Telekom is discussing a potential combination with its American arm, T-Mobile. This move would create the world's biggest phone company and also set a record for public M&A. This is according to people familiar with the matter who asked not to be cited because this information is still private. Deutsche Telekom apparently already holds a 53% stake in the U.S. business, and its early stage talks are about the creation of a holding company that would make a stock bid for both company shares. The combined company may also seek a listing on both U.S. and major European exchanges.
I wonder what the regulatory aspect is. They already own 53%, so they have effective control anyway. But I would think there'd be some political pushback if
Absolutely.
not regulatory.
From the U.S., maybe from Germany as well.
Yeah, really big deal over there.
Okay, big transaction. I'd like to see who gets paid on that, the banker-wise. One more.
And last company I'm looking at is Best Buy. It is getting a new CEO. Its Chief Customer, Product, and Fulfillment Officer, what a title there, Jason Bonfig, will become the 6th CEO in its 60-year history. He is going to succeed Corey Berry. Looking at the stock price right now, it's down about 4%. I guess investors are adjusting to the prospect of a new CEO. He starts his new role on October 31st. And funny enough, he actually started as an analyst in 1999, so worked his way up. This is an insider in the company, someone who knows the business very well.
All right, very good. Alex Semenova, we appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen here. Looking at a story here on the Bloomberg Terminal getting a lot of readership. Tesla, as John was just reporting earlier, Tesla only needs new razzle-dazzle as EV slow and AI hype cools. It kind of goes to the issue, you know, they're trying, I think Elon's trying to deflect away from the core auto business and getting people to focus on some of the other businesses.
AI.
Yeah, exactly. Autonomous vehicles and things like that, because who wants to, you know, invest in a stodgy old auto plant?
That has not come out with any new models in a while, and you know the inventory is just kind of sitting there, and there's no longer any kind of federal tax credit to buy EVs either.
Yep, so we'll stay on top of that one. So but let's talk a little tech here. Why not? It's always in the news. Ed Ludlow, he's in town, usually based out there in Silicon Valley. Pier 3, I think it is. Ed Ludlow, B-Tech co-host for Interact. He joins us here in our studio. Ed, do I need to pay attention to this Anthropic Mythos model being accessed by unauthorized users? I'm not a Mythos user, but how should I think about it?
You should pay attention. And how confused are you all by the ongoing story of Mythos?
I thought it would, like, people couldn't use it in the government, but the government is also coming out with rules on how to use it.
I really sympathize with everyone that's reading about this and listening to us talk about it. It's so complicated, but Okay, there is a community of people who hang out on Discord, which is a platform for programmers, and one of these people, a single individual, was a contractor who had a contractor relationship with Anthropic and therefore had credentials to access Mythos. Mythos is a general purpose AI model, but it's very good at detecting vulnerabilities in source code.
So it's like a chat GPT.
It's the underlying model, but its primary competence is that it can go through really big bodies of code. Take, for example, a bank. Banks are built on lots of software, and it can quickly go through that software code base and say, I found a flaw, and I know how it could be exploited. And if I wanted to, I, being the model, I could exploit it. So what we know is that this contractor with a merry band of fellows and colleagues from this community got access around April 7th. It was supposed to be a very limited release to the biggest tech companies and banks, a group of maybe 40 entities. So it was supposed to be closed off. They did not use it for anything malicious. Actually, the other thing the model is really good at is making websites. So it's just very good at generating software. The concern is they should not have had access. They were unauthorized. How could that have possibly happened? And this is good old-fashioned kind of hacking. They did use credentials. That's so important. I keep underscoring that. This person had access, but shouldn't have used it.
Maybe companies should hire full-time staff rather than use contractors who have no loyalty to the company. Just a thought.
But they also used logic and were like, where do we think that the code for the model itself is hosted? And they went through the internet, sleuthing is the word we've used in the story, and found it. And so it's completely bizarre. The net result is that Anthropic has confirmed that this has happened. They didn't do anything malicious with it, and that it was within the sort of closed confines of this contractor's...
But they could have.
But they could have. And so here's the hypothetical. What if a bad actor, this could be a state-level piece of espionage, it could be a malicious group of hackers, what if they got access through the same mechanisms and did something actually bad with it?
I mean, it's one thing to hack some code back in the day. It's another thing to get access, as you were saying, Ed, to this type of technology, which I don't think we, as users, certainly the regulators in Washington, I can't imagine, know exactly how powerful this can be.
Yeah.
I mean, you could paint some really dire scenarios.
The reason I'm sympathetic with the audience is that we use blanket terms like cybersecurity. Cybersecurity is a good thing. You know, it's the defense against potential
Except it's
bad
always playing
access.
catch-up.
Right, and so like, let's make this really simple. It's a model. A user can say to the model, here is a very big body of code, the code of a bank. Go through it and find vulnerabilities. Now, the Fed and the Treasury want those banks to do this proactively, so they can find the flaws and patch them to de-risk.
So it's a race to see who can get to it first.
But what if there were a bad actor? So this is the hypothetical, and it is a hypothetical. There's no evidence that there is yet a malicious actor out there that has access to this. It's so complicated, but the potential is that the model can go through lots of code much more quickly, in more detail, and find things that an army of humans cannot do at least as quickly. That's the basics of what we're talking about.
Again, the dire scenarios. I mean, you think about the movie when the internet first came out, the
War
Net,
Games?
the Net.
Oh, with Sandra Bullock?
Yeah, or War Games. I mean, I'm waiting for the movie coming out of Hollywood about, you know, AI.
They can't write the script fast enough.
They can't write the script fast enough, but it's out there, totally. Ed Ludlow, it's your job. I learned more from you today than I knew about this topic, so keep going, and I'll try to keep up with all that's going on out there. Ed Ludlow, B-Tech co-host alongside us in our Bloomberg Interactive Brokers studio here today. Green on the screen here, the market looking past continued tumult in Iran. We've got oil trading up about $1.50. That's almost 2%. And WTI crude oil, $91.20. Usually that's a negative barometer for this market, but not
But
now.
you know, these gains have really moderated in oil. We're no longer seeing double-digit percentage increases the way that we were at the start of the war.
You're right, and then maybe the market's just getting more comfortable discounting this risk in the marketplace. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks are higher. Oil is higher, but the bigger focus for investors at this point seems to be the bang-up earnings that we've had so far. This earnings season on course to be a blowout. So the median profit margin, the S&P 500 stocks approaching something like 16% at this point. One of the standouts this morning, Boeing gaining. They delivered the most aircraft in the first quarter since 2019. And then after the close, we're going to get Tesla, Texas Instruments, International, IBM, all set to report results later today. S&P 500, 66 points higher, up just about 1%. So, flirting with a record, 7130 right now, the index. The Dow Jones Industrial Average up 458 points. NASDAQ Composite Index 292 points higher. And Brent crude above 100, up $1.88, 136 a barrel right now. WTI up 2%, 91.50 a barrel there. Adobe buying back as much as $25 billion of its stock. They've had a steady decline for more than a couple of years. Investors worried that AI is going to disrupt their business. United Airlines, Lisa Bramowitz talking to the CEO earlier today. They slashed the full-year profit forecast. Higher fuel prices battering all the global carriers. And Philip Morris International profit rising more than expected in the first quarter. Sales of smoke-free products, including heated tobacco. I don't even know what this is. Heated tobacco?
Sure, it doesn't.
When you light it, it's...
But it doesn't combust.
Okay.
So how do you access it?
You get the stuff, but you don't get the smoke.
All right. And then the nicotine pouch is there, so...
That I understand.
Yes.
I mean, I'm not going to go into my spiel.
I still have friends, again, 62 years old, still chew tobacco. I'm like, what are you, 12? I mean, it's just ridiculous.
Well, the ball players mix it up with bubble gum.
Yep.
And then chew. That is so disgusting.
That flavor just does
I hate
not.
to be the guy who has to, at Citi Field, clean up all the spit. We check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul. Now that I put that image in your head.
There you go.
Bubblegum and tobacco chew. Ugh.
John Tucker, thank you so much. Appreciate that. We got Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, where we're not chewing tobacco. We're streaming live on YouTube as well. I'm looking at the 30-year fixed mortgage. I don't know, 6.35% from the Mortgage Bankers Association.
It's not 7, which is good.
Yeah, it's not 7, which is good. It was 6.09 earlier in the year, so we spiked up. Now we're coming back down. U.S. home purchase applications jump as mortgage rates settle back down. That's the news story popping out there. Erica Edelberg does this stuff for a living, Chief Mortgage-Backed Security Strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. Erica, what's your market telling you about just kind of rates and where the mortgage market's going?
Hi. Thanks for having me on again. It's really kind of giving some mixed signals. I mean, things in March were looking a little bit dire by a lot of metrics. The purchase index that you just mentioned, fell to the lowest in quite some time. It was actually below for the same time of year what it was the previous 2 years after having been above. And today, with just a little bit greater uncertainty resolution, a little bit more certainty, I should say, and slightly lower mortgage rates, it jumped back up again, to the highest it's been since 2022. So, maybe all is not lost for the spring housing season. Interestingly, also, non-seasonally adjusted pending home sales, which are a good metric of, potential resales in the next month or two, actually hit their highest since 2023 also. So, it was looking pretty dire. Pending home sales especially were really falling. And even with the greater uncertainty in March, those bounced up. So it feels like there might be more pent-up demand than, had appeared to be for a little while. So that could be good. But, and affordability is improving, but it's still pretty weak in a lot of the country.
And that's where I want to go to next, because the administration is trying to put the focus back on how and what it's doing to increase affordability, especially when it comes to housing. They talked about Fannie and Freddie buying $200 billion of mortgage-backed securities. What have we seen beyond that? And is there any evidence that that's working?
Yeah, I think spreads are tighter than they would be if the GSEs weren't buying. There was also rumors that they actually stepped up their purchases in March we had expected, kind of projected a kind of steady state 15 billion or so a month to get to the 200 billion over the course of the year. But there were rumors that they might have added a little bit more in March as spreads widened. So that would show that what they're doing is kind of probably working a little bit, but we won't actually get the data on that for another few days. So that'll be something to keep an eye on to see, that'll give us a better sense of, are they really the backstop bid for how high mortgage rates can go and how wide mortgage spreads can be in times of stress like we saw in March.
So I'm looking at the INGO function on the Bloomberg terminal, the Bloomberg Index browser. I'm looking at the U.S. mortgage-backed security total return year to date, plus 0.9%. That's pretty good relative to the rest of fixed income. How are you thinking about, what are your clients telling you about the mortgage-backed securities market these days?
There's been a bit of volatility in those returns. We actually got back to negative year to date in March. But it just feels like there's a decent amount of demand kind of behind the curtains. We did see even, we've seen a lot of great fund flows, but for a short time there, they went negative even in the ETF space. That might have been tax related too. It's hard to tell, kind of happens in April. But, now we're back to full cylinder buying, it seems like. So I would say that the marginal investor is still very sensitive to returns. And upside, but at the same time, it does feel like there's a good bit of support for the sector, both in banks, GSEs, funds, and even overseas.
I'm not refinancing my mortgage on the Jersey Shore compound.
No. I mean, you're sitting pretty.
Yeah.
You're not looking to do that anytime soon. Erica, thank you so much. Erica Edelberg is our chief mortgage-backed securities strategist here, talking us through the housing market and mortgage-backed securities. You look at the broader market overall, and it very much feels like this indefinite ceasefire has allowed investors to really refocus on earnings and the outlook for AI and growth prospects in the economy, as opposed to the headline-driven geopolitical news flow. So let's bring in Sarah Hunt, founding partner and chief market strategist at Alpine Saxon Woods, to give us her take on what she sees. The corporate profits that we've seen so far, pretty good, but we are seeing also certain sectors like airlines really get hit hard by the rising oil prices and not being able to forecast out what things would look like. Is that a taste of what's to come, or are the bank's results and things that we're hearing from companies saying that everything is all guns blazing straight ahead is more kind of the assumption that investors are going with?
I think right now, from an investor standpoint, they're definitely thinking that we're getting all the good news and we're not getting any of the bad news, right? So I think that it's going to be sector by sector. I think that the longer this goes on, we've been saying all along, whatever's happening tactically in discussions and everything else, you need to see traffic get through the strait. Traffic is not getting through the strait. That is what's going to alleviate energy price issues and jet fuel shortages and all of these things that we're talking about right now. If those continue to get further, I think people will start to look at that earnings picture. Right now, they're assuming that we can fix this problem because it's a logistics problem. It's not actually a supply problem. But the longer the logistics get kinked up, the harder that is to solve. So I think that right now we're in a happy place that investors seem to have, but I'm concerned about seeing traffic get through that strait.
Another red headline crossing the Bloomberg terminal. Why not? Trump administration nears $500 million rescue deal for Spirit Airlines. That's according to the Wall Street Journal. I guess we'll see how that plays out there, but that's a good news for.
So does the government end up becoming a shareholder of Spirit in the same way that it was in companies during the financial crisis?
Yeah, we'll see. There's lots of creative ways this administration can do that, so we'll see how that plays out. Sarah, talk to us about stocks, bonds, alternatives here. How are you leaning these days? Where do you think the best value is out there?
Well, I think you did see a period of time where the concerns about CapEx, and we're going to see how earnings come out this week too. This is going to be really important. I think that if there's any wobble or if there's any concern by investors that you're not going to see returns on some of this massive CapEx that the technology firms are spending or anything else, then I think that you have some potential for downside volatility. If the earnings look pretty good and the spend looks pretty good, again, we're not yet at the point where the impact of higher energy prices are flowing through earnings, because we're still behind a little bit that jump in energy prices. So for the tech sector, it's not as much of an issue. For airline consumer sectors, it absolutely is, because that lower cohort of spending is going to have a much harder time when you have higher gas prices. Having said that, retail sales look really great. And so then you think that, okay, people are looking through this. UMich numbers are terrible. Retail sales are great. Who are you going to believe? I think you have to believe the hard data and not the soft data. So we'll see how that plays out.
if you think about retail sales, again, because I do think about the sentiment data, but what I'm being told, what we're all being told about this K-shaped economy is becoming even more pronounced. The upper part of the K has even more buying power.
We just need them to keep spending.
And they have been,
right.
I guess is the point.
They haven't until, I don't know, something happens.
Stock market decline is my call.
So you got to keep the stock market buoyant if you're looking for retail sales and spending to continue. You mentioned that when it comes to big tech, a lot's going to depend on CapEx and whether that looks okay. How do we know what looks okay?
I think it's what investors are okay with them spending. When I say looks okay, it's to the investor class, right? Because you had this massive move in CapEx and it was lauded by everybody. People bid up the shares. They were like, great, you're spending more. That's fantastic. You're going to win this race. And then all of a sudden CapEx became sort of like a dirty word. Like, wait, you have to borrow money to do this? Oh no, we don't want to see that. We want to see you just using your cash flow. You're also becoming a more investment heavy as opposed to, a investment light company. So I think that how that plays out, and do we start to see returns, and when do we start to see them, and what do they look like? And I think all of that is intertwined. And as long as there is some ability for those companies to say, yes, we're spending the money, but we see that we're going to get this return, and people are okay with that. It's really, it's about the reaction function, is not so much about the level, I think, going forward.
So, Sarah, so that kind of goes to, I'm not sure where we are with the AI story now, because I thought I had it going, and then this war came along, then I kind of lost my train of thought on AI. Is the market really trying to discern winners and losers here? Because that's kind of tough to do. Like, I don't think some of these big software companies are really going to lose business to AI, but that's kind of what the market was saying earlier this year.
Well, the market was definitely down on software. There does tend to be a sort of rotation into sectors where all of a sudden AI is going to eat their lunch and it's going to be terrible. And then I think there's a realization that there's probably going to be more of an and than an or, that some of those companies are going to survive. The question is the growth that they were putting up, the cash flow that they were putting up on the software side, can you maintain that even in the face of some of this, the discussion we're having on Anthropic right now? Go in and look at all my code and try to fix it. Like all of that is, what does that mean for the growth of some of those industries? And I think the question is, people still don't know, but I think that they were counting them as completely over, and I don't think it's completely over. I think it's just going to be a shift.
Isn't the risk that things could change very quickly on a dime? As much visibility as companies can offer right now, all it takes is for one thing to happen, and then they're kind of left in the dark.
I think it's really tough with visibility right now. You have a combination of things besides logistical hiccups and the energy problems and the other things that have come out of the Gulf that we don't talk about as much, but people have talked about the helium, they've talked about the naphtha, they've talked about some of the other things that come through there. You also just have an ever-changing global narrative that makes it difficult to be very forthright about what you see earnings-wise. I think it's going to be more tough in the sectors where the input prices are changing all the time. We don't talk about diesel enough, right? Gasoline's one thing. Diesel moves everything, and not just in this country, in other countries. So when you start to have all the prices of goods moving, getting more expensive, that drives up the general price level. And that's where this starts to become a bigger problem.
Sarah, thank you so much. Really appreciate it. Sarah Hunt, founding partner and chief market strategist, Alpine Sachs and Woods, joining us live here in our Bloomberg Interactive Broker studio. WTI crude oil up $1.85. That's 2%. We're around $91.50 for West Texas crude there. We're going to have more coming up. This is the Bloomberg Intelligence Program.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 and the NASDAQ right now on track for more records. 10 of the 11 major industry groups in the S&P 500 higher right now. Information technology is in the lead. And then you have GE Vernova, the S&P 500's best performing individual stock. That is up over 13%, and that's set to extend this year's 52% rally. The power equipment company reporting revenue for the first quarter, beating the average analyst estimate. Tesla, right now, those shares up 1.4% ahead of the earnings. They're going to report after the close today. Wall Street is looking for evidence of Elon Musk's artificial intelligence and robotics ventures to justify the sky-high valuation of this stock. And your earnings scorecard, about 81% of the S&P 500 companies reporting first quarter results so far have beaten analysts' earnings estimates so far. That's according to data compiled by Bloomberg. And just getting word, confirmation for the Bloomberg story, the Trump administration close to reaching a financial rescue package for Spirit Aviation. Those are the yellow planes, right?
Yes.
Yeah. The agreement, which is, I don't want to go on the yellow plane, which has not yet been finalized, would offer as much as $500 million in financing in exchange for warrants to purchase the stock. So,
this is a rescue because Spirit is in its second bankruptcy inside of 1 year.
Yeah, so the government would take over. I mean,
but they wouldn't let JetBlue buy Spirit, but the U.S. government could take it.
Okay, whatever.
Well,
we check
you know,
the market.
we live in a new world now.
Oh, let me do the stock, S&P 500. That's why I'm here. Up 62 points. The Dow Jones Industrial Average up 392 points. The NASDAQ Composite Index up 292 points. And I'll do Brent crude up close to 2%. $138 a barrel right now. But of course, the focus seems to be on the bang-up earnings. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, very good, John Tucker. Appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. It is about earnings, but it's also about geopolitics. That's kind of been driving the bus, really, for these financial markets over the past 7 to 8 weeks, and it's no different today, arguably. Ed Price joins us here, non-resident senior fellow at NYU, joining us live here in our Bloomberg Interactive Broker Studio. Ed, the news is coming out fast and furious just from Iran. We'll start there. Unclear why the president and the administration felt the need to go into Iran at the time that they did. It's unclear what the objectives really are realistically, and then makes it arguably maybe a little bit more difficult to figure out how we get out of that theater right now. Where do you think things stand right now?
Well, Paul, respectfully disagree.
Okay.
if I may. It's pretty obvious why we went in when we did, October the 7th, albeit it was a couple of years ago. A staunch ally, Israel, was attacked. And it's pretty obvious what we're doing there. As I've said a million times, we're degrading the Iranian regime. I admit that the way that this has been presented would certainly give rise to the points that you just made. But I don't think that it's in any way unclear now. Leaving... Right, there's the third one where maybe I say disagree. That's harder to figure out, but we can just leave. And this is what Trump is good for. When he says it's over, a lot of people are just going to say, okay, it's over.
So is it over right now? We have an indefinite ceasefire that is in place until...
I don't think it's indefinite anymore. Now it's 3 to 5 days.
Well,
right?
It was indefinite this morning.
So
that's
it was
the thing.
indefinite this morning.
He says that it will last until Iran submits a new proposal. What we know right now is that the two sides are not going to immediately return to fighting. So how do you interpret when it's over and when we resume fighting?
Well, again, it's not really binary, right? I mean, it's never really over with Iran, and it was never really on for the last 50 years. So we've sort of been, when we were not at war with Iran, we kind of were. Now that we are at war with Iran, we're kind of not. But as I've said before, we're actually giving them a taste of their own medicine. I don't expect that in the next few days we're going to come to a deal that will end this thing entirely. I mean, that would be absurd.
Yet the president keeps promising.
The president says a lot of things, right? I mean, for the last 10 years, we've been going on about how he's talking and him making promises all day long. But what I think is happening on a structural level is what I call hot deterrence. I think the United States has woken up and smelt the coffee in the 21st century and has said, okay, we have adversaries that are hitting us with cyber, they're hitting us with disinformation, misinformation. What do we have? We have hard power. We'll go and take out Maduro, and we'll show the Iranians and the Russians and the Chinese that we mean business.
So is there a next step here for Iran? If the president were to just decide to, okay, we're going to declare victory and leave, was this a good use of our time and resources over the past 2 months, do you think, longer term for U.S., I guess, foreign policy?
Yes, I'll tell you why. It's very easy to assess the cost of this war as measured in the price of energy. And if you do that and that alone, it's a bad idea. If you also think imaginatively about the counterfactual, in which the Iranians and the Russians do better in, respectively, the Israel war and the Ukraine war, then we're in a world of pain. So I think what we've done is actually fought some battles that would otherwise have been fought later. We've done it on the hop. We've done it unexpectedly. We've surprised our enemies. And that's much better than a coordinated attack from Eurasia on Taiwan, Kyiv, and Israel on the same day.
What does this mean for how the Trump administration moves forward with other hotspots around the world?
Well, they probably want to do Cuba. This is my suspicion. We've had to listen to nonsense about Greenland and Canada. I might have got that wrong. I took that very seriously. It turns out they were, in fact, going to use hard power abroad, just in not the place that we were told. Maybe that was part of some plan. But it is an emergent Trump doctrine, right? If the Obama doctrine was don't do stupid things, don't do stupid stuff, it seems like the Trump doctrine is do whatever you want. And okay, so I'm giggling because as someone who's always been a little bit more hawkish on foreign policy, finally the United States is standing up. Now, there is a cost because, of course, this is the death knell for the international order. I think that process began when we crossed over into Iraq without a second UN resolution. It intensified in 2014 and 2022 with the attacks on Ukraine. Now it's intense, and we, going into Iran the way we have, or attacking Iran, I should say, the way we have, forget international law in its current cycle. But we are indeed fighting back against people that wish us harm.
What does this mean for Ukraine? It's kind of for everybody's been pushed on the back burner, but just reading your notes today, Ukraine is killing 35,000 invaders a month. That's staggering.
That's wild.
I mean, how does that part of the world play out here?
Well, Putin so far, I've been saying this for 3 years. I think he's losing this war. As measured against what he wanted to originally do, which was seize Kyiv. The longer this goes on, it seems that Ukraine is actually fighting an effective war of attrition. Wrap the thing up in Iran quickly, send as much kit and equipment over to Ukraine as possible, and they can win this war. They can push Putin out of Europe. Okay, so we're fighting the Russians in Ukraine rather than Poland. We're fighting Iranian terror agents in the Middle East rather than in Europe. That's a good thing, albeit President Zelensky has said that the munitions that he needed were moved to Iran. So I concede to you that in the short term, it's not good for Kyiv.
What kind of role does Europe play? The UK, France, the rest of the continent?
NATO?
Well, it seems like the entire purpose of the two world wars was for France and Germany to realize they can't actually beat each other, right? And so now they're belatedly also realizing that they need to rearm, and the long-term security threat was indeed what the Kaiser said it was, which was Russia, which is a bit of a head spinner. So they need to hurry up and rearm. The Bundeswehr needs to get its act together. The British and the French need to integrate as much as possible back into Europe. I would say that the UK really needs to rejoin the EU. I mean, that's pretty obvious now if you look at it on the face of things. And stand as a bulwark against Russian aggression. They are on a decade-long path of conquest.
I can see Germany doing it. I can see the UK stepping up. Can we bank on France, Spain, Italy?
Bro, France saved the world in 1914-15 and at Verdun in 1916. France, thanks to Charles de Gaulle, has nukes. I think they're the only nukes that you can actually play with by yourself without the Americans watching or giving you permission. So as an Englishman, I'm being very nice to the French right now, which they probably don't want to hear after Brexit. But we need France. France is a serious military power.
All right. Ed, always a pleasure talking to you. We always get some good perspective there. Edward
Original
Price.
thinker.
Yep, absolutely. He's a non-resident senior fellow at NYU, joining us here in studio. A lot of hot spots here around the world. It's not just Iran, but just that's the shiny object that has our attention right now.
We didn't even really get to China and Taiwan either.
No, exactly.
Next time.
I mean, and you hope we really don't have to get
Correct.
to that one
Correct.
at any time, because that one could be bad. S&P Looking through it all, focusing on earnings, up 60 points. That's 0.9%. The NASDAQ doing even better, up 290 points. That's 1.2%. We'll have more coming up. This is Bloomberg Good Morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good morning. This is Bloomberg Intelligence. Paul Sweeney and Scarlett Fu. We are reporting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are also streaming live on YouTube as well. So the White House is pretty busy these days, not only dealing with the war in Iran, but they're also playing a big role here in Spirit Airlines, embattled in its second bankruptcy in about 1 year.
Who wants to own an airline? I don't know.
Well, maybe the U.S. government is going to own a stake in the airline. Let's bring in George Ferguson. He is our senior aviation aerospace defense analyst here at Bloomberg Intelligence. George, the reporting right now is the White House is close to reaching a financial rescue package for Spirit, and we're hearing that this agreement would offer up to $500 million in financing in exchange for warrants to purchase stock. Is this kind of out of the great financial crisis playbook of bailing out a company?
It's sort of, actually sort of seems out of almost the pandemic playbook, right? In the pandemic, we decided we couldn't let any airlines fail, and so came in to support them. Not sure why we need to do it here. You know, I think that the market has certainly recovered. The airline market has recovered since then. I think that there's probably too much capacity right now in the U.S. market, and that's why some airlines are having problems generating profits. Spirit at the tip of that spear, having the most problems generating profits. And so it seems to me that we, again, need to cut down the capacity. So, having some some airlines leave the business is probably the sort of the right way to fix it. But I guess the White House feels differently.
That's kind of where I want to go, George. I mean, what's the marketplace telling us here? It just seems like, boy, if you're not one of these big three airlines, it's just a tough business. I mean, is there a market for some of these more regional, lower cost airlines?
I think there is, right? But the market has definitely turned, I think, against sort of most harshly against these low-cost carriers, right? Because I think really, right now, sort of the state of play in the U.S. airline business is you need a strong loyalty program, so you need to be able to put a credit card in the hands of your loyal flyers. They're using that credit card for dinners, groceries, everything else. You're selling the credit card company miles, which is boosting your profits, which you can use to support the flying business. And then the big full-service carriers, they also have the premium. I think there's a lot of premium travelers, a lot of baby boomers who've retired, business travelers who will pay more for the front of the airplane, and the back of the airplane seems very competitive. They're using those loyalty programs and that premium revenue to subsidize the back of the airplane to a degree. So again, telling me that there's just too much basic economy capacity. Having Spirit leave the market would be one way to get rid of some of that basic economy capacity.
We're seeing airlines start to reduce capacity as well because of the higher costs from fuel. Does that bring us more back into balance?
It's a beginning of that process, absolutely right. And so Spirit had its problems before the Iran war. So again, that's why I think it's more the market really does have too much capacity. I think now, for however long we're going to see these much higher fuel prices, the market has even more excess capacity, right? So look, if we return to $2 a gallon jet fuel, I think a lot of these airlines that are starting to take some capacity out would take those parked planes, put them back in service, and we'd be off to the races. But at these higher fuel prices, the airlines have to push through price increases. And, the economics of that is when something costs more, less is demanded, and the airlines are seeing it. They can't get fares to rise enough to cover that increased fuel price with this level of capacity in the marketplace. And we saw United, we saw Delta, we saw Alaska all announce cutting back at least growth plans. Nobody's cutting in to capacity levels that they flew last year, starting to cut growth plans. More probably has to happen.
George, United Airlines out with some numbers, and they reduced their full-year guidance. Now, this looks like an earnings estimate like I would put out. Between $7 and $11 a share. You could drive a 747 through that, George. Does that just reflect the uncertainty they have in kind of their whole P&L?
Yeah, I mean, it's a wide range, and United has really gone to the less is more on the guidance world. So every other airline will give us a sense of what the cost available seat mile could be, right? They'll talk to us about where operating margins could be. United, for the last, I think it's about a year now, they just throw an EPS at us, a wide EPS, and they're like, yeah, you guys go figure it out. So they're the poster child for less is more in the guidance world, and yeah, that's what they gave us this time too.
It's kind of how they figured they're going to play the game, right? Yeah. Let's talk about Boeing, which narrowed its cash burn in the first quarter because of rising deliveries. How do these numbers look to you?
Yeah, I mean, they looked as expected, all right? And so, look, the progress towards the recovery at Boeing continues. Lowering cash burn's always great. The defense business showed a profit, which was nice. Global Services continues to ring the bell, 18% margins. We love that business. It's a little bit of a black box. You don't always know what's going on there, but I hope it just keeps going. Right. In the commercial airplane side, Spirit Aerosystems got folded in at the end of the year. That's right. And we would have expected a better result out of commercial airplane until Spirit got rolled in. And so there's some work to do down at Spirit. Boeing said, go figure, they were buying fuselages for more than Spirit can make them for, or less than Spirit can make them for. So
all right, good stuff. George Ferguson is our senior aviation analyst here at Bloomberg Intelligence. And for our listeners in the U.S., you can hear us through satellite radio on Sirius XM channel 121. Series Channel 121 is presented by Golden Crest Metals. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good morning. This is the second hour of Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. We've got a lot to cover here. There's a ceasefire underway. Oil prices nevertheless rising, but we're also seeing gains in stock prices as well. And of course, it is earnings season. So we're going to kick things off with Anurag Rana. He is our tech analyst here to talk about Adobe's earnings and get you a preview of what IBM is likely to say. John Butler, our senior telecom analyst, will also give us a recap of AT&T's results and also weigh in on reports that Deutsche Telekom is interested in buying the stake of T-Mobile that it doesn't currently own. After that, we'll check in with Priya Misra, who's, of course, the queen of fixed income. She's a fixed income portfolio manager at JP Morgan Asset Management, to give us her take on these higher yields, or at least yields that are kind of stuck in a range. And Ken Shea, our senior consumer products analyst, will recap the latest results from Big Tobacco. Philip Morris reporting as well. But first, let's go now to Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much, Scarlett. And here's what's going on. We have got the Dow, the S&P, NASDAQ all advancing. A slew of strong corporate profits lifting stocks. This is a day after President Trump extended a ceasefire with Iran. Right now, the S&P is at 7120. Could see another record close today, up 56 right now. That is a gain of just about 0.8%. We do have the Dow up 370, higher by about 0.7%, while the NASDAQ Composite Index up now by 269, higher by 1.1%. The old record on the S&P, 71.26. That was reached last Friday. Right now, trading at 71.20 on the S&P. The VIX just above 19 with a 10-year 4.28%. The 2-year 3.78%. Gold up $15 the ounce, up by about 0.3%. Cannot ignore the move in crude. Again, up 2.7% right now. 92.13 on West Texas Intermediate crude, and a barrel of Brent right now up 3%, 101.43. In the airline industry, lots of news, a topic we were just talking with our George Ferguson about. A source tells Bloomberg the Trump administration is close to reaching a financial rescue package for embattled Spirit Aviation Holdings. Now, Spirit shares, we do have Spirit advancing right now, FLYYQ on the ticker. It is up 105% among rivals. We've got Frontier Group. That's the parent of the airline with those animals on the tail. ULCC on the ticker. Yeah, that stands for Ultra Low Cost Carrier, down now by 7.2%. Elsewhere in the industry, United Airlines has slashed its full-year profit forecast, and United CEO Scott Kirby sat down with Bloomberg, specifically our Lisa Abramowitz, to discuss the quarter and United's outlook for M&A in the industry.
And as I look at assets, look, maybe they will, maybe they won't become available. We've actually even had some discussions with one airline about buying some. But the kinds of things we're most focused on are, again, back to this, how do we create a great airline, for a decommoditized great airline for customers that can really be stronger internationally. So things that support growing an international network are more interesting to us because that's where our focus, and I think that's where our big future growth potential is.
United Scott Kirby. Now, Bloomberg News has reported that Kirby has entertained the idea of combining with American Airlines. UAL down 6.2% right now. American down 1.3%. Southwest coming up after the bell. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. The earnings are certainly coming in fast and furious. I made a mistake. Adobe did not report results. It did announce a new stock buyback program, which confused me because that usually comes out with the earnings report. You know?
Yep, I think they had a user event and they used that as an excuse to do that. So we'll talk to Anurag Rana about all that kind of good stuff here. All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Tatiana Darie. Tatiana, what are you looking at today?
Well, it is earnings season after all, so kicking it off with the Boeing shares up about 3% after reporting lower than expected cash outflows in the first quarter as it delivered the most aircraft since 2019. So the cash burn rate was about 1.5 billion. That's a lot less than the 2.6 expected by analysts. Really nice growth there in their commercial aircraft deliveries, pushed up revenue by 14%. Also, Defense and Space Unit reported a nice 21% increase. The CEO saying that we should expect more orders for weapon system. This is all part of their efforts to ramp up output of their 737 family as they try to turn around their finances. Curiously, what stood out to me is they say Middle East deliveries are not impacted just yet. So that was notable. And shares are responding to that positively so far.
All right, so from one industrial to another, I guess, kind of industrial, GE Vernova. Once upon a time, it was part of GE overall, but now it is just the electrical power equipment company. What did it say?
Yeah, with a lot more momentum. The stock is up about 12%. The ticker is GEV, hitting a fresh record high earlier. A massive beat from this power equipment company for the first quarter. EPS, $17.44. The expectation was for less than $1. So imagine the beat rate here. That tells you how much it is benefiting from the surging electricity demand tied to AI and data centers. They have robust equipment order growth, and its power and electrification segment, that is actually the one that is directly related to data centers. And they're saying their backlog keeps growing, which tells you, there's a lot more demand for their products as it relates to the data center build out. And the stock's been doing very well, up 70% year to date.
All right, very good. One more here. What do you got?
Capital One shares slightly down lower. I mean, we'll call it unchanged at this point. The credit card lender reported earnings that missed consensus estimate, and what caught my attention was actually the provision for credit losses, which surged 70% to $4 billion, above expectations. And I just took a look at peers, right? JP Morgan, Wells Fargo, Citibank. Those guys had the number was a lot lower for them. So this stands out as one of the banks reporting, some of the largest provisions out there, which is interesting given that they're exposed to the lower credit consumer. The CEO also saying that the conflict in the Middle East presents a significant cloud on the horizon. So some of those cracks are still showing in earnings.
All right, good stuff. Tatiana, thank you so much. Tatiana Darie is our Bloomberg News macro strategist, and you can find her work on the MLive Go blog on the Bloomberg terminal. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer you 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. And one of the movers this morning is Adobe. Shares are up more than 3% after the software company said it will buy back up to $25 billion of its own equity. That's a pretty big repurchase program. Anurag Rana is our technology analyst here at Bloomberg Intelligence, and he gives us his perspective on this. And this is meant to be a vote of confidence, isn't it, Anurag, in the company itself, given all the concerns swirling around the disruptive effect of AI?
Yeah, and it's been our thesis for some time that these companies cannot change that narrative right now because the halo of the big models is so much out there. All they can do is execute and be patient. At the same time, the valuations are so good for their stock, they should be buying back stock all the time. I mean, and frankly speaking, Adobe has done a good job of buying back stock. When we looked at the numbers, in the last 12 months, they've bought back stock worth more than $10 billion. So frankly speaking, the authorization is just an extension of that. If the valuations remain in this level, the number's going to be, I think more than 25 billion, frankly, because the run rate right now is, as I said, last 12 months is over 10 billion.
So, Anurag, the narrative out in the marketplace for many areas of software is that AI is going to, really be a serious headwind going forward here. How do you think that's going to evolve here? I mean, how do you think the market's going to kind of price these stocks, or has it already repriced this sector?
I mean, it's repriced it massively downwards over the last 12 months to even a little longer. But last 2 weeks, we have seen some glimmer of hope. If you look at the ETF IGV, which is the software ETF, it bottomed, I think, around 74. Now it's at somewhere around 86 or so. So we're seeing some rebound in the last 2 weeks. But I mean, if you look at the valuations in the last 12 months, I mean, it's had a massive decline. Now, the question is, what really happens with the software stock? And the negative argument or the bear argument is the LLMs are going to be so good that you don't really need software. And the software vendors are, not showing any of those massive, you could say, fundamental degradation in their business. So at this time, if the terminal value for them is zero, let's say a few years out, the best they can do is use all the cash flow to buy back the company, frankly.
All right, Anurag, let's also get a glimpse of what we can expect to hear from IBM later on today, because I don't think of IBM as a software company, but it does have a software business that is generally betting from AI-related work, although the AI story for all these companies that aren't owners of large language models is one that is very disruptive. So where do things stand for IBM?
So IBM has done a very good job of increasing their software business in the last few years. It started with Red Hat in 2018, and since then they've made numerous acquisitions, the most latest one being a Confluent. When they report today, we anticipate good, strong numbers on their software portfolio, weak numbers in the consulting book, and we anticipate them to talking about software revenue going up, partially because of the Confluent acquisition that we talked about. We have calculated that to add about 4 percentage points to software segment's growth rate starting next quarter.
Anurag, you'd called out really early in this AI story that one of the areas that would see perhaps less funding would be tech consulting. What's actually been happening out there?
So far, we have again not seen any degradation, but it's bound to say that if you can get coding done faster, application development faster, installing of applications faster, you won't need that much headcount. What I'm surprised to see that the consulting companies have not started to reduce their headcount. That was the first place where we're going to see some sign. I think companies will still need consultants to deploy the software. We saw an agreement today with OpenAI and Infosys trying to install OpenAI software across enterprises. So they would still need consultants to deploy that. But I think the rate of revenue growth and the rate of employee growth is going to diverge, which means you are not going to have that many employees you're going to hire to install the software. So I think the business will still remain, but it's going to change dramatically in the coming years.
All right, Anurag, thank you so much. We appreciate that. As always, Anurag Rana, technology analyst for Bloomberg Intelligence, joining us from Chicago via that Zoom thing. All right, here's a headline. When I read this morning, I'm like, are we back in the 1990s? Deutsche Telekom seeks to build #1 carrier with T-Mobile deal. I mean, this is the stuff we were doing back at Salomon Brothers and Credit Suisse back in the day when telecoms were just buying and selling each other left and right and spending money, which we like.
As opposed to being a utility business.
Exactly. Boy, we like to fund those people because they are capital intensive. So let's check in with John Butler. He knows what's going on out there. He covers all the telecoms for Bloomberg Intelligence. Hey, John, did this surprise you this morning to see that Deutsche Telekom is maybe thinking to buy the whole thing out there in T-Mobile?
I think the timing was a little surprising, Paul. I didn't expect it sort of out of the blue. It came midday yesterday. Bloomberg reported that Deutsche Telekom was considering this move. And as you said, it's kind of back to the future with this mega merger here. Keep in mind, Deutsche Telekom is the parent of T-Mobile. They own 53% of the company and have for a while. They have 56%, I think, of the voting rights here. So what they're really after is Europe is a much more mature market than the U.S. And so T-Mobile has been a real profit engine for them. And I think they're looking to sort of boost their profits by bringing in T-Mobile into the fold as 100% holding.
Is this something that regulators in Germany and here in the U.S. would be okay with?
That is the big question mark, Scarlett. It's going to be really interesting to see how the current administration here in the U.S. reacts to it. I can't speak to Germany, but I do believe here in the U.S. they may look at it and say, gee, do we really want a foreign entity holding 100% of T-Mobile, which has U.S. spectrum licenses across a broad swath of different frequencies? And it's, they would have obviously control over the customer relationships, call it 85 million, I think, at T-Mobile. So I don't want to second guess the administration and how they're going to react to it, but my sense is there might be some pushback there. The U.S. may even seek some sort of a deal with Deutsche Telekom to, favorable terms, if you want to think of it that way, to clear the path for getting the deal done.
In the Bloomberg News reporting today on this story, U.S. Congressman Jim Jordan, chairman of the House Judiciary Committee, said Tuesday that the U.S. government would look at the details of any deal. Quote, a foreign company taking over T-Mobile will get our staff's attention, end quote, he said. So there's certainly going to be something from the congressional side here. Do you think that would, Deutsche Telekom's full ownership, would that mean anything to Charlie Pellet, who's a T-Mobile customer? And are you a T-Mobile customer, Scarlett? And Scarlett's a T-Mobile customer.
And Scarlett, so I'm a Verizon customer, but I do have a single line with T-Mobile. It is a great network. I look at a combination and the scale that comes with it, and I see potential for investing more heavily in the network. I think they would have access to greater source of funds. They would have greater leverage over suppliers potentially, so they would get better deals on equipment, lowering their cost of capital. So from that standpoint, Paul, I think we could see a real uplift in T-Mobile's network. They've been investing in it over the years and have done a very good job of building out 5G coverage and capacity. Yep. But that's an ongoing process, right? So you would, you're constantly investing there and you're constantly seeking more funds to be able to do more on that front. And I think a deal would favor that.
Right.
So Charlie can rest assured that his service would probably get a lot better, not worse, in the wake of a deal.
I like hearing that. John, where does that leave the number one player in the telecom space here in the U.S., which is AT&T? It just reported earnings. Wireless service revenue did come up short in the last quarter.
It did, Scarlett. I think investors should look beyond that. In 2Q, we're going to see a price increase across the base, which is going to lead to higher wireless service revenue. The one thing that AT&T has done, and I suspect Verizon and T-Mobile are doing exactly the same, is they're relying more on subscriber growth now to drive the revenue equation, as opposed to driving up rates. So again, positive for consumers. We're going to see fewer price increases, although, as I said just a second ago, AT&T is implementing a price increase on some of the older plans starting in 2Q. So that'll help to lift that wireless service revenue.
Got it.
But you don't have that dual engine of rate increases and subscriber growth at work. So
all right, very good.
Hey, John, I think AT&T is not going to be alone.
All right, very good, John. Appreciate getting some of your time. John Butler, Senior Telecom Analyst of Bloomberg Intelligence, giving us the latest in the world of telecom. Again, Deutsche Telekom, reportedly by Bloomberg, that may be thinking about buying the remainder of T-Mobile that they don't own. So we'll stay on top of that one. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks pushing higher, oil rallying as well. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. A slew of strong corporate profit reports lifting stocks a day after President Trump extended a ceasefire with Iran. Right now, the S&P is up 61. We're at 71.25, up by about 0.9%. Record, by the way, on the S&P is 71.26. That was set last Friday. Dow Industrials up 405 now, up 0.8%. NASDAQ up 310, up 1.3%. Again, S&P just shy of a record. The VIX at 19. We've got the 10-year 4.28%, the 2-year 3.79%. Spot gold is up 0.3%, 47.32 the ounce. And West Texas Intermediate crude is rallying 2.8% now, 92.19 a barrel. Brent, 101.30, barrel of Brent up by 2.9%. Tesla will be the main focus of corporate results after the close of trading today. Ahead of its report, Tesla up now by 1.1%. Also reporting after the close of trading, Texas Instruments, and also we'll be hearing from Lam Research. All of this is the SOX, the Philadelphia Semiconductor Stock Exchange Index, eyeing its longest winning streak ever after 15 days of gains. Again, recapping, stocks push higher. S&P right now at a record, up by 0.9%. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. We are looking, of course, at stocks in the green with the S&P, NASDAQ right around record highs. And, you know, it's been a remarkable comeback for the equity market from the start of the war. We saw this big drawdown, but then, especially now that we have this indefinite ceasefire, or as you were telling me,
I don't know. I'm now
5 days, 6 days?
I don't know.
Well, okay, one or the other, and it could change again in the next hour. Nevertheless, stocks have made a comeback. Bonds have not made the same kind of comeback.
No, but I kind of feel like the bond market's been steady. You know, I mean, it feels like we've been 10-year at 4.25 forever. We're in that kind of range, 4 to 4.5%. It seems like it just kind of feels like the capital markets in general are been pretty orderly about this whole thing.
All right, so let's bring in Priya Misra. She's a fixed income portfolio manager at JP Morgan Asset Management. How are fixed income investors looking at the geopolitics of it all right now, Priya?
Sure, thanks for having me on. So there's a lot of cross currents. I think all markets, including bond market investors, are looking at the resilience in terms of corporate profits, in terms of earnings, as well as the broad macro data. And we haven't had a lot of data, but we had retail sales. We're seeing layoff numbers staying low. You know, so I think there's a sense that the economy came into this shock with a lot of resilience. And the US is somewhat insulated from the oil shock. Now, I will say there's an assumption here that the oil shock doesn't last for a very long time. You know, is that a few weeks or a month? Probably. But I do think that, you know, there's a hope here. There's cautious optimism that this will end, that oil prices will come somewhat lower. But I think the fundamentals are just extremely strong, both in terms of balance sheets, earnings, as well as the macro data. And that's why corporate spreads, whether you look at high yield spreads, investment grade spreads, they are all near the tighter end of the range. You know, interest rates are a little bit higher than before the conflict, because I think if there's some damage that's being done, I think this does, in terms of inflation, this pushes out if and when the Fed can cut rates. So there's some upward movement in rates, but I'm kind of with Paul there. I think 4 to 4.25 is a very fair range. We're actually thinking above 4.25 is a level to start to own some duration, because if this lasts for longer, I think that's when the growth shock can start to get priced in.
Priya, what did you make from Mr. Kevin Warsh's hearing yesterday in Washington, D.C.?
There was a lot said, but in terms of details, we actually didn't get a lot of details in terms of, you know, what kind of framework Kevin Warsh wants the Fed to reconsider. or specifics in terms of monetary policy. But I do think we heard a few things. Number one, I think we've heard this before. He was consistent. He's not a fan of using the balance sheet. Now, I would argue the Fed uses the balance sheet when when interest rates are much low or zero. So it is an unconventional policy tool. I don't think the Fed's using the balance sheet now. So I know Kevin Walsh would like to shrink the balance sheet. We didn't hear much about how he would go about doing that, or what sort of regulation changes would be needed. But I think that we did hear consistent with his views. He didn't give us too much specific in terms of interest rates. I do think he wants to rethink data, inflation, but I think the Fed is doing some of that right now. They're looking at the underlying components of inflation. Kevin Walsh talked about the trimmed mean, the trimmed median. Yes, I think the Fed currently is looking at a bunch of things. So I don't think he's very far from the committee on that front. Where I struggle a little bit was his point on communication. I think he'd like the Fed to communicate a little less. I don't know, it's a democracy. I think he'll have to get the committee on board on that front. And on forward guidance, I think he doesn't believe in forward guidance here. And I don't think the Fed really is doing a lot of forward guiding right now. They're saying data dependent. So, I think there was a lot of pushback from Kevin Walsh on the way the Fed is conducting policy right now. But we didn't hear that much on what he would like to do. He reiterated independence, which is a good thing. We want an independent, we want a credible Fed. He said the president's not asked him for any particular policy action. I think that was good news to the market. Right. But I did walk away from that hearing thinking he's going to get confirmed once the DOJ investigation is over.
Right. Once the DOJ investigation is called off. That's the thing right now. We don't have any sense of when that will be. And if anything, the Trump administration, the president, seems to want to move forward with what the DOJ is looking into. So how do you think about the time for transition? Because Jay Powell will likely stay in place until there is movement on Kevin Walsh.
Right. So I think Jay Powell stays for now. I think the Fed is unlikely to do anything right now. So this may be not a big market event. If Jay Powell stays on and Kevin Walsh comes in later this year, whenever the DOJ investigation's concluded, I mean, you kind of wonder, it's a game of chicken right now between the DOJ and the Fed and Senator Tillis, and who gives in, and maybe they'll just resolve it by the end of the year. I think where it gets tricky is if the unemployment rate starts to rise and inflation, particularly core inflation, starts to rise. I think there, having a leadership of Kevin Walsh, who might want to look through some of the inflation metrics, or Chair Powell, I think that becomes a lot more interesting. That's not where we are right now. But if we're still having this debate at the end of the year, I think then the market's really going to care who's in charge, because that person has to sort of get that consensus at the committee. And then it might matter a little bit more. But I think right now the market might be quite okay with Chair Powell staying on.
All right, Priya, thank you so much for joining us. We always appreciate getting a few minutes of your time. Priya Misra, fixed income portfolio manager at JP Morgan Asset Management based in New York City. Earnings out again for a lot of companies this week. This is a big week. Philip Morris International out with some better than expected numbers. The stock's up about 6.6% today, so a big move for that stock. It's up about 2% year to date. Let's break down the numbers from Philip Morris. Ken Shea, Bloomberg Intelligence Senior Consumer Products Analyst, joins us here. Ken, what's driving Philip Morris businesses these days?
Yeah, hi, Paul. Well, Philip Morris today allayed any fears that some competitive activity with their oral nicotine product Zyn in the U.S. is going to derail them hitting their numbers. They didn't. They beat their numbers handily. Top line up 9%, EPS up 16%, helped a bit by currency, but the underlying business is healthy. Cigarettes, unexpectedly, or I should say as expected, volumes were down as the long-term secular decline continues, but pricing was up 8% year over year. Smoke-free products, top line was up strong. Gross margins were up about 70%. And so the big picture is that they're on plan with their transformation to move away from legacy cigarettes to these smoke-free products, which are on trend. And now that business, smoke-free, is a scale business, a $16 billion business that's now being positioned, I believe, for separation at some point soon.
Oh, interesting.
Yeah. I mean, the kids, I hear Zyn, like in social media posts from younger folks. I'm not really sure because I think Zinfandel wine, but that's not it.
No, this is ZYN, not
Okay.
Zinfandel.
Okay.
So yeah, talk a little bit more about that smoke-free business and how a spinoff might be on the way. Why would Philip Morris want to do that?
Yeah, sure, Scarlett. So their smoke-free business, I mentioned, is powered mostly by IQOS. That's their heated tobacco device, which uses its Marlboro and other branded plugs, if you will, units that you put into the device, and it heats tobacco rather than burn it, like a combustible cigarette, and thereby is smoke-free and a less harmful alternative. The two other legs of the stool of smoke-free are its e-vapor product. That's a closed system, meaning there's no plugs involved. It's just that once you use it, you're done. That's called Vive. That's a more economical version, and that's catching on well. And then you have the oral nicotine products that I alluded to before, which they have a 60% share in the U.S., a big share, outside the U.S. in selected markets. It's still prohibited in many European markets, but where it is legal, it's doing well. And that rounds out their smoke-free business. It really is the fastest growing element to Philip Morris, this smoke-free. The company is providing the disclosure that analysts love. It's a double-digit grower. It's got high margins. It's on trend, and I think they're going to market it that way. Probably, like I said, I believe at the end of the year as a really attractive spinoff.
So I'm just looking at the PGEO function, which gives you the segment revenue, and smoke-free is now 40% of total sales there. That is just extraordinary. Talk to us about the competitive landscape for that smoke-free products.
Philip Morris, to their credit, was really out in front, well ahead of its competitors, namely British American Tobacco, Imperial Tobacco, Japan Tobacco, who have similar products, a heated tobacco and an e-vapor or e-cigarette products. They are way behind with Philip Morris. So they have like a 75% share of where they compete with these products and the IQOS product. So they're way ahead. They're not immune to competition, but they're so far ahead that they're already coming out with second and third generation products where their competition is trying to catch up.
Very quickly, Ken, do we see any impact from the war in Iran on Philip Morris, whether it has to do with just costs overall or, transporting its products?
They said there was a small impact, namely the duty-free, shops you see in airports with less travel. They had a downturn there, they said. They did cite some input costs. They have some of their own distribution costs, transportation, things like that. It's a relatively small impact, though, and it's something worth keeping an eye on. But I don't think anybody changed their margin profile on the company just yet due to that.
All right, Ken, thanks so much. Always appreciate getting a few minutes of your time. Ken Shea, Senior Consumer Products Analyst. That includes tobacco. That includes weed. He's our cannabis dude. He had some of the first research on Wall Street about the cannabis market, like just sizing up the market. How big is it? How big could it get? And who are the players and that kind of stuff. So we'll stay on top of that. But I see, particularly in Europe, the young people have all the vape pens and all that kind of stuff.
But smoking's making a comeback here in the U.S.
Is
too.
it?
Yeah, young people seem. Maybe it's because the '90s are back in, and there was a lot of smoking in the '90s.
Yeah, not in my household. I'll tell you that right now. We're gonna have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, Russell 2000 index, all advancing. The SOX as well. Right now, the S&P is up 57 at 71.21, gain there of 0.8%. Dow Industrials up 317, now up 0.6%. NASDAQ up 312. That is an advance right now of 1.3%. By the way, the S&P trading at a record 71.21. The old closing high 71.26. That was set last week. Right now, we have got the VIX just above 19 with the 10-year 4.29%, the 2-year 3.79%. A slew of strong corporate profits helping lift stocks today. Gold is up 0.2% at $47.27 the ounce. West Texas Intermediate crude closing in on $93 a barrel, up 3.5% right now. Barrel of Brent, the global benchmark at 101.79, up by 3.4%. Well, as for the market backdrop, Ethan Devitt is Managing Director for Global Wealth at Moneta Group Investment Advisors. And on surveillance this morning, she told us, yes, there are lots of reasons for investors to be in equities.
You certainly don't want to be in private credit, maybe with the uncertainty there. You don't want to be in fixed income. And real estate itself is looking questionable. So you have to be in equities. You have to keep pace with inflation. You have to generate a positive real return. And in a way, the AI story is really the counter story to all of this uncertainty. That seems to certainly be moving upwards.
Ethan Devitt of Moneta Group. And by the way, you can hear more of the conversation on the Surveillance podcast. You can download that wherever you get your podcasts. Among the big names reporting after the close of trading today, going to be Tesla up now by 1%. Wall Street's expecting Tesla to post a 30% jump in first quarter adjusted profits and a 15% increase in revenue. Again, Tesla up now by 1.1%. Also after the bell, Lam Research and Texas Instruments. Recapping, S&P at a record up 0.8%. Crude pushing higher. WTI 92.88 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Paul and Scarlett, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. We are, of course, keeping a close eye on not just the conventional markets, but prediction markets as well, because it feels like everyone is trying to get into this business.
I'm trying to stay on the top of AI. I'm trying my best. Now I got to do this prediction market stuff?
Yeah, a binary yes or no vote. That's all that they need from you, Paul.
All right.
Paul's not a buyer just yet, but there are plenty of people who are interested, and that's why all these other companies are looking to invest in the poly market exchanges as well. Catherine Doherty is our Bloomberg News finance reporter, and she covers this corner of the industry. And Catherine, you've been writing about how Polymarket and Kalshi are the two main players, but Polymarket is kind of giving up its lead right now.
Yes, and there's a number of factors that are playing into this dynamic. Number one is the difference between Kalshi operating with a license legally under CFTC guidance. So they have U.S. regulators that are overseeing their operations. This is Kalshi. And Polymarket also has a license. They are also overseen by the CFTC for the U.S. Polymarket app exchange. Now, that exchange, which is separate from the international platform, that's the one that is getting the most volume. All international volume outside of the U.S. has been taking off and really was the main leader in the beginning of prediction markets as we kind of first started talking and hearing about them. But now the U.S. operation that Polymarket is standing up is still in beta mode. So they're trying to figure out and have a lot of kinks that they're working through. And all of the U.S. users that are legally placing these yes or no binary bets on Polymarket, that's only a finite period because of the beta mode, the fact that they're slowly rolling this out versus Kalshi being up and fully operational.
How big is this marketplace in terms of dollars? Do we have data on this?
Oh yes. So if you look at it's a huge hockey stick, and the rapid growth. If you compare it to traditional markets, Paul, there's no comparison for options, which is still a binary bet, and a lot of people compare derivatives markets. The volumes, there's no comparison. However, if you look at the rapid growth of prediction markets, we were barely talking about them a year ago. So if you can even think about the news and the headlines, the reason that they're getting so much attention is because of this rise that really in the last 6 to 8 months has doubled, tripled. There have been moments such as the March Madness period that we had a month ago that really brought in, and because of the interest in sports specifically, some new records for these companies.
We also have a World Cup later this summer, so
that's right.
More for the prediction markets to look forward to. The Intercontinental Exchange, ICE, the owner of the New York Stock Exchange, has invested in Polymarket.
That's
How
right.
does it feel about what it's seeing right now with Polymarket's struggles?
So this was the biggest headline back in November of last year, is when ICE originally invested in Polymarket, and it kind of set off this train of these companies both looking to capture new audiences, but the backers and the agreements that they were entering into. Think about the sports leagues that the NHL, both Kalshi and Polymarket jointly agreed to work with the NHL. There's other sports leagues that are all coming out. You mentioned FIFA. So with ICE specifically, that announcement was made, as I said, in the fall of last year. And they had announced at the time that they were putting in $1 billion with the commitment that they could go up to $2 billion. Now, a few weeks ago, this year, they capped that investment. They stopped at 1.6, and they didn't really give much in terms of, in the disclosure, reason for where they were going or how, but through our reporting, we have got more details about Kalshi going through another funding round, which was really a reason that ICE had to put out a further disclosure. They're being valued right now at $15 billion, and this compares to Kalshi that just went through its own funding round at $22 billion. So these companies are really getting a ton of interest and a lot of dollar signs.
Now, I understand the online gaming sites, the betting sites, the DraftKings of the world, they've got a problem with some of these.
So it's interesting how those companies are responding. FanDuel specifically teamed up with the Chicago Mercantile CME, and those two companies, you have CME that already has derivatives contracts, and they want to partner with a company like FanDuel because they're looking to diversify their own user base, their own audience, and the retail client that FanDuel attracts and already has is what CME is hoping to tap into, and vice versa. FanDuel looks to CME. This is a institution based out of Chicago. They're thought of as the hardcore Wall Street plumbing operator, and so they get a lot of reputational branding benefit from working with a company like CME. So the two of them are teaming up, but you have seen the sports betting. These are sports books, not a binary yes or no, but you're betting against the sports book. And you've seen them respond by launching their own prediction market contracts, which is so interesting because they're saying, okay, if you can't beat them, join them. I guess you could use that phrase. They're responding in a very defensive mode at the moment.
And we've also seen companies like Coinbase and Robinhood also launch their own prediction markets, hoping to really tap into their existing user base.
Yes. Yep. So we'll see how this continues to play out. Every day is a new announcement, a new partnership. It's just interesting who chooses to partner with whom.
Folks, if you want to learn about this prediction market, you got to read this article that Andy Massa, Emily Nicole, Isis Almeida, and Catherine Doherty put together. It is a
big team effort.
Yeah, it is a big story here, too. I keep scrolling down and down and down for more information. But if you want to learn about the prediction market, that's a good place to
I feel like Catherine now increasingly spends her time on prediction markets over other parts of finance. It's really taken a big part of your time.
Yes. I mean, it's the plumbing, right? And it's funny because I always say I'm covering the plumbing of Wall Street, and this is it. As much as people are kind of questioning what's being built and what's going on, this is very much at the forefront of the core finance firms' minds.
All right, Catherine, thank you so much. Great work there. Catherine Doherty, finance reporter for Bloomberg News, joining us here in studio. Again, the prediction market's big. I got to go on this. There's, again, something new I got to learn again.
It's just yes or no. That's all. Yes or no. Yes or no.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Tesla reporting earnings after the close, always an important data point out there. But you look at the stock, and it kind of tells you people are not really sure what to do with the stock. It's up 1% today. On a year-to-date basis, it's down 13%, but on a trailing 12-month basis, it's up 64%. So go figure. But one guy who's got an opinion here, Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence here. Steve, what are you going to be looking for with Tesla when they report earnings after the close and have their conference call?
Yeah, the call is going to be pivotal for Tesla, especially for this quarter. You know, they're going to talk a lot about their cars, but I think, you know, investors are very much focused on their AI endeavors in robotaxi as well as the Optimus robot. More so on the Cybercab and robotaxi. They did promise at the end of the last quarter that they're going to roll out into 9 to 10 cities in the first half. So we'll be, you know, tuning in to see where they're at with that.
All right, here's something. You look at the ANR function, analyst rating. First of all, there's 63 analysts following this stock. I think that's a little bit of overkill, but that's just me. 32 buys, 19 holds, 12 sells. The market has no idea what to do with this name, it appears like. Steve, is Elon, do we have knowledge that Elon's really back and engaged with Tesla? What do we know?
Yeah, I think he is. You know, there are kind of rumors out there that they are going to launch a new vehicle, not the Roadster. Well, the Roadster on top of a smaller vehicle. I think it's critical. I mean, like if Tesla is into AI, and they're not going to partner with anybody to proliferate that AI, like, you know, you see with Rivian and Uber, with Rivian, Uber, and then as well as Lucid, they really need to build, you know, expand their market share globally. And I think that's one of the things that we're going to hear about the company as well. You know, a lot of people think it's a non-auto company, but I think it's symbiotic, right? You have to have more cars out there to really proliferate their robotaxi, their full self-driving capability. And, you know, overseas sales are actually growing much faster than their pillar markets in the U.S., China, and Europe.
So talk to us about the competitive environment, specifically China. I mean, I'm thinking about Tesla competing in China and then Tesla competing rest of the world against Chinese products. How's that evolving?
That's a good point. We actually published a piece of research out recently that you know, we think global automakers are actually, you know, leveraging the low-cost environment in China, low labor costs, low capital costs, to actually use that as a manufacturing base to export. I think we heard it recently. Volkswagen is looking to do that with their EVs. You know, Chinese local automakers are very strong in their backyard. You know, in the ASEAN market, they're breaking into Japan, they're breaking into South Korea. Look, you know, I think there's an opportunity here to use China to build low-cost vehicles, you know, offer them at a competitive price, and really compete with the Chinese in their own backyard.
Now, I mean, I guess if I were an investor and I don't say a Volkswagen, I'd be a little concerned at this time in history to be making investments in China, to be partnering up with Chinese companies. How are investors getting comfortable with that?
They really don't need to, because if you look at the last 5 to 8 years, you know, the legacy automakers, foreign legacy automakers, have been losing quite a bit of market share,
right,
in China to the local makes, and you know they still have the capacity, you know, plant floor. They're not using it. They're empty, so they can actually recondition those, retool those, actually build cars and use China as an export base.
What's the here in the U.S.? What's the state of the charging network? Because for a lot of people that was and I think to a certain degree still is a gating issue.
Yeah, it is. It is still a big issue. But we are seeing that the charging infrastructure continue to build out. Even though sales have slowed, The charging infrastructure is still continuing to expand. Interestingly, though, even though new car sales have came off as a result of the end of the 7,500 subsidy last year, used EVs sales have actually been doing very well.
So, Steve, just for our listeners and viewers here, at the Princeton Bloomberg campus, how many chargers do you guys have there?
We probably have like 45, quite a few.
45. Now, again, I stopped working at that office probably 10 years ago. We had 2. So that shows you what's going on, Steve. All right, Steve, thanks so much. Really appreciate it. Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. He's down there, Bloomberg's beautiful campus down there in suburban Princeton, New Jersey, where they have 45 charging stations there. Again, when I was there 10 years ago, they had 2. So, I mean, a big, big increase there. And maybe that shows you kind of what's happening out there in the marketplace. So Tesla reporting after the close tonight. Pay attention to that conference call as well after the close. Looking at the markets here, we've got some strength out there. The S&P is up 55 points. That's 0.8%. The NASDAQ doing a little bit better, up 295 points. That's 1.2%. 10-year Treasury yields 4.29%. WTI crude oil now higher, $3.50, $93 a barrel. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up right now.
From ABC News, I'm Michelle Franzen. Hours after President Trump extended the ceasefire deadline, a UK watchdog group says Iranian forces fired on a container ship in the Strait of Hormuz. ABC's Rachel Scott says Iran had threatened to respond if the U.S. continued its blockade.
So far, the U.S. Navy turning around 28 ships and cracking down on Iran's so-called dark fleet of illicit shipping vessels. U.S. forces boarding an oil tanker in Asia. Iran's foreign minister blasting the blockade as an act of war. And overnight, Iran opening fire on at least 2 ships in the Strait of Hormuz, causing heavy damage to the bridge of one of those vessels.
On Capitol Hill, HHS Secretary RFK Jr. facing another day of grilling over his vaccine policy. ABC's Jay O'Brien has more.
Democrats have taken repeated opportunities to ask him about his handling of health policy here in this country, to ask him pointedly about his stances on vaccines, why the previous CDC director resigned, saying that Kennedy tried to get her to rubber stamp vaccine guidance that had not been determined yet. Kennedy says that's not true.
Voters in Virginia narrowly approved redrawing congressional maps ahead of the midterms in a special election yesterday. It could boost chances for Democrats to add seats. House Minority Leader Hakeem Jeffries says Democrats are pushing for legislation to end gerrymandering, but had to respond due to President Trump's calls for Republican-led states to redraw their maps.
Democrats.
Donald Trump and Republicans launched this gerrymandering war. And we've made clear as Democrats that we're going to finish it.
In the UK, legislation known as the Tobacco and Vapes Bill is waiting for King Charles's signature to become law. If it passes, it would make it illegal for anyone born on or after January 1st, 2009, to purchase tobacco and vaping products in the UK. The health secretary calling the historic moment for the nation's health. You're listening to ABC News. damage. Parts of the Midwest, including Michigan, remain waterlogged after historic flooding over the weekend swelled many of the Great Lakes, and there could be more bad and wet weather on the way. ABC News Chief Meteorologist Ginger Z has more.
It is not just Michigan. We still have major flooding. This is Lake County, Illinois. We have flooding in Wisconsin. We have flooding down in Indiana. And unfortunately, the end of this week, by Friday into Saturday, another strong line of storms is going to come through with potentially heavy rains in the very same areas that are dealing with that flooding.
Across the Southwest, Rockies, and Southeast, the persistent dry conditions combined with low humidity and gusty winds are raising the risk of fire danger. West Virginia and Alabama have now joined Nevada in reaching agreements with Roblox over claims the company failed to protect young children using that gaming platform.
Under the latest settlement, Roblox will require age verification, including facial recognition of its users. In Alabama, the platform will pay $12 million into the state's Safe Schools initiative. But
it takes two,
says Attorney General Steve Marshall.
It takes the platform to be responsible, but it also takes parents to be engaged and know what their kids are doing online.
Critics have called Roblox a hunting ground for child sex predators. Jim Ryan, ABC News.
Reports say Meta is installing tracking software on its computers of its employees to capture clicks and keystrokes for use in training in its AI models. I'm Michelle Franzen, ABC News.
Offer not valid in all states or prohibited by law. Loans are subject to lender approval. See website for details.
Honey, our credit card bill.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The ceasefire is extended, but Iran is still firing at ships. Welcome to the Wednesday edition as the standoff in the Strait of Hormuz continues, and Iran's Revolutionary Guard now firing on a third ship in the Strait of Hormuz. We're going to get the latest in just a moment from Bloomberg's national security expert, Nick Wadhams, with me here in Washington. And we'll have analysis from our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the duration today. Virginia voters approved Democrats' plan to redraw congressional districts. And it could be bad news for Republicans in the House. We'll get into it with Republican strategist Alex Conant from Firehouse Strategies. He's with us in studio just moments from now. First, Wall Street, though, loves an extended ceasefire. Let's see how it's going with Charlie Pellet. He's at World Headquarters in New York. Charlie?
Hi, thank you very much, Joe Matthew. Interesting day. Yes, oil is higher. Stocks responding as well right now. The Dow, the S&P, NASDAQ solidly in the green. Got to begin with West Texas Intermediate Crude, closing in on $93 a barrel. Once again, $92.94 right now. WTI up by 3.6%. Brent 101.64, higher by 3.2%. All of this as stocks advance with the S&P 500 index just shy of a record 71.24, where we stand right now. The old high 71.26. The S&P up 60, up by about 0.9%. The Dow higher by 357 points, up 0.7%, with the NASDAQ Composite Index up 1.3%. NASDAQ up 320 points right now. The stocks, the Philadelphia Stock Exchange Semiconductor Index up another 1.8% today, with a VIX just above 19. The 10-year 4.29%. We've got the 2-year yielding 3.79%. Gold up $11 the ounce to $47.31, up 0.2%. And crude WTI again 92.96 right now, up by 3.7%. Well, as Joe mentioned, geopolitics certainly front and center as investors await the latest developments on talks in Islamabad while monitoring ship movements in the Strait of Hormuz. Chris Watling is chief market strategist at Longview Economics, and he was a guest this morning on Bloomberg Television.
Well, we've just got used to Trump, haven't we? I mean, people call it TACO. I think we should rename it, but it just doesn't work very well. TAGB, Trump always gets bored. And I think that's kind of what's going on. Now, I probably shouldn't say that on American TV, but, you know, he likes to move on, and TACO's an element of that.
Chris Watling of Longview interviewed this morning on Bloomberg Surveillance. The Trump administration, meanwhile, said to be nearing a rescue package for Spirit Airlines that could give the U.S. government the option to own as much as 90% of the carrier once it emerges from bankruptcy. Again, oil pushing higher. Oil majors also advancing. ExxonMobil up 0.3%. Chevron up 0.7. ConocoPhillips up by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Lots going on, Joe Matthew. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you, sir. With us live from World Headquarters. Charlie will be back in just about 15 minutes with the latest on the markets here. Kind of curious, right, to see stocks rising in the face of higher oil prices, but I guess we've seen these prices before, and boy, Wall Street has been very forgiving and very optimistic when it comes to the situation in Iran. All it took was that post last evening, right, coming up on the big deadline for the end of the ceasefire, and everything turned around. Curious the president waited till after the close yesterday to release the statement that brought the relief. So thanks for joining us on this day after. We've got a lot to explore on the Wednesday edition of Balance of Power here on Bloomberg Radio, on satellite radio, channel 121, and streaming live right now, as always, on YouTube. Find us by searching Bloomberg Business News Live. The president keeping it pretty simple here, right? Will therefore extend the ceasefire until such time as their proposal is submitted, he said. He even signed it. One way or the other, President Donald J. Trump. He's been posting a little bit since then, talking about the Strait of Hormuz. He says Iran doesn't want the Strait of Hormuz closed. They want it open so they can make $500 million a day, which is therefore what they are losing if it is closed. They only say they want it closed because I have it totally blockaded, he says. Closed, yes, and that is the point. We still have the double blockade, if I can call it that, in place. The U.S. Navy blockade on one side and, of course, the Iranians on the other side, and they've been busy at it. Ever since we extended the ceasefire here, Iran has been shooting at ships. This is not a great development here, obviously, and there's been quite a bit of reporting on this as the Islamic Revolutionary Guard Corps fires on a third ship in the Strait of Hormuz. The Francesca box ship, this is owned by a Geneva-based company, Mediterranean Shipping, came under fire while waiting to cross into the Gulf of Oman. The IRGC also seized the MSC Francesca and another ship that intended, they say, to secretly exit the Strait of Hormuz. That according to Iranian state TV in a statement from the Iranian Navy, which we were told was at the bottom of the Gulf. I guess they've got some fast boats left over now. And we are also going a little bit further as well. United States Navy moving beyond the Middle East, which is a fascinating development here. The capture of the tanker ship Tiffany in open waters between Sri Lanka and Indonesia. Where again? We're now off India's western coast here. The administration imposed sanctions on the Tiffany last summer after officials said it was making ship-to-ship transfers of Iranian oil, part of the dark fleet. So is this escalating? Is it broadening? Or is this more of the same? Because if you look at the markets, it's rally time. We're going to be back to Dow 50,000 in a minute. The S&P 500 is up 58 points right now, almost 1%. Can't get enough tech. The NASDAQ is up over 1% here, and even software has a bid. The president has not offered us much more than this today as we try to figure out exactly where we're going. Maybe we learn more from the senator from South Carolina. Fascinating tweet here from Lindsey Graham. I had a very good call this morning with POTUS and the Secretary of War, Pete Hegseth, about the way forward regarding the Iran conflict. He says, I think the president's decision to leave the blockade in place is very smart. It is having a strong effect on the ability of Iran to continue to be the largest state sponsor of terrorism, which they appear intent on doing. He says, I not only expect this blockade to stay in place until Iran shows a commitment to change their ways, I expect the blockade will be growing, and this is the important part, that it could become global soon. That would be a change of pace as the president continues to criticize our NATO allies about not joining the coalition of the willing that frankly never emerged. The United States essentially going it alone in this regard. He says, well done to the president and his team, to those assisting or thinking about assisting the Iranian regime in distributing its oil, which provides resources to terrorism. You do so at your own peril. And so we turn back to the market here and find WTI, West Texas Intermediate crude, up 4% at $93 a barrel, and Brent crude approaching $102 a barrel. So we've got some kind of a disconnect here in the markets. Unless stock traders really have decided catching the bottom is the point, and we're not going to miss a strong earnings reporting season that we are already in the midst of here. That seems to be what's happening. The VIX is actually lower right now, just a little bit above 19. Yields are mixed up. 10 years flat at 429. the 2-year up just a tick at 3.79. Good opportunity to compare notes with Michelle Jamrisco, who joins us from our national security and White House team, an editor here in Washington and no stranger to this program. Thanks for running in to say hi.
Yeah.
I'm trying to get a sense of how we describe this moment, because the president says the ceasefire is extended, but Iran is now shooting at ships in the Strait.
Well, it's been increasingly difficult, Joe, I think, over the past 48 hours especially, to kind of parse the words of the president and the Iranian officials, often speaking through their state media and semi-official state agencies. So, as we're looking at all these words, we're also comparing, and it's not just us, it's investors and everybody around the world invest in this in various ways. We're also looking at the action in the Strait. And so we have these parallel issues about what's being said and then what's actually being acted on in that vital waterway. And right now, it seems both narratives are negative. So that's why you're seeing what you're seeing in the markets.
Right.
But it's increasingly difficult to see where this is going. And I think even the White House kind of openly has said we need to hear from Iran more definitively what's happening, while also issuing threats. Again, in this chicken and egg game, the U.S. will not end the blockade until there's a deal. Iran says there's no deal until you end the blockade. So we're kind of, in some ways, at a standstill, while also holding out hope that negotiators could come to the table at some point.
Sure. Well, while we wait for something to happen in the standoff in the Strait, and whether it becomes the battle for the Strait, the fractures politically inside Iran really become the story right now, right? J.D. Vance decided to stay parked here in Washington because we weren't sure exactly who was speaking for Iran. The IRGC has one line, the Speaker of the Parliament has another line, the Ayatollah, if he's awake or speaking at that moment, has his own take on things. Is this the problem?
Well, and this is I'm glad you bring that up, Joe, because that's an extension of the story that we've been talking about for some time, is that Iran has this sort of decentralized setup and has had this for a long time, where the IRGC maintains a lot of power, and obviously the supreme leader does, but they're set up in a way where they can make decisions in a war that don't depend on just one person. So it is very hard, makes it very hard to read. It also is to their strategic advantage in some ways, so that they're not, telegraphing what their next move is or who might be making the decisions. Obviously, it's been a challenge, and openly so, for someone like Trump, who's trying to identify who the more rational leaders in their view are in the administration. But yesterday was an interesting, critical point when we saw not just the Iran's parliament speaker, Ghalibaf, kind of speak out against the idea of talks, not definitively saying no, but really kind of saying we won't submit to U.S. pressure. And then we saw Araghchi, the foreign minister, who also was in the first round of talks, saying, hey, no, we're not doing this right now, or at least signaling as much. And so when those two came forward
on a message.
Well, and you can see how, those two are not, they're one piece of, as you mentioned, one piece of the regime's decision-making arms, but they're the important one for diplomatic talks. And once they turned, it seemed pretty clear that we weren't going to see a second round. J.D. Vance was not getting on that plane.
So the president tells the New York Post in our final moment here, 3 to 5 days. I guess the Post got the phone call in today. Everyone, it's like dialing for dollars every day. He picked up the phone. There's the Post. Surely he doesn't know then. Does 3 to 5 days mean I'm not sure?
Well, I think some of these reports, I think we would caution to just wait until you hear from the president to actually think it's definitive in his mind that that's the timeline, the new timeline. It is useful to understand that, based off of his post yesterday, a lot of people were saying it was indefinite. He didn't use that word, but yes, there was an open-ended, this ceasefire is extended until such time that they come to the table or show some progress in talks. And I'm not quoting directly on that point. But then we are seeing these other reports about what does that actually mean. And I think it's been constantly a moving target, and we have to, we have to verify exactly how this was said, and these interviews have been problematic in some ways because they're one-off interpretations of what the president said to various people.
It's not getting any easier, that's for sure. Michelle Jamrisco points that out for us. Many thanks for the insights, Michelle, as always. The ceasefire being tested, and we'll have more straight ahead on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all advancing. We'll throw in the NASDAQ 100 index and the Russell 2000 index as well. All of this is a slew of strong corporate profits. Lift stocks a day after President Trump extends a ceasefire with Iran. Right now, the S&P is up 57, trading at 71.21, shy of a record. The record, by the way, on the S&P 500 index is 71.26. Right now, a gain of 0.8%. The Dow up 318, up 0.6%. The NASDAQ is up 312 for NASDAQ, up by 1.3%. The VIX at just above 19 with a 10-year, 4.29%. Gold is advancing $6 the ounce, little changed, up 0.1%, 47.26 for an ounce of the precious metal. But West Texas Intermediate crude now rallying 4.2% above $93 a barrel, 93.44. Barrel of Brent 102 even, now up by 3.6%. Bottom line here, we do have oil higher. Stocks are advancing as well. The Trump administration said to be nearing a rescue package for Spirit Airlines that could give the U.S. government the option to own as much as 90% of the carrier once it emerges from bankruptcy. Spirit up 185% on that news, but among rivals, they are trading lower. Among the low-cost carriers, Frontier Group Holdings down now by 12.5%. By the way, it uses the ticker ULCC, as in ultra low-cost carrier. Again, recapping here, stocks higher, S&P up 56, gain there of 0.8%. Tesla, Texas Instruments, and also Lam Research among the names reporting after the close of trading. Joe Matthew, that is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. Charlie Pellet will be back with more on Wall Street. Another check on the markets in about 20 minutes' time as we keep tabs on the trade here, with investors, of course, watching everything that's not coming out of the White House when it comes to Iran. Ceasefire in place, extended. Even though Iran is shooting at ships and oil prices are higher, we're keeping the beat here on strong earnings, and stock traders like what they're seeing and hearing. It's, of course, a doom scroll every day here in Washington lately, whether we're talking about expulsions in Congress, resignations, bad decorum, war and peace in the Middle East. I could keep going. By the way, the Department of Homeland Security is still closed. So we grab onto the things that we can here to smile about in Washington. Enter Lynn May, the baby elephant. Everybody, if you're on YouTube, you can see it right now. Our radio listeners will be dazzled to know that the new baby elephant at the National Zoo making her public debut today, the first elephant calf born at the zoo in some 25 years. Her story, as I read in the Washington Post, of being rejected by her mother, then adopted by another elephant who never had calves of her own, is enough to make our hearts explode today in the nation's capital. Cece found the elephant cam. There it is. It's not very dramatic. Do you see anything, Cece? I don't see much of an elephant. Must be a tiny baby. She's in the corner? I can't. Okay. That's an elephant, huh? Alex Conan had no idea that we'd be talking about this, nor did Republicans in Virginia, who are wondering what happened last night. A Republican strategist and partner at Firehouse Strategies. Great to see you back on Bloomberg.
Good to be back.
Dazzled by the elephant? Would take what we get, right?
I love elephants. Yeah.
I mean, I feel like the GOP could have done some branding here, maybe a sponsorship. Maybe everybody's looking. This is the moment. It's a captive audience.
Unlike the pandas, this one's actually staying here.
Yeah, right.
We're going to get to see her grow up.
So much for panda diplomacy. We don't need the Chinese to have an elephant around here. So what happened here? Was this a story of overspending? Everyone's making so much about $64 million for Democrats to redraw congressional maps. Alex, if you're like me, and I do live in Northern Virginia, my phone's been melting from the text spam. I can't turn on the radio without hearing Barack Obama. All for this issue to redistrict the state. And it looks like Democrats have won with as little as 51.5%. Republicans are wondering if money could have made a difference.
It may have. However, the silver lining for Republicans is that we were outspent by so much, and yet people didn't love what the Democrats were trying to do. So I think it does show that there are Republicans in Virginia. Independent voters are up for grabs in Virginia. Democrats are going to have to spend a ton of money in Virginia to win those seats.
Yeah, okay.
And the House remains very competitive this fall.
Interesting. So when you hear about, there's a local impact, of course, or a statewide impact. There are at least 4 Republican lawmakers who are going to be in for a real fight now, right? You wouldn't want to be Jen Kiggins this morning.
But then the national score is important as well, because we've got a lot of states here. President Trump started this with Texas. Gavin Newsom followed with California. The snowball effect has brought us through Virginia. If Florida does not act, and apparently it may be about to, Democrats are up 1 on the national scorecard. Does that actually matter when it comes to voting in November?
I think it's too soon to say. However, it's pretty clear that neither party is getting much of an advantage out of the redistricting fights. You know, we basically took a lot of solid red districts and made them more purple in order to have more purplish, reddish districts in places like Texas, and the Democrats did the opposite in blue states. At the end of the day, it probably nullifies itself nationally. If there's a wave election, you know, if the Democrats do very, very well, as the polling right now indicates they're likely to do, this is not going to be the difference maker. If it's a close election, it'll probably be a close election, and this, I don't think that the way the district fight has worked out, it's going to be decisive.
So if this is just a wash, then it's the definition of dummy mandering, right? This was a complete waste of time.
It could be. I mean, we do redistricting every 10 years. If we're now going to do it every 5 years, so be it. You know, I don't know that according to this exercise, this is not going to undermine our democracy.
Right. Sure. It's not going to, although some worry that it erodes confidence in our elections. Is that something that's
I think having more swing districts, more closely fought districts, like these districts in Virginia, I think that's I'm not saying I like what the Democrats did in Virginia by any means, but I think nationwide, the fact that we now have a lot more purple districts than we did a year ago, not a bad thing for democracy.
Fascinating. I'd love to ask you about some of the national issues that we're dealing with here and how Republicans are messaging the affordability issue when we've still got $4 a gallon gas, and it looks like this is going to be going on for a while. This standoff in the Strait, even if we have a ceasefire, is the essence of this. Oil prices are rising today. Everybody's looking at a 4 handle, if not higher, depending on where you live, at least on the coasts. I realize it gets different in some states. Alex, what are you telling candidates who have to make sense of this on the stump?
Well, the election is not today. The election is 6 months from now. I think, as we've seen in the last 2 weeks, there's going to be massive swings in the oil markets. Any given day, they could swing 10, 20%, as we've seen in the last couple of weeks. So I don't read too much into what gas costs today, what oil costs today. That said, you got to recognize people are hurting. And, you know, I think Biden got in trouble because he didn't show empathy for the how people were suffering under inflation. I think it's important that Republicans, I think it's important for all politicians to show empathy, to say that, look, I understand that gas prices are too high right now and this is hurting you. And then you got to go on offense. Look, there's a lot of things that Democrats have done to make gas more expensive in this country. There's things that continue to do, like oppose permitting reform, which you and I have talked about. I think you can go on offense saying this is what I'm going to do beyond ending the war in the Mideast to help long-term reduce energy prices, reduce gas prices.
It, of course, makes a greater challenge for the Federal Reserve to manage interest rates, or at least cut interest rates, as the president wants, when you've got energy prices surging like this. And this is a big part of the conversation for Kevin Warsh up on Capitol Hill yesterday. We're going to hear in a moment from Elizabeth Warren, part of her conversation with Kayleigh Lyons about Fed independence. But I'm wondering your thoughts on this issue. This isn't, I mean, it's a kitchen table issue, but it's not something that people talk about at the kitchen table. The Federal Reserve is kind of this unknown thing for a lot of Americans, but the president needs to get a new chair. Based on what you saw yesterday, the blockade, if you will, from Tom Tillis, do you see this resolving itself in weeks or months or what?
I do. I don't think Senate Republicans, especially if the Senate is in play this fall, are not going to want to fill this seat. You know, I think
he could be confirmed.
I don't think Tillis has a policy issues with the nominee, and so I'm optimistic that he will end up being confirmed. It just might get drawn out for a little bit, but I think while the Fed is not an election issue, interest rates are. And Trump is right about that. That high interest rates are very unpopular with voters. You know, they see it when they try to get a new mortgage. They see it in their credit card bills. And so I think to the extent that he can bring down gas prices and he can bring down interest rates between now and the election, both of which are possible, will have a huge impact on the president's approval rating, on Republicans' approval rating, and ultimately who controls the House and Senate next year.
Do you worry about Fed independence, or is this pearl clutching by Democrats?
Look, I think the nominee did a really good job yesterday saying that he wasn't going to be run by the White House. And I think once you're in that job, You have a lot of people talking. I know governors that are on the board, and they have a lot of independence. And they listen to a lot of their stakeholders, businesses in their communities, local political leaders in their communities. They get a lot of data, and sure, they also hear what the White House says. But at the end of the day, they want to do the right thing.
Right. Never heard so much about a sock puppet in one day in Washington.
He's quotable.
Yeah, indeed. Alex, thank you so much. Alex Conant, Firehouse Strategies. It's great to compare notes. Let's do this more often because we're curious what's on your mind, and we're going to have a lot more to distill with our political panel when it comes to that vote in Virginia. Let's get back to Elizabeth Warren. We heard from the senator last evening. Of course, the Democrat from Massachusetts is the ranking member on the Senate Banking Committee. Had quite a back and forth with Kevin Warsh. Kaylee Lyons went up to Capitol Hill to talk to her about the hearing and about the confirmation process and the essence of Fed independence. Here's what she said.
Democrats and Republicans have mostly respected the independence of the Fed. And let me just make a little side point here about why independence of the Fed is so important. There are two ways to make economic decisions. One of them is just based on your best assessment of the numbers, where we are on inflation, where we are on unemployment, what kind of other things are going on around the world. And that's what the Fed is supposed to do. The second way to do it is based on politics. We're 6 months out from an election. The economy is in real trouble. Prices are up. Families are really feeling the squeeze and very, very concerned about high prices. It's possible for political reasons to make decisions about monetary policy to goose that economy running into the election. And the problem is that in the long run, that's terrible for the economy. It can, for example, drive up inflation even higher so that families are paying more and more and more for mortgages and for credit cards and for car loans. What I want to see, what Democrats want to see, is an independent Fed that's still making decisions based on the numbers. What Donald Trump has said quite openly is he wants to make the political decisions that aren't good for the American economy, but are good for Donald Trump. Today's hearing was all about that issue. And Kevin Warsh had one job to prove, and that is, even though Donald Trump, who nominated him, wants to control him, it's Kevin Warsh's job to show that he has the courage and the independence to stand up and say no to Donald Trump. So many questions aimed in that direction. He told me at a private meeting he would be a tough guy. So I said, prove it out here in public. Did Donald Trump lose the 2020 election?
Yeah, he would not answer that question.
He would not answer that question, and he would not answer any question that might, in the tiniest, littlest, smallest way, disagree with Donald Trump. He proved to all who were watching that Kevin Warsh will be a great sock puppet for Donald Trump.
There's the sock puppet. Senator Elizabeth Warren speaking with us on Capitol Hill here on Balance of Power. I'm Joe Matthew in Washington, and thanks to Kaylee for sharing that interview. Kaylee will be with us in about a half hour's time as we welcome our global television audience. First, our political panel, Rick Davis and Gidi Shanzano, coming in next with the latest on Iran. The ceasefire continues. Wall Street likes that, but the strait is still closed. Oil prices are moving higher. It's all ahead on Balance of Power, only here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all advancing right now. S&P 500 index at 71.19, just shy of the record 71.26. A slew of strong corporate reports lifting stocks a day after President Trump extended a ceasefire with Iran. S&P up 54 now, gain of 0.8% again at 71.18. Dow Industrials up 297, up by 0.6%. We've got NASDAQ up 294. NASDAQ Composite Index right now up by 1.2%. 10-year 4.29% with the 2-year 3.80%. Gold up $11 the ounce to $47.30, up 0.2%. And West Texas Intermediate Crude 93.32 a barrel. WTI up by 4%. A day after the Kevin Warsh confirmation hearing, everybody is discussing, dissecting, and debating. You just heard Elizabeth Warren here on Balance of Power. Now, Warsh's confirmation hearing was broadcast live on Bloomberg Radio. His future remains uncertain due to a Justice Department investigation into the Fed. Ed Mills is Washington policy analyst at Raymond James, and on surveillance this morning, he told us, yeah, it's all going to come down to one Republican senator, Tom Tillis.
The question I get here at Raymond James is, are we going to see him withhold support by just not voting, or is he going to vote no? That's actually two fundamentally different things, because it's a 13-11 breakdown on the committee. If he votes no, that's 12-12. And if it is not an affirmative vote, that nomination doesn't go directly to the floor. If he withholds support, maybe that's 12-11.
Ed Mills of Raymond James. After earnings, Capital One Financial now down by 1.1%. After earnings, Philip Morris International. Right now, the stock is surging after earnings, up by 7.1%. Sales of smoke-free products, including heated tobacco and nicotine pouches, all moved higher in the first quarter. Again, recapping here, S&P up 55 now, trading close to a record, up 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we thank you so much. Charlie Pellet will be back at the top of the hour with more on the markets here as we cover the price of oil, stocks, bonds in the face of everything that's coming from Iran, and now a redhead on the terminal. Where's Nathan Dean when you need him? How about this? Kind of amazing. Breaking right now, the U.S. is expected to ease cannabis restrictions as soon as today. This is the rescheduling that we've talked about with Nathan so many times. The administration poised to reschedule cannabis to Category 3 as soon as this day is over. As we watch the MSOS, the ETF tracking U.S. cannabis companies, jump over 20% on this news. I suspect MJ is doing pretty well too. It's up 19% right now, with more than just the U.S. makers in there. In fact, there's, I think, even some tobacco in the MJ. But MSOS gives us a clean read on what this means for American companies. This would not, again, allow them to claim legalization, but it would allow them to understand or to enjoy some tax benefits that could make life a lot easier for these companies. They wouldn't be able to go through banking like the Safe Banking Act would have permitted, but this is clearly seen as a pretty big deal for us here in the markets and those traders who are in the cannabis space. We'll keep tabs on this, and Charlie will be mentioning it throughout the day. But if we do hear some confirmation, this is Bloomberg News reporting this now, a redhead. Cannabis will be rescheduled as soon as today. The president going for it. I'm Joe Matthew in Washington. Thank you for being with us here on the Wednesday edition of Balance of Power with news coming from Iran. The ceasefire, yes, has been extended, but the standoff in the Strait continues, the double blockade. And Iran is escalating this today as the IRGC fires on not one, not two, but now 3 ships making their way through the Strait. The UK Navy said 2 ships were fired at near the Strait of Hormuz. And now Iran's Islamic Revolutionary Guard Corps has fired on a 3rd ship in the Strait, the Francesca Bach ship, owned by Geneva-based Mediterranean Shipping, coming under fire while waiting to cross into the Gulf of Oman. The IRGC also seized another ship that intended to secretly exit the Strait, they say. Ships were endangering maritime security and tampering with navigational systems, according to Tehran, which says decisive and legal action will be taken against disruption to the enforcement of rules in the Strait. They say that the blockade the United States is continuing in the Strait is in itself a violation of the ceasefire. It's hard to tell if we're in a better place today or not. Markets accentuating the positive, but let's see what the panel thinks. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano now join us. Rick is, of course, our Republican strategist, partner at Stonecourt Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. It's great to have both of you with us. Rick joining us again from the other White House, known as Casablanca, in the heart of Morocco. Rick, it's great to see you. I'm amazed that you're still joining us from overseas here. Why don't you give us your first crack at this? When Iran starts shooting at ships, does that not change the picture?
Yeah, it definitely does. It's a provocative move to sort of poke Donald Trump. I mean, out of the blue, Donald Trump decides, instead of the hot rhetoric from the day before, talking about resuming attacks on Iran in a significant fashion, he instead wakes up and extends the ceasefire. And yet both of them claim that they were both violating the ceasefire. So it's a lot of gamesmanship. My guess is it's also a lot of confusion in Iran. The IRGC, who controls the guns and the missiles, are probably doing what they think they need to do to get a leg up on the U.S. And I'm sure the political leaders of Iran are worried that this is going to affect their stature and ability to negotiate a real truce of some kind. And so, yes, I think that the idea that both recognize there's a truce, except neither one of them are going to obey it, is sort of the new reality.
You wonder if this turns into the battle for the Strait of Hormuz, Jeannie. They could still be writing history books about this many years from now. But, of course, the United States has been busy as well. We seized a tanker, a sanctioned oil tanker in the Indian Ocean, escorted at least another vessel off India's western coast. The tanker ship Tiffany was, by the way, sanctioned, said to be making ship-to-ship transfers of Iranian oil as part of a dark fleet. This has brought us outside of the Middle East now. So we have escalation in the Strait, widening outside of theater on behalf of the U.S. What do we make of this moment?
It sure does sound like escalation, broadening, however you want to describe it. And what we make of it is that it is not in the interest of the United States. And this is why, Joe, when you read earlier in the show what Lindsey Graham said, it takes a lot to shock me these days. But for anyone to describe the Trump administration's decision to leave this blockade in place on Friday as smart, I think is going to be really looked at in history as one of the worst, I should say, foreign policy decisions in decades. It is a blunder of epic proportions. If we go back to last Friday, we had a ceasefire in Lebanon and Israel. We had the Iranians saying they would open the strait, and they began to open it. We had the ceasefire in place. And what did Donald Trump do? He turned around and said, oh, you know what? They're removing their blockade, but not so fast for us. We're going to keep it in place. And oh, by the way, we're also going to board Iranian ships. That prompted Iran to do a complete flip. And that's where we are at this moment. It was completely counterproductive. It makes you scratch your head and wonder what is going on in the White House. And if Lindsey Graham is an advisor on this, I think it explains it all, because that was an enormous, enormous problem for the U.S. And by the way, not just the U.S., but the world economy. Imagine if we lifted that blockade, if the strait was open and we were really at the negotiating table in Islamabad at this point. It would be a very different place than we are right now, much of it due to that decision to keep that blockade in place.
Well, from what we understand, and I'd love for Rick to weigh in on this tweet from Graham, because he had more to say than that Iran was still charging tolls, which we said was a violation of the ceasefire in the Strait. Lindsey Graham, this was not long ago, as Jeannie points out, right before 12 noon. I think the president's decision to leave the blockade in place is very smart. It is having a strong effect on the ability of Iran to continue to be the largest state sponsor of terrorism, which they appear intent on doing. He goes on to write, Rick, I not only expect this blockade to stay in place until Iran shows a commitment to change their ways, I expect the blockade will be growing, and then it could become global soon. What's he talking about?
You know, it's hard to tell. There are other bodies of water where ships are moving around that have Iranian flags. It could be that we go after Iranian shipping anywhere in the world. In other words, a global sanction against Iran shipping. And so there are a lot of different options that the president could use to try and expand the field of play beyond just the Strait of Hormuz. I would say they've got to focus on the Strait of Hormuz because, as reporting has indicated, Iran got 34 of their ships in and out of the Strait of Hormuz while this blockade's been going on in the last 48 hours. So if we're going to call it a blockade, why in the world wouldn't we actually implement a blockade? If a blockade, by our standards, is supposed to put heat on the Iranian government, why are we allowing ships to be moving freely in and out of the Strait that are Iranian flag vessels? So I think there's a lot of work that's got to be done. People got to sharpen their pencils over at the White House to make sure that the threats they are making are actually sticking. If it's their strategy to stop the Iranians from trading either in oil or any other commodities coming in or out, then they got to make good on the promise.
Really interesting. And of course, we did fire on an Iranian vessel. We put a hole in the engine room, Jeannie, so we know that we're capable of doing that. When you see the headline, though, the UK Navy says 2 ships were fired at near the Strait of Hormuz. Islamic Revolutionary Guard Corps boat approached a container ship. This is about 15 miles off the coast of Oman, opened fire that caused heavy damage, according to this report, to the vessel's bridge. The UK Maritime Trade Ops said in a statement, another cargo ship reported being fired at 8 nautical miles off of Iran. The agency did not identify either vessel, but it makes you wonder, Jeannie, if other nations could be pulled into this. The UK has been trying pretty hard not to.
Absolutely. And it is a very precarious time. And again, the watchword of the day is escalation. Over the weekend, we heard Mike Waltz again talking about escalate to de-escalate. That's something the Trump administration has been talking about. The problem is we are not in a position with Iran to do that and have it end up as a win for us. And there's 2 reasons why. Number one, we escalate, they're going to counterattack. It doesn't get us anywhere. Number 2, Iran is fighting for its life. It is going to fight to the death. We learned that in other modern episodes of warfare. We are, and Israel is, an existential threat to Iran. So when we escalate, they will fight to the last person. That is why it is in our best interest to turn down the volume, to make a deal. And that's why I say, going back to Friday, it was a blunder of epic proportions to keep that blockade in place. And, you know, Rick raised a good question. Why are we letting those ships go through? Well, I have an answer. Because it is in the United States' interest to get Iranian oil on the market. That's why we've lifted the sanctions. That's why we're letting them come through. And that's what I mean by this chaotic foreign policy coming out of the administration. They, on the one hand, sound sometimes like they want a deal, then they act like they don't. They say one thing and then they do another. It is absolutely a mess coming out of the White House. And the losers in this are the U.S. economy and the world economy, which is right now hanging in the balance. If this escalates, this is a disaster all around, and the administration is going to be responsible for that.
What do you make of the market reaction, Rick? We've only got about a minute here, but we're moving along like nothing's happening. I don't know if this is whistling past the graveyard or the fact that oil at this stage of the game simply needs to be higher than this to get traders' attention. WTI is at $93 a barrel, but look, the S&P is still up almost 1%. What do you think?
Yeah, it's really kind of stunning. It's been kind of consistent, though, when the president goes out and says, you know, I'm not going to not going to blow up Iran, then stock prices go up, even though oil has gone up over $100 a barrel, and gasoline prices continue to be stubbornly high, above $4 a barrel nationwide, so, or $4 a gallon. And so it's really a little bit unexplainable what motivates the markets. Obviously, basic economics may be what's driving their optimism.
Yeah, maybe hopes as well for a strong earnings reporting season. And maybe by the time it's done, if we hold our breath, this Iran thing will be over. We'll keep tabs on the markets. Charlie will update things. Rick Davis and Jeannie Shanzena will be back in our second hour. We'll talk to Colonel Wayne Sanders about Iran coming up here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump extends the ceasefire, but the strait is still closed. Welcome to the Wednesday edition of Balance of Power. As the double blockade of the Strait of Hormuz continues now, and Iran's Revolutionary Guard firing now at a third ship in the strait. I'm Joe Matthew, alongside Kaylee Lines in Washington. Kaylee, the president telling the New York Post by phone, ceasefire should be extended by another 3 to 5 days, but it's unclear when they will meet again.
Yeah, there's nothing on the books. And of course, he suggested the ceasefire is extended so that Iran can submit a new proposal and that negotiations can reach some kind of conclusion. But it isn't abundantly clear where Iran is on all of this, whether or not they're even agreeing to an extension. So far, in large part, this is one-sided. And as you allude to, Joe, Iran's still active in the Strait of Hormuz, making sure effectively that that waterway is not safe to transit, seizing 2 vessels in addition to those it fired on. And interesting, as we consider the U.S. naval blockade, Senator Lindsey Graham, the Republican who, of course, is close to President Trump, especially on this issue, says he spoke to the president and the defense secretary earlier today and suggested that not only will the blockade stay in place, he thinks it will be growing and could become global soon.
You wonder if that means allies joining us in the strait or, in fact, other bodies of water being blockaded, used by Iran. It sounds more like the latter, Kaylee, and that's something that we're going to talk about with Colonel Wayne Sanders from Bloomberg Intelligence. He's going to join us a bit on the strategy here. We'll get an update from Tyler at the White House as well.
And, of course, we have to get an update on the markets. And a lot of stocks within this market are actually moving on news from out of Washington. Marijuana rescheduling,
that's another big one.
Apparently is what we're going to be focused on today, and potentially a rescue of Spirit Airlines coming from this administration. So let's get a check on all of those related stocks and the wider markets as we turn to Charlie Pellet in New York.
Hi, thank you very much. And got to begin there. Weed and airplanes. Right now, we are looking at big gains for the marijuana ETF, MJ on the ticker. Up, that's the Amplify Alternative Harvest ETF, by the way. It is surging now by 18.3%. Another weed ETF, the Advisor Shares Pure U.S. Cannabis ETF, MSOS on the ticker, up now by 24.5%. Again, a developing story, one we are watching. A source tells Bloomberg the Justice Department is expected to reclassify marijuana into a less restrictive federal category as soon as today. As for airlines, a source tells Bloomberg the Trump administration is close to reaching a financial rescue package for embattled Spirit Aviation Holdings. Right now, we're looking at Spirit shares, FLYYQ on the ticker, up 193%. Rival Frontier Group Holdings that uses the ticker ULCC is an ultra low-cost carrier. It is moving lower on that news by 11.9%. We've got a slew of strong corporate profits that is lifting stocks to right now. Big gains for the S&P, in fact, trading close to a record 71.19. The record 71.26, up 55 right now. Gain there of 0.8%. The Dow will round that up to 300 points, up 0.6%. Nasdaq up 295 now, up 1.2%. All of this with the VIX just above 19, the 10-year 4.29%, and spot gold right now climbing by $13 the ounce, up by about 0.3%. Crude, interesting day because we got crude oil advancing. Crude oil is surging right now by 4%, 93.26 a barrel. Stocks are advancing, and Brent 101.95, barrel of Brent up by just about 3.5%. Briefly, the CFA Institute's former chief marketing officer has pleaded guilty to embezzling almost $6 million from the Financial Education Group and another company. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet with the latest on the markets. Thank you so much. Clearly a lot of movers today that are DC oriented, from the airlines to the pot stocks, as we await further in news on that front from others in the administration. Of course, all of this right now is via sources familiar with the matter. We did hear directly, though, from the president on True Social a short time ago, and this does pertain to Iran, though not the ceasefire. He says that he has just been informed that 8 women protesters who were going to be executed tonight in Iran will no longer be killed. He said 4 will be released immediately, 4 will be sentenced to 1 month in prison. He says he very much appreciates that Iran and its leaders respected his request and terminated the planned execution. But as with other instances pertaining to this ongoing conflict with Iran, Joe, this is just President Trump saying this at this point. We still await confirmation from Iran, not only on this particular issue and these 8 women, but also on the idea of an extended ceasefire and whether or not we're going to see negotiations put on the books in the coming days.
Another reporter got a phone call into the president today, I guess from the New York Post. He said 3 to 5 days, but it's pretty clear that they are figuring this out as we speak and in real time, with Iran accusing the United States of continuing to violate the ceasefire through our own blockade that has now been in place for days. Though, as Rick Davis reminds us, a couple of dozen Iranian vessels have managed to get through the strait despite the U.S. blockade. And as we've noted as well, the Iranian Revolutionary Guard has been firing on ships as well. Let's bring in Bloomberg's Tyler Kendall ahead of our conversation with Colonel Wayne Sanders. She's live on the North Lawn of the White House. What's the latest from the administration on all of this, Tyler? If it's not going to be in 3 to 5 days, then what?
Right, Joe, at this point, it's been actually a relatively quiet day here at the White House. President Trump does have 3 closed-door policy meetings today, including one during the late edition of Balance of Power at 5:30 p.m. Eastern. So we'll be watching to see if any of these open up to the press, because we have a lot of questions about the duration of this ceasefire, and if it is, according to reports, for the next 3 to 5 days, would the White House ramp up its escalation? As we previously heard, the president threaten that if Iran does not come to the table, then he could strike civilian infrastructure. But at this point, the line from this White House has been one of de-escalation, that President Trump was extending this ceasefire deal in order to give Iran some more time to come to the table with a proposal for the U.S. to review. But as you've been discussing, one of the key sticking points here is that Iranian officials have repeatedly said that they don't want another round of talks until the U.S. stops its naval blockade. And at this point, this White House is holding firm that it's going to continue. In fact, we got an update from CENTCOM overnight saying that they have turned around at least 28 vessels that have tried to transit between the ports. And the thing is, we're seeing escalation here from Iran, appearing to test the limits of this blockade. You guys were just discussing how reports earlier today indicated that Iranian gunboats fired at least 3 vessels, and then we saw an additional 2 vessels apparently be seized by the IRGC, according to Iranian state media. And then, as we're discussing, some new headlines just hitting the terminal from the Washington Post that Iran may have placed 20 or more mines in and around Hormuz. That is only going to complicate matters further in terms of trying to get that waterway reopened.
Yeah, it certainly is a sticky situation, and it's unclear whether or not we're getting any closer to its resolution at this point, Tyler, as you ran us through. I do want to ask you on some other news that is percolating out there today, specifically when it comes to marijuana reclassification, as Bloomberg is confirming an earlier report in Axios that the DOJ is considering moving it to Schedule 3 from Schedule 1. What should we know about this, and do we expect that the president could be announcing this sometime soon?
Well, Kaylee, our reporting indicates that this could come as soon as tomorrow. Not necessarily surprising, right? We have to keep in mind that President Trump had signed an executive order earlier directing this process to begin in terms of a reclassification. Now, the backdrop here is that there is a push by the administration to study marijuana's medicinal purposes, how to use it in a medical setting, and that's really what we would see happen in terms of a potential reclassifying of the substance. Now, importantly, we should say this isn't going to immediately legalize marijuana, or is it going to change this, the sentences for those that have already been incarcerated because of possession of marijuana. But it does mark a major step from the administration that could potentially come within days in terms of how marijuana would be reclassified. We can say, though, that our own analysts at Bloomberg Intelligence are raising questions about, we won't get too much into the wonkiness, but whether or not a new rule is going to have to be written completely, which could potentially open this up to lawsuits. As you both know, it often takes time here in Washington for changes to actually be put on the books.
All right. Indeed, we do know that. Bloomberg's Tyler Kendall live on the North Lawn of the White House for us. Thank you so much. And we want to return to the ceasefire with Iran that, of course, has been extended. At least the U.S. says it has been extended, though clearly there is a lot of activity in the Strait of Hormuz in the last 24 hours that suggests that tensions are high and there is still evidence of hostility. So for more, we turn to Colonel Wayne Sanders, who's Bloomberg Intelligence Senior Defense Research Analyst. Colonel, always good to have you on Bloomberg TV and radio. If we have the maintenance of a U.S. naval blockade and Iran firing on ships, if not outright seizing them, as we have seen instances of both just in the last day, is this really a ceasefire? Can we credibly call it that?
Yeah, I think one of the important pieces here is you have to look at the rest of the landscape as well. When you look at ballistic missiles and drone strikes, right? Those are still at zero, and they have been for a little while. We were averaging somewhere between 70 and 150 per day, prior to the ceasefire. So that's probably my largest indicator and warning that right now we're still sitting in an okay place. Right now, both the United States as well as Iran are looking at how can I operate militarily in order to still gain leverage in the region during this type of negotiation, right? And so they've pretty much just restricted it down to the Straits of Hormuz. So the IRGC fast boats, obviously that was in response to the fact that we had fired some shots into the engine room of an Iranian flag tanker. That was part of the CENTCOM turning around of 27 ships, 28 ships, as Tyler mentioned earlier. And then looking at the other side, though, there have been no confirmed reports of Iran getting through from CENTCOM, right? We've seen some of this reporting that's out there. So IRGC is doing their part, as well as the U.S. Navy on their side. So they're operating within the box, so they keep it away from escalating to the point of opening it back up.
Well, interesting, Colonel. The reporting today from the Washington Post would be troubling to the energy markets today. 3 officials speaking on condition of anonymity, Tyler just mentioned this, say that lawmakers were briefed, Congress briefed by the Pentagon, that Iran may have placed 20 or more mines in and around the Strait of Hormuz. And the Pentagon is informing Congress that it could take 6 months now to fully clear the strait, and any such operation would be unlikely carried out until after the U.S. war with Iran ends. Is that a timeline we need to start getting our heads around?
Yeah, I was actually surprised to hear about that timeline. Right now, the USS Frank Peterson Jr., as well as the USS Michael Murphy, as well as uncrewed surface vessels are actively trying to clear the straits from mines. This is something that's been going on. They continue to do this to make sure that there is freedom in there. When Iran is going through and dropping some of these, what I'm seeing is some of these things are done very hastily. And so some of these are considered drifting mines. Well, the problem when you put those into the straits is even Iran could have lost track of where some of these things are. So I think at this point in time, that is probably the very conservative side in terms of making sure that we see each and every one of these. But in terms of intelligence, surveillance, and radar capability for the U.S. Navy, this is going to be a top priority to make sure that they can find those. If they're floating on the surface, they'll be seen and taken care of at that point. And then you're going to continue to see movement from the U.S. Navy to make sure that this area is clear.
On the subject of the Navy, Colonel, when we consider the cost of this war, which to this point is something of an unknown quantity, we aren't sure of the number. Could be $1 billion a day in aggregate. We aren't sure now that to the point you were making earlier, when we aren't actively conducting aerial strikes, I would imagine that the number is lower. But if we are still maintaining a naval blockade of this size, what kind of assets come with that? And what kind of spending could be ongoing just for stasis, just to maintain our current posture?
So an aircraft carrier is about $10 billion a day, $10 million a day just to be able to float. Okay. So one of the key pieces to make sure that we understand is the Navy already, no matter whether it's sitting in the Persian Gulf or whether it's sitting off of Norfolk, Virginia, doesn't make a difference. It already comes with some operating and maintenance costs that are associated. So one of the research pieces we put out is we're thinking about $15 to $20 billion per month is what you would be looking at for almost a steady state operation, with 20 to 30 billion in a surge capacity, which includes a lot of the airstrikes. So I don't think we've seen that piece of it, but remember the logistics tail that has to go along. It's not just your aircraft carriers. It's not just your cruisers and your frigates. It's nuclear-powered submarines. It's also then all of those logistics vessels that have to be able to refuel, be able to rearm. That goes a part of that military the military sea lift command underneath the U.S. Navy. So all of that piece, if we were to surge and go back up, we're probably looking closer to 20 to 30 billion a month. But in this time right now, it's still just a blockade, and a lot of that operation and maintenance cost will continue to stay pretty much even.
As we spend time with Colonel Wayne Sanders from Bloomberg Intelligence, just want to let everyone know that we're also standing by for a conversation with Jim Esposito, the president, Citadel Securities, at the Bloomberg Global Markets Banking Summit. That's going to start just a couple of minutes from now. Colonel, as I look deeper into this report about mining, it does make you wonder how we got this far. Some of the mines are believed to have been laid by Iranian forces using small boats, and we've talked a lot about these small attack boats that are lining the strait. But others were floated remotely, the Post says, using GPS technology. Is that why we have not noticed them being laid in the strait?
It could be, but remember, I mean, we still have satellite imagery all over that area. So when I think about where the U.S. Navy is placing these, if it is a drifting mine, it's something that's easier to be able to just throw overboard and then hope that it's going. But if you're looking at some of the more sophisticated ones that you would expect, these are mooring mines that you have to make sure they are anchored and then they stay below the surface of the water. And why that's important is it takes time to do that, and these are fairly large. So yes, you have capability to be able to throw one over the side, but if you're trying to look for an effective deterrent in that, right now I think it's more about the messaging than it is about the actual explosive impact of one of these mines against a tanker in the Straits.
So when we consider not just the mines, but Iran's capability overall, knowing the president has consistently heralded the U.S. military to use, in his words, destroying their navy. He says they have no navy. Are we learning, Wayne, given the events we've seen just over the last day with the firing on vessels, Iran seizing 2 vessels, taking them to Iranian shores, that they don't need the formal navy necessarily, that they are able to exert this kind of military authority and make it unsafe for transit via small craft that the U.S. may not have targeted yet? I just wonder how the U.S. realistically can address that.
Oh, absolutely, and it's the age-old tale, right? When you're looking at a conventional powerhouse like the United States in the military side of the house versus an asymmetric threat like Iran is presenting right now. We've taken out their conventional mine-laying capability. We've taken out their navy. We've taken out their submarines. We've taken out those specific pieces that are tied to a conventional force. So Iran has turned around and looked at the asymmetric side of the house and be like, if I still have a handful of these IRGC fast boats and I have the ability to interdict a handful of them and make it so that people do not want to go into that decision calculus and say, do I want to try and run the strait? And so Iran is able to do quite a bit with not a whole lot of firepower. We talked earlier about even shoulder-fired missiles from the shore. So you don't have to have, especially if you're looking at something dealing with a lot of escort requirements for these tankers, is that it is something that requires a significant amount of capability, military escorts. You brought up earlier in the discussion, too, about, a coalition. President Macron had brought up 40 different countries that potentially want to get involved in that. Well, that's probably one of the things that would be required if you're trying to provide almost a guarantee into that space against that type of asymmetric threat, is you need a very large naval capability to provide that level of escort.
Colonel, we thank you as always. Colonel Wayne Sanders has been indispensable in helping us understand what's happening on the ground and in the air in the Middle East. We thank you as always. Find him on the terminal and online with some of the best analysis out there. Kaylee mentioned the breaking news story that landed just in the last hour or so. The administration is going to move forward with the reclassification, the rescheduling, to be more specific, of cannabis, which is an ongoing story and one that brings us to last week when the president was in the Oval Office with Joe Rogan signing an executive order to start conducting testing on some psychedelic substances. Nathan Dean joins us right now from Bloomberg Intelligence, having spent many months and years covering this whole process and has been hearing from a lot of investors who've been looking for a way forward on this. Nathan, it appears to finally be happening. This has been long in the making, to the point where President Trump last Friday in that event said, they're slow walking me on rescheduling. So what changed?
So I think this was the president essentially telling the Department of Justice to move forward here. And it's really interesting to see what happens over the next day or so, because, obviously this report says that they're going to reclassify marijuana. We don't disagree with that. We actually think reclassification is coming. But it's important to know that, at least on the specifics, are they moving straight to a final rule, or are they restarting the process that's largely been delayed? And this is the process of going through an administrative hearing, having more comment periods. It's really important to note. So if we get this final rule and say it comes out tomorrow, President Trump has sort of skipped a lot of the process here, and that's why we think it would actually open up to lawsuits. Now, these lawsuits we still have to see what courts and so forth will say, but it could open it up to lawsuits. So, if you get this situation, though, where President Trump says, I'm just ordering the DOJ to restart the process, then reclassification is still months, if not quarters away.
Well, that's what I was going to ask you, Nathan, is what kind of timeline realistically that would be if the president wants this to happen immediately. Would you be surprised if he, as he has done in many other instances on many other issues, to just try to do what he can immediately and see if it holds up in court? Because that's how a lot of things have gone in this administration.
That's a great question. I wouldn't discount that scenario as well, because we have the midterm elections here, and there's a lot of people in this space that think that this is obviously an election move as well, something to do in advance of the midterm elections. So in that scenario, if President Trump comes out and says, here's a final rule, that would most likely be effective probably within 30 to 90 days. And our analysis that my colleague Ken Shea is putting on the terminal as we speak shows that the tax relief for these marijuana companies drops from about 40% down to about 8 to 10%. It's called 280E tax relief. And we actually think it will spur M&A in the sector. These are very small companies, and so as a result, there's pretty significant volatility swings here. Now, the lawsuits can't come until there's a final rule. So if there is a lawsuit, it will probably be this fall, and then that will play out through the court system, and that would be months, if not years. If they decide to restart the process and they go back to an administrative hearing, then you're probably looking 9 months on the quick side for reclassification after the midterms, up to another 12 to 18 months for a final rule.
This is great analysis. This is why they call Nathan to find out. Looking at the reaction in the pot stocks that you always say have hot sauce on them, Nathan, the MSOS, which is the Advisor Shares Pure U.S. Cannabis ETF, is up 27% right now. It's trading above $5. For a little perspective, this thing topped out in 2021 in the low to mid 40s. So we've got a long way to go to get back there. Curaleaf is up over 30%. Tilray is up 17%. These are investors who have been burned before. And we also have to acknowledge what this does not do, Nathan. This would not give these cannabis companies access to banking services, correct?
That's absolutely correct. And when you talk about the equities, it's important to note that if you see the Canadian marijuana companies, they're moving up just as well as the American companies here. Yeah. And this does not apply to the Canadian entities whatsoever. So there is a little bit of retail sentiment that's bleeding into the Canadian equity portion of this. Now, when it comes to pot banking in particular, this does not make it federally legal, nor does this really change how banks are going to operate towards marijuana businesses. There's a bill out there called the Safe Banking Act. It really hasn't had any momentum in this Congress, and we don't think it's going to actually come back or pass. So what happens here is that these companies, yes, there's additional M&A opportunities and they get a lower tax relief, but really what they want is the ability to get into institutional or get institutional investment here, and that's really not what's going to happen. I mean, marijuana is a very tough business, and big tobacco companies have been very, I'd say hesitant to get into this space, because when you tax something, you put a different, more regulations on it and so forth like that, it makes it a costly product. And when you're competing against stuff that people can just get off the street, it's a very difficult business here. So even though that this is a win if it moves forward, it's certainly a win for the marijuana industry, and it gives additional color towards that idea of legalization. We just don't think legalization is something in the cards for the next 3 to 5 years. It's going to remain at the state level.
All right, well, we're going to have to continue to watch this space, just as Nathan Dean always does, joining us from Bloomberg Intelligence. We appreciate it, Nathan. As always, he's had this covered, as Joe mentioned, for quite some time, and will continue to do so. But as Joe also mentioned, we were waiting an important conversation that's taking place at the Bloomberg Global Markets and Banking Summit, where Jim Esposito, the president of Citadel Securities, is speaking now. Let's listen live on Bloomberg TV and radio.
Maybe some of the traditional banks. We have some of what I think is the greatest collection of quantitative researching talent embedded in the four walls of Citadel Securities, but make no mistake about it, the quants themselves are incredibly quirky. They have some very unusual hobbies and interests, and I find myself really connecting with them, just getting them to open up and talk about the things they like to do outside of the office. And so I feel like I found my tribe there. There's more quirky people there than in my former firm, and I'm really enjoying that.
Your new bosses, Ken Griffin and Peng Zhao, hired you 18 months ago to make Citadel Securities as dominant in block trading and in credit as it is in retail equities and U.S. rates. I would say no small undertaking. How's it going?
Yeah, look, I'd say I'm now about 18 months into my role at Citadel Securities, and many of you have seen us broadening and deepening our client franchise. Now, as you suggested, when I got there, we were already dominant in the electronic execution channel. Across global equities and fixed income, we are now equally focused on building out a high-touch effort to really build deeper and more senior relationships with clients. I'd say it's going well, and I'll just take you through a couple of statistics. We're broadening out our product suite in fixed income. You look at the rates markets globally, we now rank top 3 in U.S. Treasuries, dollar interest rate swaps, and investment grade credit, a business we stood up less than 2 years ago. You know, we're in the top 5. And then to your point, in global equities, we were already executing, and I find this kind of a mind-blowing stat, we were already executing more equity flow on a daily basis than any other competitor on the planet. On any given day at Citadel Securities, we execute close to 25% of daily U.S. equity volumes. We represent about 1/3 of the volume on the New York Stock Exchange. I look at our listed equity options business. Year to date, we send out something like 35 to 40 billion option quotes into the market, and we're accomplishing all of that with only 1,900 professionals. So the breadth and the scale is impressive, but the way we lever technology and just how few, how little headcount we have, I think really sets us apart from some of the traditional bank market makers.
My colleague here at Bloomberg, Kat Doherty, reported yesterday that J.P. Morgan stopped sending pieces of its big equity orders to Citadel Securities because you're now competing with one another. Is that true?
Well, factually, it is true, but maybe this is a little bit circular, so let's go through it. Previously, Citadel Securities was very active. We were a large participant executing equity blocks. However, we weren't sourcing those at the initial origination point directly from institutional investors. So formally, if a large global asset manager wanted to trade an equity block, they would call up one of the big banks. Let's assume one of those big banks like JP Morgan got hit on that block. JP Morgan would then call Citadel Securities, and we would take a piece of that block from one of the bank partners. What I found as I joined Citadel Securities and I made the round, seeing large, sophisticated clients, they kept saying to us, Citadel Securities has liquidity that we can't access. That's the retail liquidity you referenced. By the way, we're 35 to 40% of U.S. retail volumes. The traditional players aren't involved at all in retail. Clients want to interact directly with that retail liquidity. We have this very significant on-exchange market-making presence. Again, the traditional players are no longer represented trading on exchange. Clients wanted access to that liquidity. They thought it was a little odd to get to us. They had to come through another player. And so we decided, based on those client demands and client needs, we would stand up this new high-touch equity business. We've only been at it for a couple of months, and I'm really pleased to report it's hard to get the exact data, but I suspect we rank already top 3 executing equity blocks, and we've only been at it for a couple of months. So what we're finding is, our capabilities, risk managing large flows of equity and fixed income products fits this high-touch effort. What we were so good at executing medium and small size trades, we have the same capabilities to execute blocks. Now we're pairing that together, and I think clients are really delighting in that experience.
I would imagine, though, that you still
That's Jim Esposito, the president of Citadel Securities, speaking at the Bloomberg Global Markets and Banking Summit. We just wanted to put an ear on that conversation for you because you won't hear it anywhere else. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us on the Wednesday edition of Balance of Power. One major political story we have not yet touched today brings us directly to the midterm campaign trail and the issue of redistricting, more specifically in the state of Virginia. This is, of course, a process that began with President Trump's call for Texas to redraw its congressional maps. It then went national when Gavin Newsom decided to pursue the same end to try to keep the numbers even. In California, other states have weighed in, and now Virginia voters have approved a referendum to draw new congressional maps there as well. That could add as many as 4 Democratic seats to the House of Representatives. There are many wondering if in the end this entire exercise will be a wash because Florida has yet to weigh in. But right now, Virginia gives Democrats an advantage of 1 seat on a national level. And we wanted to hear from our panel on this. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us now. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is a Republican strategist, partner at Stone Court Capital. So you got it done, Jeannie, and it was a close one. It was just 51% of the vote that went with Democrats, who far outspent Republicans. Will this end up being a wash in the end?
It very likely could. As you said, we're still waiting for Florida. But I think for Democrats in particular, putting aside whether they end up with +1 seats like they may have now or it's a wash, I think the Democratic Party has given the base what it has long been asking for. And I think it was all encapsulated by Hakeem Jeffries last night, who said essentially what I think of as the new mantra for the base, which is that when they go low, we hit back. Quite a change from Michelle Obama's when they go low, we go high. And that is something the base has been asking for. So it's a win from that perspective. But numbers wise, I've always thought this thing was probably going to end up a wash. Gerrymandering is tricky business. You can't assume you know the outcome.
Well, and when we consider the idea that you can't assume you know the outcome, Rick, even if we look at the map that they redrew in Texas or the one they could redraw in Florida, they were making certain assumptions about the 2024 voting coalition that elected President Trump that seems now like it isn't really fully intact. So whether you're Texas, thinking about whether these seats are actually going to be more likely Republican than not, or Florida, wondering if you want to go down the path that Texas did and assuming you can maintain a certain portion of the Latino vote, how carefully would you be treading here?
Yeah, when the president kicked off these redistricting wars, Kaylee, he had this concept in mind that he'd cut into Democrat support amongst Latinos and Hispanic voters, young people, independent voters. None of that seems to be apparent today. So as you say, you take really hardcore Republican districts in Texas and you have to thin them out a little bit, put some Democratic constituencies in there because you got to make up some new Republican districts. And what you've done is you basically take 5 districts, you make them 10, but none of them are as powerful as they once were as far as Republican voters, especially with the flight of these traditionally Democratic constituencies. And I don't know if it's actually even. I mean, like the point Jeannie made was maybe on paper and districts changing. But I think if you had to look at all these districts combined and the kind of numbers that the president has going into midterm elections, you'd have to say not only is the actual structural redistricting a wash, but you've now created probably a dozen Republican seats that could be flipped wherein they wouldn't have done before.
Well, to that end, Jeannie, Alex Conant said before, but a Republican strategist from Firehouse earlier in the program, that while this may not help Democrats or Republicans if this is a wash, that it might help America by creating more purple districts, more competition for elected office. Is there any truth to that?
I agree. We do need more competition for office, but mid-decade redistricting is not the way we need to get that done. We need to rethink the way that we run our elections. And, I think this issue of buyer's remorse, we are hearing that in Texas from some people on the right who are as concerned about exactly what Rick was just describing. And also, as we look at Florida, I mean, Governor DeSantis has called for this special session to think about redistricting, could get them maybe 2 to 3 seats. But you hear from people who say, look at how Florida elections and special elections and local elections have gone, even Donald Trump's home district. And you've got to scratch your head and wonder, even if they redraw the map, are they really going to end up with 2 or 3 more seats? Or are they at risk of losing even more? So you may see some buyer's remorse. I mean, if I was in the GOP, I would say, hold off, Governor DeSantis. I don't think it's a good time to be doing this in Florida right now.
I guess we'll see what Governor DeSantis decides. Jeannie Sheehan Zaino, Rick Davis, Bloomberg Politics contributors, both of them, thank you, as always, for being our political panel today as we track the redistricting news in Virginia and, of course, tracking a lot of other news on this Wednesday, specifically in regard to the ceasefire in Iran, which President Trump has said is extended until Iran submits a proposal for a new deal. No news on whether or not Iran has done so, whether it intends to do so. Joe, frankly, we haven't heard that much from the various factions within the Iranian power structure right now.
That's for sure. 3 to 5 days, says the president, but we have no sense really of when the next round of talks might happen. We'll keep tabs on this for you. Much more ahead on Balance of Power. Live from Washington on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. A slew of strong corporate profits lifting stocks. Right now looking at NASDAQ at a record. We've got the NASDAQ 100 index also at a record. S&P 500 index, couple of points away from a record. Dow Industrials, they're pushing higher. Got to get above 50K for any talk about records once again on the Dow, but up right now by 281,000. 49,430 on the Dow, up by about 0.6%. S&P up 0.9%. NASDAQ right now up 1.4%. NASDAQ 100 index up 1.5%. All of this is the SOX, the Philadelphia Stock Exchange Semiconductor Index, continues to push higher ahead of semiconductor earnings after the bell today. Right now, the index up by 2.5%. The VIX below 20, and a 10-year at 4.29%. Gold up 0.3%. Spot gold right now at $47.35 the ounce on a day when stocks are pushing higher. Also, we've got oil higher, up at $93.08 a barrel on WTI. West Texas Intermediate crude up now by 3.8%. Brent up 3.4%, $101.85 a barrel. Sources tell Bloomberg the Justice Department is expected to reclassify marijuana into a less restrictive federal category as soon as today. The weed ETFs, they are pushing higher. Right now, case in point, we've got shares of MJ, that is the Amplify Alternative Harvest ETF, up by 16.3%. Also, the Advisor Share Pure U.S. Cannabis ETF up now by 22.7%. And among some of the pure play names right now, Canopy Growth up 20%, Tilray up 12%, Curaleaf up by 27%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet tracking the markets for us. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington. Thanks for being with us on Balance of Power on Bloomberg TV and radio, where we've been tracking a lot of breaking news today. And frankly, we were tracking a lot of breaking news yesterday as well, whether it was from the ceasefire extension that President Trump announced when it comes to Iran, or, of course, the news that crossed late in the 5 o'clock hour that Bloomberg exclusively reported that unauthorized users had gained access to Mythos. Of course, this is Anthropic's new AI model that was deemed so dangerous that they were only releasing it to a small group of companies and users. In fact, the Treasury Secretary Scott Bessent and the Fed Chair Jerome Powell actually convened the leaders of banks in Washington earlier this month to talk about the cybersecurity risk specifically that this model could pose. And yet, Joe, given all of the hype around the danger of this and how carefully restricted Anthropic wanted to treat this model, apparently a group of private users were able to gain access to it.
Yeah, I want to know more about who this is. I think we all do, of course. Unauthorized users said to be hobbyists when we spoke with Mike Shepard last night. And ahead of our conversation with the representative from Rhode Island, we're going to talk to Seth Magaziner in a moment, who's not only on Homeland Security, but the subcommittee on counterterrorism. Let's get the latest on this. Shep is back with us right now in our Washington studios here. Do we have a better sense of who these hobbyists are?
You know, we don't. We did manage to talk to people who were familiar with this and also see some of the documentation kind of backing up the idea that a third party without authorization from Anthropic had gained access to Mythos, which, you know, as Kelly noted at the top, was really restricted in its release to only a handful of big trusted users. And that would include tech companies like Amazon and big Wall Street banks like JP Morgan. And the idea is that they would use Mythos, which has, you know, superpowers in terms of detecting network vulnerabilities, to check their own systems for any gaps and try to patch them. And one of the reasons they don't want to let Mythos out into the wild to just any user is that in the wrong hands, it could go from being a tool to detect network vulnerabilities, to patch them, to being one used to find them and wreak some havoc. And what, from our understanding, though, Joe, is this group really, you know, hobbyists may be, you know, kind of our, you know, own joking way of referring to them, but they are people who have a Discord channel where they talk about finding out things about unreleased models. You know, they're just curious about what AI models might be coming next. And they used kind of a guessing game to figure out how to get into Mythos, and did so on the day that Anthropic made its announcement.
Well, but if they could do so, even if they didn't have nefarious intentions, is that not a signal, Mike, that someone with nefarious intentions could do the very same thing? How do we know they haven't already?
Well, it sure is, Kaylee, and that is one of the big questions. And that if a group of people who kind of do this as a pastime or an interest or a passion would do it, if it's a state-sponsored actor or one of the criminal gangs known to really seek to hack full-time for the wrong reasons, this is very easily something that they, too, could try to do. And it also raises questions about how Anthropic has taken measures or what steps they have taken to try to fence off more securely this technology that they have really tried to keep from a lot of different users, including U.S. government agencies. And we know that there have been discussions between the company and the White House and U.S. government officials about granting that access, but so far we're not seeing evidence that it really has been on a wider scale, because the U.S. government, of course, has so many agencies with so many networks, and we've known in the past from experience that they have been riddled with their own vulnerabilities.
Shep, thank you so much. Jumping in repeatedly on this breaking news story. Bloomberg's Mike Shepard live in Washington. It is not lost on us, by the way, Kaylee, that cyber stocks are going up today. CrowdStrike is up almost 3%, $12. Palo Alto up over 2%, almost $4, as we get our heads around the idea of cybersecurity may not be gobbled by AI, but might be required because of AI. And we want to bring in, as I mentioned, Congressman Seth Magaziner, who's joining us, the Democrat from Rhode Island, is on the House Committee on Homeland Security, and also ranking member, the top Democrat on the Subcommittee on Counterterrorism, Law Enforcement, and Intelligence. Congressman, it's great to have you with us as part of our conversation today on Bloomberg TV and radio. We want to ask you about Iran. We want to ask you about reconciliation, but this Anthropic story is clearly a big one, and the urgent threat of cyber attacks against the country, exacerbated now potentially by the war with Iran. Is it time for a framework, a standard of regulations in controlling AI on behalf of Congress, or should that be a state issue?
Yes, it is time. So advanced artificial intelligence has the ability to help us improve the world dramatically, but also has the ability to help us throw the world into chaos. And so it is time for a more proactive federal policy. Number one, to ensure that AI products are safe before they go to market. Number two, to make sure that we maintain our competitive edge against China in particular. And number three, to do what we can to help workers whose jobs may be displaced from the rise of AI. Look, Anthropic is doing the right thing here, and I give them credit. Not only are they winning the technology race, but they have done the right thing by voluntarily being cautious and warning key players, warning the world about what they have discovered before releasing it. They've also, by the way, been doing the right thing in their interactions with the Pentagon in refusing to allow their technology to be used to launch weapons without human control and engage in mass surveillance of U.S. citizens. But to answer your question, yeah, it is absolutely time for a federal framework to maintain both safety and competitiveness. And the White House needs to get moving on this. Congress does as well. As a member of the Homeland Security Committee, I absolutely want us to be briefed, even if it's in a classified setting, about this Mythos technology, what it can do, and this breach that apparently occurred.
Well, as we consider the threats posed by technology or just threats posed to the homeland in general, Congressman, I also wonder what your anticipation is to what is going to happen with Section 702 of the Foreign Intelligence Surveillance Act. A FISA extension, obviously a short-term one, was passed by the House last week, but we're reaching deadline time once again. What will it take for you to vote to extend these surveillance powers? What reforms would you need to see, if any?
Yeah, so 702 is essential to helping to disrupt terror attacks against the United States. It has helped us disrupt terror attacks in the past. But unfortunately, under the current administration, we've seen a blatant disregard for the civil liberties of the American people. That was made manifest very visibly in the way that the Department of Homeland Security essentially invaded American neighborhoods with ICE raids, locked up U.S. citizens, locked up people without due process. And so I think the American people and members of Congress are right to ask for some assurance that this powerful 702 capability will be used in a way that maintains the civil liberties of American citizens. Again, you know, foreign suspected terrorists, that's another matter entirely. I don't think there's any dispute that our intelligence agencies need to continue to maintain their ability to intercept communications of foreign persons of interest. But for U.S. citizens, we need some guardrails. So we'll see what comes in the next week or so. I know that a number of the leaders in the space in Congress are negotiating potentially a warrant requirement as it relates to U.S. persons. You know, we need to keep 702 going, but do it in a way that maintains the civil liberties of the American people. And unfortunately, the current administration has given us a lot of reasons not to trust them to use the tools at their disposal responsibly without congressional guardrails in place.
Congressman, we're seeing headlines on the situation in Iran, with the Iranian president saying that the blockade and threats by President Trump and the administration are the main obstacles to peace. It says Iran continues to welcome dialogue. All of this means, and we've got reporting now from the Washington Post, that it could take 6 months to clear the Strait of Hormuz, according to a Pentagon briefing to members of Congress. I'm looking at an average price for a gallon of gas right now at $4.02, up dramatically from where we were before the war began. If we extrapolate this and imagine a 6-month delay in getting this all fixed, what does that mean to somebody in your state who wants to get in the car and drive to Caserta Pizza for a Wimpy Skippy?
It's devastating, and good Rhode Island shout out there, by the way. But in all seriousness, you know, President Trump broke his promise to the American people when he chose to get us involved in an unnecessary foreign war that is costing the American people a lot of money at the gas pump and is also costing innocent lives. The president seems to be more interested in launching foreign military action than in meeting the very real needs of the American people here at home. So now we got to figure out how we're going to get out of this mess. And I think we're all trying to work through that. But a few things are clear to me. First, the administration needs to rebuild our alliances with our allies, with our European allies, with allies across the Middle East. Instead of insulting them, we need to rebuild those relationships so that we can have a united front. Number two, fire Pete Hegseth already. Let's get the adults back in charge at the Pentagon, and let's recommit ourselves to diplomacy here, led by experienced negotiators, not the president's son-in-law. I think if we can get back to a higher degree of professionalism, we will figure out how to get ourselves out of this mess faster. But this is clearly a challenging situation that was unnecessary. We're in it now, and we got to find a way out.
Well, I was told by Senator Elizabeth Warren in a conversation we had with her last night, Congressman, that the clock on the 60 days the president has in terms of leeway via the War Powers Act is still ticking, even if we are in, quote unquote, a ceasefire, given the U.S. Navy is still maintaining this blockade. Are you hearing from your Republican colleagues as we approach the end of that 60-day window that something is going to change at that time? Could we see Congress step up to check the president in a more material way?
It may. Unfortunately, not enough of our Republican colleagues seem ready to stand up to the president on anything, even after all of the missteps that he has made. Listen, I think the legalese around the legality of the war and whether that 60-day clock is still ticking is a gray area. But what is not a gray area for me is that this war was a bad idea, that we shouldn't have gotten into it to begin with, and we need to push the president to diligently work to get us out of it in a responsible way. And I think that starts by putting, again, some adults in the room to engage in diplomacy and to manage our armed forces in a way that they are deserving of, because, you know, tactically, our men and women in uniform have done a great job, but strategically, the leadership in the White House has failed them.
Congressman, I don't want to put you in a tough spot. We just have about 30 seconds left, but do you have a word to share on your late colleague, Congressman David Scott of Georgia, who we just learned passed away at 80?
Well, you know, I didn't work with him closely, but I knew him a little bit. Great man, made history as the first Black American to chair the House Agriculture Committee, served his district in Georgia for 23 years. He will be dearly missed.
All All right, we will leave it on that note. Congressman, thank you so much for joining us here on Bloomberg TV and Radio. Democratic Congressman Seth Magaziner of Rhode Island here with us on the early edition of Balance of Power. Of course, Joe, we'll be back at 5 p.m. Eastern, and we'll see how things move in the 3 hours between now and then.
Got a rise on Truth Social, and our ears, of course, always glued to what's happening coming out of the White House and Capitol Hill. We'll meet you back here on Balance of Power, only on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. It is Wednesday, April 22nd, 2026. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. Stocks bouncing around. We're pretty close to our best levels of the session on the S&P and the NASDAQ 100. A slew of strong corporate profits lifting stocks one day after President Trump extended a ceasefire with Iran. Though attempts to resolve that conflict, well, still struggling a little bit without any signs that the key Strait of Hormuz will reopen soon. And so that's kind of our backdrop. Once again, I keep saying in the newsroom, we're kind of treading water when it comes to where we are on this conflict and kind of wondering what comes next.
Well, oil traders kind of think that high oil prices are going to come next, because even though stocks are higher today, we're also seeing oil higher to the tune of 3.4% for WTI. Brent up 3.2%. $92 a barrel for WTI. Brent, though, Carol, up above $101 per barrel.
Well, and what's interesting, you look at the S&P 500, folks, almost an even split here. A little bit more of a risk off. Almost 300 names are lower in the S&P. We're going to talk about markets, get an update for you in just a moment. Meantime, on the war, we have a former senior advisor on Iran at the State of Department. Ray Takei is back with us. He's going to talk about how the president miscalculated in Iran. We're also going to ask him about, is it a new normal when it comes to relations, Tim, between the United States and Iran? Because it doesn't feel like we can move from here. We're kind of stuck a little bit.
And what's the new normal for energy in this country? That's a big question that we are considering this afternoon. The CEO over at Suburban Propane is going to be joining us talking about the war, energy markets, demand that they're seeing, that the firm is seeing in this war.
Yeah, great read on the retail, but that is their kind of big part in terms of revenues. Hey, Tesla, yeah, it's top of mind. They're going to report after the closing bell. So many moving parts. Feel like Tesla itself is really disrupting itself. All those moving parts of SpaceX and AI. Kind of top of mind for us also in the Elon universe about SpaceX buying up that AI startup Cursor, what we need to know. So we're going to do a deep dive into the world of artificial intelligence.
Also a deep dive in the world of infrastructure. Jay Hadfield, CEO and CIO over at Infrastructure Capital Advisors, on why he's even more confident in his firm's S&P 500 target of 8,000.
Yep, that's his rules. That's where we are headed. All right, let's get to let's get a check on the trading day on this Wednesday. Here is Charlie Pellet.
Thank you very much. Let's put that 8,000 call in perspective. 71.24 where we stand right now on the S&P 500 index. 71.26 is the record on the S&P, so just a couple of points shy right now. However, a record right now for both NASDAQ and the NASDAQ 100 index. Big tech leading the charge higher today. Going to be very interesting to see how the latest batch of tech earnings shake out after the close of trading. As Carol mentioned, Tesla will be the big focus today. Tesla shares ahead of earnings up 0.6%. In terms of the equity markets, right now looking at the Dow at 49,407, up 258, up by about 0.5%. Got to get above 50K before we start talking about records again on the Dow. The S&P up 60, up by about 0.9% right now. NASDAQ up 1.4%. NASDAQ 100 index up 1.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, keeps on going up another 2.5%, with the VIX trading just above 19. 10-year 4.29%, with the 2-year 3.78%. Gold is up 0.3%, 47.36 the ounce. West Texas Intermediate crude. Interesting day for energy because we are seeing oil push higher, surging 3.5% on WTI, 92.77, not rattling the equity market, also higher. In fact, NASDAQ had a record. Brent, 101.75, barrel of Brent, up now by about 3.3%. I mentioned Tesla after the bell. We'll also be hearing from IBM, Texas Instruments, and Lam Research. Recapping, S&P up by 0.9%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, we've been watching in terms of new developments on the war. It does feel like a little bit of a standstill. Bloomberg Economics putting out some research and writing today that in another reversal, President Trump announced a unilateral, open-ended extension of the ceasefire on the war in Iran. Now there's no peace, but no active war either. This may become the new normal, a fragile ceasefire without a formal deal, with tensions simmering, sporadic flare-ups, and oil near $100. Is that kind of our new reality going forward?
I think a lot of people would look at $100 a barrel for oil and say that is not a reality that we want to live in for a long period of time.
It's not where it was at the beginning of the year,
It's
right?
about $60, yeah.
Yeah, big difference. So it does feel like kind of we're at a standstill of sorts, heading towards that new normal. We have so many questions for our next guest. Back with us is Ray Takei. He's Senior Fellow for Middle East Studies at the Council on Foreign Relations, author of several books, including The Last Shah, America, Iran, and the Fall of the Pahlavi dynasty and Guardians of the Revolution, Iran and the World in the Age of the Ayatollahs, former senior advisor on Iran at the State Department, a fellow at Yale and the Middle East Center at UC Berkeley. I could go on and on, but we know we like to talk with you, Ray. Good to have you back with Tim and myself. We are thinking a lot about, is this a new normal? It does feel like we're in a bit of a standstill. Iran knows the Strait of Hormuz is its power, its leverage. I think it's safe to say this White House wants this war over. They don't want to spend, they want to move on. There's midterms coming. Are we headed, though, to a new normal, which comes with new metrics on energy markets and more when it comes to the U.S.-Iran relationship? And if that's true, what do you see as that new normal?
Well, if this is the new normal, I'm not quite sure it's sustainable for either country. One of the things that the Islamic Republic has learned from this crisis is they have an ability to disrupt global economies by disrupting global commerce and maritime commerce to the Gulf. And that is not going to change. One of the reasons, in my view, these negotiations are stalemated is not necessarily because of the nuclear issue, although there are many disagreements between the two sides on that. But moving forward, the Iranians believe they have a right to have a say in what goes through the Gulf and what stays out of the Gulf. And that includes perhaps monetizing their geographic position, charging tolls for various ships and so forth on some kind of a discriminatory basis, and the basis of that discrimination being politics. So they have learned that this new situation gives them leverage, a security guarantee. And unlike nuclear weapons are something that they could not really use. No country can use it effortlessly. But, you know, blocking straight traffic is something they can do whenever they wish, as they are doing it now. So we're in a situation where status quo ante, in my opinion, is not really to be recreated. And maybe the president knows that, maybe he doesn't.
So
interesting.
If that's not to be recreated, then how does the U.S. and how do the U.S. and Iran move past this standstill that we're seeing right now?
The only way the Gulf can be secure, the only way traffic can get through Gulf with some degree of confidence of safe passage would be considerable concentration of American naval assets for a prolonged, if not indefinite, period of time. That is not a commitment that the president has asked the American people to make. But that would essentially ensure that an international waterway is operated free of Iranian hazards. Besides that, you're going to have to come to some agreement with the Iranians where they have some leverage over what gets through and whatnot. But also, there's a considerable cost to the Iranian government themselves. Right now, we're playing this game. Both countries are imposing costs on each other. Obviously, the United States can impose significantly more economic costs on Iran than Iran can on the U.S. But the question isn't the magnitude of the pressure that we can impose and they can impose. The question is which body politic is better prepared or more willing to endure that pressure. United States with higher gas prices or Iran with a crumbling economy. That's the contest, and I'm not sure if the president have prepared the public for that particular context, the way the Iranian government is trying to do with however degree of success with its own people.
So, Ray, is it more about then, it's interesting what you just said, it's not about Iran necessarily having nuclear weapons that they can't really use, but this important channel, the Strait of Hormuz, and controlling that. Is this about kind of changing their economy and so being able to charge for people who go through that and then create, you know, broaden out their economy? I bring that up because there's so many fascinating stories on the Bloomberg about, you know, UAE and talks about a possible financial lifeline. It just struck me as odd. I just thought this whole region was so wealthy, but we also know that they've been trying to change their economy. We had another story about the Saudi Gulf, Live Gulf, right? That they're hinting, that they, I think, had talked about getting out of it or shutting it down, the losses. They've all been trying to change their economies, evolve their economies, make it less energy independent and less energy dependent. Is that what Iran is trying to do?
Well, paradoxically enough, given the fact that the sanctions that Iran has to live with, 50% of the Iranian economy doesn't rely on oil revenues. So this is essentially an economy, I wouldn't say it has diversified, but it has certainly, by compulsion of sanctions, managed to essentially develop other sectors. And whenever you have 92 million people in the country, you have a domestic economy of some sort in terms of internal arrangements and so forth. But the Gulf, the ability to exert influence over the Gulf is not just in terms of monetizing it and getting financial dividends, it's also a strategic lever. It is a strategic deterrent because the way they essentially try to safeguard their boundaries, their border, their territorial integrity from being attacked, as they were twice in June and March, is by playing the Gulf card. And this is not just directed against the United States. I'm not sure if the United States has an appetite for another military campaign in Iran, but it's really also directed against Israel. The Israelis do recognize that the containment of Iran will require periodic military attacks. And now I'm not sure if that's in the card anymore.
But it raises the question, and to Carol's point about what happens in the region if the U.S. and Iran agree to something, but Israel's not necessarily party to that.
I'm not quite sure on the nuclear issue that can happen. The Israelis obviously have to be part of it. But in terms of the Gulf traffic, I don't know if the United States and Iran can agree to kind of ensure the safety of the traffic of the Gulf. I think that's an American obligation. I don't put that much stock into the Europeans doing so. And as I said, this is not the case that the president has made. And certainly is not the case because the American people are opposed to this war by a 2-to-1 margin. That is not a basis for sustained policy in any region, much less in a volatile region such as the Middle East.
So come back to this global insight piece that our team put out there, our Bloomberg economics team, no peace, no war, the new U.S.-Iran normal. Do we stay maybe in this situation for a lot longer?
Well, we can stay in this situation if we're prepared to absorb the costs in terms of economic penalties, gas prices, and so forth. I'm not quite sure if that's the situation. Well, it's a particularly dire circumstances for the Europeans and for many developing countries, whether it's India, Africa, and so forth. So this is not just about the American economy; it's about the global economy. And that obviously has an effect on how American economy becomes stable or unstable. The Iranians have one advantage. Their economy is a basket case. So they're already living in sort of primitive economic conditions. But even they have a problem because their economic situation can lend itself to political revolt, and that creates a domestic unrest problem that they would have to deal with. This is not an easy situation for any of the actors involved. The United States seem to have gotten into this war without having clear reasons why. They're not really sure how to prosecute this war that they find itself in the middle of, and no one has an exit strategy or an off-ramp that they're willing to take.
You know, you remind me of what we're going to be talking about just in about an hour. It's today's big take. It's one of the most read stories on the Bloomberg terminal. It's about satellite imaging and the destruction in Tehran that our team has been able to gather. But the economic question, Ray, that you bring up is a really important one.
Well, and he talked about, parts of Europe and Asia. I mean, Lufthansa scrubbing 20,000 summer flights to save fuel costs. So it's already, and we know there's a lot more serious stories, as you mentioned, Ray, in the developing economy. Always love talking with you. Ray Takei, Senior Fellow for Middle East Studies at the Council on Foreign Relations. All right, that's our latest. That's our take on what we wanted to look at when it comes to the U.S. war in Iran. We got to get to that other big topic that we were talking about a lot before the war. We still talk about it, and that is AI.
Yeah, a small group of unauthorized users have accessed Anthropic's new Mythos AI model, which the company says can enable dangerous cyber attacks. And as Tesla gets ready to report later on today, the story about how SpaceX has an agreement to acquire the AI startup Cursor for about $60 billion later this year, or pay $10 billion for the companies to work together.
He's been listening to the latest on the war, and waiting patiently. Seth Figerman is back with us. He is Bloomberg News AI editor. I want to start with Tesla and their kind of evolving world, and it's really SpaceX as that world of Elon continues to evolve. What is Cursor, and why does SpaceX want it?
Sure, and thank you for the education on everything.
You're welcome.
Cursor is a really buzzy, fast-growing AI coding startup. If you've heard the phrase vibe coding, a lot of that is because of Cursor. They released an AI coding assistant back in 2023, actually around the same time that Elon Musk launched his AI startup. And it really changed the way a lot of software developers think about coding. It can streamline the process of writing and debugging code. I'm not a coder.
Tim's been working on it.
I've been trying. The vibes aren't great. Let's just say that. But I've been trying to do some vibes.
But is it just a looser way of like talking to, like figuring it out?
I think what they've done is a lot of their product is basically built on and around the existing models from companies like OpenAI and Anthropic, and sort of packaging it in a way that was particularly compelling and easy to use for developers. They have their own proprietary models, and they were looking to kind of double down on that because they also face growing competition from OpenAI and Anthropic and a long list of other startups.
Well, I'm glad you went there because you can vibe code with OpenAI's ChatGPT. You can do it with Anthropic.
A lot of places,
Code. Can't, like to Carol's point, can't you do it using tools from XAI, or they just haven't been able to figure that out?
XAI historically has done well at some things. I mean, it's easy sometimes to write off Elon as having a lot of bluster, but they did kind of build pretty quickly a compelling large language model to power their chatbot based on a lot of data from Twitter or X. I still call it Twitter.
It's okay.
But,
You're in a
we
good
all do.
company.
I know. I'll never stop. But they have not been as credibly competitive on the coding front. And maybe you could have looked past that at one time, but increasingly we've seen that this is the revenue generator. This is the proven lucrative market for the big AI companies.
But it seems like at this point, it's turning into a commodity because if OpenAI can do it, if Anthropic can do it, if the other startups that you said can do it.
I'd say yes and no. I
Cursor
think
can do it.
there's a lot of players in the market right now, but there's still a big difference between the ones at kind of the bleeding edge, like Anthropic and OpenAI, and the rest. You know, Anthropic every few weeks, every couple of months, puts out a product saying it can code autonomously for longer. It can deal with more sophisticated problems. It can act more and more like a senior engineer. And maybe to you and I, those distinctions aren't always immediately apparent, but it's just getting better. And so I think that's also made everyone else in that space have to play catch up a little bit. And at the moment, that's key to the enterprise strategy.
I feel like it's why, when we talk with Mark Gurman about Apple, it's like, I think to us it makes somewhat sense of like, yeah, let's rely on Gemini. Let Google and Alphabet spend all that money and figure it out and we'll just use it. But he seems to continue to stress, Mark does, that Apple needs to be in on AI on its own. So
there's a feeling broadly in AI, not just about coding, but certainly there, that you're seeing a handful of companies start to pull away. Now, it's not impossible to catch up there. You're watching companies like Meta who sort of slip behind and they're spending gobs of money to try to get back in that upper echelon. But I think you're seeing Anthropic and OpenAI and Google start to pull away from the crowd a little bit.
Can we do 40 seconds? I know we're going to Anthropic's Mythos, we think it's the way it's
I say it both ways. Yes, Mythos or Mythos.
Is being accessed by unauthorized users. 40 seconds. What do we need to know about this?
Look, this is a product that Anthropic has said is dangerous enough that they want to limit the release of it for fear of someone using it to potentially hack or exploit vulnerabilities in every major piece of critical software. So if even one person out there has access who shouldn't, seems concerning. We're still sussing out how broad that access is.
Sounds not great, Seth.
The look Tim gave me.
40 seconds. I mean, this is what...
No, but as Seth, as you described it, I mean, we're in uncharted territory, right?
Not great, Bob. Yeah.
There it is.
Do we know who these people were?
We can't say, but...
Oh, okay. Oh.
I like that.
Mysterious.
All right,
Seth.
follow this space for more.
Please do.
Really good. Thank you. So well. Seth Bigerman, he is AI editor at Bloomberg News, joining us here in studio.
Coming up next, 8,000 on the S&P 500 by the year end. The Chief Investment Officer of Infrastructure Capital Advisors is next. That's on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P 500 index very close to a record, 71.19, where we stand right now. 71.26 is the old record. Right now, the Dow pushing higher by 203, up by 0.4%. Strong corporate profits lifting stocks. The S&P, again, very close to a record, up 54, up 0.8%. Both NASDAQ and the NASDAQ 100 index are at records. NASDAQ up 1.3%. NASDAQ 100 index up 1.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, pushing higher yet again, up another 2.3%. All of this with a VIX just above 19 and a 10-year at 4.29%. Gold up $10 the ounce, 47.30, up by about 0.2%. West Texas Intermediate Crude up 4%, 93.23 a barrel. Brent 102.20, barrel of Brent up by 3.8%. And Bitcoin closing in on 79,000. Bitcoin right now up by 4.2%. A source tells Bloomberg the Trump administration is nearing a rescue package for Spirit Airlines that would give the government an option to own as much as 90% of the carrier once it emerges from bankruptcy. Shares of Spirit Airlines, FLYYQ on the ticker, up 221%. That news helping send rivals lower, especially the low-fare carriers. Frontier Group Holdings, ULCC on the ticker, down 12.4%. ULCC, by the way, stands for Ultra Low-Cost Carrier. Also reporting earnings today, we did hear from UAL, stock down by 6.8%. We got Southwest after the close of trading today. Southwest Airlines down now by 3.9%. Again, recapping, stocks higher. S&P 500 index right now at 71.17. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie just giving us an update on the market trade. Again, hovering near some records. We certainly have seen that. We had a lot of records, or several records last week, and quite a run-up in the equity trade. And then a little bit of a halt as the peace talks don't seem to be moving forward between the U.S. and Iran.
Yeah, interestingly enough, we're seeing chip makers rising for a 16th straight day. Longest ever advance there. There are also some individual stocks making big moves, but the earnings picture, as you were saying earlier, is setting the tone that says, wait a second, investors, at least to a certain extent, have looked beyond the high cost of energy right now, and that's not at least bleeding in.
Kind of looking through
for
getting
all
used to it.
companies.
Yeah, exactly. Well, our next guest has a target of 8,000 on the S&P by the end of the year, so we want to talk about that. He also, among his recommendations, it includes an iconic private equity firm that has limited exposure to private credit. Those are his words. And then also another company that he calls the poster child for the rotation being overdone. So we have a lot of names we want to get to.
Jay Hatfield is CEO and Chief Investment Officer of the RIA, Infrastructure Capital Advisors. It's got about $3.6 billion in assets under management. He joins us here in the Bloomberg Business Week studio. We got to start with the, I keep calling it the backdrop to the trade, but that's what it is. And it's high energy prices. And it does seem like traders are looking beyond the war, yet it's hard for a lot of people to say there is a clear end to this. How are you looking at that?
Thanks for having me on, Tim and Carol. Well, we do a ton of research on energy. I founded an energy company, and our first ETF, AMZA, is a pipeline company. So we have a global supply and demand model. So the way we framed it is there's a good rule of thumb that works extraordinarily well, which is every million barrels of lost capacity is $5. So if you frame it that way, if the strait was shut down forever, then the oil price would be about $140 a barrel. So, because, there's elasticities of demand or sensitivity and supply. And, we started out roughly at 60. And so our point since the beginning of the war is that 100 is probably going to be an inflection point, because there's almost 100% certainty at some point the strait will reopen. You essentially have every country in the world who wants to have it open. Now Iran, so we think that's a good strategy to blockade. Probably not Russia, but that's not that important. So what we always try to do is look longer term. So at some point the strait's gonna be open. And so we're bullish long term. And we were bullish in mid-March because there's a cycle of fear and greed. So greed occurs during earnings season, like now, and fear occurs when there's no earnings and you have hedge funds and other momentum investors typically overshorting stocks like KKR, for instance, in our opinion.
Yeah.
And a lot of the tech companies. So that's why we all have jobs, is that you have these inefficiencies in the markets.
So you're saying, though, longer term, you assume this year that the Strait will reopen, and probably sooner rather than later, in your view, because Iran is feeling the pressure, the price. And even though we had an earlier guest who said they're used to an economy that's just decimated and having problems, and so maybe their threshold for pain is greater, there's a reality that they need the Strait open.
Absolutely. And the other Middle Eastern countries do. Pakistan wants it open. They're mediating. So we just try to stick to the most likely case and not all these outlier cases like, oh, the Strait never reopens and we'll sell all of our stocks, and then you miss out on big rallies.
I think the concern for some people is the Strait opens, but Iran continues enriching uranium, and the U.S. and Israel don't want to see that happen.
Right.
So then you're sort of back to this, what you had before the war, yet the leadership in Iran has been decapitated by whatever measure you want to use, and that economy has been severely destroyed. And you have a military operation that has cost the U.S. untold hundreds of billions of dollars, tens of billions of dollars at this point.
Well, the way we see it unfolding is we do think it's a good strategy to blockade the Strait. So we actually went long the futures when they were off 70 handles over the weekend. I think it was last weekend or the weekend before. But if that doesn't work, we think that the Strait will be reopened by force, possibly using ground troops.
Really?
So that there isn't going to be a case where the uranium still stays there, that will destroy their energy infrastructure, use ground troops, and just open it up.
So it escalates.
Right.
Before it ends.
Yeah, so that would be a negative inflection for the market. We kind of saw that yesterday,
How negative, though, and how long does it last?
Because of this target and the fundamentals, which we can get into, we think it'll be a pretty shallow dip like it really was. Like actually March's activity in the stock market was super bullish, because that's the best you can do for a sell-off in the U.S. at least. Then that means that we're probably going to go higher when things settle down.
So that's why you're holding to that 8,000 target.
Well, actually, it's valuable to come on and do appearances, because I don't really always love doing appearances, so I try to have good data. So I use this thing, I don't know if you're aware of it, but it's called the Bloomberg Terminal, and you can get consensus.
Know it well and love it well.
Yeah, and it's sort of definitive because people like me use it. So, and there's a great function, SPX Index EEO Go, and I set it to annual. And I said, oh my God, of course we should do this more often. We based our 8,000 target on 350, and it's now 375, and you can even click on it. I'm doing that now, and you get this fabulous chart of what happened. And you see I guess it's the yellow line. No, it's the purple line. It just took off like a rocket. And so actually my 8,000 target is conservative based on our assumptions about interest rates. So at 375, if we get there, we're far away. Our target would go up to 8,600. Wow. So we think 8,000 is easy now, even at today's rates. And so it's critical to stay on top. And we do believe in consensus. We're not like a lot of strategists say, oh, well, we're bearish on earnings and we're going to haircut it. Like, that's the consensus. It's on the terminal. So that everybody's looking at.
So to be fair, it's earnings. It's fundamentally based. You're just looking at what the companies are doing. And as long as they are hitting these numbers, like, you can fundamentally trade on them. They're giving us when they give us an update, they're telling us how they feel and how they're doing against this macro war backdrop.
Absolutely. And that's why I said be focused on the long term, because those numbers are not only not going down, they're actually going up. So why should you sell your stocks because of the problems in the Middle East?
Go ahead.
Well,
please.
I
want to talk names.
Okay, we'll talk names and I think people would be listening to this or watching this and they're saying, wait a second, what about those higher energy prices flowing through and affecting earnings? Because it affects the top line if customers are paying more at the gas pump, and it affects the bottom line if these companies their inputs are more expensive.
Well, that would be a disaster if we were in Europe or Asia. But in the U.S., the energy prices have come down to only be 3% of consumer spending. Yeah. And we have free natural gas. I'm exaggerating, but it's nearly free natural gas.
Carol was looking at a chart earlier today.
Yeah, they actually go down when oil prices are higher because it's a waste product of drilling for oil.
It's a byproduct, right?
Right, and so it goes down. And that's the biggest advantage you could ever possibly create. This is why the notion that the U.S. has lost its exceptionalism is ridiculous because you can't change history. We have all those hydrocarbons that came from the inland sea that used to be there.
It's
so
not
it's
the
a huge advantage.
70s and we're in the oil lines because we're so dependent on oil outside the United States.
And one thing that almost nobody ever talks about, we had wage and price controls on the entire 70s, which was, I didn't even realize till recently, even though I was alive. But that was a disaster. Our production plummeted during the 70s. So, we obviously don't have that. So we have production. That's why it's only $5 per million, because we're going to produce more in the U.S.
So listen, we only have about 3 minutes left here. So you do like, speaking of the energy sector, you like Cheniere, ticker LNG. It's up about 32% year to date. It's going to report the first week of May. Why that name in particular?
Well, MLPs and infrastructure,
Master
energy
limited partnerships.
and pipelines are interesting because people kind of hate them.
Yeah.
Like they never go up. They haven't gone up for 2 years. So you could say, oh, I don't want to go into these Mo trades if we're correct about the war ending, but they're trading at really reasonable multiples. And they're going to benefit long term because actually the destruction of capacity is long term in the Middle East. So they have a great situation where everybody wants to source their natural gas now from the U.S., so they have a long-term advantage. So a good value stock, it'll come down when the war ends, but it's a great long-term investment.
You mentioned KKR earlier, so I want to give some time on your view on KKR, which is down 16% this year. There's some concerns when it comes to credit, when it comes to private equity.
And the firm has said that they've got limited exposure to private credit, but they have, limited some of their capped withdrawals on one of their asset-based finance funds because redemptions were above that.
Well, what happens in the market,
redemption requests were above
and again, this is why we have jobs, is that people say, oh, alternative asset managers, they create a basket and they just short them every day, and KKR is in the basket. But they don't do any work and say, private credit's 15%, and it's probably the best or one of the two best financial services brands in the world. And that's important because they're going in and pitching to CalPERS. And, we could go pitch CalPERS on managing their money for 100 years and never get any money.
Yeah.
So there's only a few companies like that. So why should that trade at 10 times earnings? It's rallied, that's off the lows, but that should be a 20, 30 multiple company because they raised $23 billion last month during a terrible month. So that company's not going away. They have permanent capital and they have limited exposure. So we prefer that company to ones like Apollo that do have a lot of exposure to private credit.
I hate to do this, but we're going to do it. 30 seconds on Amazon, because you have said it is the poster child for the rotation being overdone. It does report next Wednesday, and it's up about 9% year to date. Just quickly.
So quickly, Walmart trades at 43 times, Amazon at 22 times. Amazon grows over 20. And so you have a PEG ratio of 4 versus 1. I'll pick the PEG ratio of 1.
Really interesting, and there's so much going on with that company. I feel like we've had so much news in the AI world, too, about what Jeff Bezos and Amazon is after. Jay, come back soon.
Great. Thanks for having me.
Really enjoyed it. Jay Hatfield, CEO and CIO at Infrastructure Capital Advisors, joining us. And we mentioned LNG. We're going to kind of stay in that space.
Yeah, the CEO at Suburban Propane next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000 all pushing higher. Stocks getting a lift after President Trump extended a ceasefire with Iran. The S&P right now just about 4 points shy of a record, 71.22 where we stand, up 58 now. That is a gain of 0.8%. The Dow up 238, up by about 0.5%. NASDAQ and the NASDAQ 100 index both are at records right now. NASDAQ up 1.4%, the NASDAQ 100 index up 1.5%, and the Russell 2000 index of small cap shares gaining now by 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up again, up by another 2.5%. All of this with the VIX just above 19 and a 10-year at 4.29%. Gold is up $18 the ounce to $47.38. Spot gold up 0.4%. On an update for U.S. stocks, oil is advancing as well. West Texas Intermediate crude, 93.01 a barrel, up 3.7%. Brent now above $102 a barrel, 102.02, up by 3.6%. And Bitcoin just above 79,000 now. Bitcoin up by 4.3%. Chip names, Texas Instruments and Lam Research will be reporting after the close of trading today. We've got Texas Instruments up by 0.9%. Lam Research up by 2.5%. We'll also be hearing from IBM, and of course, the most closely watched after the bell will be Tesla, up now by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, that is a Bloomberg Business Flash.
All right. Thank you so much. Charlie Pellet there with a Bloomberg Business News Flash. Hey, propane generic futures, we were checking it out on the Bloomberg, up approximately 25% since the U.S. war in Iran began. For some perspective, WTI crude futures are up about 40% since the start of the war. Nat gas down nearly 4% since the war began. We're mentioning these prices kind of overall. Right now, for those who are watching on TV and on YouTube and on Bloomberg Originals, you're taking a look at nat gas and New York crude. But we're mentioning these different prices because all are taken into account when it comes to the production and pricing of propane. We went through a little bit of a deep dive and a little bit of a
quick
energy
study
lesson. Yeah.
You could say?
Yeah.
Okay, well, let's bring in somebody who does not need a quick study.
No.
The president and CEO at the more than $1.2 billion market cap company Suburban Propane, Michael Stivala, is with us, joining us from the New York Stock Exchange. Mike, good to have you on the program. So bring us up to speed on the propane market, specifically the propane that you sell, where it comes from, how it's processed, and then also what you've seen when it comes to pricing since the war began.
Great, thanks for having me. First of all, Suburban Propane, we're a domestic retailer of propane, and so we source about 99% of our propane right here in the good old United States of America. We're flush with propane right now. Inventory levels in the country are up above 78 million barrels, which is about 2/3 higher than the 5-year average for this time of year, and we're. Yeah, as you know, we're sort of coming out of the heating season, which is the peak demand period for domestic propane use, and so we're in a really, really good position with propane. Propane is a byproduct of crude oil process refining and natural gas processing. So we do retain a good bit of it here. We're actually producing record levels. We're almost at 3 million barrels a day now, and exports are hovering around 2 to 2.2 million barrels a day. So we have plenty of propane here in the United States.
So the propane that you sell, is it typically it's more so used here in the United States, more so used for cooling, let's say, than it is for cooking. So a real cyclical nature to the business.
Mostly for heating, right? Heating in the peak heating season. 55 million households rely on propane in some way for heating, home heating, hot water, cooking, clothes drying, so forth. So yes, it's a large weather-driven component.
All right. So, yeah. So when I was thinking about your business and, Michael, you guys have been around for 30 years. You're at the New York Stock Exchange. You rang the bell yesterday. And so you've seen a lot of different market cycles. How much does your business really change? Or is it mostly closely tied to weather, or does economic cycles also play into it?
It's a bit of both. About 50% of our business is residential, and most of that is heat-related demand. But even with that, obviously, economic factors do affect how the consumer thinks about their own budgets and where they spend their money. So in challenging times, you can see some conservation kick in. But the other 50% of our business is providing energy to commercial businesses, industrial uses, government uses, agricultural uses. And, frankly, because of the resilience of propane and the portability and the reliability, we're starting to find even more respect and more uses for propane in areas that people probably didn't imagine a few years ago. Things like EV charging stations and even small-scale power generation for data centers.
Wow.
These are areas where the portability and the ability to stand up a propane storage and deliver to that storage wherever the demand is a real advantage that we have.
So are you saying in some cases there are EV charging stations that are off the grid and instead powered by propane, or is that a backup power source?
No, that's the prime power for some of those off-grid charging stations. There's a generator behind the scenes that's powered by propane.
So interesting. I was having a conversation with someone in the newsroom earlier about EVs, and he was basically like, you're just, using carbon from a different source when you're using EVs.
Well,
electricity.
Well, you got to charge it, right? You got to charge those batteries.
Somewhere.
Which is why you think about not perfect solution. Hey, Mike, one thing I do wonder, as you say that there are new uses coming, and I found that interesting, small power for data centers. When we've talked about the power grab that's going on, a lot of it fueled by the data center growth that we are seeing. We've talked about higher energy costs overall. Does that ultimately lead to more people using propane or more businesses using propane? I'm just curious, because we've said all hands on deck when it comes to energy sources, whether it's nuclear, solar, wind, of course, carbon, it's all going to be needed. So I wonder where does propane fit in potentially?
Yeah, we have the same philosophy. We are all about all the above energy sources to meet the increasing demands that are faced by everything power, whether it's data centers, whether it's expansion of EV charging, EV penetration, electrification. All that is still going to need energy in some form, and propane has a real role to play. And it happens to be one of the cleanest sources of fossil-based energy because it's a byproduct of refining and processing.
So you're going to have it whether
the bad carbons are taken out.
Well, how careful do you have to be? I was telling Tim, I sail, and we've used propane on a boat, but you have to have the tanks above decks in the cockpit. You don't want the propane. It's a heavy gas, if you will, and you don't want that going to the bilge, right? Because you can blow up your boat. So there are risks. So how do those?
That's bad.
That's extreme
I'm not a sailor,
risk.
but that's bad.
But we've been, you never put the propane down below. So I'm just wondering, does that limit how you guys can use it, or no? Because you have the tanks outside and you can kind of put it anywhere.
Yeah, I mean, first of all, we don't really like to talk about things blowing up, but.
Hey, I don't either. All I know is my husband, we're pretty stern with anybody, like with the propane tanks.
But actually, if you think about all the uses, and what's unfortunate is propane is not well understood, and it's really our job to do a better job of advocating for propane in the so many versatile uses that in so many settings. So it really is an energy source that a lot of people touch and are accustomed to utilizing. It is very safe. The scenario that you're talking about, the tanks, as long as nothing's leaking and they don't find an ignition source, then they're safe. Generally, we don't necessarily advocate for utilizing the tanks indoors, but the reality is the appliances that are running on propane are indoors as well. So we have safety is our highest priority. So
Totally get.
There's nothing more that we take seriously than safety.
It's why we like talk. It's why we like talking to you. It's an education on this part of the market. Mike Stivala, he's president and CEO of Suburban Propane.